going nowhere, and the dollar continued to tumble. For bonds, it's a bit of a, catch-22, because while you can say the report is soft and maybe you have hopes of a, U.S. Interest rate cut, the other side is the whole tariff business and the higher inflationary pressures that are now being penciled into the U.S. economy. So that's what kept bonds on a very tight leash. Hardly 2 to 3 basis points movement, both on the U.S. 2-year as well as the 10-year. So we're around 4.3%, just around that handle on the U.S. 10-year as well. The bigger move happened on the dollar. The DXY slipped. This is Friday's action. It slipped below the 104 handle as well. In fact, the dollar has been weakening against a lot of the key counterparts, the euro for sure, the yen and the Swiss franc, and we had more of that on Friday as well. The euros made the biggest headlines last week when it comes to its move. Almost 4.5% weekly rally against the dollar. I mean, those are incredible levels that we're talking about. 1.08 on the euro-dollar equation. That's what we're seeing. Even this morning, as you can see, the dollar index is slipping further away from that 104 mark. So the weakness in the dollar is something that you really, can't be away from. Now, why do I say that it's a little muddled with respect to what happens with this soft NFP? Why is the market not cheering it as much? Because of this quote. Mr. Powell he was speaking at a New York, event, and he came and said that we do not need to be in a hurry. We are well positioned to wait for greater clarity. And he's speaking in context of U.S. tariffs. So right now, if you're looking at the market, the expectation is 3 rate cuts, 25 basis points rate cuts starting June. That's what the FedWatch tool is telling you. But this comment is telling markets that the Fed is in no hurry. They're going to wait and watch to see the inflationary impact of the tariffs. Speaking of tariffs, I mean, that was really playing out on Friday. Once again, a lot of the European luxury good makers, I mean, stocks like Burberry and all, they were falling 5, 6, 7%. So that continues to be a big concern. And that's a concern for us as well. We'll talk about this because over the weekend, President Trump has blasted India once again about, India's role and how it's so difficult to sell anything in this country. So we'll get to that as well in a bit. The only real negative is oil because geopolitical talk is back and the all-important meetings in Saudi Arabia to try and reach a peace agreement, a ceasefire agreement on the whole, Ukraine-Russia issue. That's going to be center stage. So geopolitics is back. And in that or against that backdrop, there was another threat coming in, this time for Mr. Putin from Donald Trump, saying that I will impose, greater sanctions if Putin does not get to a ceasefire. So that's something to take note of as well. Very quickly, U.S. markets have started faltering. That's coincided with higher or lower FPI selling in India. That's the extent of price damage on Wall Street that we've seen, 2.5% to 3.5%, coincides with the fact that FPIs are selling less and less in India. Will they now relent now that the home market is having some issues? I'll just round off with the final numbers. And remember, I showed you this tally on Friday morning as well, up until Thursday. Just add Friday's number. That's a beautiful looking chart. The intensity of daily FPI selling has been coming down. If we can get more of that, it'll be fantastic. And we're just about 1% away from the 20 DMA. So the Nifty perhaps is going to take aim at that first up. But let's see how this plays out, guys.
Well, just some more points on the U.S. markets in last week's performance. The U.S. 10-year yield was up 10 basis points at 4.3%. And now the S&P 500 is below the closing level on 5th of November. That's the election day. So Trump can, the market performance is one of the key parameters Trump tracks. And now it's erased all the gains. So below the election level low. And the dollar index, of course, as Surbhi pointed out, lost more than about 3%. Last week for the Indian markets was a week of repair and recovery. The market snapped a 3-week losing streak. On the Nifty, we were up 1.8%. The mid-cap index up 2.5%. Small cap index rallying 5.5%. The Nifty logging its biggest weekly gain in nearly 3 months. In terms of flows, the FI selling intensity has been coming down. On Friday, the DIs bought 2,300 crore, while the FI net sell was nearly 2,000 crore. So the trend has shifted in favor of the bulls. The question is, will the momentum continue? Will the pullback continue? Over the last 3 trading sessions, as the screen will tell you, that the markets have been making higher highs and higher lows, and that is always a positive sign. So the important support to track will be Friday's intraday low of 22,464, and on the way up, the 20-day exponential moving average, which is about 22,700. So 22,700 to 22,800 is seen as an important resistance. Quick, the cues to track this week. One, it's a holiday shortened week on account of the holy holiday on Friday. We've got the U.S. inflation print on 12th. Back home, the India macro indicators include February CPI and the January IIP. And then you'll watch, for all the ongoing tariff negotiations, the updates, geopolitical tensions, the impact on dollar and crude.
Well, that's right. The weak US data is something that will not worry me, at least as of now, because it's calling the dollar index to slip. And also, it's making the mood more conducive for a Fed rate cut. And on the domestic front, a couple of positives. One is with regard to the RBI injecting liquidity. And the second factor is the FM talking about rationalization of GST rates. Both those two are in the line of growth, and the markets want growth, right? So the economy seems to be in pretty okay shape. And now these moves as well will further make the case that in the coming months things will look better. Let's take stock though. The Troika, so to call it, well, they're in favor of the Indian markets because the dollar index is weaker, Brent crude price is well behaved, and the US yields as well more or less flattish. Moving to the India's outperformance in the last week, that's great, right? After a while we outperform, but in the last 1 year or so, actually India's been a rank underperformer. If you compare us with the US markets, the Dow is up close to around 10%, the Nasdaq as well as the S&P 500, they are up between 12 to around 13%. So, it gives us some kind of cushion because we've already underperformed. So it gives us a better case to outperform from here on because valuations as well have become far more palatable in comparison to what it was a month or so ago. What do the FIs do? Well, they're selling relatively less in the cash market, which is great news. That net sell numbers come down by half. And they continue to add mild shorts. So their short positioning now is sub 82%. Remember the start of last week, it was close to around 85%. So the FIs, well, they continue to remain net short, close to 1.85 lakh contracts on the short side, while you have clients that they are net long now. So both of them, as has been the case, they have been on opposite ends of the spectrum. FI is close to around 1.8 lakh contracts, clients 1.4 lakh contracts on the long side while they are on the short side. Pulling up two strikes that are fairly active, the 22,800 call and the 22,300 put. Both of them were fairly active in Friday's trading session, and that gives you the broad levels. The Nifty had a good week. You'll get more confident once the Nifty can get past its 20 DMA, which is important, 22,750. On the Nifty Bank, the 49,000. So both those two, they become the important resistance levels from a bullish perspective. So you want to keep an eye out on that. And the reference points you have, going by the options data, the 22,250 mark becomes important that it gets some kind of support at that level. While on the Nifty Bank, we went to this level of around 48,200 in the past week and we bounced off that. I'm looking at two stocks. One is Indices Bank because it's been a relative underperformer, and now you have news that the top boss out there has got an extension only of around a year or so. But there was some on the street that was speculating maybe that extension doesn't come about. So Indices Bank will be one stock I'll be looking at. And as I said, it's already down more than 10% in the last 1 month itself. It's underperformed what the Nifty Bank has done. And there are shorts in the system as well. So if it opens up weak, I'll be interested to see whether or not it sees a bit of a bounce from the low point of the day. So that's one stock that I'll be looking at. And the second one is Reliance Industries. Equirus is the last brokerage to go ahead and upgrade the stock. Remember, in Friday's trading session, it conquered that 20 DMA, which is an important technical mark. And it's suddenly taken on the mantle of fighting for the bulls. So this one needs to continue its good form.
Absolutely, and the bulls will hope they can continue their good form from last week as well. Let's get started then. There's the equity call coming in this morning. It's actually a little positive one as well. Sunil Kaul of Goldman Sachs says that the cyclical slowdown in India's economic growth and profits led them to downgrade their view on Indian equities from overweight to market weight about 5 months ago in October. He says with the Nifty now down 16% in local and 19% in US dollar terms from the late September peak, investors are focused on whether it is time to accumulate. He adds that while the worst seems to be behind us in terms of economic growth and earnings trajectory, as well as prices have corrected meaningfully, he expects a gradual recovery in growth. He thinks market volatility could remain high near term, given still elevated domestic positioning in small and mid caps and lingering global uncertainty, especially with respect to reciprocal tariffs that could potentially significantly impact India if implemented.
Well, let's get some views then on the global markets. Bhaskar Lakshmi Narayan, Chief Investment Officer and Head of Investment Management Asia, Julius Baer, is now with us on the show. Thank you very much for joining in. So first, give us the emerging market setup. The mojo has been back in the Chinese markets, Hang Seng, since the start of the year. Even the NPC emphasized China tech, AI innovation. But back home in India too, after a rough 5 months, last week at least, the risk sentiment seems to have improved. So what's the, give us the top-down view on emerging market and then break it up country by country.
Well, I think it's going to be a slightly positive year for emerging markets. I wouldn't go as to say it's a very bullish turn of events. One shouldn't take the fact that there is a correction in the US markets to be a positive sign for the rest of the world at this point. In fact, if anything, if the US or the global markets driven by the US starts to drop a bit more, I think that sentiment will sort of pervade all other markets too. So one should be cautious about how one plays this. In terms of emerging markets itself, I think China obviously is in the sweet spot at this point in time. You've got valuations that are very attractive. You've got policy making that's very supportive. And you've got a lot of the bad news behind you, especially when it comes to real estate, which is possibly their real big problem to solve. So I think they're coming to the end of that real estate solving. And if that happens, then you see a further upside. But I would say in a relative sense, yes, China looks a lot more attractive than any other emerging market.
Oh, okay. That's quite an interesting take, Ms. Lakshmi Narayan, because we're always competing, right? So if the US is doing well, then it's a problem for us. Like you're saying, I get that point, that if the US is not doing well, then it's anyway a problem for everyone. And then there's China, which is looking good to you, like you're saying. So where is India sort of in this whole mix? How are we stacking up, given this 16, 17% correction at the headline index level and much more in the broader market?
I've always been, and we've as a house been very favorable towards the large caps. And I think now, especially with the correction, I think the large caps are looking quite even better, if anything, right? It's the problem really is, I think, in the small cap, maybe at the bottom end of the mid cap segment, which I think still needs some sort of a reset, despite the correction. So when we look at any market, we look at three things, right? We look at obviously the returns that you want to achieve, and then you look at volatility, and most importantly, liquidity. Now, if we've seen the first couple of factors play out as far as the small cap is concerned, it's the liquidity part I think will finally play out at some point when nobody wants this segment or more people want to exit than people want to buy this. And I think that's going to be the last leg in the small cap, mid cap space.
Hi, sir. Good morning and good to see you. And, I recall when we chatted the last time around, you briefly mentioned there's a possibility the Fed doesn't cut rates by that much, going ahead. And that seems to be what the street as well is coming to terms with in 2025. What are you working with in terms of the Fed action for the remainder of this year? Some say that maybe, in fact, we don't see a cut, while recent soft data points point to the direction that maybe we'll get 25 or 50 basis points. What are you factoring in? And also on the RBI, we've got one rate cut. Out here, the hope is that we get another one in April. Are you in that camp?
So we've always been below the market consensus for the last, I would say, a year plus or more. We've always been behind in terms of expectations on rate cuts. We are of the firm belief that the US is more prone to an inflation risk than to anything else. You could have a policy mistake, you could have a supply chain constraint. This whole tariff talk is a lot of noise, but noise can create some amount of inflation too. So all of those things, I think, mean it's very difficult to have a very, very positive outlook on rate cuts. It's easier to say, stay where you are, and things get really bad. You could even have a rate hike, right? But we're not in that camp. I'm just saying that. So I think betting too much on rate cuts is possibly not the ideal thing to do, which also means that the dollar differential or the rate differential somewhere along the line is going to start again playing in favor of the dollar. So while you're seeing some weakness now, I wouldn't bet on a very prolonged weakness in the dollar.
Okay, all right. That'll be an interesting thing to watch, because it's been whipsawing all over the place between highs of 110, now 104, below 104 actually. So it's been very, very choppy along with many other markets. Thank you very much for the quick view. Much appreciated. Thanks for joining in today.
Thank you. Thank you so much.
All right, so that's a quick update on how the globe is looking. Let's now tell you more about what's lined up on the show today. Lots of interactions as always at 8:35. We will be speaking with the management of Astra Microwave. A lot of defense stocks have cooled off significantly from the top. So what lies ahead and what are the specifics for Astra as I look forward to the new fiscal year? We, at 9 a.m., will be in conversation with Jinesh Joshi of Prabhudas Lilladher. We'll talk about the recent rally in media stocks and how the sector is looking. Pankaj Murarka of Renaissance Investment Managers is our market master of the day, so he comes in at about 9:20. At 9:30, we speak with the management of Vinity Organics. The company is, of course, quite exposed to the US. It's also incorporated a wholly owned subsidiary, Vinity Organics USA. So how is the whole US picture shaping up and how are they mitigating some of the risks over there? After that, we have Vajee Sivakumar of GE Shipping joining in, talk about how global charter rates and tanker rates are being impacted with this tariff talk, demand supply in the shipping markets. At 9:50, Boman Rustam Irani of Keystone Realtors joins in. With the stock market cooling off, is there some sort of a follow-through effect on real estate? We'll ask Boman as we go forward. And finally, in our special series Market Masters, Lata today will be in conversation with veteran investor Devina Mehra.
All right, time to slip into a short break, but we've got a lot of stock-specific action to track for you in our special Top 10 segment. For the time being, the list comes up for you on the screen. Sun Pharma, JSW Steel, Shyam Metallics, IRB Infra, Railtel, Lupin, Biocon, JB Chemicals, all of them will be reacting to positive news flow, while on the flip side, you have Innocent Bank and Olympic Pharma that will be reacting to negative news flow. Slip into that break, come back, we'll get into further detail on all of these names.
A growth of 15% and TVS a growth of 7%. In resultant, the growth in FY25 so far for Bajaj and Hero is 3% each, while for Eicher it's 6% and for TVS it is 11%. Now let's take a look at one more segment, that is exports. It's a crucial segment for Bajaj Auto and TVS Motor. Due to the muted domestic growth, the export contribution to total sales has risen for both companies. For Bajaj Auto, exports now account for nearly 50% of total sales, up from 34% at the end of H1 FY25. TVS has also seen an increase in export contribution from 22% to 30% over the same period. However, when comparing export growth rates, Bajaj Auto has significantly underperformed TVS. In H1 FY25, Bajaj Auto's export growth was only 7% compared to 16% for TVS, and this trend has continued in H2 FY25 as well. And because of that, in FY25 so far, Bajaj Auto has seen 15% export growth against TVS growth of 23%. Now let's talk about the valuations. In September 2024, the valuations had surged with all the stocks hitting record highs. Bajaj Auto's one-year forward PE had surged to 37 times, Hero to 25 times, Eicher to 37 times, and TVS to 47 times. Where does it stand now? Well, the correction in stock prices brought valuations back to historical averages. Bajaj Auto is currently trading at 21 times, same as its 5-year average. For Hero, it is 14 times against the average of 17 times. For Eicher, it's 29 times, same as the 5-year average. And for TVS, it's 34 times against its 5-year average of 32 times. So what's the conclusion? Data of last few months indicates that Bajaj Auto and Hero have underperformed peers on most metrics, and while high-end bike segment has continued to see a strong demand, entry-level segment remains a drag or say a concern. On the export front too, we saw Bajaj Auto underperforming TVS. So what's next? We'll have to see how the month of March pans out. Bajaj Auto in the last interview with CNBC-TV18 has talked about recovery by the end of this month or early next month.
There's plenty of talk about tariffs, what is Trump going to do next, and what's going on in the other emerging markets. But there could be one space to hide, and that's purely domestic, or goes according to domestic factors. That's the cement space. The question is, since there's global uncertainty, will cement be the place to hide in? Well, just looking at the consumption, things look good actually. You know, the data that we got in, the core data that we got, said that in January you had close to around a 14.5% growth, which told you that this growth is coming on a low base. Also, capital expenditure has perked up yet again. So that's much better in comparison to what we have seen in the previous 9 months. And for the year itself, now this is the production number, the street is working with demand of...
Welcome back. You're watching Bazaar Morning Call. It's a Monday morning. The cues from Wall Street on Friday were positive. Key indices ending with a gain of close to about 0.5%. The question is, will the pullback continue in the Indian market? Last week, we rallied close to about 2 to 2.5% on the large caps and mid caps. But let's drill it down to individual stocks now. Our research team is standing by with CNBC-TV18's list of top stocks for the day. First up, it's Pharma Dose. Vinny's joining in on Sun Pharma.
Good morning. So Sun Pharma, just this morning we have this news for coming in where Sun Pharma is going to be acquiring Checkpoint Therapeutics, which is a US listed company. This is mainly into immunotherapy as well as targeted oncology company. So mainly this is going to be a good addition overall to Sun Pharma's specialty portfolio. This will bolster the innovation portfolio, especially in oncoderma therapies for Sun Pharma in the US market and globally as well, the global presence. Now overall, this company also has an important drug approval from the US FDA. This is for Unloxcyte, which is a drug which is used for treatment of, an PD-L1 treatment for CSCC, which is some sort of a skin cancer kind of treatments. So this is the only one which has gotten an approval so far. So an important drug that will get added, and they will be launching these products as well. So yes, an important transaction there. Overall, upfront cash what Sun Pharma will be paying will be around $4.1 per share, and this will aggregate to around $355 million. Other than that, stakeholders will also receive contingent value right of up to $0.70 per share. Other than that, Checkpoint will also, the controlling stakeholder Checkpoint will have a royalty agreement. So Sun Pharma may be paying some royalty over there as well. That detail is not exactly given, but there is a royalty agreement that is signed. Sun Pharma expected to open in the green because this is a positive sign coming in terms of the specialty portfolio. Good addition there.
Okay, all right, got it. So positive news for the stock. Vinny, thank you very much for that. Let's get to Abhishek. Abhishek, so it seems that Mr. Sumant Katpalia is getting an extension, but not as long as what IndusInd Bank had asked for?
Not IndusInd Bank. The board has actually sought for a 3-year extension. So IndusInd Bank's MD, that is Mr. Sumant Katpalia, for a second time in a row gets a lower tenure than what the board had sought with the regulator, that is RBI. So he's now got a 1-year extension up to March 26 to be the MD and CEO of the bank as versus 3 years that was sought by the board. So last time RBI had again given just 2 years extension versus 3 years that was sought by the board, which means that RBI might be not comfortable with giving a complete 3-year tenure to Mr. Sumant Katpalia. Now, our analysts say that this means that the board will have to find a replacement. This creates a leadership uncertainty in the interim period. Now, previous similar instances were seen with other lenders as well, like RBL Bank, they got a 1-year extension. Bandhan Bank, they got a 3-year extension versus 5-year extension that they had sought. Federal Bank had sought 1-year extension, but nothing was given to them. So, there have been previous instances wherein RBI had not been comfortable with respect to the tenure that the board of the respective banks have sought. Weak profitability as per IFL securities in FY26 coupled with leadership uncertainty should keep the stock price under pressure. So brokerages, largely most of them have cut the target price on the stock. Citi has a buy recommendation, Jefferies buy recommendation, MK buy recommendation, but BofA has actually downgraded the stock to underperform and cut the target price as well. IFL Securities also has a buy, but they have cut the target price on IndusInd Bank. Back to you.
Thanks a lot for that, Abhishek. We'll keep an eye out on that one. It starts off in the red, and let's see, because there are a lot of shorts in the system as well, whether or not there is some kind of covering. The stock in the last 1 month down 13%. Let's focus on a couple of metal stocks, though. JSW Steel, well, they came out with their numbers for February. Normally not a big market mover. Production number has spiked up close to around 12%. Remember, they have production that's coming on stream and expansion that's coming on stream. So that's on expected lines that you see a bump up there. And also, if you look at the capacity utilization level, particularly for the India operations, it's hovering in the vicinity of around 93.5%. Or demand on ground should be pretty okay. And we're getting into the seasonally strongest period, which is towards the end of the year. So going with a mild tinge of green on that one. The next one, we're looking at Shyam Metallics. The stock saw a big bounce in Friday's trading session, and they have given their February numbers as well. Keep in mind, February of this year had 1 less day in comparison to February of last year. In comparison to January, obviously, it's 3 days lower. Stainless steel as well as aluminum foil, both of them are relatively newer segments. On a low base, there's a good bounce out there. Specialty alloys is more or less flattish, while carbon steel, sponge as well as pellet, there's a bit of a downtick out there. So you keep an eye out on that, because some part of that could be used captively as well. But going with green out here as well, because on a sequential basis or on a month-on-month basis as well, they have given that pricing is gradually improving. And also there is hope that there'll be some kind of duties that will come in there to protect the domestic ferrous industry. So tinge of green on both JSW Steel as well as Shyam Metallics. But let's go back to Vinny. She's here to tell us about Lupin as well as Biocon. Vinny?
Yes, so both Lupin and Biocon, some positive news coming in for both these companies. Now, Lupin, firstly, let's talk about that one. They've announced the launch of a generic drug. This came in Friday late evening, and this is the drug that is Rivaroxaban. 2.5 mg tablets. They will be launching this in the US. Now, this is to reduce, this drug is mainly used to reduce, some cardiovascular, I beg your pardon, cardiovascular events in patients who have coronary artery disease or even for patients who have peripheral artery disease. Now, this is an at-risk launch that is coming in from Lupin. The patent is going to be expiring in 2039. There's already Sun Pharma also who is filed, for this litigation. They are also waiting for some approvals coming in from US FDA. So there could be some competition that will also be launching in. But obviously what Citi believes that this is a $446 million brand and this may contribute around 7 to 10 million per quarter for Lupin as well as any other company that launches if it's a two-player market. So interesting to watch out for this one. As of now, surely we could see an up move coming in for Lupin. Biocon also green because they've received some positive results of phase 3 trials that they're done for ustekinumab, which they've been working on as a biosimilar. Now, ustekinumab, do not forget, is around a $6,966 million market in the US and around a $3,900 million market ex-US also. But there are already competition which have released, and launched this product or have gotten an approval from the US FDA. This is the US market. There are 4 players currently who have launched or have received an approval. So there is already competition, but still positive results is a positive sign for Biocon.
Thank you very much for that. It's over to Hormus now for the latest on IRB Infra and RailTel.
Positive developments coming in from both of them. IRB Infra came out with its toll collection updates over the weekend. It's gone up by 18% to almost 530 crores. The management also is saying that they are now very confident that they will surpass the toll collection revenue of FY24 this year and that the further budgetary allocations will also provide more impetus to toll collections going forward as well. So expect that stock to open in the green. And RailTel as well. It's won 2 orders, one of which is from East Central Railway. That's worth 47.5 crore. That is for the design, manufacturing and supply of electronic interlocking systems in Dhanbad, and the other one is for 28 crore order for indoor and outdoor double distance signaling work, and that is supposed to be completed by September of 2026. It's won plenty of orders in the recent times. Expect the stock to open in the green as well.
All right, and let's get the hat trick complete with Vinny. Vinny is like really dominating the list today, right? Lots of pharma stocks in news. Which are the other ones, Vinny?
Absolutely. A lot of pharma companies, that have announced news flows over the weekend. Alembic Pharma is the other one. We're expecting a bit of a red here. Now, why? Because US FDA has completed an inspection in its bioequivalence facility. This is in Vadodara. Form 483 has come. One observation. This is a procedural observation. This inspection was somewhere between 3rd of March to 7th of March. But just one procedural observation is what they have received. So yes, some bit of an impact is what we could see. A red or a muted start is what we're watching out for. Not a sharp decline for Alembic Pharma, at least is what one could watch out for. JB Chemical Pharma, that's also one which we're keeping an eye out on. Now, the company's formulation manufacturing facility in Gujarat was also inspected by the US FDA. No observations received for this one. No Form 483. So yes, positive one for the company, and we're expecting green.
Thanks a lot for that, Vinny. Well, let's do a quick recap then of all the top stocks we just discussed. The ones with positive news flow: Sun Pharma, JSW Steam, Shah Metallics, IRB Infra, RailTel, Lupin, Biocon, as well as JB Chemicals. All of them will be reacting to positive news flow. While on the negative side, Indices Bank and Alembic Pharma that will be reacting to the negative news flow. That's about the equity markets. But let's turn our attention to the commodity space. Manisha Gupta joins in to fill us in with what's going on there. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices, where we have seen the prices ease yet again. Remember, it's been last 7 weeks. Every week, the crude prices have continued to decline. There is this shifting trade policies from US that has raised a lot of uncertainty on economic growth and energy demand as well. And the markets are looking at higher supplies going forward as well. That's weighing onto the market. Also, when you look at the US jobs data that came in on Friday, wasn't really supportive, and that has led to the US dollar index now trading at a 4-week lows and a fourth week of decline on that one as well. And that's now weighing onto the metal prices. For last 2 weeks, we've seen many of these metals actually do quite well, whether it has been about copper, which went to a 9-month highs, or zinc, aluminum, steel. Rather, the China steel restructuring statement also led to some support. But today in Asia, what you're looking at in sense of metals is profit taking across. So 0.25% to 0.7% of a decline coming in across metals there.
Okay, all right, Manisha, thanks very much for a quick roundup. We'll come back for more to you in some time. Right now, I have to take a very quick break. On the other side, we'll have Prakash Diwan join in, talk about a couple of the stocks that have been in news over the weekend and get some more new investment ideas.
Growth of around 7 to around 8%. Keep in mind that in March, you have a higher base, though in February you had one less day and also you had Mahakumbh. So there have been some dispatches in central India that's been impacted. So give and take everything, demand looks pretty okay with a growth of close to 7 to around 8% in Q4. That's what the street is working with. Next up, in terms of pricing, we have been covering this fact, right? That pricing has been absolutely dismal. But on a quarter-to-quarter basis, at least prices are up by around 2 to around 2.5%. So that's what will support some kind of growth in terms of realizations. While there is an attempt to push through 10 to around 20 rupees per bag. But, this is being met with some resistance because it's towards the end of the year. You have a big festival as well, which is Holi. And also you'll have the year-end volume targets. So there'll be a lot of pushing of volumes out, which could question this 10 to 20 rupees per bag increase that the street is trying to push through. So that's on pricing. Pricing relatively higher, demand as well fairly good. Input costs. Coal prices, they have continued to decline, and that's a positive actually, because thermal coal prices are down. The problem is there is some imbalance in pet coke, and that's why those prices have gone up. However, cement companies, they can source a higher amount of coal and they'll be able to adjust this. And keep in mind that crude oil prices have come down. Normally you see that pet coke prices as well could follow suit. So input costs are expected to be benign. However, for margins to hold out, you'll have to see a couple of price hikes to move through. Because as of now, they'll gain the benefit of lower input costs. But if pet coke prices remain stubbornly high, that's what could put some pressure on the EBITDA per ton. So for Q4, we in all probability should see an increase of close to around 150 to around 200 rupees per ton on a sequential basis on EBITDA per ton. However, to protect the margins in Q1 FY26, you'll have to see some incremental price hikes that go through as well. Finally, valuation-wise, well, in comparison to the averages, not too bad, because this has been a sector as well that's corrected in line with the market. But given that there is uncertainty on the global front, with Trump's tariffs, with what's going on in China, will cement be the place to hide? And if there is going to be an uptake in capital expenditure, this could be an indirect play as well. So we'll keep an eye out on this sector. Welcome back. Hope you're having a good morning. Prakash Diwan joins us as promised to help us out with some analysis on all the stocks we just discussed. Hi, Prakash. Good morning. Good to see you in. Prakash, let's talk about IndusInd Bank. That was a big underperformer, not just in Friday's trading session, but in the last 1 month or so. Now you have the news that their top boss hasn't got an extension for 3 years, but he's got an extension for around 1 year, with some belief that will be adequate to find a replacement. And also in the past, we have seen whether it's RBL Bank, Federal Bank, Bandhan Bank, when they didn't get the desired extension in comparison to what the board had asked for, the stocks reacted negatively, but in the following month or so, they did see some kind of recovery. How would you approach IndusInd Bank if it starts off in the red?
Good morning, Nigel. So I think I do agree, the development is not as anticipated or probably short of the anticipated outcome, but it's at the same time positive enough that he's not been, not given an extension, right? So in that sense, the bank gets time to find the right candidate. It could be, enough time for them to even look externally, since internally they probably don't yet have set sights on anybody to fill that gap. But, the shorts that are in the system, IndusInd is down about, 9, 10, 11% as compared to the Nifty. It's underperformed. there could be a case of, a bit of short covering that can happen because of the other development that's likely, and which is there's some life insurance business that's probably looking at buying into it. There's some news about it. I don't know whether that's confirmed. But if that were to kind of play out, that becomes a positive because from a valuation perspective, it does give you that comfort. But it's not a long-term recommendation because I've always found their portfolio to be the last to get repaired once things look up. So I would still go with a Kotak or with an ICICI at this point in time rather than IndusInd. But I think the short covering could probably be slightly different this time. And, it doesn't make sense to go short on it at this point.
Prakash, morning. Reliance Industries was the stock of last week. 4 days of gains and big gains over the last 4 days. Now at current levels, do you think there is more upside? Because investors are all waiting for those triggers around geo listing, etc.
Very much so. We spoke about this on Friday when I think it was Jefferies that came out with that call. And very clearly, there is anticipation that Reliance is probably reaching its fair value, or probably it's undervalued in some context, given so many optionalities that are kind of coming close to fruition. So geo-listing is one thing that you mentioned. Look at how retail has been expanding and becoming much more efficient. I wouldn't be surprised if this quarter the retail numbers probably beat the segment as a whole, the sector as a whole, very, very sharply. And refining margins have also been fairly steady and on the upward side. The arbitrage is far stronger for them. So, and then you have this green energy outcome that could kind of be absolutely very close to maybe the AGM is the time where you'll probably see some big bang announcements related to that. And that's just about 3 months away. So from that perspective, it does give you a comfort that if things look up, Reliance could probably risking. And remember, the ETF outflows is what has been responsible for Reliance's downfall on the stock. Otherwise, I don't think there's been a performance issue that has led to this re-rating. So if that money were to come back, and I don't know when that happens, it would only kind of accelerate things. So you're sitting in a very good risk reward from that perspective, but you'll have to have a slightly longish horizon for these things to pan out. At least, a couple of years is where, things would start looking very different for Reliance. But yes, the level at the current levels are definitely very attractive for anybody to take some exposure.
Got that. Prakash, hi, morning. Great to have you on as always. I don't know if you managed to take a look at some weekend updates. It seems that Hyundai has some 7 resolutions they need to pass. And I think some of them are related party transactions. And there seems to be some difference between how these proxy firms are looking at these transactions. One is in favor, I think IIAS, and the other SES is, I think, against. I don't know. I mean, whether you got into the nitty-gritties of this or not. But overall thoughts, Hyundai?
Good morning, Surbhi. So I did kind of catch the headlines, but I didn't really go deeper into it. The match was too much of a worthy distraction to do all that. But I can tell you one thing. Some of these chaebols, the Korean firms, the way they operate globally, there's a very different way as compared to what you would expect a large listed entity to behave. And it takes time for them to kind of reset in terms of those expectations. There's a way of working which, it's not kind of, I know it's not the right way to explain it, but at times it can be not too fair to minority shareholders. But in this case, I don't know whether, at 1,700 it even offers value. Even if this were not to be there, there's no point looking at the stock because it was overpriced in the IPO. And it will continue to struggle to cross that level. And there'll be a lot of supply as it comes through. So I have never been very interested on the buy side. In fact, this could only put more pressure and make you wait longer if you actually ended up buying it in the IPO or post the IPO. So it's not something which is very favored. And I'm sure some of these things only kind of make the doubts deeper. So I would definitely look at it as an avoid at this point in time.
Okay, all right. Request you to stay with us, Prakash. We just want to focus on the defense theme because that space has seen a sharp correction. So let's invite our first management on the show. We have Astra Microwave. The stock has seen some correction this year. It's down close to around 15%. How's the second half of the year looking? What's the order book looking like? And how is business shaping up from here on? We're joined by Mr. Atim Khabra, the Director of Business Development and Strategy at Astra Microwave Products, who joins us. Hi, Mr. Khabra. Good morning and always good to see you in. Well, tell us, how's the order inflow? How's it looking? if you could tell us, what is the pace on ground? And I think earlier you were talking about an order inflow target of close to around 1,200 crores for FY25. You could correct me on that number. And also, how is FY26 looking in terms of an order inflow? Please go ahead.
Hi, good morning, and it's good to be back as always. I think we have only good things to report as what we had always told you. We are maintaining our guidance. Our order book forecasts have more or less been translated into actuals at this point in time. We are looking, delivery is on schedule, and we will cross, in all likelihood, 1,000 odd crores, which we had spoken about, indicated to you. The next year guidance has been and our consolidated order book right now is around 2,332 odd crores, and a standalone is about 1,960. And our forecast for the next year is the new order inflow is in excess of 1,250, 1,300 crores to be coming in next year, of which about 900 odd crores should translate into sales from the existing order book, plus incremental 250, 300 crores from the new orders, resulting in a guidance of about, I believe the management has come in and given a guidance of 1,200 to 1,300 crores on the next year, which is about 25 odd percent is the top line growth which we are projecting. So
Kabra,
we are
for this
preparing
year,
for
yeah.
Sorry?
Mr. Kabra, just to get the revenue number out of the picture, this year you end closer to around 1,000 crores is what you're telling
We'll
us?
cross,
and for the next year,
as
it'll
per
be,
guidance. Yeah.
And next year it'll be closer to 1,250 to 1,300 crores. Is that correct?
1,200 to 1,300 is the range which has been disclosed or guided. Yeah.
All right. The fear is
we are
about a
basically
slowdown.
we're just basically preparing, as we had discussed, for FY27 second half onwards, wherein a lot of our order books really starts translating into regular production orders, and that should be a nice one at that time. Sorry, go ahead, please.
Mr. Kabra, just clarifying, in this guidance that you've just given out on the order book and top line, you're saying should see 25% growth. Are you factoring in a large overseas contract? Because when we sort of spoke to you last, or when we last had some interactions, there was some talk about a big contract shaping up, but at that point in time, you couldn't give us too many details. So has anything moved on it? If you could give us some more contours.
We try and give guidance on the basis of actual orders on hand. That's been our philosophy, and all our extra initiatives bring in the X factor. So we have multiple projects, multiple discussions which are on an ongoing basis. And in fact, I would like to mention that the new opportunities for the whole industry, you started by speaking about the industry, there is a mega trend in the offing at this point in time. If you look at the next 6-7 years, which is rearmament of Europe, they have decades have happened in weeks, and I think there is a substantial business flow which can accrue to Indian companies. It's too early to say what exactly is the quantum, but we are hearing about all sorts of numbers. Depends on what is the incremental GDP allocation which European companies are
right now,
forced
sir,
to
do you export? That's an excellent point. Glad you brought it up, because it is a seminal shift, which we haven't heard of in decades. But do you have any exposure to Europe right now, or is it? I mean, thematically, yes, obviously great opportunity, but I don't know if right now Indian companies, including Astra, whether they're geared to the kind of specifications, etc. If there are some contracts that you're already executing for, say, the French or the Germans.
We have a lot of ongoing relationships with a lot of European companies with whom we have worked in India. So there are two angles, I think, which need to be explored on this particular mega trend. One, either do you supply directly onto them, which is a slightly, again, a rear-ended kind of a thing. As orders, allocations are finalized, what exactly needs to be done is finalized. But one thing which will be very clear is that the European companies will have their hands full with their current order books. So supply chain resilience for Indian companies, and in the context of tech-based warfare, becomes a very, very critical thing, which will open up a very significant opportunity for the sector as a whole. And we will be there.
But as of now, do you export to Europe as of now?
No, nothing significant.
Okay, so you're looking at it as...
So it's all delta. It's all delta which will come in, incremental.
Got that. Out of time, Mr. Cabra, but thank you very much for joining in and laying out the guidance for this year and FY26 and the potential tailwind from Europe increasing its defense spend. Get into a break, but as we do that, here is a quick note for all our viewers. What does it take to move the needle on gender parity? The biggest names in business, policy, leadership come together at the Mega Summit for HSBC presents CNBC-TV18 Future Female Forward, co-presented by Cognizant. To answer that, tune in live on CNBC-TV18 today, 5:30 p.m. We bring you insight from those shaping the future.
इंफ्रास्ट्रक्चर, कनेक्टिविटी, हेल्थ केयर, एजुकेशन और टूरिज्म, यानी एक प्रकार से हर क्षेत्र से जुड़े ढेर सारे प्रोजेक्ट इस क्षेत्र के विकास को और गति देंगे। यहां नए अवसर पैदा होंगे।
Welcome back. Let's find out the trade setup for today's trade. Sudarshan Sukhani, Mitesh Thakkar are now with us on the show. Gentlemen, good morning. That's the question, right? Does the uptrend sustain from current levels? Is there more steam, or are we likely to see renewed pressure, selling pressure at higher levels? So, Sudarshan, you go first. What's the trade on the indices, and how do you expect today and the coming few days to pan out?
Yeah, good morning. Well, last week was excellent. In this program, we caught the lows and went long almost when the market rally started. Now, this cannot continue. We all understand that markets go through cycles of volatility and, say, contraction. We saw a very decent expansion last week. And this week, we also have the the truncated week. Friday is a holiday. So I would think that this is a period when we'll see consolidation rather than a new big rally. The consolidation would mean that markets could be choppy. Since the short-term trend is up, sharp dips should be used to buy. There's no rush. If in the unlikely event of a breakout, we'll just have to let it be till we get a dip. So the trade still is wait for sharp dips and go long, but don't run and chase a breakout.
Okay, got it. Don't be in a rush. Last week, as Sudarshan said, that they had said that buy into the dip and look forward to some gains, which have taken place. Now, in fact, just wait in there, look to buy sharp dips. Let's go across to Mitesh. Mitesh, what about you? How are you feeling about the markets? After a while, we had the opportunity to say that India outperformed in a week after underperforming for multiple weeks. What's your take? How do you trade from here on? For the time being, the GIFT 50 suggesting an 80-point pullback.
Good morning, Nigel. So I think, we also maintain that the immediate or the short-term trend is on the upside. If you look at the last few days of movement, the Nifty moved up from sub 22,000 levels to about 22,600. And maybe, it's gained about 650 odd points. So it will give away about 150, 200 points. But my sense is that unless until we break this 22,400, 350 zone, I think declines closer to that level would be entry point on the long side. So to me, I think around 22,400, 420 is where I would want to buy. And I believe that 22,600 should be the first target, which is where we also, had the highs on Friday. And once we cross that, 22,770, 800 broadly is the zone where I think the Nifty will eventually go. I'm not sure of move beyond that, but in the short term, I believe that we are very likely to test this levels of 22,770, 800. So with that, I think the view or the bias is on the upside.
Let's get to some stock-specific ideas then, Mitesh.
Yeah. So I have more buy calls in line with my market outlook. So a buy on Berger Paints with a stop at for targets of 535. Here I would recommend a stop below levels of 502. Buy on LIC Housing Finance with a stop at 522 for targets of 550. Voltas is a conditional buy if it starts getting past 1420. Buy with a stop around 1400 for targets of 1465. And one sell call, that's Oracle Finance. Keep a stop at 7680. Look for targets of around 7390 on the downside.
Okay, all right. Got that, Mitesh. Let's go back to Sudarshan. Sudarshan, take your point that one doesn't need to get carried away with the market recovery too quickly. But what about stocks? Individual action today?
I think the individual action should be mainly on the long side of the market. So I have an all buy list. Enfin Homes is a buying opportunity. Enfin Homes buy with the top under 617. Apollo Tyres is a buy. In fact, if you see Apollo Tyres charts, it's been in a consistent uptrend even when the Nifty was falling. That's interesting. Consider buying Apollo Tyres with a stop under 402. Glenmark is a buying opportunity. It's been an outperformer. Buy Glenmark with a stop under 1373. And finally, Bharat Forge is a buy. Now, this is a rather speculative buy because it depends so much on news, but it's worth finding out whether it has a big move coming. Have a stop under 1,069. But for all the stocks we have discussed, follow your stop losses.
Got it. Thanks a lot for that, gentlemen. We'll come back to you all for the 9-10 call as well. For the time being, we slip into a short break. On the other side, we have Jinesh Joshi or Prabhudas Liladhar. He is joining in to tell us about the recent rally in the media stocks. Stay tuned for that conversation.
Let's talk about your 2008 Olympics match. Tell us about your whole experience. That was your first Olympic match. What was the feeling? What was going on in your mind? Tell us all about it. I think it was in 2008 and I was 18 years. And when I won my first international title, I was only 16 and I was there in the international circuit, and a lot of these Chinese and a lot of these Koreans were actually, they were worried like some Indian is coming and they're actually giving us tough competition because before me, we didn't have a female badminton player who was actually playing at that level, who was actually winning those international matches. Of course, we had Prakash sir and Gopi sir who did well, but I was just, when I started playing badminton, I used to ask my mom this question, why badminton? I don't know. It's such a difficult sport, and you have the Chinese in quarters, semis, and finals. They're everywhere. So she used to be like, no, for me, you are the champion. You're going to do it, and just believe in yourself. And imagine she's a housewife. She's just a housewife. She's not even a international level coach, or she's not someone who's seen what international badminton is. But she was like, you are my champion. You're going to do it. And with her belief, I was in the Indian team when I was only 13. Senior Indian team. Wow. And I won my first international when I was only 15, 16. So these things happened in my career really, really fast because of only one person's belief. And of course, the coaches come in, the trainers come in. But I think the first Olympic was, in fact, so early in my career that, I was like, my mom wished that I have to become an Olympic champion, and I'm here. I'm here so early, and I'm actually getting closer to winning the medal. In 2008, I lost in the quarterfinals. And I still, that one match gives me a lot of sleepless nights because it does, because even after having the medal, I was 11-3 up in the third set. And then I was actually getting all these things in my mind, saying that my coach was like, ek din tu world champion banegi. My mom was like, ek din Olympic champion. Not pressure, but I was happy that I actually was going near winning a medal.
Okay, we're just about hitting 9 a.m., so we'll get the pre-opening rates in a bit. Asia is a lot more mixed this morning. One point that we didn't mention, should speak about it right now, is that the inflation numbers that came out of China on over the weekend, they are talking about disinflation. Inflation's fallen quite substantially in China. So that whole pressure, and we've seen that the Chinese have acknowledged it. They've revised downwards their inflation projections as well for the next year, while saying growth will be 5%. But that's really weighing on markets today. Look at the price cool off on the Hang Seng and on the mainland Chinese markets as well. Taiwan's down, but Japan's doing well, so it's very mixed. Implied open, let's see what all of this means for us. The indication is that we could start slightly negative because of this Asian opening, but the hope is that then the buyers will come in and maybe we'll see the Nifty make an attempt, who knows, cruise towards the 20 DMA as well. Anyway, since we're talking about global issues, the one thing that really is a sticking issue, like we mentioned in terms of Qs, FPI selling has come down, that's good. US markets recovered on Friday, that's good. The dollar is falling, that's good. One thing that's not good is this constant back and forth on tariffs. And we had President Trump come out with the big criticism once again for India, saying there are high tariff barriers in India and it's extremely difficult to sell anything in India. Listen in.
India charges us massive tariffs, massive. You can't even sell anything into India. It's almost restrictive. It is restrictive. We do very little business inside. They've agreed, by the way, they want to cut their tariffs way down now because somebody's finally exposing them for what they've done.
And couple this with what the US Commerce Secretary, Mr. Lutnick, Howard Lutnick, said on, I think it was a CNBC program over the weekend. He said everybody has to make in India. Why are they making these iPhones out in China? Or maybe now in India as well, right? They need to make these iPhones here in India. And if there is a cost, it's not a problem because robots can make those phones in the US. All kinds of things being said. But on a more serious note, this is a big issue that we still have to navigate. We are now learning from sources that, of course, those India-US talks have been progressing. We know our Commerce Secretary was in the US all through last week. So where do things stand now? We've got Parikshit joining in. He's been keeping his ear close to the ground. This is the big one, Parikshit. What's the sense you're getting as of now?
Yes. Donald Trump there on Friday making it clear in a statement that India has agreed to reduce tariffs significantly, and he said that it's very impossible to sell anything in India. So clearly it seems that the US government, through public statements, was putting a lot of pressure on the Indian government to reduce tariffs. Just last week, Commerce Minister Piyush Goyal was in the US for talks with Howard Lutnick, the US Commerce Secretary, and Jamieson Greer, the USTR. The sense that we are getting from our sources that India may be looking and considering reducing the average applied tariffs. So, for example, if the average applied tariffs by the US is 2.5%, India's average applied tariffs in the range of 9 to 12%. So there is some negotiation going on to reduce the average applied rate, which is the average rate across product lines. Interestingly, Howard Lutnick had told a TV channel last week that we're not looking at a product-by-product deal with India. We're looking at a broad macro-level deal which overall brings down tariffs. So this could be 0 for 0. This could be average applied tariffs. That remains to be seen. But India has said that in previous FTAs with Norway, with UAE, with Australia, we have brought down the average applied rate significantly, and negotiations with the US should be seen in that context.
Okay, all right, Parikshit, thanks very much. Well, the last word still hasn't been said on this. We still need to get more clarity on what this overall deal will look like for India from our perspective. Thank you very much for that. Let's take this to Prakash. Prakash, there are still lots of Indian companies that have exposure, right? Lots of exporters. And I'm not only talking about areas like textile, which is obvious, but lots of pharma companies, lots of chemical companies. We'll be speaking to one in a bit, Vinati Organics. They're, for instance, now setting up a new subsidiary in the US because of all this pressure that's out there. Any specific advice on 1 or 2 or 3 stocks or companies where maybe you'd take your foot off the pedal a little bit because of potential tariff hit? There are automakers as well, I forgot. Yeah, a lot of auto ancillaries also are suppliers to the US.
Yeah, absolutely. So, the list of what you could avoid is far longer because of the uncertainty and the broad potential range of where tariffs could impact us. Because it's still work in progress. We really haven't seen the last of it. But I would invert a bit and look at what's looking positive, and that's the pocket you need to go and fish into. So, for example, the way you mentioned Vinati, there are companies like Welspun Corp, which already have a running unit. They've been supplying from there. They've been producing from there. And, even if tariffs were to get imposed, which could happen to any segment, any sector, these are the companies that would be much more resilient to this entire tariff tantrum. So I would look at some of those names, and then they also have domestic tailwinds, Surbi. So, it's a very good combination to look at some of those names. But I think it's still very amoebic, very fluid at this point in time, which tariffs are going to impact and to what extent. So let's wait for that. But yeah, given the situation on the ground, some of these companies like Welspun, as I said, just case in point, is definitely looking very positive.
Okay, Prakash, thank you very much for joining in. Interestingly, IndusInd Bank has been flip-flopping between the red and green. It was down nearly 8-9% in pre-open. It went back in the green, up nearly 1%. Now it's down 1%. So just trying to, find its rate in early trade. While the news is negative that Sumant Katpalia has only got a 1-year extension after a 40% correction from the peak. Is all the bad news priced in? That's the debate that's raging right now. But let's focus on the media and the entertainment stocks. So last week, the Nifty Media Index saw a near 7% rally with names like Z Entertainment seeing a double-digit up move. Jinesh Joshi, research analyst at Prabhudas Leeladhar, is now with us with his call on the sector. Jinesh, let's start with Z Entertainment. Promoters bought a bit, so that infused confidence, plus valuations are seemingly attractive. Give us your view on Z Entertainment.
Yes, promoter buying is a soft signal that things are on the improvement scale. So if you look at their last quarter numbers, I think the EBITDA margin at 16% was definitely good, taking into consideration that the AdX spend has been slightly weaker. Also, if you look at their digital business, I think the EBITDA loss in Z5 at about, 135 to 136 crores was perhaps at multi-quarter lows. So definitely valuations are attractive at these levels. The stock is at about 9 times FY26 EPS. But I think for one to turn really constructive on this name, we'll have to see how the recovery in the ad environment happens. So if my memory serves me right, from 2Q of FY23, we have seen Zee's domestic ad revenue decline barring one quarter. So I think one should ideally wait for an improvement on the ad environment side. And if that happens, it can be an icing on the cake for sure.
All right. Hi, Janesh. Good to see you. But Janesh, valuation-wise, I think the stock is trading at around 10 times. And they were guiding that margins will improve substantially in FY26. At around this 104, 105 mark, do you think it's well priced or you would still wait by?
See, I think their margin guidance for FY26 is about 18 to 20%.
Yes.
We are at about 18%. And for FY26, I think they should be at about 15, 16%. So no doubt, I think on the margin side, after the merger fallout, the kind of work they have done on the cost optimization bit is really commendable. And at 18%, I think with a EPS of about 11 and a PE of about, say, 10 times, it appears to be in the attractive zone. But see, honestly speaking, after the fallout, what has happened is that there is a lot of derating that has happened on the broadcasting space. So for us to turn constructive, we'll just not look at valuations. We think that once the ad environment improves, because see, again, in 1Q, you will have IPL and the ad dollars will shift to sports category. So there could be some delay in the ad environment recovery. And we will ideally wait for that rather than chasing the price and valuations at these levels.
Got that. Janesh, the other big story came out of Karnataka, where they're talking about capping movie ticket prices at 200 rupees, including multiplexes. So that's got everyone concerned. What is the impact on PVR Inox if this takes place? I mean, how much does Karnataka contribute? If it's capped at 200 rupees, what could be the EPS impact?
Sure. See, Karnataka for them is about 12% of their overall screen mix. They have about 215 screens in Karnataka. And I think the order and in fact, see, it's not an order. They have just made a suggestion in the assembly that they want to cap the prices. But see, ideally in South, we have seen multiple states operate in the cap regime. And what one also needs to understand is that whether these caps will be there on weekends, whether it will be applicable to the premium formats or not, because cinema is basically a weekend business. So if the caps are not there on weekend, I think they are relatively better off. So I think once, and also one has to look at whether the order gets passed or not, because see, again, this situation arose in 2018. The order was passed, but PVR went into High Court. The order came in their favor, and they got certain exceptions when it came to premium formats. So it will be slightly premature to kind of think that this will have a significant negative impact on PVR. I think they will be able to figure out a way definitely from this mess.
And as of now, what is the rating you have on PVR? Because there was some mild promoter buying, and I've seen that out for very, very long on PVR as well. So your rating, target price on PVR, and a quick word on Sun TV. You know, it promised at one point of time, they have cash in their books, they have the IPL franchise, valuations in favor, but the stock has seen a big correction from the top.
See, on PVR, we have a hold rating. Our TP is approximately 1200 odd. And what we feel is that even in this quarter, I mean, if you look at the overall box office collections, they are at about 1700 to 1800 crores so far, and we have 20 days to go for the quarter. Given no big movies lined up, I think Sikandar is lined up in last week, but the spillover will happen in April, which means that effectively the collections will be in the band of about 1700 to 1800 crores or maybe 1900 crores for the quarter. And historically, whenever this has been the box office number, PVR has struggled for profitability. So one has to look at the near-term pipeline as well. And even in 1Q, I think barring Raid and one other Hindi movie, the pipeline on the Hindi side is not that great. So I think, again, over there, we'll have to wait when the pipeline improves. Some movies like Chhawa have done exceptionally well, no doubt about that. So on the pipeline side, once the improvement comes through, I think definitely a company with about 50% screen market share will benefit meaningfully if you have 2 quarters of good movie lineup. But that is where I think the problem is currently at this point in time. So we'll wait out for that. On Sun, Nigel, we don't cover it, so I will not be able to kind of give any view on that.
Dinesh, thanks so much for joining in. Let's get in a quick 9-10 calls. Sudarshan?
Consider buying Glenmark. Buy Glenmark with a stop under 1373.
And Mitesh?
Buy on LIC Housing for targets of 550.
Got that. Let's keep your eye on Infosys today. CLSA has upgraded the stock to an outperform. Their target price stands at 1978, which is a 15% upside from current level. 1, valuations are attractive at a 7-year average. 2, Q4 seasonality, the weak seasonality because wage hikes, etc. kick in, is priced in. And 3, the company, CLSA believes that there are medium-term positives. Discretionary spending has revived in BFSI retail. There were concerns that, will this entire tariff uncertainty, business confidence has been rattled, will this hurt tech spending? But at least CLSA believes that for Infosys, it's best placed to capture the discretionary spending recovery. Macquarie is the other one we're looking, Wipro is the other one we're looking at because Macquarie hosted Wipro in a non-deal roadshow in Singapore last week. And the management has said the discretionary spending pickup has continued, that Capco, their consulting arm, continues to see a pickup. In BFSI and retail, things are fine. In BFSI, it's not across the board, but there is a recovery. Wipro has reiterated its Q4 revenue guidance. They've said that margins will remain in a tight band. Excess margins will be reinvested back. They have an outperform rating on Wipro. So after last week's correction on tech, 2 bullish calls coming through on these majors.
Okay, all right. Let's focus on the big loser on the Nifty. IndusInd Bank. Abhishek joins us to fill us in. Abhishek?
RBI has given a 1-year extension to their MD up to March 26 versus 3-year that was sought by the board. Even last time, RBI has actually not given as much as extension that was sought by board. They had given 2 years versus 3 years that the board has sought. So analysts say that this means board will have to find a replacement. This may create leadership uncertainty in the interim period. But there are previous instances wherein, RBI has not been very active with respect to attending the board's call of the duration that has been given to lenders like RBL Bank, Bandhan Bank, Federal Bank as well. And this has led to negative reaction on stock prices. So weak profitability even in FY26 coupled with leadership uncertainty should keep the stock price under pressure is what IIFL Securities has mentioned. Back to you.
IndusInd Bank down 4.5% in trade. Clearly, that is weighing on the stock. The uncertainty, it's a 1-year extension, so what happens after that? Then you have to obviously look at succession. So kind of muddles the plot to an extent. The rest of the market, actually, even on the IT, those positive calls that have come in from CLSA, it's not really helped stocks too much. Reliance is also a little quiet. So it's a bit of a quiet start, but it's better than what the implied open was telling us. So let's see if the bulls come in and start buying the dip. Right now, actually, it's looking good. It's just about 16 points down, 19, 20, 30 points down now. So slightly lower on the Nifty. That's how it's opened out. The mid-cap index is relatively better. There's some green on the mid-cap screen so far in the opening. Almost actually 0.4% higher. The Bank Nifty obviously is struggling because of the IndusInd Bank hit. But other than IndusInd Bank, it's actually not too bad. I mean, other banks are fine, and now there's green on the Nifty, and that's what I was saying. They expect the buyers to come in because the nature of the market seems to have changed a bit last week. The mood is different, and now that elusive buying on dips has started to play out. Now, all the key indices in positive territory, barring the Bank Nifty.
Well, that's right. A few stocks in the broader markets, though, are looking good. You have IRB Infra. The toll collection was up by close to around 18%. That stock's flying away in today's trading session, so it's doing quite well, up close to around 3% on rather good volumes. The street likes that. GMR Airports, let's pull up that stock as well. They've acquired additional 10% stake in Delhi International Airport. So that one, I think there was a bit of a positive tick. It's up close to around 1%. Railtel, they won an order of around 76 crores. The street likes that. That stock has opened up well in the green as we speak. The biggest casualty, as you mentioned, was IndusInd Bank. That stock, in fact, is taking it hard on the chin. But we'll have to watch out for this mark because it opened up with a cut of around 4.5%. It's still holding out there. Let's see whether or not there's a recovery in store. A couple of other names. Let's pull up Gensol. The promoter entity went ahead and they sold some stake in the open market. They say that they want to reinvest in the business. Let's see what's the initial reaction out there. The stock is more or less flattish. They have a board meeting in the next couple of days, so we'll have to wait by to hear what are they going to do with their money and how they're going to infuse that in. So that stock, is more or less flattish. Bodal Chemicals, that's one of the big gainers. It's up close to around 10%. I think we need to check in further detail what's going on here. But that stock is one of the top gainers in today's trading session. Big up move. But Reema, I think the positive this morning is the breadth of the market. You have 3.5 stocks that are advancing for one stock that's declining. By the end of today, if you can have a breadth, something like that, well, portfolios will look quite good.
Indeed, some pharma names are higher in trade. So let's pull up Lupin, that's one. And secondly, even Sun Pharma, where the company has made an acquisition, Checkpoint Therapeutics, which analysts say is a good addition to the company's specialty portfolio. So green on the screen for some of these pharma names. And add to that a Piramal Pharma, which is up nearly 1.8%. In the hospitality pack, you've got Narayana Health, which is up again 1.7, 1.8%. So some buying emerging. Blue Jet Healthcare is up 3% on pretty good volumes. So that's one pocket of interest. Trend, on the other hand, is a bit subdued, and I think here Kotak has reduced the target price to 5,150. So the target price cut, some EPS downgrades too coming in for Trend from Kotak Institutional Equities. Castrol, after last week's mega run, is seeing some amount of profit booking, so that's about 2.5% down. But now the benchmark indices have turned now back in the red now for but the Nifty is holding 25,500, but it's red.
So the Nifty has been in red. The turn is more on the mid-cap index because that was cruising along quite nicely, but suddenly it's negative. So it's a volatile opening, you'd have to say that. It's not a one-way street, it's quite volatile. And on Trend, I was just adding, I mean, the Kotak call seems to be a little too late. Stock's already below 5,000 now, and it's gone through serious pain and correction. And that's how it's playing out for the time being. Yeah, IndusInd Bank, now the cut is almost 5%, so let's see. Again, some green on the screen. So it's really flip-flopping. It's very volatile. By the way, there's some correction in large-cap auto names as well. M&M, Bajaj Auto, even Maruti for that matter. Auto is under pressure this morning, along with IndusInd Bank.
A couple of names that are doing well. OMCs, the cooling in crude oil prices, valuation in support, the marketing margins now much higher in comparison to what the sheet is working with for the next year itself. So HPCL is one stock that's up close to around 3%. Remember, the last few trading sessions, it's moved very, very swiftly and on high volume. So OMCs is the space that's celebrating that decline that we're seeing on crude oil prices as well.
Okay, let's get in Pankaj Murarka, CEO and Chief Investment Officer at Renaissance Investment Managers, on the show now. Pankaj, thank you very much for joining in and good morning. Now, the question is, we've seen early green shoots of a recovery last week. Does it extend, and what will be the nature of the recovery? We've had a slide over the last 5 to 6 months. Is it going to be a very gradual recovery? Is the bottom in place? Or is there a risk of a W-shaped recovery, which means we recover, but again, renewed selling pressure comes in at higher levels and markets trend down? How do you expect the next few months to pan out?
Hi, Rima. Morning. I wish I had an answer to all of this. Market behavior always, is an enigma. All I know is, or the assumption that we're going with is, we still believe that the broader bull market is still intact. Having said that, it's a very matured bull market because this March we finished 5 years, the bull market started and onslaught of COVID. So it's a very matured bull market, but we still firmly believe that we are very much in a bull market. The correction that we've seen over the last 5 months is more a correction in a bull market. And from a market direction perspective, our broader sense is that somewhere we are closer to a trough in terms of aggregate as far as the large cap indices or Nifty index is concerned. Probably markets will consolidate at these levels for the next few months before we make the next move up. Having said that, I still believe that if you look at last year, CY24, the Nifty index did about 9% return on a full year calendar year basis. And we still think that given that we are in the midst of a cyclical slowdown in the economy and an earnings slowdown, this year Nifty 50 earnings growth is just about under 5%, probably the weakest earnings growth that we've seen in the last 5 years. I think the returns this year could be as well into single digit at the Nifty 50 index level. But I think more importantly, what we had seen was a fair degree of fear in market over the last 8 weeks and a significant unwinding across the market. The breadth of the market was very bad. I think that one-way selling across the market probably will take a pause, and from here on it will be more fundamental driven and stock specific. So there'll be a wider dispersion in the behavior and performance of stocks, I think. But I think the broad-based sell-off is done, and probably my assessment is that probably as far as the Nifty index is concerned, we have made a trough because now valuations are at about 10% discount to the last 15 years averages, which is very comforting. And more importantly, we see growth picking up in the second half of this year. So probably growth in the second half of this year will be much better than what we've seen in the last 15 months.
Okay. Hi, Pankaj. Good morning and good to see you. When there's been this debate whether or not we're going to get into a sticky territory, and some people are also calling for a bear market. Clearly, going by what you're saying, you're not in that camp. You believe at least the headline index, where we seem to be hit, making a bit of a bottom in place. Is that correct, right?
Absolutely, Nigel. I'm not in the bear market camp. I think we are very much in a bull market. The only caveat is it's a very matured bull market. at a point in last year, September, at index at 26,000, valuations were rich. We have been over the last 15 years, the most expensive equity market in the world. In the most expensive equity market in the world, where valuations are rich, and when you get an economic cyclical slowdown in the economy and earnings slowdown, markets will correct. And which is what exactly we've seen in the last 5 months. Having said that, I still believe that the broader bull market very much remains in place.
Okay, let's talk about a couple of sectors then. I think you like the discretionary spends, right? And I think you were talking about last time around, we're talking about happier things. Pizza, whiskey, Jubilant Foodworks, United Spirits. Now, the hope is that rural economy comes back because of, what's happened in the budget. And because that's seen a fair bit of pain as well. How are you positioned now on the consumption theme?
So, absolutely, Nigel. With a gap of almost 4 years now, I was starting consumer as a sector. We've been underweight consumer as a sector for almost 4 years post-COVID. But we think we've reached a point. If you see the last 2 years, the PFC, the private consumption, has been growing at about 6%, which is half of the last 10 years average. The last 10 years, PFC growth has been about 11-12% and has been ahead of nominal GDP growth. Rural consumption slowdown in India started, we're already 2 years into a rural slowdown because the rural consumption started slowing down in June 23. But I think we've reached a stage where we are at a very low point of consumption. Most of the headwinds are behind us. And more importantly, we see some green shoots, I would say, of revival in consumption. They're still early days, but I think we are seeing those in terms of early revival in some segments or pockets of rural consumption. And more importantly, the government itself has made a pivot this year. We've seen in this budget, the last 4 years, significant part of government resources were allocated towards driving central government investments. And this time, the budget has been a more balanced budget across investments and consumption and started with a tax break. Over the weekend, the finance minister is talking about GST rate cuts, I think, which is very important because high inflation has had a really impacted consumption in the last 2 or 3 years. So probably that will be very helpful. So I think we are in an early stage of a consumer recovery. I think the recovery will gather momentum going into the second half of this year. So if on an aggregate, meaning when I look at the market, probably consumer as a sector looks probably the most promising to me across sectors within the markets. And within that, our bets are placed across both staples and discretionary. So while on discretionary, we like some of those stocks, including Jubilant Foods and United Spirits, we like staples as well because we think that staples will see recovery as well as rural consumption improves.
What are the other big portfolio calls you all are making?
So, Rima, at this point of time, the approach is slightly, meaning while that's not an approach, but the way it comes up as investors, we are bottom-up stock pickers. So, what it comes across is our portfolio is looking more contrarian. We like financials, and within that private sector financials, again, a sector which has not done well for the last 2.5 years. And some of those boring names like HDFC Bank and Kotak Banks are really now our favorite ones because we think the headwinds that these companies had over the last 2 or 3 years are behind them, and probably they will lead growth recovery going into the next 3 years. Valuations, the stocks having remained flat almost for 3 years or 4 years, valuations are far more compelling and are significantly below where these stocks have traded over the last 10 or 15 years. And so we like private sector financials along with consumption. And we continue to remain positive on IT as a sector because we still think that despite a tail risk of recession in US, discretionary spends in US towards IT will keep increasing through the course of the year.
Any thoughts on IndusInd Bank and the news flow? Because you'll analyze private sector financials across. While it's not your favorite or preferred pick, it's HDFC Bank and Kotak Mahindra Bank. But your thoughts on the developments?
Well, so we think probably HDFC Bank is in the last leg of dealing with the challenges of absorbing HDFC as a conglomerate because it's been now 8 quarters into it. It was one of the biggest M&A that we have seen in the financial sector, even from a global standards, at $90-odd billion. And when you do such a large M&A, it does take time to digest, absorb, and integrate. HDFC Bank, to my view, has gone from being the fastest growing private sector bank of India for 20 years to being the slowest growing private sector bank of India in the last 3 years. I reckon, or we believe that probably in 3 years' time from now, it can go back to being the fastest growing private sector bank in India. And if that be the case, then apart from strong earnings growth, I think HDFC Bank's valuation, which have got derated over the last 3 years, will again will get re-rated. They might not go back to where they were because historical growth rates will moderate going forward, but still we see significant valuation uptick in HDFC Bank from here on.
I was actually asking on IndusInd Bank.
Oh,
any thoughts?
Not really, meaning we do have thoughts, but it's not one of our preferred bets, Arima, in that sense. We don't own that. As investors, we are moderate risk investors or low risk investors, and we usually don't like banks which have significant exposure to microfinance as a space, because our experience over the years has been that every 5 years you get some very significant credit costs coming into that business. So we've stayed away from banks which have significant exposure to microfinance.
Pankaj, hi, morning, Surabhi here. So I guess the big issue with the street is buying large caps is fine. Most people are saying that it's relatively safer to buy large caps, right? The issue is that should you venture into mid caps at all? And if yes, which are the pockets that are looking, well, relatively safe, where there's some growth, where valuations have cooled off as well? I mean, what's your thought? The whole large cap versus SMID debate. And what would you buy in SMIDs after this correction?
So I think one should definitely invest into mid and small cap, but I think at the index level, I still think that this year the large cap, unlike the last 2 years, 2023 and 24, the mid and small cap index outperformed the large cap index. Probably this year could be a year where the large cap indices outperform the mid and small cap index. Having said that, it's not that mid caps or small caps will not make money. The only point I'm trying to make is that unlike last 2 years where every stock in mid and small cap made money, from here on it will get more stock specific. So the dispersion within the index or within the group of mid and small cap will increase very significantly. So one will have to be very careful in terms of picking the right stocks. And when it comes to mid and small caps, because these are companies which are mid-size or small size, those sector approach doesn't work as much, because you have to get the business model and the management right. So bottom of stocking plays a more important role. Having said that, we still like, meaning some of the companies I mentioned, like Jubilant, we are betting on revival and discretionary consumption. So Jubilant Foods is a classical mid-cap and a caveat. We own that in our portfolio, so we like that. Likewise, we like some of the other names on the discretionary consumption side, because I still believe that we'll see a recovery in discretionary consumption over the rest of the year as well. The CRAM story looks still pretty promising. Most of the CRAMS companies in India in the healthcare space are still mid caps. We don't have a large. I think probably in 10 years' time, we'll have a company from the space which will be large cap. DVs is there, but I think there'll be more companies which will emerge, because the opportunity size out there is very significant. So some of these mid cap CRAMS companies look very promising.
Okay, fair enough. Yeah, I mean, intrinsically, I'm sure big opportunities over there. It's just that it's a very, very complex and confusing landscape with so much of tariff talk. But take your point. Thank you, Pankaj, very much for joining in and giving us some perspective on the market. The market, by the way, which continues to be fairly volatile. It's flip-flopping between red and green, but there is plenty of green also on the screen. So that's the good news. Nifty is up 30 points, so not bad at all. The first dip has indeed been bought. But now we're coming back to that central issue of US tariffs and what that is going to mean for Indian companies. Like we told you just a while back over the weekend. Again, we had very, very sharp statements coming in from Mr. Donald Trump saying that it's impossible to sell anything here in India. And then we had the US Commerce Secretary saying that everyone must make in America. It doesn't matter how much is the cost, whether you get robots to do it or humans to do it, but make in America. Don't ship things into the US. Where does that leave companies that have reasonably high exposure to the US market? Well, we're putting the spotlight on one such company. Right now, I'm talking about Vinati Organics. Now, interestingly, Vinati has decided to set up a wholly owned subsidiary in the US. To talk about this and more, we have with us Vinati Saraf Mutreja, Managing Director at Vinati. So, Vinati, great to have you, with us. You tell us, is it just a coincidence? Were you always planning a US subsidiary all along? Or is it sort of a bit of a response and maybe a need of the hour, given the new dispensation, given what the new US administration wants? Tell us more about the US plans. I think out of your total exports, US is almost 36%. Out of your total revenue, correct me if I'm wrong, but US contributes 20%. So that's pretty significant.
Sure. Good morning. So I think, like you rightly pointed out, it is actually just a coincidence. We always needed to have a subsidiary in the US, simply given because it's such a large market for us, and we do export a fair bit to the US. A lot of our customers want us to have a warehouse in the country itself, so it's easier to distribute products. As far as the tariffs are concerned, I don't think as of now it affects us too much. It only affects us in products where there is local manufacturing. But if you look at our top two products, for example, IBB or ATBS, there are no manufacturers in the United States for those products. It's manufactured in China, and China has a tariff already. So we anyways, for the last 4 or 5 years, we've had an advantage supplying to the US. And I do believe going forward, that advantage will sustain for these products at least.
Vinati, just tell us how the dynamics were working till now for the business. For your exports to the US, which is 20% of revenue, what was the kind of duty that was involved? I mean, just explain the dynamics. How was it working up until now? And now, how much of that business is going to move through this wholly owned subsidiary, which then, it becomes absolutely tariff-free in the sense it's tariff agnostic, fully protected then?
No, I don't think, first of all, I don't think the subsidiary becomes tariff agnostic because there is going to be transfer pricing involved. So the subsidiary is not a way to avoid tariffs. I don't think that is possible, and that is not the intention also. The subsidiary is simply there to better service our customers in terms of distribution and having a local warehouse. And maybe if we want to do some sort of product customization or small synthesis, if at all in the future needed. It does not circumvent the tariffs in any way.
Means you're still exposed, Vinati. That's an important clarification. You're right. I mean, then that means there will be transfer pricing at play. So what is the blended tariff right now that's applied to, to the products that you're selling into the US markets?
So it depends on products. It's a basic custom duties that they impose on products, maybe 7%, 7.5%. That's what it is as of now.
Okay, so the US, you're not going to manufacture in the US. You never were manufacturing, and even with this new subsidiary, it's only going to be warehousing and maybe some customization. No manufacturing takes place out of US, right?
Absolutely, correct. That's right.
Okay, now the US has increased tariffs on imports from China by 10%. Does that change the dynamics for you in your business line?
Well, it should make us competitive by 10%. So let's see. And honestly, this quarter is looking good. The next year is looking good. I'm not sure how much of this is because of tariffs. It could be just a general market situation. It could be just in general, our expansions are coming on stream. And please realize we are into niche chemicals, specialty chemicals, where we are market leaders and there are few competitors. So a lot of these tariffs don't have a real effect on our products.
So just clarifying that blended number, Vinati, that you shared right now, blended imports into the US, that's your products, the blended tariff is about 7.5%, right?
That's right.
And you would know how the supply chains work. So since it's all about reciprocal tariff, what they're saying is that we will tax you as much as you're taxing us. I don't even know if you're importing. What would the reciprocal rate be with India? Is there any threat to that 7.5%? Moving, higher?
Maybe we do buy most of our raw materials domestically. Again, domestic suppliers also price it on import parity. So if there is an additional duty, I'm sure the domestic suppliers will take advantage of that and pass it on. But we also import a lot from Korea, from China, from other countries besides US. So on the whole, I am not worried about this tariff situation, at least in my business, whether it's from the supply side or the sales side.
It's good to hear then, Vinati, but you're sounding quite optimistic about Q4's numbers as well as on FY26 prospects. So that clearly means that on ground you have seen some kind of pricing improvement as well as you believe that demand will be fairly firm. Give us, without getting into numbers, for Q4, if you compare it with Q3, how has pricing improved, if you could quantify it, and demand strong?
Sure. So pricing remains stable. We have long-term contracts, formula-based pricing, where we pass on the raw material increase or decrease to our customers. But the demand is looking strong, especially for ATBS. Again, coming to antioxidants, the new products, the demand in India is growing, is growing quite a bit. Butyl phenols, we are running at 70-80% capacity utilization. My new plant is very much ready and the product is getting approved for the other specialty products which goes into polymers. So on the whole, our product portfolio is increasing, our product mix is changing, and that is where the optimism is really coming from. My new plant for ATBS as well is about to get commissioned and get ready, where we're already oversold.
Okay, all right. Then now let's get to numbers. Tell us, FY25, we let it skip because, you would be in that silent period. But on whatever you deliver in FY25, given the kind of demand you've seen, given the fact that pricing could have bottomed out and you have expansions coming on stream, what kind of revenue growth are you working with? What kind of profitability margins?
Sure. I think one can expect about 20%, maybe 15 to 20% revenue as well as EBITDA growth in the next 2 years, 2 to 3 years, year on
15
year.
to 20. And in the past, you've spoken about 26 to 20% EBITDA margins on a sustainable basis.
26%, yes. 26, 27% EBITDA margins. That's right.
Okay. And all your capacity expansion, is it on track?
So far, yes. So far, so good. Fingers crossed. Yes.
Okay. And what about competitive pressures? Investors are a bit concerned on if competitive intensity is picking up.
If the demand is growing, then we are all, taken care of. I'm not worried about competition. Yes, we do face competition from China in antioxidants. That is one product which is being dumped into the country simply because the demand in India is growing. And we have applied for some sort of relief from the government, but let's see if that happens, does not happen. That's the one product where we do see competitive threat, yes.
Vinati, I'm glad you brought this up because I wanted to actually come to the whole China angle as well. It's all globally linked, right? So you're saying on one end, on antioxidants, there is some dumping happening. So the industry is asking for what, a safeguard duty of sorts? What is the kind of tariff protection that you're seeking?
Yeah, we have requested for an anti-dumping duty.
And what level would be suitable or required, to give adequate protection?
Could be anywhere, 20% in that range, give or take.
Okay, 20% anti-dumping duty for antioxidants which are coming in from China. Just to come to the...
It's still under process. It's still under process and, it will take
discussions,
some time.
Absolutely. Yeah, it
What's
has to be
the
taken
feedback from the government on this anti-dumping duty proposal or request from you all?
No feedback. No feedback yet. We have applied and we are just waiting for them to review and take their decision.
Okay. All right. Vinati, just leading into our next conversation, we've got a fair idea about your business. What about global freight rates? How have they moved? If you could give us for your business, just some color.
Well, so freights have come down in the last couple of months. And again, we pass that on as well to our customers. So whether it is raw material fluctuation, freight rate fluctuation, it really, we are agnostic to that volatility.
Okay, Vinati, always good to speak to you. Thanks a lot for joining in, giving us sense in terms of your business. And since we have ended that on the freight situation, I'll tell you what, we'll slip into a short break. On the other side, we'll focus on GE shipping. That's the next management on our radar. But as we slip into a break, here's a quick note for our viewers. The conversation around gender parity and closing the gender gap is evolving, and so are solutions. HSBC presents CNBC-TV18 Future Female Forward Mega Summit, co-presented by Cognizant, where industry pioneers share their take on what's next. Tune in to the discussions that drive the real change today at 5:30 p.m. onwards.
I was excited that I'm actually doing it with my training, with my coach's belief and everything, I'm doing it. Suddenly the game just turns and then she's just picking up everything. The rallies are going really longer and she's everywhere. She's all over the court, not leaving anything. And after 11-3, you won't believe I just got 2 points and she went on winning the match 21-30. After that, I'm sitting there and I'm talking to my coach, what happened? Because every rally was a big rally. I didn't even do silly mistakes to lose the match. What just happened? So I was like, when I thought about it even more, I was like, next day I better.
Welcome back. So we've got some green above our heads, as you can see, and we are pretty pleased with that. Like Nigel said, we just ended that last conversation with Vinati Organics to talk about, what's happening in terms of global freight. So let's actually get a deeper dive into it. How is the shipping sector coping with all of this tariff talk and the fact that crude oil prices are sort of reducing? This geopolitics as well. We woke up to the fact that there are new threats to Mr. Putin with respect to sanctions from the US if there's no agreement on Ukraine. So it's really everything is happening over here. So what does it all boil down to in terms of charter rates, whether it's tankers, whether it's bulk carriers, and what's happening in the shipping market? How's demand supply? Let's ask Mr. G. Shivakumar, Executive Director and CFO at GE Shipping. Mr. Shivakumar, you're already smiling, I think. It's complex. It's a complex world, right, that you folks are navigating because there's way too much going on. So I just want to start with the basics first. Has there been over Q3 so far into Q4, has there been some stability or any hint of a recovery when it comes to basic rates? Just tell us how they've moved. I think, crude carriers were at about $30,000. That's the last figure we had. Is there any upward momentum at all now that Donald Trump is saying drill, baby, drill?
Morning, Surbhi. Yeah, I think it's a little early to expect an impact from those statements. Eventually, hopefully, it will result in more export cargo of oil coming out of the US. For now, there's no impact yet. Again, it's probably a function of the oil price, and maybe they need a higher oil price to be motivated to drill more and produce more oil. For now, there's not much change in rates between the previous quarter and this one. Maybe marginally lower on average across all tankers. Bulk carriers are a little lower again, but bulk carriers is more of a seasonality. Typically, the first quarter of the calendar year tends to be the weakest quarter. So it's been weaker than the previous quarter.
Can you share some numbers, sir? So if you're saying tankers slightly lower, then how much lower than 30,000? And where are bulk carrier rates now? Some rough range to help us?
So crude tankers are more or less where they were in the previous quarter, not very different. Product tankers are probably marginally lower. Bulk carriers are also a few, maybe $3,000 to $4,000 lower on average. Again, the big ships are much lower than they were in the previous quarter, the Cape-size bulkers. The smaller ships, maybe $3,000 a day lower. In the tankers, the product tankers, maybe a couple of $1,000 here.
Got that. So slightly lower, quarter on quarter.
But year on year, they are much lower.
Year on year, what would be the decline?
So we're talking $10,000 to $15,000 a day on tankers, maybe $5,000 a day on average for bulk carriers.
Got that. Important numbers. So wanted to get your views in on another proposal that's come out of US President Donald Trump about imposing fees on Chinese-built vessels entering US ports. And that's raised concerns about higher shipping costs, inflation. Now, considering that China
and it's going to go through a process. I think they've invited comments, and it's going to go through a process of public hearings, which will happen in the next couple of weeks. So we'll wait to see how finally it pans out. It looks like something that will be tough to implement. It's something, if it is actually implemented, I suppose it will result in significantly higher costs of freight going into the US, because as you said, there are a lot of Chinese-built ships there. Even if they, ship owners divert their Chinese-built ships elsewhere to save on these costs, it just means that the whole supply chain, less efficient shipping means tighter markets, higher costs. So net, this is one of those things that could potentially result in higher freight costs.
Okay, potentially. But just, we know China dominates shipbuilding, but to what extent are we talking about? Do we have any numbers?
On the current order book, I think they have a majority. They probably have 60%. The order book is mainly between China, Japan, and Korea. Okay. They have the majority. I think they have almost as much as Japan and Korea put together of the current ships under construction. So they have a very, very significant majority. Yeah.
So it'll be a significant impact. And I know now it's a proposal, but do we know what's the extent of fees that the proposal entails?
Yeah, it goes up to $1.5 million per ship per port call as it stands, and which is a very big number really, which is proposed. And the enforcement is going to be tough because it depends on several factors, including how many Chinese ships the company owns, how many Chinese ships the company has on order. It's a complicated thing.
Indeed. But do we have have you all thought of any kind of contingency, any plan B in case it gets implemented in any form and shape? May not be $1 million, $1.5 million in terms of fees. But what is the thought process on how will the company navigate this headwind?
So a pretty small portion of our fleet is actually Chinese built. Most of our ships are built Japan and Korea. So we only have 5 Chinese built vessels really. So it's not, all you can do is to avoid putting them into that trade, because then it just becomes more expensive. So we'll just have to, if it comes through, we'll have to see how to trade those ships. And as I said, as soon as you introduce this new condition into the trading patterns, everything becomes less efficient, which means that just ships make more money when things become less efficient.
All right. Hi, Mr. Shivkumar. Good to see you. And as always, the last time we chatted, we were talking about ship pricing going down by, I think, 15% or thereabouts. But at that point of time, you said it's not yet attractive. Now you have a clean balance sheet. How do you navigate things? At what time do you decide that it's time now? You need to put that cash into works and, in fact, buy some ships. That time has not yet come?
Morning, Nigel. Yeah, the time has not yet come. The prices are where they were when we last met a month and a half ago. Not very different. So we are not yet there to buy. And of course, now every day you have some added uncertainty around US tariffs, trade, etc. So I think it makes sense to wait for a bit.
On the point of US tariffs, Mr. Shivakumar, I mean, common sense would say that it should not really impact maybe shipping rates too much, right? It's a question of how much more tariff you have to pay. But then, yeah, it's still negotiations, so it perhaps delays shipments. Maybe you start doing trade with different trade partners, and that starts impacting routes and lines, and then therefore overall freight rates. I think second order, third order impact could be there. But you're best placed to tell us what is happening right now in the seas, and what do you see ahead next couple of months?
So we saw this play out in a small way in the last term of President Trump, where there were some China tariffs put there, and China put some tariffs on US products, which they've already done, where they put some tariffs on US grain. And US is a significant exporter of soybean to China. So when those tariffs came in, basically the trades rerouted. China imported from Brazil, Argentina instead of the US, and US, instead of exporting to China, exported elsewhere. What happens is that it makes the trade just a little bit less efficient. And therefore, if anything, it's got a positive impact on the market, as you said. The concern is if there are widespread tariffs, then it actually affects economic growth and underlying demand for the commodity, in which case that becomes a negative. On a ton-mile trading pattern basis, it's good for shipping. But if it affects demand for commodities, then that's bad for shipping because of general economic impact.
So as of now, it's net neutral, right?
It's neutral for now because there are no tariffs on oil, and the tariffs keep coming on and off on Canadian and Mexican oil, which is a big trade. And if Mexican or Canadian oil can't go to the US, then they have to go much further afield, which is good for tankers in general. So, but those have been kept in abeyance till the beginning of April. We'll see then what happens to that oil and those tariffs.
Thank you, Mr. Shivakumar, for joining in. It's an uncertain terrain that everyone's navigating right now. By the way, look at the markets go after a flat opening. It's picked up. The Nifty is now heading towards 22,650, 90 points up on the Nifty. Sensex up close to about 300 points. So continuing with the recovery from last week. Mid-caps holding up in the green. Banks is still on the flatter side, but green tick. But it's PSUs dominating trade today. The Nifty CPSC index is nearly up 1.6%, and metals are adding on to the 8% up move from last week. It's added another 1% early in the morning, this Monday morning. So metals are higher in trade. Power Grid, Bajaj Finance, Adani Ports, BEL, Bajaj Finserv are some of the big movers. But let's talk about the real estate picture. Now, Mumbai has recorded over 11,500 property sale registrations in the month of February. Boman Rustam Irani, Chairman and Managing Director at Keystone Realtors, is now with us on the show. Thank you very much for joining in. So the numbers from Knight Frank continue to point to a very robust and resilient Mumbai market. But I think that my first question is, are we seeing any kind of impact on account of the decline in the stock market prices, the negative wealth effect that we say? Is that hurting maybe the luxury apartments, maybe something that someone was comfortable buying at 30 crore would say that, well, I've lost so much in the markets now, let me go out there and buy a 20 crore flat now. So the premium, ultra high luxury kind of apartments, has there been an impact of the negative wealth effect?
Good morning and thank you for having me on your show. Look, I've been fielded this question plenty of times before, and I'd like to just state that the numbers do not point towards what you are saying is a possible outcome of the stock market being brittle or coming down. We've seen 11,820 registrations, value of about 918 crores for the stamp duty that we see that is collected by the state. And this is just a tad down from 994 crores collected in January. But we must remember that February had less days, and this February particularly had 2 days lesser in terms of the working time given to the market. So if I was just to extrapolate, we would have crossed 12,700 odd registrations for the month, and the collections would have been way in excess of even January. So while there is a general feel that the stock market will continue to, loom and bring down the sales numbers of real estate, I do not see that happening as of right now. As a matter of fact, the homes that we see selling at max even today are those that are priced at about 5 crore rupees in the Mumbai landscape itself. And we are seeing a healthy and robust sales so far. I just spoke to my sales head for the month of March. In the last few days, we've seen a good uptake. People are looking at or are looking for new launches taking place, and there's always a buy-in over there because people look at the best price available when a new launch comes into play. So overall, the markets seem good and seem counterintuitive to what you've been saying that could happen.
What about pricing? Because we've seen a consistent, steady price increase over the last couple of years. Has that trend continued? What's been the pricing like in the month of January and February, and the expectation for calendar year 2025?
So again, the pricing, there has been no, we believe that it's better to have a robust growth in velocity rather than just the prices. And developers, especially in the mature markets, have understood that. The reports that you will be talking about lead towards, about a 6% growth in prices in the last year, in the entire last gone by. This is in Mumbai specifically. In Thane, the numbers are slightly more higher. And then when we look at the country as a whole landscape, or Maharashtra as a whole landscape, we've seen prices appreciate by as much as 11 to 14%. But Mumbai and MMR generally are a little more toned down. Between 6 and 9% is where we see the prices going. I do not think we should aim for higher prices. I think we should continue keeping prices in check so that people are able to continue affording the home of their choice, and there is a home for all, which is exactly what we've been working towards.
You said 6 to 9% price appreciation. That is to be expected. Are you talking about the next 12 months or so in Mumbai MMR?
I actually always speak about the data, so it's past.
This is the past trend. I thought that's a projection that you were giving. So let me ask you for the projection then. In the past, Mumbai has seen about 6 to 9%, but now with the markets and the sentiment, etc., what do you see ahead for pricing in Mumbai MMR?
I would like to just give you some more data, if that's okay with you. The general acceptable or healthy overhang of inventory should be at about 24 months, okay? When the market prices start appreciating, this is because this overhang is less than 24 months. And as of right now, data shows that we've got about 18 months of overhang in terms of unsold stock in Mumbai and MMR. So this does lead to some kind of speculation of price increases. But fortunately, these price increases are kind of kept to very micro markets. So certain very small micro markets might see a bigger spike. But on the larger base, I'm hoping at least that prices do not kind of escalate beyond the 6, 7, 8%. That is the inflationary trend that we see.
Baman, even the customers will be hoping that it doesn't escalate because you're seeing demand is solid. They'll be saying prices, hopefully it doesn't get too expensive. But tell us, what about the affordable market? You're not leaning too much towards that. But as an industry, there seems to be some pain out there. Would you agree?
I would agree with you entirely. The affordable market is not being addressed the way it should be addressed at this moment in time. And we've said this before. There are no margins, especially in the affordable space, where developers would find it, incentivizing enough to be able to go ahead and address this market as such. So overall, we would like for a few changes that the government, we've been reaching out to time and again, and asking for certain softs for not developers, but for the purchasers. And if those come through, then we are hopeful that the affordable market will be something that's great. But one of the key things that we've been asking is this 45 lakh cap that has been put as the tag price for an affordable home has been put in 2017. And if you just take normal inflationary trends, Nigel, that should be in the region of about 80 lakhs plus as of right now. So an affordable home should be tagged ideally only on the size of the apartment and not on the price point of the apartment. And even if it's a price point, there should be a distinguishing between tier 1, tier 2 cities and the rest. But I'm happy to state that in the rest of the country, and we've just come back from a CREDAI New India Summit, which is where we address the emerging markets, because that's where India is really growing as of right now. The Viksit Bharat is really happening. My conversations with most of the developers out there, they saw a good and healthy growth in infrastructure in their areas, leading to an additional buying or a greater buying taking place out there. Again, I do not have an answer for affordable housing there, but affordable housing definitely needs to be addressed by the government first and then at the same point of time by the developers too.
For Mumbai, Bhavan, I don't know. Affordable housing would be described as what, 3 crores of late? I'm not sure. It's one of those markets, right?
I can tell you what we need to do. We need to be able to kind of improve transportation timelines. So we've just launched a project which is in Dombivli, and I can say this, that the demand has been pretty good. The buying enthusiasm has been high because Dombivli, Thane are a distance which is about 35-40 minutes, and Thane is seeing a lot of growth in their commercial development. So people who live in Dombivli can go to work in Bhiwandi, can come to Thane, and that is why Bhiwandi is a new and upcoming area. Connectivity is improving. If we increase or improve the connectivity between the suburbs and the city, or the places of commercial development move towards these places, you will see a good and healthy growth out there. Let me just give you a price point, and that would be in the region of about 75 to 80 lakhs. You can afford to get a proper home in the Dombivli market. Even today, Virar sells a 1-bedroom at about less than 50 lakhs and a 2-bedroom at about 75 lakhs. So it is possible to address these markets, provided the transportation or the infrastructure that we are seeing or we see happening can just be speeded up and happen quicker.
Last mile connectivity is still a bit of a problem, but thank you very much for joining in. Let's get to the markets and get in a few technical ideas as the markets are racing away higher. 0.5% up now on the indices. Mitesh is now with us. Mitesh, good morning so far.
Very good morning, Rima. In fact, the Nifty aided by, I think, if you look at the stock price movements, it's Reliance, which has done well on Friday as well, some FMCG names and the Adani Group stocks. So I have buy calls from there. On the Adani Group, I think, Ambuja is something which has caught my eye. So Ambuja Cement is a buy. Keep a stop below 490 for half year and look for a target of around 540 on the upside. And Godrej Consumer is what I've chosen from the FMCG pack. I think that's a stock which I would recommend with a stop just below levels of 1,040 and look for a target of around 1,080-85.
Thank you very much for that. Get into a break. On the other side, we'll talk commodities with Manisha Gupta. Stay tuned.
latest masterpiece, and it's not your average art show. Light into Space isn't just about breaking boundaries, it's shattering our very perception of reality. Curated by the renowned Via Art Foundation from New York, the first of its kind international exhibition brings together thought-provoking works of light and space artists from the 1960s and 70s. Can you tell us and share your experience out here?
So this is the first time that I've actually come here, and I've flew down from Bangalore for this. And as we are looking at it, for me it was quite different, because the kind, it's basically, according to me, I felt it's like the way you see it through your eyes, the way you perceive it. So it was quite different. So I really liked it.
What has been your favorite art piece so far?
So my favorite was one of the glass pieces that was displayed on the second floor. Why? Is because it's really interesting how just a simple piece of glass molded into such shapes give subjective illusions to everyone, and that's just really pretty and really refreshing to see.
Spanning 4 floors of NMACC's dedicated visual arts space, the exhibition transforms industrial materials, fluorescent lights, polished metals, mirrors and reflective paint into interactive masterpieces. It's not just an exhibition, it's a sensory and spatial experience designed to engage and challenge the way we see the world around us. The exhibition is open to the public until 11th of May, with tickets starting at Rs 199. Also, the entry is free for senior citizens, children under 7 and students of fine arts, design and architecture. The exhibition is open to the public until 11th May 2025. So what are you waiting for? Check out the space and let us know in the comments below. In Mumbai, Zinia Barya. Let's talk about your 2008 Olympics match. Tell us about your whole experience. That was your first Olympic match. What was the feeling? What was going on in your mind? Tell us all about it.
I think it was in 2008 and I was 18 years. And when I won my first international title, I was only 16 and
Welcome back. Let's shift our attention now to the commodity markets. Manisha, as promised, is with us. Manisha, what are you tracking?
Well, I'm looking at metals as a sector, and you know, the last week was really good when you saw many of those metal prices there, but we haven't started on the same note on Monday morning right now. So when you look at the copper prices, we are off those 9-month highs. The prices have seen a decline of nearly 1% in the Asian markets right now. Well, there are various factors to watch out for, but having said that, even with this decline, copper prices still are 17% up in 2025 till now. And the markets do believe that the first quarter is going to be on the higher side there. I want to start talking about tariffs first. And that really seems to be adding a lot of uncertainty into the markets. But it is the US non-farm payroll data that the street is also reacting to. So what the markets were anticipating, you have lesser numbers than that. And that has led to a very sharp decline in the dollar index there. We're trading at a multi-month lows on dollar index. And that should have supported many of those metals. But that clearly is not the case right now. So coming to tariffs, and that really is the moving factor right now, rather the uncertainty therein. The Trump's shifting trade policies have given a rise to uncertainty in case of economic growth, and that has led to a lot of arbitrage opportunities in the international markets as well. So at this point in time, we have US suggesting that they have eased some tariffs when it comes to Mexico and Canada, and then the US also has ordered investigation into potential tariffs in copper imports. It takes, we are told, nearly a month by the time you will have those reports coming in. It already is 2 weeks down, so the next 2 weeks really are going to be important when it comes to copper there. If you look at the US markets, well, US imports 45% of its copper requirement. So whatever tariffs and what all tariffs we see is going to be important to understand. And copper, remember, is very important when it comes to EV, AI, electrification, data centers, And the conventional uses for copper also continue to be quite strong there. Well, apart from that, you have to take a look at China as well, where we have seen producers now sell to lock in profits. Is the reason that after very strong gains that we saw in copper, there is some profit-taking opportunity as well arising right now. The Chinese consumer prices also declined for the first time in 13 months. China trade data for the month of Jan and Feb also hasn't been so strong. We've seen imports decline, exports lose momentum. And as far as the US and China trade deficit goes, well, we have seen that surplus grow with US in the markets there. So it's various factors really that the street will be watching out for right now. The copper demand in the meanwhile, as I told you, has been on the stronger side. We are looking at copper deficit stories for the next couple of years in sense of anticipation there. That would support copper prices going forward. When you look at the Chinese markets though, we have seen a lot of tangible commodity buying continue in case of China. So copper inventories are high in China. But when you look at the US markets and LME, the copper inventories there have continued to decline. And more importantly, with the way the tariffs are going and because US doesn't have enough copper, the US copper prices are trading at a 10% premium right now to LME. So that tells you the story. And this vagary or this disruption in sense of prices is something that the markets are anticipating to continue for the next quarter as well.
Thank you very much for that. Let's talk about some stocks. Lupin, positive news there. Vinny joins in.
Hi Rima, yes, we are keeping an eye out on Lupin. A bit muted in trade, though opened up much higher, now holding on to gains of almost 0.3% in today's trading session. Lupin has announced the launch of a generic Rivaroxaban, which is a 2.5 mg tablet, which they will be using mainly. And this is an at-risk launch that they've had coming in for the company. So on the back of this, Citi has given a brokerage note buy rating, target price of 2,260 rupees per share. The patent is going to be expiring in 2039. So it's going to be important to watch out for where the litigation actually goes. Currently, a litigation is going on, but yes, they managed to see a launch coming in and that approval coming in from the US FDA, and that is why that launch. Now, according to Citi, this is a $446 million market, may contribute to around $7 to $10 million per quarter initially for the two players that are there. One is going to be Lupin. Sun Pharma is also in the process of this as well, so we'll watch out for a competition coming in from Sun Pharma. Nomura too on Lupin is maintaining a buy, target price of 2,350 rupees per share. They're highlighting an estimate market size of around $125 million at a manufacturer price. Overall market size for this drug is expected to be around $2.4 billion, including other strengths. Now, currently, they've only launched 2.5 mg. There are other levels also which could come out in terms of strengths for this drug. And this launch is slightly ahead of the expectation of what the street was expecting. And that is why Nomura continues to be positive on Lupin and maintaining the buy rating.
Thank you very much for that. Time for a short break. On the other side is our special segment, Market Masters. Lata will be in conversation with veteran investor Devina Mehra. Don't go anywhere.
I was there in the international circuit, and a lot of these Chinese and a lot of these Koreans were actually, they were worried like some Indian is coming and they're actually giving us tough competition because before me, we didn't have a female badminton player who was actually playing at that level, who was actually winning those international matches. Of course, we had Prakash sir and Gopi sir who did well, but I was just, when I started playing badminton, I used to ask my mom this question, why badminton? I don't know. It's such a difficult sport, and you have the Chinese in quarters, semis and finals, they're everywhere. So she used to be like, no, for me, you are the champion, you're going to do it, and just believe in yourself. And imagine she's a housewife. She's just a housewife. She's not even a international level coach, or she's not someone who's seen what international badminton is. But she was like, you are my champion. You're going to do it. And with her belief, I was in the Indian team when I was only 13. Senior Indian team. Wow. And I won my first international when I was only 15, 16. So these things happened in my career really, really fast because of only one person's belief. And of course, the coaches come in, the trainers come in. But I think the first Olympic was, in fact, so early in my career that, I was like, my mom wished that I have to become an Olympic champion, and I'm here. I'm here so early, and I'm actually getting closer to winning the medal. In 2008, I lost in the quarterfinals. And I still, that one match gives me a lot of sleepless nights because it does, because even after having the medal, I was 11-3 up in the third set. And then I was actually getting all these things in my mind, saying that my coach was like, ek din tu world champion banegi. My mom was like, ek din Olympic champion. Not pressure, but I was happy that I actually was going near winning a medal. I was happy, I was excited that I'm actually doing it with my training, with my coach's belief and everything, I'm doing it. Suddenly the game just turns and then she's just picking up everything. The rallies are going really longer and she's everywhere. She's all over the court, not leaving anything. And after 11-3, you won't believe I just got 2 points and she went on winning the match 21-30.
My.
After that, I'm sitting there and I'm talking to my coach, what happened? Because every rally was a big rally. I didn't even do silly mistakes to lose the match. What just happened? So I was like, when I thought about it even more, I was like, next day I better start training to get the medal in the next Olympics. So yes, that match tortured me a lot, but I think it gave me that lesson as well, that you should not get too excited also sometimes. You have to control yourself. When you are actually going to achieve your goals, you have to control yourself, try to relax yourself. In fact, in that time, when I started doing well, I didn't have a mental trainer or a trainer. Only Sir, Gopi Sir was everything to us. And he being a coach, how much he could have helped in other things as well. So I feel, agar wo time pe I had a better mental trainer or someone who could give me advice.
We continue our International Women's Day celebrations, but as before, my guest today is a market master whom we invite for her mastery over markets. That she's a woman, of course, makes it a double delight. Joining me today is Devina Mehra, founder, chairperson and managing director at First Global and author of the very popular book Money, Myths and Mantras, which has gone into reprint in under a couple of months, or in just a month, right?
Just a month, yeah.
Okay. Many congratulations for that.
Thank you.
Yes, here's one reader of the book. But I'm going to ask you, begin with a very unique and absolutely unasked question. Has the market bottomed out?
Kya lagta hai market, as I said.
Exactly.
Eternal question.
Eternal question.
So,
but now the eternal question has become more persistent because of the slings of the last 4 months.
Yes. So, I mean, again, nothing unexpected. Just this morning, I was looking at somebody had posted the CNBC video from 2009, Nifty circuit up 20% on the...
March of 2009, yes.
Yeah, no, this is that the return of UPA. So Singh is king.
Okay.
And before that, if you go back another 5 years, it was circuit down when UPA came for the first time. So as most things, this too shall pass.
Yes.
But I mean, coming back to the basic question, as far as the large cap mainstream indices are concerned, I think now the risk is on the other side, that if you stay out, you will miss out on the upside. So now you are in that zone. Nobody catches the exact bottom, but definitely you are in that zone. And this is data I've been talking about for the last several years, which is that in 40 odd years of investing, if you miss out on the 10 best days, you miss out on 2/3 of the returns. So if your 100 rupees had become 75,000, now you'll be down to 25,000. If you miss out on the 30 best days, you miss out on 90% of the returns. And it's the same pattern. If you look at the S&P, it will be the same. And so everybody understands the risks of being invested and losing money, but there's also a risk to not being invested. So to the extent, whatever is your equity allocation, which should never be 100%, you should be invested. But the other part of the market, which again, I was looking at least from last July, I've been talking about it, that the small cap, micro cap, and also some other areas where you had these thematic funds, those are the areas which may not come back, because in every bull run and then there is a fall, and the next bull run, it is not the same stocks that come back. And just on the 10 best days, one other thing, that those 10 best days always come when there is fear and uncertainty, where people are asking that should I remain invested, should I stop my SIPs? They don't come when there is optimism and buoyancy and everything looks good, as it was the case in most of 2024.
Okay. So it's set. When in your article, I saw the Mint article, stay put or exit, it's clearly stay put, going by the historical
But
evidence.
not necessarily in where you are invested just now. Never wait to make it back in the same stock.
I was going to push this question behind, but let me drag it forward.
Yeah.
I read that bit also. What has just performed very well may not be, will not usually be.
Right.
Now, one of the big themes of the last 2 years have been e-commerce, for instance. I mean, Nykaa, Swiggy, Zomato, they've all given very good returns. Would this apply even to stocks like that?
Yeah, I would not. I mean, this is not where we are invested in the first place. So I may not know the exact details
no,
for
I'm just
every
asking you
company.
broadly.
But broadly, yes. I mean, it is. See, people think that one category of themes not returning is stocks which disappear into the blue yonder, as I say. So, because many more stocks have listed over the years than what trade currently.
Yes.
But there's also a category of stocks which where the businesses might keep running. DLF being a good example, very coveted IPO, and just it was above IPO price for just, I think, a couple of months after listing, and then didn't see years, decade plus, it did not see that price. So it is always many of those these stocks that you mentioned are still relatively higher priced if you compare with the global peers and all that. So it doesn't mean that you think the business is going to be a disaster, but the stocks may not still perform.
What are the specific themes we should avoid? We saw defense, we saw PSU. Which are the themes that, you would be wary that it will...
So, I mean, we are fairly stock specific, and I think right now it is also a stock specific market. But in terms of, I will tell you where we are overweight and where we've been overweight for a while, which is IT, pharma, auto components. In the last couple of rebalances, we've added some in FMCG, we've added some in chemicals. Banks, we are still underweight, but we have added some, banks and financials. So that would be broadly it. In terms of what we have avoided, there have been pockets of energy, there have been real estate we normally avoid also as a high risk sector, and our systems also never liked it. Paints was another area which we've avoided. So that broadly still continues.
Okay. Well, since you said, auto ancillaries, pharma,
right,
aren't those the ones that could get affected because of the tariff issue?
Yes, I mean, that
you
is,
have, so you would be very stock specific in these areas?
Yes, and I mean, that is, to some extent, the bad news is now in the price. Of course, the way Trump plays it, he announces these tariffs and then he rolls it back. He uses it as a negotiating tool. And if you look at the rest of what he talks about, that the common American has seen their costs go up, and healthcare is, in the US, it is one area which is where US spends the most and gets the worst outcomes. More or less among the developed nations, it has the worst life expectancy, infant mortality, it all, and yet it spends highest per capita. And India has been a source of cheaper medication. So do you really want to tax that?
Mess it up, yeah. I can imagine. So we have, pharma may still stand a chance. Okay, I take your point about being stock specific. The other theme that people are talking about is metals. I mean, one hears it being said because there is a chance that Europe will rebuild, the wars will, Trump is determined to keep wars at bay. Anyway, your view is not a very sexy sector, but has its time come under the sun?
Not really. No, I mean, we don't think it's going to be a really bad sector, but it's not looking particularly great. And I mean, there is a second order effect of Trump tariffs on metals, which is that India itself doesn't export much metal. But if they put tariffs on, let's say, China, so then India becomes the dumping ground. So that's the second order impact which is possible, and which is also keeping us a little wary of the metal plays.
Okay. Well, the other point before I came to the themes, the big question I wanted to ask you is this US exceptionalism and rise of Europe. Is US exceptionalism at an end?
See, first of all, as far as investing is concerned, one thing I say is that no theme lasts forever. No geography, no asset class, no sector within a country, nothing lasts forever. And the US has been an outperformer for the last 10, 12 years. And we were always watching that, when is that going to change? We thought it may be still some time, but I think Trump is kind of hastening the end of US outperformance, maybe. I mean, in our last rebalance,
so it's fading.
Yeah, we've gone not massively, but we've gone somewhat underweight US in our global funds. We've gone overweight Europe. Europe has been doing well, and again, long period of underperformance, maybe that comes to an end. And the narratives always follow. I always say that like 2003 to 7 is a period when emerging markets outperformed the US massively. I mean, emerging market index went up 3.5 times.
And then the BRICS narrative.
BRICS narrative was, and you know, it's going to be the century of India and China and all of that. And then when US market started to outperform, that was forgotten. So the stories always follow. But US is doing something which is really beyond just investing. I think, you know, they are, and that's the part that scares me, that it is not about investing, but that, you know, the world order as it stood post-World War II is, I mean, there were, of course, many nasty things the US and its allies did in the Middle East, for instance, or even what is now happening in Palestine. But that apart, largely,
based order.
Yeah, I mean, the whole world was kind of balanced, and that is changed. Even on trade, I heard a finance minister say that one thing which has fundamentally changed is that the multilateral organizations like WTO no longer work. We have to have bilaterals with everyone. So many things are changing, and the world peace part is where I am getting a little jittery, that, you know, how does that play out when everybody has their own nuclear weapons and you have, you know, dozens of madmen with their finger on the nuclear button.
No, I know. We are not talking enough about it. We are only talking about tariffs, but that is the downside when the rules order changes.
Right. I had posted on this. I mean, that's the scary part.
Yes. Okay, let me get back to economics, because people want to hear you about that.
Right.
Which may be the funding economies? If Europe and now even China are the economies to which money is flowing, which may be the economies or markets from which money will go? Will it be India? Will it continue to be India?
See, first of all, I don't spend a lot of time thinking about this, that where will the money come from for Indian markets, because I mean, the subtext to anybody asking that will FII invest or take out money is that if FIIs invest, the Indian market goes up. If they take out money, the Indian market goes down. This time it has been coincident that yes, they sold and the market went down. But if you look at the long-term data, there is no correlation. I mean, that's something we monitored for a long time, and we found there is no correlation. And this is right from the beginning. I mean, the FIs started investing in 1994, and 94 to 2003 is the only 9-year period in the Sensex history with a net zero return. So there's like that much money which came in. There was no domestic mutual fund or institution to speak of other than the UTIs and LICs. And yet that money did not drive the market up. So it is, you know, there is a disconnect.
That's a big consolation for people who believe that markets will run only with FII money.
No, that's the data. Yeah. I mean, that's
fair point. Fair point. No, the reason why I asked you was not whether FIIs will come in, but will the pull-out continue? If, you know, China and Europe become the go-to market, okay, as you said, some money you pulled out from US and put it in Europe.
Right.
Will FIIs continue to use India as the funding market to fund their new investments in China?
I don't think that's the real reason. If at all, on the margin, you know, FIIs, if you look at one, of course, is rupee depreciation. So their dollar returns have been coming down. And if you are making the returns, then we have a capital gains tax, which other markets don't have. So on the margin, you can say those are the factors. And so I don't think that to invest in Europe necessarily, that they might take money out of US for to invest in Europe.
Yes, we hope that. We hope that US exceptionalism will not draw money, at least from our country. If it is fading, then that much may be good news. We don't know. But thank you very much, Devira Mehra, for the fund of themes and topics within India that you have discussed with us. It's a pleasure having you with us, and we will, of course, have you even after the International Women's Day theme is over. And many congratulations on your book.
Thank you. Thank you.
We have to wrap up this conversation on that note. Chartbusters coming up after a break.
Just think about the next match, just think about the next point. तो उतना मतलब मैं उस मैच पे excited नहीं होती. But I was so happy that tournament gave me so much of belief. And in India, everyone started to go to know what badminton is. And they were like, Saina is really doing well in badminton. And in 1 year, I was there beating all these Chinese. I won the Indonesia Open. I became world number 2. So in 2010, I won 3 Super Series back to back. And in 2012, I got an Olympic medal. But I think that particular match taught me to be really, really thinking about that even after match point, you have 10 more points to go. Don't just think that the match is finishing, just be there, and presence of mind is required. And I think that first Olympics really gave me that confidence that yes, I'm there and I can beat all these Chinese and Koreans, and I can be in top 10, top 5 for a long period of time. And when I look back, in fact, someone told me that I was in top 10 for almost 11 years. And when I became world number 1, that is when I was like, yes, it's possible. It's possible. In 2015, when I was world number 1, everyone was like, wow, from India, we can do, in badminton, we can do such wonders. And we can also beat Chinese, who are the powerhouses. Korea, Japan, they are the powerhouses. But now you see, badminton in India is grown so much. And we are giving good challenge to all these countries. And we are one of the top in the world now. So, yeah.
Well, we're not looking to hurt anybody, and we're certainly not looking to hurt them. And I'm looking at that, and there were some people that think that's appropriate and some people don't, and I'll be making a decision pretty soon.
President Trump.
But we're not looking to hurt them,
President Trump,
especially Ukrainians. They've gone through a lot. Yeah, Peter?
India and the United States have initiated trade talks this week after threatening all nations, including India, with reciprocal tariffs starting the 2nd of April. The US government, as per our sources, has sought zero tariffs from India. Sources tell CNBC-TV18 that the US government officials want 0 for 0 tariffs for all product lines except for agriculture.
IndusInd Bank opened sharply lower as the RBI approves only a one-year term extension for MD and CEO Sumant Katpalia versus an ask of a 3-year extension.
Shares of Omax trade with gains as it launches a new phase of its world project in Faridabad. The estimated value is around 600 crore rupees.
Gensol Engineering opens with cuts as promoters sell about 2.5% stake to reinvest in the company's business. This is contrary to the management's comment on CNBC-TV18 just last week, stating that promoters would be looking to buy stake in the company soon.
Hyundai Motor India dips more than 1% after the company seeks shareholders' approval for 7 material related party transactions worth more than 31,000 crores. We'll discuss this in greater detail during the course of the show. Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as you can see, we are pumped up post yesterday's win. The men in blue, well, Mangalam, they drove home the advantage. And what a sight to see, right? The boys doing a bit of a jig post the game. Sunny Gavaskar couldn't control himself as well. Good times.
Good times indeed. And I see you wearing a blue jacket as well with the orange tinge out there. Reminds the color of the jersey of the team. We can't wear the jersey of the air. Might as well wear the same color as the Indian cricket team itself. We called it the Motilal Oswal studio at the top, but this is again, the stadium that we've created in our little CNBC TV18 studios itself. Those are the champions. What a team it is. And the good part is that there was no retirement that was announced by either Virat Kohli or Rohit Sharma as against what the most were expecting this time around. So good on them, man. What a camaraderie, what a team, what moments. What joy.
Well, that's right. ROCO, right? They continue to play, and that's good news. And, you know, Mangalam, what's good is that you can see continuity as well. The next gen is up to the challenge. They have been, being taken care of in the able hands of Virat as well as of Rohit, and champion, so to call it. Great game, pumped up. And it ended pretty okay as well. So we got our required hours of sleep.
We did get our required hours of sleep. And, just to wrap this up, ROCO in Hindi is to stop. We say mat roko to both of them. And having said that, the most interesting dichotomy in terms of generations move was that when we won it last in 2013, Virat Kohli was the one who was dancing in front of the champions thing.
Yeah.
And now he's the man who's a statesman of the game. And you have Shreyas Iyer dancing. So, your point of the transition being extremely smooth as well. So what we'll do is we'll just give high fives to each other, kickstart our day when it comes to the markets itself. The market's behaving fairly well, to say. The bulls also celebrating. The mid-cap index, you can quibble about it. But after a big 2% move yesterday, all of last week, we're holding all well.
Well, that's right, Mangalam. It's a good-looking screen as well, right? Because we started off with the cut-off around 50 points that immediately got bought into. And for the time being, the Nifty is trading with some green. But let's brighten up the screen. Let's welcome Shivangi Sadhav, Motilal Oswal Financial Services, who joins us. Hi, Shivangi. I'm sure you're feeling quite pumped up as well post yesterday's win. What about the markets? Do you believe we're good for more? The 20 DMA now is within 150 points for the Nifty.
Good morning, Mangalam and Nigel. Thank you so much for having me. Of course, it was a pumped up win. And talking about the markets, from the last 5 trading sessions, we've seen that the markets have also pumped up. So that's a good sign. Green and blue all in, color. So, of course, talking about the index, we've seen that support-based buying is quite strong. And we are seeing put-call ratio consistently improving from the last 3 trading sessions with IVs cooling off, which indicates that bulls are quite comfortable and active above 22,500 marks. Now, we are looking at 23,000 next on the cards with a support of 22,450 levels. It's a close support, but overall buying is intact, and we've seen a negation on the weekly basis, which will support the ongoing move. There are pockets of sectors which are contributing to Nifty, but then again, we've seen some underperformance from the banking index. Although NBFCs are performing, but heavyweight banking stocks have, come to a little lackluster move. But overall, this index has been also consolidating and looking quite positive to stay stable in these levels. So we're looking at 48,000 as an important support here, with an upside move towards 49,500 marks. Now, of course, the major focus will be on the NBFCs as compared to the heavyweights.
Right, so let's ask you about a couple of stocks. While you give us your pick, Shivangi, in specific, I'd like your thoughts on Reliance, because it was a good last week for that stock. It's consolidating today. Do you think this consolidation needs to be bought into? And the second one I'm looking at is Trent as well. Trent has had a very yo-yo sort of month. It's moved up a couple of occasions. It's moved down a couple of occasions. Today is at the low point of trade. So on Trent and Reliance and the stocks that you've laid out for us today.
Absolutely. So Reliance is a reflection of the market itself, and we've seen that there has been a good short covering move as well over here. And talking about Reliance, of course, there has been a good amount of buying even in today's session, and we are looking at 1250 is an important level to watch out for in Reliance. And the next levels that we are looking at Reliance is 1300 marks with a support of 1225. Now, talking about Trent, of course, this has also been one of the beaten down stocks and one of the most bruised ones in this entire market fall. And we are seeing that there has been 5 months of underperformance here. There is some sort of relief and range bound consolidative move over here, but then again we'll have to wait and watch for this one to again gain strength. Now, on my radar is first up is JSW Steel, which has witnessed a good amount of follow-up buying after the breakout on the daily basis. We've seen that metal pack is in action, and it has surpassed its previous hurdle zones as well. So this one's looking quite positive, and we're expecting this to move towards 1070 levels. So buying on that with a support of 1008 levels. Now, second pick on my radar is Bajaj Finance, which has been one of the most strongest in this entire NBFC and financial space. It has been making an upward sloping channel from the last 16 weeks and, supporting its 50 DEMA as well. We have seen that, bulls have been quite active here despite the market volatility and weakness. So definitely this one's an outperformer, recommending a buy here with a target of 8,900 and a support of 8,380 levels.
All right, take that point, Shivangi. Thank you so much for joining in, giving us your view on the markets and celebrating the win of India with all of us here in the studio as well. Take a short break, come back. On the other side, we'll focus on Hyundai Motors. Remember, we spoke about it in the headlines, the stock's under pressure. We have Sriram Subramaniam, who's the founder and managing director of InGovern Research, to discuss the shareholder concerns over Hyundai India's proposed related party transactions. What is it that they suggest?
At a time when Commerce Minister Piyush Goyal is in US for talks with USTR Jamieson Greer and US Secretary of Commerce Howard Lutnick. This is the first time that the two sides are formally initiating talks on the bilateral trade agreement that Prime Minister Modi and Donald Trump have agreed to sign by September or October this year. India has sought more market access for goods manufactured in India, especially labor-intensive sectors. Can India offer zero tariffs on all goods coming into India, including Tesla? That remains to be seen. However, experts have been saying that India can offer zero for zero tariffs or eliminate tariffs on 90% of industrial goods coming in from the United States, and this is doable. While India would like the reciprocal tariffs to be set aside, sources say so far there is little likelihood of any carve-out for India. When it comes to automobiles, it is clear that Donald Trump wants American car makers like Tesla and motorcycle makers like Harley-Davidson to be sold in India tariff-free without having to set up manufacturing. As far as Tesla's India entry goes, things seem to be moving fast, with Tesla taking a 4,000 square feet space in Maker's Max City Mall in BKC, Mumbai. They're going to pay over 25 crores in rent over 5 years, and the lease deed came into effect in February this year. Tesla has also taken some parking spots on rent to charge cars. The company has also taken a space on rent in Worldmark Mall in Aerocity, Delhi, as per sources. The company has kick-started hirings for Pune and Mumbai, mainly for showroom-related roles like delivery operations specialist, store manager, service advisor, and others. Industry sources say Tesla may not be keen on manufacturing in India right now due to decline in sales globally, especially a 76% drop in sales in Germany in February. Therefore, the company may prefer to import cars into India from Berlin and sell them at the lowest duty possible. At the moment, the US administration is seeking lower tariffs on all US products except for agriculture, and India too would want to defend its core interests in agriculture, dairy, pharma, and other manufacturing sectors. Let's see what happens before the 2nd of April when US reciprocal tariffs kick in.
The president is giving them an exemption for 1 month so they are not at an economic disadvantage. So the three companies that he spoke to are Stellantis, Ford, and General Motors. They requested the call, they made the ask, and the president is happy to do it. It's a 1 month exemption.
Welcome back. A couple of these FMCG stocks, they're picking pace right now. The top gainer on the Nifty, among the top gainers, is HUL, which has moved to the high point of trade. We're seeing some traction come by in names like Nestle as well. And if you pull up ITC too, that stock is up around 0.5%. So FMCG stocks, after the rubbing that we've seen, maybe a lot on the street believe that the worst of consumer sentiment is behind. We'll obviously keep getting comments on this space in the very near future as well. Infosys is the other one. IT stocks, after underperforming all of last week, starting this week on a good note. So Infosys has moved to the high point of trade. But the sector in focus today is the auto space, and the stock in particular is Hyundai Motors, after they've made a proposal to buy goods and services from related companies in excess of 31,000 crore rupees for the next financial year. It's divided leading proxy advisory firms. So to discuss this and more in detail, we're joined by Sriram Subramanian, who's the founder and managing director of InGovern Research. Sriram, the divide is pretty clear. On the one hand, it's a related party transaction done at an arm's length of 32,000 odd crore rupees. On the other, it is that, okay, it's an Indian arm of a Korean company. So what's wrong in taking benefits from, the back end things that the Korean parent has to provide? So in light of both these sides, the question is, where do you stand and what is it that you are recommending shareholders do?
Good morning. I don't think Hyundai, it is natural for auto companies to source components or parts from various subsidiaries or where they have tie-ups or joint ventures and source various aspects of the car from various entities. Amongst these 7, one of them relates to sourcing components from Hyundai Motor Corporation, Korea itself. One relates to sourcing from Kia itself, which is owned partly by Hyundai Korea. But the more important one, which is the first one, which is Mobis India, the one that has concerns. In that sense, why is Hyundai India sourcing from Mobis India, which is an Indian company, and that too they are sourcing tools and machinery. They are not sourcing components. They are sourcing tools and machinery from an Indian entity. So to that extent, there will be concerns in terms of whether the pricing is in line with market or because that is the Hyundai India is the only client of Mobis India. So to that extent, there are concerns. I don't think the company itself had wanted to explicitly have these or there are abusive related party transactions, but the company could have gone out and reached out to shareholders, put more information out there as to why it is compelling to source 12,000 crores worth of capital goods from Mobis India. I think that becomes a big concern. Though I think the company is not abusing, but at the end of the day, they are new to the market. So we can sort of say that probably over a period of time, they will realize that they have to outreach to shareholders. Also to be noted is these 7 resolutions are all ordinary resolutions, which needs only the 51% shareholding to vote. And Hyundai as a parent has 82% shareholding, and these 7 resolutions will easily get passed because of Hyundai as a parent voting for these resolutions. But be that as it may be, the company needs to outreach to shareholders, outreach to proxy advisory firms, and try to address these concerns, because going forward, investors will keep remembering these.
Okay, all right. Hi, Mr. Subramanian, and thanks a lot for joining in. So as you are saying that the resolution will get passed, but the point is it could have been done in a better manner. Could have consulted shareholders first and gained their confidence as well. Now, out of these 7 points, how many of them passed muster with you?
I think all of them pass muster, but we have this one called Forestar, where Mobis, especially the transaction with Mobis, which is the first one, that is a big concern, because why are you sourcing capital goods from an Indian entity is not clearly explained. There's no logic for that.
So what next? Because you said these will pass. So, I mean, whatever proxy advisory firms say does not in that sense matter, largely because you need just 51%. So what would your stand on this be?
No, I think investors have a long memory. There will come a time in future where, I mean, if the company is arrogant and continues to not share information, there will come a time when they will need support of shareholders. And when shareholders lose trust, the resolutions will not get passed sometime in future.
Right. But whatever little listing history that Hyundai has had from the red herring prospectus, etc. as well. All of that has been filed with the exchanges and the regulators. There doesn't seem to be any glaring corporate governance issue with the company, right? So this may well, like you said, be an honest mistake or something that they will learn in their journey of being a listed company. So then does that mean that shareholders should ignore this, or for instance, not give it as much concern as is being given right now?
Yeah, you have a valid point. One can pardon the company for its ignorance, so to say. But shareholders need to raise it at the as part of this postal ballot, right, to the company, or at least the institutional shareholders need to raise it in broker conferences or whenever they engage with the company. Otherwise, what is the compelling reason is not understood by shareholders.
All right, we take that point. Thank you so much for explaining this to us. So the stock is lower by about 1.5%, but like you said, not a big glaring concern, but something that the company needs to address. Had it been a glaring concern, I'm sure the market would have reacted a lot more aggressively than what it is reacting right now. Sriram Subramanian, thank you so much for joining in and giving us your valuable insights into this itself. With that, we'll slip into a short break, and as we do that, here's a quick note for all you viewers. What does it take to move the needle on gender parity? The biggest names in the business, policy and leadership, all of them come together at this mega summit for HSBC presents CNBC-TV18 Future Female Forward, which is co-presented by Cognizant. And to answer the question that I first asked, tune in live on CNBC-TV18 today at 5:30, where we bring you insights from those who are shaping the future.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18.
Welcome back. Well, the Nifty is almost raising its bat because it's a century now. We're almost 100 points higher in today's trading session. So intraday, you got a bit of a dip, and that has got bought into. A few stocks, in the last 45 minutes that have done well. Axis Bank, that one's now moved to the high point of the day. Brilliant move is what we're seeing out there. And the Adani Group stocks, both from the frontline index as well as from the broader markets. You have Adani Enterprises that's moved to the high point of the day. Adani Green as well has seen a good bounce back. And Adani Total Gas, all of them are doing quite well. If you look at the IT pack, well, Infosys, that's clearly the stock that's doing bulk of the heavy lifting today. Infosys is the large cap bungalow that's moved to the high point of the day. And that explains why the bulls are getting further ammunition as we move up.
Take that point. Take a look at some of these non-index large caps as well. I'm looking at Jio Financial Services, makes its way into the Nifty later. And that stock too has recovered a fair bit from the lows. Now marginally in the green, but remember from the lows, it's been about 1.5% in terms of recovery. PI Industries continues to do well. So we have that stock up and about for you on the screen. And the metals pack, that too isn't particularly badly bid. We have JSPL, which too has moved to the high point of trade with a gain of almost 2.5%. But it's IndusInd Bank, which is trading with cuts after the RBI has only approved a 1-year extension for its MD and CEO, as against the board's own approval and the company's ask of 3 years. The stock now down about 3.5%. Abhishek joins in to tell us more. Abhishek.
Well, RBI for second consecutive time has approved lower than what board had asked for IndusInd Bank's MD CEO term. So RBI has given a 1-year term extension to the current MD and CEO up to March 2026 against the 3 years that was sought by the board. Last time around, when the board had sought for 3 years, RBI had given only 2 years. So analysts do say that this means that the board will have to find a replacement. Now that will create a leadership uncertainty in the interim period. So previous similar instances were seen with respect to lower tenure given by RBI versus the ask was for RBL Bank 1-year extension versus 3-year sought, Bandhan Bank 3-year extension versus 5-year sought, and Federal Bank they have not approved the 1-year extension that they had asked for. So that have led to negative stock reaction with respect to the price reaction in the near term. So weak profitability even in FY26 as per IFL securities coupled with the leadership uncertainty should keep the stock price under pressure. Now brokerages say that they remain bullish with respect to the buy call, but they have cut the target price, like Jefferies has cut the target price, MK has cut the target price, IFL securities as well has cut the target price on the stock, while BOFA has actually downgraded the stock to underperformance and cut the target price to 850 per share. Back to you.
Take that point, Abhishek. Thank you for that. With that, we are coming to the close of this edition of Chartbusters. And as we do that, let's tell you, as always, what comes up to the right of Nigel here. India's business news leader, which is now just a click away, which is the all-new CNBC-TV18 app. You can get access to instant news, breaking news, in-depth articles, financial world updates, all of them at your fingertips. Just download the app on either your Apple Store or the Google Play Store, or you can just scan that QR code, which redirects you to the download link of the app, and that app gives you everything on your fingertips.
TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Unveiled its latest masterpiece, and it's not your average art show. Light into Space isn't just about breaking boundaries, it's shattering our very perception of reality. Curated by the renowned Dia Art Foundation from New York, the first of its kind international exhibition brings together thought-provoking works of light and space artists from the 1960s and 70s.
Can you tell us and share your experience out here? So this is the first time that I've actually come here, and I've flew down from Bangalore for this. And as we are looking at it, for me it was quite different because it's basically, according to me, I felt it's like the way you see it through your eyes, the way you perceive it. So it was quite different. So I really liked it. What has been your favorite art piece so far?
So my favorite was one of the glass pieces that was displayed on the second floor. Why is because it's really interesting how just a simple piece of glass molded into such shapes give subjective illusions to everyone, and that's just really pretty and really refreshing to see.
Spanning 4 floors of NMACC's dedicated visual art space, the exhibition transforms industrial materials, fluorescent lights, polished metals, mirrors and reflective paint into interactive masterpieces. It's not just an exhibition, it's a sensory and spatial experience designed to engage and challenge the way we see the world around us. The exhibition is open to the public until 11th of May, with tickets starting at Rs 199. Also, the entry is free for senior citizens, children under 7 and students of fine arts, design and architecture.
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema. With me is Surbhi. For the benchmark indices, we're holding up pretty okay, right? The Nifty and the Sensex continued with their upward momentum. The Nifty is up 85 points, closer to 22,650. The mid-caps and small caps, after last week's one-way up move, have paused a bit. The mid-cap index is flat. The Nifty small-cap index is down in the red, down nearly about 0.5%. And that's the reason why the advanced decline ratio is in favor of more stocks declining versus advancing. 2:3 is how that ratio looks right now. And banks are not participating today.
Yeah, absolutely. I think, banks is the only niggling issue with the market. Otherwise, it's not a bad screen at all. Because while at a headline level, the mid-cap index is not in a runaway mood. Individual names, there's enough buying going on in specific names today. But the Bank Nifty, yes, that is a bit of a problem point. And of course, the starting point of that problem has been IndusInd Bank today because of the fact that Mr. Katpalia's extension is only for 1 year and not 3 years, which is what the bank board had asked for. So that's still weighing. Look at that, IndusInd Bank has still not been able to recover meaningfully from the opening gap down. So that definitely is a pressure point. Since we're talking about the losers, let me tell you what else is not working on the Nifty. There's L&T, which is another large cap name that's putting downside pressure. There's HDFC Bank, which is also taking things on the lower side. Trent is seeing additional selling. Trent has seen such tremendous value damage from the peak. Let's pull up Trent. This year, January, February, and so far in March, Trent is down 31% already. It's already seen a 41% destruction from the top, from the peak. That's this year, and the high was above 8,000 rupees for the stock, and now it's a sub 5,000 rupees stock. Today, Kotak has come out with a note saying that,
They're expecting some weakness to persist. Anyway, Trent is one stock that's down. But now let's talk about the good side of things. Plenty of buying in a couple of PSU names that are still looking quite robust. Power Grid is actually topping the charts, 3.5% up on Power Grid. There is HUL, JSW Steel, there is Hindalco, there's Infi, and there's Britannia Asian Paints. So you can see the leaders list is very mixed. It's got all kinds of names. There is some consumer buying and there's some PSU buying. But what's also interesting is that Infosys is managing some green on the screen. So let me toss it back to Rima to find out what's making Infosys a little happy today.
Well, CLSA has upgraded Infosys to outperform from a hold rating, and their target price is 1978, so about a 13-14% upside from current levels. Here are the reasons. One, valuations currently are at a 7-year average level, so pretty much in long-term averages at close to about 24 times. Secondly, Q4 is expected to be a weak quarter because the wage hikes come into effect, so therefore margins will get compressed, but that is priced in. But over the medium term and long term, CLSA believes there are positive tailwinds. So discretionary spending is reviving in two key verticals, banking and retail. And yes, while you hear a lot of noise about what if the US growth slows down, etc., to which CLSA says that the commentary from the US banks so far is upbeat. None of them are talking about bringing down their tech spends, which means at least for this calendar year, the BFSI recovery should continue, and retail too is seeing some positive momentum. The other worry in the market's mind is what if European automotive companies, EU auto companies slow down on account of tariffs? Now here CLSA believes that Infosys could be a beneficiary because these companies, in order to save costs, by these companies I mean the automakers from Europe, will go for vendor consolidation, cost takeout deals, which could be positive for Infosys. So they could win mega consolidation deals on that front. So therefore, over the medium to long term, there is a discretionary tailwind, and according to CLSA, Infosys is best placed for that. The only thing is, because of this tariff uncertainty, they're saying next year's guidance, which the company will give only in April, that could be a little wider. So typically the company gives about a 2 basis points, guidance difference, right? It'll be a 6 to 8, 4 to 6, 2 to 4. But this time it could be a wider because of just the uncertainty surrounding it. So 4 to 7% is what they're expecting on Infi. But bottom line is medium to long term, discretionary benefits, demand tailwinds. Stock is not pricing it. Valuations are fine right now, hence the upgrade. The other one we're watching is Wipro, because Macquarie hosted Wipro's management for a non-deal roadshow. And again here, they had to field questions surrounding that is demand slowing down because of what's happening on the geopolitical front. Now here, Wipro has answered saying the discretionary demand uptake has continued. We can see that in our consulting business, Capco. Secondly, in BFSI also it continues, but it's not broad-based. There are certain pockets of worry. In some place, things are holding up. The company for now is maintaining its Q4 guidance on the top line. That's -1 to +1. On margins, it will be maintained. They will operate in a narrow band, something that they've spoken about in the past too. So Macquarie is bullish on Wipro, outperform rating, and they expect the company to narrow the growth gap versus peers. So stock is down, but the commentary
brokerage commentary is
the brokerage
fairly
commentary from their
positive.
management is stable.
Okay. All right, got it. So that's Infosys and Wipro. Let's look at one mid-cap that's been making headlines for all kinds of reasons over the past couple of trading sessions. And I'm talking about Gensol Engineering. Now, we all know there were lots of issues about perhaps defaults or some allegations of potential, fraud as well of some nature. And then we got the management on the show last week. Now, promoters have sold some equity in the market. What they're saying is that money will be reinvested back in the business. Let's understand what's going on. We have Hormaz joining in. Hormaz, this is like the latest Bollywood pot boiler, right? Always a twist. So what's the latest one?
Oh, absolutely. And Abbas Mastan would surely be eyeing this one. But yes, the management did say to us when we grilled them last week that they will be buying shares from the market instead of although they did not share a timeline as to when they would do so, but instead on Friday, they ended up selling shares in the market. And for a lot of these reports attributed to a margin call, it may not be necessarily that, because they are going to be reinvesting the proceeds back into the company. At least that's what the press release says. And now they will be also, the proceeds will also be infused in the warrant subscription round that was done at a much higher price that was executed in the month of June of last year. And despite the stake sale, the promoters still hold close to 60% stake in the company. Mind you, most of that is pledged. Now, the other announcement that they made on Friday is the fact that they are going to hold a board meeting this week to consider fundraising proposals that will be done via QIP or other methods. And more interestingly, they'll consider a stock split on the 13th, and this after the stock has corrected almost 75% from the peak, which was around 1100 rupees. The stock is currently languishing at 300, and they're going to do a stock split after this. Now, they have earlier issued bonuses as well. They've issued a 2:1 bonus in October of 23 and a 1:3 bonus in October of 21. Now, and as we mentioned, the promoter spoke to us. They also mentioned that they remain fully committed to the business. There are no wrongdoings that have happened. They have formed a private committee as well to be investigated. But right now, all of these developments raise more questions than answers.
Thank you very much for that. And uncertainty prevails in the stock price too, down nearly about 3.5%. Turn our attention to the commodity market because that's where it's all happening. Brent had moved up above that $70 per barrel mark, but once again below that level. Manisha is back with us to talk more about crude and the latest sound bites.
Well, thank you for that, Reema. Well, yes, continues to be very, very choppy as the statements continue to come in US on whether there are tariffs or no tariffs, or they have been eased or brought down or liquidated. That exactly is what is impacting the crude prices also. The markets are getting worried about on whether, one, there are tariffs, two, if there are, then that could hurt the economic growth and the energy demand as well going forward. It also is going to be about the US crude prices, which have now declined for a 7th straight week, and we have seen these prices trade at around 9-month lows into the markets there. Even as the US dollar index is trading weak, that hasn't really supported the markets. And then you're looking at the US production and inventories, which also are at multi-year highs, impacting the prices. It's just not about the US production, but the OPEC and allies also are looking to increase production from the month of April, and that new supply would come into the market. The conversations between US and Russia also seem to be quite choppy. Whether or not these sanctions would be eased and will more Russian oil come into the market is another uncertain market that the street is looking at. And then it also is about the Chinese numbers, which have come in on the weaker side. The consumer confidence numbers came in weak for the first time in 13 months. That's also weighing onto the crude oil prices. So while we did see $70 come back, it's not been able to hold that. And even as we have seen nearly 7% of a decline in the last 2 months coming in for the crude oil prices, the street believes that you could be looking at further declines. There was an interesting report from IG which says that the crude prices can go down to 65, even 62 before we see any rebound from those levels.
Okay, all right, got it. Yeah, I mean, it's all happening. And I think Saudi Arabia is the theater of the latest action as far as that brokering that peace deal with between Ukraine and Russia is concerned. Got it, Manisha. So crude markets dealing with a lot of news flow. We'll take a break on that note, come back on the other side. We'll have Devang Mehta joining in to talk about some fundamental ideas.
Open to the public until 11th May 2025. So what are you waiting for? Check out the space and let us know in the comments below. In Mumbai, Zinia Barya. Let's talk about your 2008 Olympics match. Tell us about your whole experience. That was your first Olympic match. What was the feeling? What was going on in your mind? Tell us all about it.
I think it was in 2008 and I was 18 years. And when I won my first international title, I was only 16 and I was there in the international circuit, and a lot of these Chinese and a lot of these Koreans were actually, they were worried like some Indian is coming, and they're actually giving us tough competition because before me, we didn't have a female badminton player who was actually playing at that level, who was actually winning those international matches. Of course, we had Prakash sir and Gopi sir who did well, but I was just, when I started playing badminton, I used to ask my mom this question, why badminton? I don't know. It's such a difficult sport, and you have the Chinese in quarters, semis and finals. They're everywhere. So she used to be like, no, for me, you are the champion. You're going to do it. And just believe in yourself. And imagine she's a housewife. She's just a housewife. She's not even a international level coach, or she's not someone who's seen what international badminton is. But she was like, you are my champion. You're going to do it. And with her belief, I was in the Indian team when I was only 13. Senior Indian team. Wow. And I won my first international when I was only 15, 16. So these things happened in my career really, really fast because of only one person's belief. And of course, the coaches come in, the trainers come in. But I think the first Olympic was, in fact, so early in my career that, I was like, my mom wished that I have to become an Olympic champion, and I'm here. I'm here so early, and I'm actually getting closer to winning the medal. In 2008, I lost in the quarterfinals, and I still, that one match gives me a lot of sleepless nights because it does, because that even after having the medal, I was 11-3 up in the third set. And then I was actually getting all these things in my mind, saying that my coach was like, ek din tu world champion banegi. My mom was like, ek din Olympic champion. Not pressure, but I was happy that I actually was going near winning a medal. I was happy, I was excited that I'm actually doing it with my training, with my coach's belief and everything, I'm doing it. Suddenly the game just turns, and then she's just picking up everything. The rallies are going really longer, and she's everywhere. She's all over the court, not leaving anything. And after 11-3, you won't believe, I just got 2 points and she went on winning the match 21-30. After that, I'm sitting there and I'm talking to my coach, what happened? Because every rally was a big rally. I didn't even do silly mistakes to lose the match. What just happened? So I was like, when I thought about it even more, I was like, next day I better start training to get the medal in the next Olympics. So yes, that match tortured me a lot, but I think it gave me that lesson as well, that you should not get too excited also sometimes. You have to control yourself. When you are actually going to achieve your goals, you have to control yourself, try to relax yourself. In fact, in that time, when I started doing well, I didn't have a mental trainer or a trainer. Only Sir, Gopi Sir was everything to us. And he being a coach, how much he could have helped in other things as well. So I feel, agar wo time pe I had a better mental trainer or someone who could give me
Welcome back to Trading Hour. We're looking at markets which are largely okay, though, of course, it's not a big one-way move that's building, at least not so far into the morning. So how do you position yourself, or how do you approach a market like this that's trying to find some stability after what's been a long correction? Devang Mehta is joining in. He's from Spark Private Wealth. Devang, 5 months. Indian investors are not used to seeing corrections that last for 5 months, right? Time and price. It's not been easy. First of all, is this, what are you advising? What are you doing? Is this the time to nibble in? And if yes, where?
Surabhi, thanks for having me on the show. I think, yes, it's been the last 5 months has sort of been difficult in the journeys of first-time investors, if I can say that. But people who have seen the cycle, maybe a couple of cycles, 3 cycles, or even more, know that this type of corrections happen in the bull market. This was a sharp correction. Rather than sharp, it was also a correction which was very meaningful. Which corrected the indices by 15, 20, 25%, respectively, large, mid, and small. But the stocks have corrected 40, 50, 60%. Honestly, if I can just attribute some things to the market, I know a lot of reams of paper have gone into why these markets have corrected, and I'll not go into that. But having said that, there are so many positives which the markets have ignored. Right from a positive budget to a decent type of earnings season, not so bad in terms of RBI infusing liquidity time and again, Delhi elections being won by the ruling party in the center. I think most of this have been events where this was a 300-500 point cheer on the Nifty. But yes, because of the sentiment, what sentiment can do to markets and what also flows or absence of flows can do. I think that 2.5-3 lakh crore being sold in the last 4-5 months has also had their toll on the market. Now, coming back to what should one do, and I think most important is an action point, whether the client should sort of revisit the portfolio, people who have not invested, what should they do? I think point number one is that very clearly, if you look at the portfolios, I think it's time to revisit or sharpen the portfolio. If probably you've missed out on great companies or good companies, and you have some gruesome companies in the portfolio, I know it will sound philosophical, but there are a lot of companies, I think everything and anything did well over the last 3-4 years. And now it will be time to probably sharpen the saw and do some smart sort of stock picking because everything would not do well. So now you have to follow earnings, you have to follow cash flows, you have to follow management commentaries. Probably would sectors change? I have my doubts. There will be certain sectors which will still come back to the fore after a huge bit of a price correction and valuation correction that has gone through. I think time for a lot of existing investors that just revisit your portfolios, look at whether the earnings have flowed. We are doing the same thing. I think our portfolio companies have grown very well. There would be a double whammy if the markets also fall and our companies don't deliver the numbers. It's a different point that the markets correct and your stocks correct along with that. But otherwise, I think most of the earnings that we have seen for our portfolio set of companies have been good. Yes, so the short answer is yes, one needs to nibble into this. These are opportunities which can create compounded annual returns rather than only returns.
Devang, I'm putting you in a tough spot here, but I remember in last year you had said Trent was one of your top holdings. Is that correct? At some point of time, was Trent one of your top holdings in your portfolio?
So I think our portfolio was more to do with, absolutely right, our portfolio was more to do with capex-oriented businesses, a lot of capital good ancillaries, power automation stocks like Hitachi Energy, you would recall, and Trent was also a meaningful part of the portfolio, and it still remains.
And what have you done with Trent, given the kind of correction that we've seen in the stock price?
Entire market right now is collapsing in terms of where there were high P ratios. The so-called expensive valuations are now cracking. But most importantly, if you are confident on the numbers that the company will deliver, yes, there may be a couple of quarters which can probably have a miss in the life of this company. But if somebody has a horizon of 3 to 5 years, I clearly feel that the organized retail, there are very less candidates, right? So you probably have a scarcity premium in a few of these businesses. There'll be a couple of other businesses which are listed, but not as the class which Trent would probably command in terms of earnings and cash flows and valuations. So my sense, yes, valuations can there be a 5% correction more on this type of businesses? It can be. But would you be able to price to perfection? Answer is no. I think these are companies which one should probably, if they are not owning, they should start to own as well.
And in the course of the last couple of months, as the stock was correcting, did you add to your position?
Yes.
Or did you reduce your, you've been adding to Trent? Okay. Got that. Any other changes that you made in your portfolio? I know we've spoken about power, the stocks like Hitachi, etc. But what are the key changes that you've made in your portfolio? Because this correction has provided an opportunity.
I think, yes, most importantly, we are looking at certain businesses in the discretionary consumption space as well. So I think I've spoken about that in the past as well. Some hotel businesses, organized retail, as I said. A lot of such businesses which you had sort of always missed out because there was no correction over there. Also, certain businesses in the financial services. Now, again, I'm not talking about the traditional banks or the traditional NBFCs, but most importantly, the broking houses, the wealth management houses, the AMCs, depositories, exchanges. We have seen a great correction over here also. I think this is one segment which we are nibbling into and which are looking at very, very positively.
Okay, so that is one space you're looking at. Devang, EMS, I'm just talking about themes that could just not go wrong before we got into this correction, right? People were looking to buy into EMS stocks at any price and valuation multiples went to 90 times, 100 times. Where do you stand on this now after the correction?
I think we are not probably nibbled into any of this EMS stocks. There are a lot of proxy plays via which we played it. So honestly, there are what would be required if the EMS companies thrives. There would be semiconductors which will be required. There will be air compressors which will be required. I think power automation. I think a lot of such businesses would be required once India goes into the curve. Companies like which are into the HVDC, high voltage direct current anvil. And I used to talk about Hitachi Energy, which again has come with a 500% EPS jump. So most of these companies have delivered good numbers. I talk about air compressors, the companies like Ingersoll Rand, which again came up with good set of numbers. But again, yes, markets have sort of punished the businesses which have come up with even good set of numbers. So I think rather than playing the EMS, I would also play the last mile proxy in terms of if there is networks to be established, if there are warehouses to be done, if there is EMS to be happening in India, if there are a lot of big plans that are going to come to India, I think what would be required. And here I can be very vocal in saying that there are no large cap businesses available in this universe, because if you want to sort of buy large caps, I think 60 to 70% of the universe would be IT, financial services, as well as your FMCG. And oil and gas. These are companies which will be available out of the index, maybe out of Nifty 50 or out of Nifty 100. So I think a lot of mid and small size businesses which are corrected here should probably be looked into. As I said, probably if somebody don't has the confidence, you can probably do it in the couple of tranches or 3 tranches in the next 2-3 months.
Thank you very much for that. We will slip into a break. On the other side, we'll discuss market technicals with Soni Patnaik from JM Financial Services.
should just think about the next match, just think about the next point. तो उतना मतलब मैं उस मैच में excited नहीं होती. But I was so happy that that tournament gave me so much of belief. And in India, everyone started to go to know what badminton is. And they were like, Saina is really doing well in badminton. And in 1 year, I was there winning, beating all these Chinese. I won the Indonesia Open. I became world number 2. So in 2010, I won 3 Super Series back to back. And in 2012, I got an Olympic medal. But I think that particular match taught me to be really, really thinking about that even after match point, you have 10 more points to go. Don't just think that the match is finishing, just be there, and presence of mind is required. And I think that first Olympics really gave me that confidence that yes, I'm there and I can beat all these Chinese and Koreans, and I can be in top 10, top 5 for a long period of time. And when I look back, in fact, someone told me that I was in top 10 for almost 11 years. And when I became world number 1, that is when I was like, yes, it's possible. It's possible. In 2015, when I was world number 1, everyone was like, wow, from India, we can do, in badminton, we can do such wonders. And we can also beat Chinese, who are the powerhouses. Korea, Japan, they are the powerhouses. But now you see, badminton in India is grown so much. And we are giving good challenge to all these countries. And we are one of the top in the world now. So, yeah.
Well, we're not looking to hurt anybody, and we're certainly not looking to hurt them. And I'm looking at that, and there were some people that think that's appropriate and some people don't, and I'll be making a decision pretty soon.
President Trump.
But we're not looking to hurt them.
President Trump.
Especially Ukrainians. They've gone through a lot. Yeah, Peter?
India and the United States have initiated trade talks this week after threatening all nations, including India, with reciprocal tariffs starting the 2nd of April. The US government, as per our sources, has sought zero tariffs from India. Sources tell CNBC-TV18 that the US government officials want 0 for 0 tariffs for all product lines except for agriculture. This comes at a time when Commerce Minister Piyush Goyal is in US for talks with USTR Jamieson Greer and US Secretary of Commerce Howard Lutnick. This is the first time.
Welcome back. Let's get some trading ideas going as well and look at the technical picture of the market. We have Soni Patnaik joining in from JM Financial Services. Soni, so there's been at least some green on the screen of late, right? What are your calls? I don't know if you're trading the index, otherwise individual stocks. What are your recommendations?
Hi, good morning, Surbhi, and Rima. Thank you so much for having me on your show. So I think Nifty, we can see that 22,600 put options is adding some open interest today. It is mostly on the buying side today, and 22,800 call option is also adding. So I think that range of 22,700, 750 could be the place or the range where Nifty fizzles out this up move and some profit booking can be seen. The support right now has risen from 22,300 to 22,400, 450 odd levels. So that could be the level again where Nifty retests those support levels. And again, the move from the up move can come from those levels. I think it's wise to stick to a sort of a stock specific strategy. And, you can see both buying and selling in options coming in from the stock specific ideas. Likewise, we are recommending a buy and a sell option for today. The buy recommendation comes in for Bharti Airtel, which has seen a good move above all its shorter moving average today. So one can buy Bharti Airtel at current levels of 1645, keeping a stop loss of 1625 and a positional target of 1680 to 1700 can be seen. The sell recommendation comes in Trent. Trent has seen a fresh breakdown today, again below 5,000 odd levels, again below all the short-term moving averages. So one can sell Trent in March futures, keeping a stop loss of 5,000 and a target of 4650, 4700 can be seen for current levels.
Thank you very much for that, Sonia. Nice haircut, looking good. And thank you for joining in. We will slip into a break, and here is a quick note for all our viewers. Numbers tell a story, but actions drive change. To close, the gender gap index reveals where we stand, and future female forward charter charts the way forward. So don't miss out on this landmark moment in the conversation on advancing gender parity and closing the gender gap. Watch it live on CNBC-TV18 today, 5:30 p.m. onwards.
Formally initiating talks on the bilateral trade agreement that Prime Minister Modi and Donald Trump have agreed to sign by September or October this year. India has sought more market access for goods manufactured in India, especially labor-intensive sectors. Can India offer zero tariffs on all goods coming into India, including Tesla? That remains to be seen. However, experts have been saying that India can offer zero for zero tariffs or eliminate tariffs on 90% of industrial goods coming in from the United States, and this is doable. While India would like the reciprocal tariffs to be set aside, sources say so far there is little likelihood of any carve-out for India. When it comes to automobiles, it is clear that Donald Trump wants American car makers like Tesla and motorcycle makers like Harley-Davidson to be sold in India tariff-free without having to set up manufacturing. As far as Tesla's India entry goes, things seem to be moving fast, with Tesla taking a 4,000 square feet space in Maker's Max City Mall in BKC, Mumbai. They're going to pay over 25 crores in rent over 5 years, and the lease deed came into effect in February this year. Tesla has also taken some parking spots on rent to charge cars. The company has also taken a space on rent in Worldmark Mall in Aerocity, Delhi, as per sources. The company has kick-started hirings for Pune and Mumbai, mainly for showroom-related roles like delivery operations specialist, store manager, service advisor, and others. Industry sources say Tesla may not be keen on manufacturing in India right now due to decline in sales globally, especially a 76% drop in sales in Germany in February. Therefore, the company may prefer to import cars into India from Berlin and sell them at the lowest duty possible. At the moment, the US administration is seeking lower tariffs on all US products except for agriculture, and India too would want to defend its core interests in agriculture, dairy, pharma, and other manufacturing sectors. Let's see what happens before the 2nd of April when US reciprocal tariffs kick in.
The president is giving them an exemption for 1 month so they are not at an economic disadvantage. So the three companies that he spoke to are Stellantis, Ford, and General Motors. They requested the call, they made the ask, and the president is happy to do it. It's a 1 month exemption.
Welcome back. Here with us on Trading Hour. We're putting the spotlight on new age internet companies now. A lot of these companies obviously are still new to the market. Many are between 1 to say 3 years old, some of the older names. But a lot of them have gone through correction along with the rest of the market. Many are off 20-30% of their peaks. Now, we're putting the spotlight on this conversation because some of the mutual fund houses did launch digital funds late last year. Motilal Oswal itself has one such Digital India fund as well. And we have the fund manager joining in. It's a very new fund, very young fund, launched only in November of 24. Varun Sharma looks at, of course, this fund. So, Varun, it's great to have you on the show. Welcome to the program. And we wanted to bring you in to really understand, because the market confidence obviously has been shaken up. And people are wondering that if these high flyer digital companies, internet companies, whether they can go back to their past glory. Let's get your opening thoughts.
Thank you for having me here. Yes, absolutely. We've seen multiple market cycles in the past also. But what is important is that we keep our eyes set on the business momentum. And we are seeing fantastic business momentum out there, especially on the consumer side. The consumer adoption is only growing. And most of these companies, when we're looking at the entire ecosystem itself, growth rates are very healthy. So nothing has changed from the business standpoint, and nothing has changed, irrespective of the market cycles. The business cycles are very strong.
Varun, just looking at, some of your top holdings, and they'll come up for our viewers. You've got Zensar, Zomato, PB Fintech, InfoEdge, Affle, Tech Mahindra, Birlasoft, RateGain, MapMyIndia, Emphasis. A lot of your traditional IT services companies also find their way into the digital fund. A lot of people ask us, right, which of the IT companies are at the forefront of this entire AI wave, where, the DeepSeeks and the Alibabas and the Nvidias of the world are doing so well. In India, in the tech space, because you track a lot of these IT companies and they make their way to your fund, which companies would you say can really ride the digital boom and the wave that we're seeing?
See, the Indian technology ecosystem is a bit different from when we look at globally countries, especially US and even, China. So we have IT services companies which have become, or the entire ecosystem which has become big here. But we are also seeing that digital companies or core technology companies emanating from several other areas. Now, within IT services also, there are companies which are growing fast, which have differentiated strategies. There are also opportunities when it comes to turnaround stories where companies may not have done well in the past, but because of the change in management or strategy, these companies can do better in future. So they do find a place in these digital and technology funds. All across, we cannot compare it on a like-to-like basis, but yes, there are certain companies which are catching on and latching to these global trends, and they can benefit out of those. As long as those companies can demonstrate high growth for a longer time frame, they will definitely find their way in our digital fund.
So, Varun, the question is, let's go segment by segment, because I know you can't get into individual stocks, but let's try and understand the growth potential and then the valuation reality around it. So, starting with food delivery and quick commerce. I mean, no one's denying the fact that there have been massive disruptors. We're all completely hooked onto our apps. But the question is, can the moat be a sustainable one? Or is it a bit of a race to the bottom with discounts, etc.? And more importantly, many of these companies, especially on the quick commerce side, they've also said that they're going to be investing more in dark stores and expansion, etc. So from a market perspective, what about valuations? What about profitability? And what about ultimately, return expectations over the medium term?
See, what we've observed globally is that when it comes to internet stocks and digital stocks, and specifically those companies, typically the biggest moat is the scale itself, because the entry barriers usually are not very high. So most of the companies globally have also focused initially only on garnering a very high scale. And it is not uncommon to find, these sub-segments to be winner-take-all markets. And we've observed these characteristics even in India, in several other areas of digital, where digital has become mainstream. So typically, this is the behavior that these companies always go after growth and very high scale first. And then usually the profitability comes in because the market also matures to some extent by that time. And the consumer behavior also changes towards the adoption and towards the convenience that these companies bring to them as compared to what is available in the offline ecosystem. At the end of the day, most of these companies are empowering their customers. They are basically shifting the power away from suppliers to consumers, and this is the primary reason why this leads to such high consumer adoption and such accelerated consumer adoption. Now, keeping that in mind, when we look at these companies or try to value these companies with traditional valuation methods, they have typically not worked even globally in the past. And that is one mistake that we at Motilal Oswal do not want to make. Having seen the evidence outside, the traditional valuation methods do not work. And that is something that we've discussed and written on extensively, that these companies need to be looked at in a different fashion, through a different lens, and need to be valued differently than what we usually do in case of other traditional companies.
That's the point. Well taken, absolutely. And I think we've all realized that when they came to the market talking about price to sales, then the earnings had to come in and all of that. We've gone through that whole cycle. My question is more on whatever lens you're putting on now to look at valuations. What would be the right, whether it's a PEG multiple or whatever multiple you're looking at, what is it that you are comfortable with? What is the multiple expansion trajectory? And aren't the multiples of these companies here in India still way higher than, say, some of their counterparts in China? So isn't that a risk with respect to attracting more foreign capital whenever those FPIs return to our market?
See, we have to also do a like-to-like comparison in terms of the life cycle of these companies, where our Indian companies are versus where the China or the US companies are. We are fairly nascent, we are fairly small as compared to the companies elsewhere, where companies have become big. And when we do these comparisons on a life cycle basis, that we are in that nascent stage and how those companies and how those businesses used to operate when they were nascent, then we are actually, at similar stages. If we go back 10 years, 15 years, and then compare in our digital companies with the US or Chinese companies. So from that perspective, there is no difference. Coming to valuation, when we look at valuations and we just broadly dissect them into business compounding and, or let's say when we're looking at stock price return and dissect them into business compounding and valuations, what we usually observe is that business compounding is happening at a very, very healthy rate. And valuations, even if they don't improve, then we should expect that, in the longer term, stock returns are a function of business compounding rather than valuations. If valuations improve, good. But if they don't, then business compounding is something that is very important from a longer term, stock returns perspective. And that is where we are seeing that from a business standpoint, the business is only becoming bigger, the business is becoming stronger. And once they reach a threshold, once they reach critical mass, then profitability and cash flows are also a given.
So just to wrap this up and give some advice to our viewers, fresh money allocation, would it be to your e-commerce, quick commerce type companies? Would it be to IT services companies? Would it be to fintech companies like PB Fintech? Where would incremental money be allocated to at these levels?
See, when we look at IT services as an industry overall, we don't find it too lucrative because of low growth prospects from a longer term perspective. We find digital ecosystem to be extremely, extremely attractive and lucrative from multiple decades perspective, because this is a very high growth ecosystem. And as I said, from a longer term standpoint, it's the business compounding and business scale up, which will help generate returns and create value. Rather than finding value in low growth stocks, and that is something that we would never advise. We would always advise towards capturing business compounding and making use of these stock price movements in the short term to strengthen portfolios and actually improve the overall portfolio positioning in the digital ecosystem.
Okay, all right, Varun, this has been an interesting conversation. Thank you very much, and we hope to have more of them as the months progress. Let's see. You definitely are quite optimistic on the prospects ahead. We will take a very quick break on that note. On the other side, we'll come back with lots more. But as we take that break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You just need to download the CNBC-TV18 app now from the Apple Store or from Google Play. You can, of course, also scan the QR code that's on your screen.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business.
Welcome back. The mid-cap index is still flat, but stocks are lively. So Castrol is rapidly cutting its losses now. It's still down close to about 1.25%, but it's recovered 4.5% from the day's low. And remember, it was the big winner last week. So Castrol has moved up in the last 15 minutes. Bharat Dynamics in the green, up nearly 1%. Narayana Health is popping up on the volume charts. So that's another big mover. 12% up on Narayana Health so far in the month of March. But let's get to Bharti Hexacom. The stock is flat today, but keep your eye out on it because Motilal Oswal has initiated coverage with a buy rating. The target price stands at 16.25, so nearly a 300 rupee upside from current levels. And here are 2 key points. One, they're saying that we prefer Bharti Hexacom over Bharti Airtel, despite Hexacom being at a premium. And the only reason is because when it comes to Bharti Airtel, there are concerns about misallocation of capital. Mr. Mittal has spoken about making some acquisitions. So therefore, they believe there is a risk that the capital that Bharti Airtel is generating, the free cash flow, may be misallocated, and therefore their preference lies with Bharti Hexacom. So that's a stock you should watch for.
Absolutely. So that's one more name on our list, on our radar. But let's get you some perspective now. I was at the Money Control Global Wealth Summit on Friday, where I got a chance to interact with a bunch of foreign investors that are looking at the Indian market very, very carefully. This included names like the managers at Warburg Pincus and also global wealth titan Amundi, which manages over 2 trillion euros in assets. Listen in to what the conversations were like. I did ask them about a range of issues, including whether capital gains tax is a real niggling worry for foreign investors in India, and how do Indian equities stack up considering the currency depreciation angle as well as a call on valuations here right now.
Investments and global flow of capital around the world has historically been more and more frictionless because you haven't had this concept of let's tax in each country any global capital that comes in. Over time, that has changed. I think the view we have taken, and I've heard many private investors take, is you want consistency of tax policy. Now remember, India is competing for global capital. As I sit outside India and as all of us on this panel sit outside, we have multiple places in the world to invest. And many of them have no tax on global capital when you come in. So when you do come into, it's not whether it's right or wrong. You want it to be consistent. And whatever we do, realize it does disadvantage us, right? Versus other places that don't have that. Having said that, India has to chart its own course.
On the valuation side, yes, India is more expensive than most emerging countries' equities, but this is a price you have to pay for growth. When you look into forward ROE, so return on equity, you have more than 15% in India. This is not something you can see in other big and large economies. So we would say that yes, valuation was a concern, take profit, a cyclical downturn temporarily. We expect this year 6.5% of GDP growth in India. We do expect this is the new potential growth over the next 5 years, so it's a medium term. So there is a fantastic bright spot within the emerging economies. So we are coming back to India those days more tactically to reweight our overweight positioning in our portfolios. When you're a global investor, or when you're investing for a global sovereign fund, let's say you open a mandate and you will have a global asset allocation fund, it's very unusual for you to open a bank account in India bonds, despite the fact that you would like to try it out. Why? Because it will be relatively minimum in your global exposure, and two, because it's time consuming, you have some tax. So we noticed that there is a lot of, I would say, inefficiency that are created. Investor or foreign investor are piling into SSA. So supranational, denominated and settled in dollar, that are actually mimicking what the India bond is doing, with one, not a perfect correlation, but the strong appeal is that there is no withholding tax. So I think this is something happening, and you see that those instruments are less liquid than Indian bonds, but at the end of the day, to 1.5% more in terms of coupon and carry on a yearly basis, because you don't have tax. So this is something happening, and I think it's preventing foreign flows to come massively to Indian bonds markets.
Interesting conversation, and we'll keep getting you snippets from there, but let's get into a break. But as we do that, from breaking barriers to rewriting the rules, our exclusive Future Female Forward Mega Summit brings together voices that matter. Don't miss this power-packed conversation on enabling success, driving parity, and shaping a more inclusive future. Tune in to CNBC TV18 today, 5:30 p.m. onwards.
Every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Unveiled its latest masterpiece, and it's not your average art show. Light into Space isn't just about breaking boundaries, it's shattering our very perception of reality. Curated by the renowned Dia Art Foundation from New York, the first of its kind international exhibition brings together thought-provoking works of light and space artists from the 1960s and 70s. Can you tell us and share your experience out here?
So this is the first time that I've actually come here, and I've flew down from Bangalore for this. And as we're looking at it, for me it was quite different, because it's basically, according to me, I felt it's like the way you see it through your eyes, the way you perceive it. So it was quite different. So I really liked it.
What has been your favorite art piece so far?
So my favorite was one of the glass pieces that was displayed on the second floor. Why? Is because it's really interesting how just a simple piece of glass molded into such shapes give subjective illusions to everyone, and that's just really pretty and really refreshing to see.
Spanning 4 floors of NMACC's dedicated visual arts space, the exhibition transforms industrial materials, fluorescent lights, polished metals, mirrors, and reflective paint into interactive masterpieces. It's not just an exhibition, it's a sensory and spatial experience designed to engage and challenge the way we see the world around us. The exhibition is open to the public until 11th of May, with tickets starting at Rs 199. Also, the entry is free for senior citizens, children under 7, and students of fine arts, design, and architecture. The exhibition is open to the public until 11th May 2025. So what are you waiting for? Check out the space and let us know in the comments below. In Mumbai, Zinia Barya. Let's talk about your 2008 Olympics match. Tell us about your whole experience. That was your first Olympic match. What was the feeling? What was going on in your mind? Tell us all about it.
I think it was in 2008 and I was 18 years. And when I won my first international title, I was only 16 and I was there in the international circuit, and a lot of these Chinese and a lot of these Koreans were actually, they were worried like some Indian is coming, and they're actually giving us tough competition because before me, we didn't have a female badminton player who was actually playing at that level, who was actually winning those international matches. Of course, we had Prakash sir and Gopi sir who did well, but I was just, when I started playing badminton, I used to ask my mom this question, why badminton? I don't know. It's such a difficult sport, and you have the Chinese in quarters, semis, and finals.
Welcome back. The Nifty is now closer to 22,600. The mid-cap index has also dipped into the red. As we wrap up on trading hour, let's get you the latest on tariff threats. Donald Trump has shaken up the world economy. And here's the latest. In an exclusive chat with CNBC, Treasury Secretary Scott Bessent talks about the effect of tariffs and comments on the push for a stronger dollar. Listen in.
The Biden administration created this bad equilibrium where the top 10%, people in this room, probably most of the people watching this show, top 10% of Americans are 40 or 50% of consumption. And that is an unstable equilibrium. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down. And could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period. We are committed, this administration, President Trump, are committed to the policies that will lead to a strong dollar. If we bring back more manufacturing, if we have cheap energy, good tax policy, deregulate, we will end up with a strong dollar. But what is unacceptable is in a bilateral relationship, other countries trying to weaken their currency. And so we are against the currency manipulation on a bilateral basis, but globally, the strong dollar is very important. We will continue as a reserve asset.
So she used to be like, no, for me, you are the champion. You're going to do it, and just believe in yourself. And imagine she's a housewife. She's just a housewife. She's not even a international level coach, or she's not someone who's seen what international badminton is. But she was like, you are my champion. You're going to do it. And with her belief, I was in the Indian team when I was only 13, senior Indian team. Wow. And I won my first international when I was only 15, 16. So these things happened in my career really, really fast because of only one person's belief. And of course, the coaches come in, the trainers come in. But I think the first Olympic was, in fact, so early in my career that, I was like, my mom wished that I have to become an Olympic champion, and I'm here. I'm here so early, and I'm actually getting closer to winning the medal. In 2008, I lost in the quarterfinals, and I still, that one match gives me a lot of sleepless nights because it does, because even after having the medal, I was 11-3 up in the third set. And then I was actually getting all these things in my mind, saying that my coach was like, ek din tu world champion banegi. My mom was like, ek din Olympic champion. Not pressure, but I was happy that I actually was going near winning a medal. I was happy, I was excited that I'm actually doing it with my training, with my coach's belief and everything, I'm doing it. Suddenly the game just turns, and then she's just picking up everything. The rallies are going really longer, and she's everywhere. She's all over the court, not leaving anything. And after 11-3, you won't believe, I just got 2 points and she went on winning the match 21-30. After that, I'm sitting there and I'm talking to my coach, what happened? Because every rally was a big rally. I didn't even do silly mistakes to lose the match. What just happened? So I was like, when I thought about it even more, I was like, next day I better start training to get the medal in the next Olympics. So yes, that match tortured me a lot, but I think it gave me that lesson as well, that you should not get too excited also sometimes. You have to control yourself. When you are actually going to achieve your goals, you have to control yourself, try to relax yourself. In fact, in that time, when I started doing well, I didn't have a mental trainer or a trainer. Only Sir, Gopi Sir was everything to us. And he being a coach, how much he could have helped in other things as well. So I feel, agar wo time pe I had a better mental trainer or someone who could give me advice about it, that you should just think about the next match, just think about the next point. तो उतना मतलब मैं उस मैच में excited नहीं होती. But I was so happy that tournament gave me so much of belief. And in India, everyone started to go to know what badminton is. And they were like, Saina is really doing well in badminton. And in 1 year, I was there beating all these Chinese. I won the Indonesia Open. I became world number 2. So in 2010, I won 3 Super Series back to back. And in 2012, I got an Olympic medal. But I think that particular match taught me to be really, really thinking about that even after match point, you have 10 more points to go. Don't just think that the match is finishing, just be there, and presence of mind is required. And I think that first Olympics really gave me that confidence that yes, I'm there and I can beat all these Chinese and Koreans, and I can be in top 10, top 5 for a long period of time. And when I look back, in fact, someone told me that I was in top 10 for almost 11 years. And when I became world number 1, that is when I was like, yes, it's possible. It's possible. In 2015, when I was world number 1, everyone was like, wow, from India, we can do, in badminton, we can do such wonders. And we can also beat Chinese, who are the powerhouses. Korea, Japan, they are the powerhouses. But now you see, badminton in India is grown so much. And we are giving good challenge to all this.
Frontline stocks gain, keeping mainline indices in the green even as the broader market sees more stocks declining than advancing. Utilities and IT are the prominent gainers even as industrials and autos drag.
The RBI has approved only a 1-year term extension for IndusInd Bank CEO Sumant Khatpalia against the 3-year extension sought by the board. The shorter duration of the extension raises uncertainties. The stock slips to a 52-week low.
Sun Pharma is set to acquire Checkpoint Therapeutics that owns an FDA-approved oncoderm therapy drug for an upfront payment of $355 million, while Lupin launches a cardio drug in the US with an addressable market of $450 million.
India is looking to cut the average applied tariff for US imports as part of bilateral discussions. CNBC-TV18 has learned this as talks with the European Union on the FTA resume today and efforts to seal a trade deal with the UK continues.
The government invites applications for the post of the IRDAI chairman as the term of the current chair, Debashish Panda, ends on March 13th. 2 senior bureaucrats could be frontrunners for this post.
Starting off this week, this truncated week with a sea of blue. The market, of course, seeing some bit of green at the start of the week. You're watching Halftime Report live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me, as always, is Mangalam Malu with that cheer from last night's win. And it reflected slightly on the markets, at least for a better part of the first half of the trading session. But the indices have come off the opening highs as of now. And that level between 22,670, 22,700 proving to be a resistance yet again. 22,664 was the high that was made on the 24th of February. And since it's crossed that level today, made a high of around 676 on the index, did the Nifty, but has cooled off now almost 80 points from the highs. What is dragging the index down is the Nifty Bank. It's slipped into the red now, and the mid-cap index too has also seen some bit of negative ticks. But overall, no reasons to complain because the GIFT Nifty was pointing to a greater pain, Mangalam.
That's correct. You know, after some sort of consolidation that we saw in the earlier part of today's trading session, we've held on to these gains that we've made. Yes, 50 points, 100 points here and there, were largely in the green. The only concern is the broader markets. Last week, we had good gains come by for both the mid-cap and the small-cap indices. Let's see whether that sustains or not as we progress towards the end of what is a truncated week. And at the same time, we'll keep an eye out on the market breadth as well. A couple of stocks which, are the ones that require mention. It's Strides Pharma, which is taking a bit of a sharp knock as we speak. In just the last few minutes, we've seen a couple of stocks decline. So we had more stocks declining than the number of stocks which are advancing. There's a big fall that we've seen in Strides Pharma. The other one that stands out on the way down is Astral. That is the other one which has now moved to the low point of today's trading range so far. And CG Power is the other one. And an otherwise decent day for power stocks, be it, something like the Adani Group stocks or JSW Energy or Tata Power. CG Power is the one which is currently at the low point of trade, along with KEI Industries, which too is drubbing at, the lows of today with a 5% cut in today's trading session itself. But none, as important from the Nifty space as IndusInd Bank, which is slightly under pressure at a 52-week low amid leadership uncertainty. We have Abhishek joining in with more. Abhishek, 3.5% lower after a near 5.5% decline that we saw all of last week.
Not the decline, but take a look at the RBI's, uncertainty with respect to the MD and CEO's tenure. Now, they have reduced the tenure extension only up to 1 year versus 2 years that they gave in the previous time around. And this is also on the back of the fact that the board recommended only one name for the, MD and CEO extension, and they did not give opportunities. So last time RBI had given 2 years tenure versus 3 years that was sought by the board. Even this time they sought 3 years, but they got only 1 year. Now, analysts do say that, this means that the board will have to find a replacement, now, which will create uncertainty with respect to leadership in the interim period. Now, previous similar instances wherein, what the board sought versus what RBI gave was on the lower side. That happened with RBL Bank 1 year, Bandhan Bank 3 year versus 5 year that they sought. Federal Bank not even approving a 1 year extension what the board had sought. So that had led to, negative with respect to stock price reaction post the RBI outcome. So IFS says that weak profitability even in FY26 with ROE of around 10.5%, coupled with leadership uncertainty, should keep the stock price under pressure in the near term. So brokerages, some of them have cut the target price, like Jefferies, MK, as well as IFL Securities. All of them have buy call, except for BofA Securities, who has downgraded the stock recommendation to underperform while cut the target price to about 850 per share. Back to you.
In fact, 850 is the lowest on the street for IndusInd Bank, and the pressure because of these uncertainties and the fears expressed by the brokerage is very well evident on the stock price today. 3.5% lower among the top losers on the Nifty this afternoon. But the other big announcement that came in earlier this morning pertains to Sun Pharma, and that is because of a new acquisition that it announced. And a lot of these pharma names are in focus today because Lupin 2 is on the radar on the back of a new launch and some brokerage commentary as well. Vinny is here to summarize all of that for us. Vinny, good afternoon.
Good afternoon. So let me start with Sun Pharma first. They've announced an acquisition which is of Checkpoint Therapeutics, which is a US listed company. Now this company is mainly involved in immunotherapy as well as targeted oncology companies, what they focus on in terms of making the drugs. This is developing novel treatments for patients with solid tumor cancers. So for Checkpoint, when you talk about it, currently they do have an approval that already is there from the US FDA. This is for a skin cancer treatment drug, and that's the only company which has received this US FDA approval so far. So this will get added to Sun Pharma's portfolio, which is a positive for the company. This gets added to their oncology side, the special portfolio of the company, oncology, derma side of the portfolio, which is a good point in the long term for the company. Obviously, in the near term, they will be spending money. They will be paying for the acquisition as well. They will be paying for the launches as well, the expense for the launches on that lines as well. But overall, it's a good addition to the portfolio of the company. Now, this transaction, upfront cash is what Sun Pharma will be paying of around $4.10 per share. And this is adding up to around $355 million. Apart from that, they will be giving some stakeholders some contingent value right as well of around $0.70 per share. And apart from that, there is going to be a royalty agreement also. Now, the percent of royalty that they are going to be paying to the largest shareholder of Checkpoint is something that is yet not mentioned. So that is something that one should keep an eye out on. Phillip Capital is positive on this deal and acquisition that has happened. They said that this will expand the specialty portfolio in US specifically. For Sun Pharma, they're reiterating their buy target price of 2,120 rupees per share. And overall, they believe that Sun Pharma has the money to pay this, and this will be mainly through internal accruals. So there will be not much in concerns in terms coming in for cash raising for funds for Sun Pharma. Now let's move on to the second one. Lupin, they've announced a launch of a generic drug that has come in, generic Rivaxoban, which is a 2.5 mg tablet in the US market. On the back of this, Citi is giving it a buy rating, target price of 2,260 rupees per share. They said this is at a risk launch. Patent is expiring in 2039 for the company. Right now, Lupin is obviously launched this drug. Sun Pharma is also the one who's waiting out for an approval for coming in from US FDA. So there could be some competition coming in, but overall market size for this is around $446 million for this brand and this drug in the market currently. Nomura on the back of this is also continuing to maintain the buy rating, target price of 2,350 rupees per share.
All right, we take that point, Vinny. Thank you for bringing us up to speed with all things that are taking place in the pharmaceutical space. But the stock of last week on the way down was undoubtedly Gensol Engineering, down about 45%, all of just last week. And today as well is lower on the back of promoters selling on Friday. Remember, on Thursday, the management joined us here on CNBC-TV18 saying that they may buy from the open market in the next couple of weeks. The company has actually gone ahead and sold in the open market itself. Be the reason what it may, the street doesn't like this. It's down about 4.5% today after a big fall yesterday. Hormas, bring us up to speed with the details here.
The street does not like anything that has been happening over the last week when it comes to Gensol, and in the news for all the wrong reasons ever since that downgrade came in from both ICRA and from CARE Ratings. And as you just mentioned, you spoke to the management along with Nigel, and the management had mentioned very categorically that they would be looking to increase their stake in the company. And although they did not share a timeline for that, of course, but they did say that they have plans to increase their stake. But on Friday, they ended up selling their stake in the company, almost 2.5%, 9 lakh shares, and they say that the proceeds of this will be infused back into the company to support the balance sheet, which is currently a little askew, and they will also be infusing some via the warrant subscription round, which was done at a much higher price in June of last year. That is what the management has said in that exchange filing. But even after the stake sale, the management still continues to hold around 60% stake, the promoters. But mind you, most of that stake is pledged. That is another concern that surrounds Gensol. But before this announcement came in of the promoters selling stake, they made another announcement after market closing on Friday, which stated that they are going to hold a board meeting on the 13th where they are going to raise funds, either via QIP or a preferential issue or various other methods. But more importantly, they are also going to consider a stock split. Now, they are going to do this stock split after the stock has corrected almost 75% from its peak. It's 1124 peak for Gensol. The stock currently at around 310. Now, they plan on considering a stock split on the 13th. Now, Gensol has never done a stock split before, but they have given bonus issues, and the 2:1 bonus that they gave in October of 23 and a 1:3 bonus that they had given in October of 21. So they have done a lot of these corporate actions as well. And as Mangalam was also highlighting, the management had reiterated when they spoke to CNBC-TV18 that they remain committed to the business. There have been no these allegations of falsification of documents. There is no wrongdoing that has happened, but they have formed an independent committee to investigate. So as of now, there are plenty of questions that are pertaining to Gensol, but the answer seems a little distant.
The answer seems a little distant, and the stock price tells you that as well. With that, what we'll do is slip into a short break. As we do that, let's get you up to speed with the latest offering, which is the CNBC-TV18 all-new app, via which you can get instant access to breaking news, in-depth articles, all of that on this app itself. Financial world updates also coming at your fingertips. You download the CNBC-TV18 app, either from the Apple Store or the Google Play Store. You can just scan the QR code on your screen out here, and that brings you the app that we're talking about.
And we are one of the top in the world now. So, yeah.
Well, we're not looking to hurt anybody, and we're certainly not looking to hurt them. And I'm looking at that, and there were some people that think that's appropriate and some people don't, and I'll be making a decision pretty soon.
President Trump.
But we're not looking to hurt them,
President Trump,
especially Ukrainians. They've gone through a lot. Yeah, Peter?
India and the United States have initiated trade talks this week after threatening all nations, including India, with reciprocal tariffs starting the 2nd of April. The US government, as per our sources, has sought zero tariffs from India. Sources tell CNBC-TV18 that the US government officials want 0 for 0 tariffs for all product lines except for agriculture. This comes at a time when Commerce Minister Piyush Goyal is in US for talks with USTR Jamieson Greer and US Secretary of Commerce Howard Lutnick. This is the first time that the two sides are formally initiating talks on the bilateral trade agreement that Prime Minister Modi and Donald Trump have agreed to sign by September or October this year. India has sought more market access for goods manufactured in India, especially labor-intensive sectors. Can India offer zero tariffs on all goods coming into India, including Tesla? That remains to be seen. However, experts have been saying that India can offer 0 for 0 tariffs or eliminate tariffs on 90% of industrial goods coming in from the United States, and this is doable. While India would like the reciprocal tariffs to be set aside, sources say so far there is little likelihood of any carve-out for India. When it comes to automobiles, it is clear that Donald Trump wants American car makers like Tesla and motorcycle makers like Harley-Davidson to be sold in India tariff-free without having to set up manufacturing. As far as Tesla's India entry goes, things seem to be moving fast, with Tesla taking a 4,000 square feet space in Maker's Max City Mall in BKC, Mumbai. They're going to pay over 25 crores in rent over 5 years, and the lease deed came into effect in February this year. Tesla has also taken some parking spots on rent to charge cars. The company has also taken a space on rent in Worldmark Mall in Aerocity, Delhi, as per sources. The company has kick-started hiring for Pune and Mumbai, mainly for showroom-related roles like delivery operations specialist, store manager, service advisor, and others. Industry sources say Tesla may not be keen on manufacturing in India right now due to decline in sales globally, especially a 76% drop.
Welcome back. 100 points now off the highs of the day is the Nifty 22,573 is where the index currently stands, giving up almost all that it has gained through the first half of the trading session. And a lot of these capital market related names are not having a very good day at the office today. 361 WAM is the top loser on the Nifty 500, 7.5% lower there. JM Financial 2 is the second worst performer on that index, 6.5% down on that stock. Down to the lowest point of the day is 361 WAM, as is JM Financial, and there is no let off for BSE as well, because after Goldman Sachs cut its price target twice last week, Nuvama has cut its price target by almost 30% in today's trading session, and that shows up on the price as well. 4% lower now on BSE, on the verge of breaking that 4,000 level on the downside. But on in focus is also Infosys, and that is on the back of some brokerage notes that have come in. Rima is here to tell us more on that. Rima.
Thanks so much for that. So CLSA today has upgraded Infosys to an outperform from a hold rating. Their target price implies a 15% upside from current levels. 1978 is the target price, and this comes on the heels of the stock declining 10% since the start of the year. So some of the reasons are for the upgrade. One, valuations at 24 times are at a 7-year average. So it's not that valuations are at a premium. Secondly, the Q4 weak seasonality. Q4 is expected to be a soft quarter. The company affects wage hikes, so that depresses margin, but that is priced in. And the third reason is there are tailwinds for demand picking up over the medium term. So they're saying that the street is concerned that what if all this Trump uncertainty, the the possibility that US enters into a recession, will that impact tech demand? Well, CLSA says that as of now, at least, US banks are saying that tech spends remain intact. Their commentary is upbeat, so there is no risk on the BFSI front. Retail too is seeing a recovery. And in the case of EU automotive companies, they might get hit in the event of tariffs being imposed on them. Well, according to CLSA, if that is, if that takes place, EU automotive companies are impacted, then Infosys could actually be a beneficiary, given, vendor the possibility that Infi is on the right side of vendor consolidation deals. The only thing they're watching out for, they're saying that in FY26, because of all this uncertainty, the guidance shared by Infosys for FY26 could be wider than normal. It could bake in some uncertainty, and maybe the company guides for 4 to 7% in terms of a guidance for next year. But there is an upgrade to an outperform, which has got the stock excited.
Take that point, and coupled with the underperformance that we saw all of last week, so that's doing well for the index. But Rima, you're also looking at Bharti Hexacom stock not doing too much today, but there is a positive brokerage note.
Indeed. So Motilal Oswal today has come out with a note, buy rating, target price 1625. They say it's a preferred play on the India Telecom wireless story. They say over Bharti Airtel, which is investors' preferred pick, they like Hexacom more because there are no concerns on misallocation of capital. In the case of Bharti Airtel, remember Mr. Sunil Mittal has spoken about perhaps making an acquisition over the medium term. So on Bharti Airtel, even though it's a great play, the company is generating free cash flow, investors are a bit concerned about misallocation of that capital. Secondly, in terms of business prospects for Bharti Hexacom, we know it operates in 2 regions, Northeast and Rajasthan. In Northeast, the company's done even better because Vodafone Idea had to deprioritize Northeast on account of capital constraints. Also, in these 2 particular areas, Rajasthan and Northeast, the penetration is lower, and therefore the runway for growth for the company is higher. Now, about the stock price, it's had a phenomenal listing. It listed last year, April of 2024. Since then, the stock is up 2.3x, and it trades at a premium to Bharti Airtel, nearly a 15% premium to Bharti's India business, implied valuation for the India business. But according to Motilal Oswal, given the prospects, this valuation premium can sustain, and they like Bharti Hexacom. It's their preferred play, buy rating, target price 1625.
Down 18% from its peak of around 1600, but still a big wealth creator, 134% up from its IPO price, as Rima was just mentioning. And in a market like this, you take that with both hands. Rima, thanks a lot for that update on both Infosys and on Bharti Hexacom as well. Moving on, then, the government has invited applications for the post of the next IRDAI chairman. Who are the likely candidates for this post? Yash is here with more details on that. Yash, good afternoon.
Good afternoon, Horma. So it's almost like the season where all financial regulators are seeing a change, starting with RBI, Sanjay Malhotra taking over there, then Tuhin Kanta Pandey taking over SEBI, and now the hunt for the next insurance regulator or IRDAI chairman has begun. The government has invited applications from interested candidates when it comes to the position of the next IRDAI chairperson. The last date for the submission of the application would be April 6th, but the current IRDAI chairman, that is Debashish Panda, his last day in office would be March 13, 2025. Now, in all estimates, even the best in terms of conservative estimates, it would at least take about a month after the last day of submission of applications for the appointment of the next IRDAI chairman, which means for about 30 days or so, the senior most member at IRDAI, which is likely to be PK Arora as per our sources, will take over the chair of IRDAI chairperson till the time the permanent or a full-time chairman is selected by the government and he takes over the position of IRDAI chairperson. We've also picked up a few names from our sources in terms of the people who are likely to be in the race to be the next IRDAI chairman. The first name here that comes is Giridhar Armane, who's the former defense secretary. He is likely to be in the race. Along with him, Ajay Seth, the current economic affairs secretary, is also likely to be in the race to become the next IRDAI chairman. But just a quick look at the 3 years of the current IRDAI chairman, Debashish Panda. A lot of large-scale reforms being undertaken. The first one, of course, was the transition to use and file from file and use, essentially giving insurers the freedom to go ahead, launch a product, then file it with the regulator and get the approval. So not wait for the approval to launch the product. Putting limits on expenses of insurance companies, of course, the EOM or expenses of management regulations, that was an important one. Easing private equity investments in the insurance sector, removing the condition of SPV was another important point. Higher surrender value for policyholders, 100% FDI in the insurance sector, all being batted by the current chairman Debashish Panda. A lot expected in the term as far as the incoming chairman is also concerned, from the amendment bill to major accounting reforms to listing of large insurance companies. We'll have our eyes on all these reforms as the new chairperson takes that position of the next IRDAI chairman.
All right, Yash, just out of curiosity, with this bespectacled look and, you know, the slightly aged, mature look that you are carrying these days, are you tempted to put in your, application for the same as well?
No. I'm just tempted to get the name on who would be the next chairman. No intentions, of course, to even consider anything of that sort.
He just mentioned he'll have his eyes on it. Now he's going to have four eyes on the same. That's something that you keep an eye out for, Yash. Thanks a lot for that update. We'll definitely watch out for who's going to be the next IRDAI chairperson. But we take a short break. But before we do that, here's a quick note for our viewers. Parity is just not a goal. It is the key to unlocking new possibilities. HSBC presents the CNBC-TV18 Future Female Forward, the mega summit co-presented by Cognizant, where we discuss what it takes to close the gender gap and create a lasting impact. Tune in for this game-changing dialogue live on CNBC-TV18 today at 5:30 p.m. onwards. Take a short break. Back on the other side.
In Germany in February. Therefore, the company may prefer to import cars into India from Berlin and sell them at the lowest duty possible. At the moment, the US administration is seeking lower tariffs on all US products except for agriculture, and India too would want to defend its core interests in agriculture, dairy, pharma and other manufacturing sectors. Let's see what happens before the 2nd of April when US reciprocal tariffs kick in.
president is giving them an exemption for 1 month so they are not at an economic disadvantage. So the three companies that he spoke to are Stellantis, Ford, and General Motors. They requested the call, they made the ask, and the president is happy to do it. It's a 1-month exemption.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable?
Welcome back. The Nifty is holding with gains of about 38 points. It is off the lows of trade, but it's also way off the highs of today's trading session. As you can see, from the intraday chart itself, it's a perfect time to get you up to speed with what's taking place in the F&O, side of things, or F&O end of things. You have the Nifty, which is doing well, but what's pressurizing the Nifty is the Nifty Bank, which is not doing particularly well. What's holding the Nifty up is the FMCG index and the IT index. So FMCG actually is the top gaining index in today's trading session so far. The problem is not the frontline index. The problem is the broader markets. After good outperformance all of last week, maybe some bit of profit taking is what we're seeing. Mid-cap index is down about 0.2%, the small-cap index down about 1%, and the advanced decline ratio tells you a story of the day, where you have, the red and the green lines far apart right now. They've been, starting with the green above the red line. There was an intersection immediately after the market opened, and thereafter, we've seen those lines just move far apart, with about 1,900 stocks now in the red, for about 800 stocks which are in the green. The other factor is that even as the Nifty is holding on to gains, we have the India VIX, which has spiked a little bit. Nothing to worry, but there is a bit of a spike, which tells you that maybe there is call writing at higher levels as well, and perhaps put buying as well. So let's look at the options. 22,600 put, that is extremely active. These are options that expire this Thursday. 100 rupees premium, telling you 22,500 is an important support to watch out for. But as we move higher, there is some sort of resistance which is likely. From 22,650 itself, we've seen call writing telling you that at 22,750 thereabouts is where the first leg of resistance comes in. What is at 22,750? The 20-day moving average. And for the Nifty Bank as well, 49,000 is an important mark to cross, which is about 500 points from here on. That's the 20-day moving average. a lot of stocks doing well in an otherwise wobbly trade for broader markets, and a lot of long positions added on names like Adani Energy Solutions. You have Torrent Power, Phoenix Mills as well. Uncharacteristically high open interest build-up is what we've seen out there. But just keep an eye out on BSE, Bombay Stock Exchange. All the stocks in the capital market space are not doing particularly well, and BSE in specific is seeing a lot of open interest build-up, suggesting that the stock may actually enter FNO band. So we'll keep an eye out on BSE. So that's basically the FNO setup for the day. The Nifty, broad range, 22,500 to 22,750. Individual stocks doing well, but BSE is something that we'll most definitely watch out for.
We definitely keep an eye out for that. Absolutely no let up. And most of the others as well. We just mentioned 361 WAM and JM Financial. But Anand Rathi Wealth is not too far behind as well. 4.5% lower there as well on that stock. And the other one that has not done well for itself in today's trading session is Kalyan Jewelers. And that is now with that 400 level on the stock under threat. And the stock is also falling on high volumes. Remember, the stock was down around 4% on Friday as well. So another 4% shaved off in today's trading session. We take a short break. Somil Mehta of Mirae Asset Sharekhan joins us on the other side with a quick chart check and some trading strategies as well. Stay tuned.
Market masters, macro pundits and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Back at 22,600 is the Nifty, and Saumil Mehta of Mirae Asset Share Khan is joining us now on the show. Saumil, good afternoon. Thank you for joining in. You know, how important is that 20 DMA now for the Nifty at 22,700, 22,800, that range? How important is it for that to cross? What happens to the index next? And couple that up with your stock-specific ideas as well for the afternoon.
Thank you for having me on the show. Short-term bias remains positive. We've seen a very sharp pullback in Nifty last week, and we've crossed some very crucial resistance. 22,400 remains very crucial from here on. 22,400 would be a very, very crucial support from here on. I'm not expecting markets to go down below 22,400, and the strategy should be to buy on declines. On the upside, I think 22,800 would be a very short-term resistance, and as the short-term bias remains positive, I'm expecting markets to go about 23,400 levels, which is close to 200 daily exponential moving average. So 23,400 would be my short-term targets, and I'm not expecting markets to go down below 22,400 levels. I'm picking two stocks for short term, which is United Spirits. That'll be a buy call. Stop loss would be 1,300 and the target would be 1,400. The next call would be a mid-cap stock, Policy Bazaar, and the stop loss would be 1,385 and the target would be 1,520.
All right, we take that point. Thank you, Saumil, for joining in. You spoke about Policy Bazaar. Just keep an eye on a couple of these life insurance stocks. You have all of them spiking right now. SBI Life has moved to the high point of trade. HDFC Life is doing extremely well as well. So the third one is ICICI Pru. So all these stocks are suddenly moving higher. Maybe the street is taking note of some of those comments that came in from the finance minister the other day saying that maybe they're looking at rationalizing the GST rates itself. If that were to happen, then the insurance company is something that has been asking for it for the industry. Will that be considered or not as well is something that we'll most definitely need to keep an eye out on. As of now, these life insurance stocks fairly well bid. And the good news is that the Nifty Bank, which was mildly below the flat line, has now gotten back above the flat line, up around 20 points for the Nifty Bank. And guess what's powered it ahead? We have HDFC Bank. Pull up the intraday chart of HDFC Bank. That stock has moved to the high point of trade. And as we speak, we have some news at the bottom of your screen coming in from Money Control. Sources to Money Control say that Hero MotoCorp has been given a clean sheet by the Ministry of Corporate Affairs, which in June 2023 had ordered an investigation against the company for possible fund divergence or giving the funds away. Right? So just keep an eye out on that one. From the lows of the trade, stock has seen a bit of a recovery, though still mildly in the red. When this had happened, there was a bit of a decline in the stock that we had seen in 2023 itself. Take a short break, get back, and we speak about markets and a lot of individual stocks.
Now, every day you have some added uncertainty around US tariffs, trade, etc. So I think it makes sense to wait for a bit. In the last term of President Trump, where there were some China tariffs put there, and China put some tariffs on US products, which they've already done, where they put some tariffs on US grain. And US is a significant exporter of soybean to China. So when those tariffs came in, basically the trades rerouted. China imported from Brazil, Argentina instead of the US, and US, instead of exporting to China, exported elsewhere. What happens is that it makes a trade just a little bit less efficient. And therefore, if anything, it's got a positive impact on the market, as you said. The concern is if there are widespread tariffs, then it actually affects.
Welcome back. A lot of these defense stocks were actually doing quite well on, Friday's trading session. And then we had Upasana join us to tell us what exactly is happening. There was a brokerage note that upgraded the space as well. This morning, we had the management of Astra Microwave as well. They project a top-line growth of 25%. They maintained their order book guidance at a time when, a lot of these stocks have fallen from the highs. So maybe it's important to look at it from that perspective. We have our special segment, Insight Edge, as always. Upasana joins in to speak about what the management said, from the Astra micro standpoint. Upasana.
Well, certainly we spoke to the management early this morning and to get an insight into the overall sectoral trends, order book guidance and business outlook. Now, management says that it expects a top-line growth of 25% for FY26 with a revenue ranging around 1,300 crores. It says that it will likely cross 1,000 crore revenue target for FY25 and company maintains order inflow guidance of nearly 1,200 crore for FY25. With this, company's consolidated order book currently stands at 2,332 crores is what the company has indicated. Now, company says that currently it has multiple projects and discussions ongoing, and it believes, just as ICICI Securities has released the brokerage stating the same, that the rearmament of Europe is a mega trend for the next 6 to 7 years, and Indian companies may get substantial inflow on the back of this. The company has also emphasized that the supply chain resilience for Indian companies will become very crucial going forward on the back of this. So let's listen in what the management has to say.
We are maintaining our guidance. Our order book forecasts have more or less been translated into actuals at this point in time. We are looking at deliveries on schedule, and we will cross, in all likelihood, 1,000 odd crores, which we had spoken about, indicated to you. The next year guidance has been and our consolidated order book right now is around 2,332 odd crores, and a standalone is about 1,960. And our forecast for the next year is the new order inflow is in excess of 1,250, 1,300 crores, 25 odd percent is the top line growth which we are projecting.
The management there of Astra Microwave and Upasana highlighting the company on our special segment Insight Edge. We'll take a short break, but before that, here's a quick note for our viewers. Where do we stand when it comes to women's leadership and progress in India? The Close the Gender Gap Index uncovers key insights, while the Future Female Forward Charter sets the roadmap for real action. Be part of this movement. Tune in today starting 5:30 p.m. only on CNBC TV18.
Underlying demand for the commodity, in which case that becomes a negative. On a ton-mile trading pattern basis, it's good for shipping. But if it affects demand for commodities, then that's bad for shipping because of general economic impact.
unveiled its latest masterpiece, and it's not your average art show. Light into Space isn't just about breaking boundaries, it's shattering our very perception of reality. Curated by the renowned Via Art Foundation from New York, the first of its kind international exhibition brings together thought-provoking works of light and space artists from the 1960s and 70s. Can you tell us and share your experience out here?
So this is the first time that I've actually come here, and I've flew down from Bangalore for this. And as we are looking at it, for me it was quite different, because it's basically, according to me, I felt it's like the way you see it through your eyes, the way you perceive it. So it was quite different. So I really liked it.
What has been your favorite art piece so far?
So my favorite was one of the glass pieces that was displayed on the second floor. Why is because it's really interesting how just a simple piece of glass molded into such shapes give subjective illusions to everyone, and that's just really pretty and really refreshing to see.
Spanning 4 floors of NMACC's dedicated visual arts space, the exhibition transforms industrial materials, fluorescent lights, polished metals, mirrors and reflective paint into interactive masterpieces. It's not just an exhibition, it's a sensory and spatial experience designed to engage and challenge the way we see the world around us. The exhibition is open to the public until 11th of May, with tickets starting at Rs 199. Also, the entry is free for senior citizens, children under 7 and students of fine arts, design and architecture. The exhibition is open to the public until 11th May 2025. So what are you waiting for? Check out the space and let us know in the comments below. In Mumbai, Zinia Barya. Let's talk about your 2008 Olympics match. Tell us about your whole experience. That was your first Olympic match. What was the feeling? What was going on in your mind? Tell us all about it.
I think it was in 2008 and I was 18 years. And when I won my first international title, I was only 16, and I was there in the international circuit, and a lot of these Chinese and a lot of these Koreans were actually, they were worried like some Indian is coming, and they're actually giving us tough competition, because before me, we didn't have a female badminton player who was actually playing at that level, who was actually winning those international matches. Of course, we had Prakash sir and Gopi sir who did well.
Welcome back. Joining us on the show now is Ajay Goel. He's chairman of the Wheat Products Promotion Council Society. Ajay, thank you so much for joining in. Well, a couple of things really. First of all, on the weather itself, because Jan was hot and Feb was the hottest in 124 years, and March doesn't seem to be going down cooler either, because the kind of reports that we've seen coming from IMD. Does that at all impact or has impacted the wheat crop?
No, so fortunately, there have been some westerly disturbances, and the mercury has again dropped in the plains of North India, in Punjab, Haryana, UP. You again see cool weather since the past 4-5 days. It was expected that, the temperatures will remain high, but due to these disturbances. But again, going forward, there are some fears of heat waves, in the month of March. But right now, it is quite good. The weather is favorable, I would put it this way.
Ajay, there's a big difference between what the government seems to be thinking on what the wheat crop would be vis-a-vis the industry. Any sense on what the industry is putting out as its range and sense of crop this time?
So definitely it's going to be about 3 to 4 million tons higher than what it was last year, whatever number you can place for last year. Officially, the production is estimated to be at about 116 odd million tons. And but it is certain that it's going to be higher than last year, at least by 3-4 million tons.
So are we looking at almost 120 million tons for this year?
No, I would say 116 is a better number, conservative number. At 116.5 is something that probably most estimates are at the moment.
Ajay, I also want to get a sense on the kind of government procurement numbers that they have put out. Is it too ambitious with the kind of dry pipeline that we have from the private players?
So I would say that, they have put out a number of 31 million tons for procurement in this season. And government is, I think they will cross 22, 23, 24 million tons. And two states, Rajasthan and MP, have declared a bonus of 175 odd rupees as well. So we could see better than expected procurement for the government due to this bonus in the state of it's MP, which is the issue where you're not going to see any improvement over last year as far as procurement is concerned.
Ajay, also there's a lot of conversation about wheat inflation really, and if you look at the last year's prices, if you take a look at the last year's lowest prices and this year highest prices, I mean it's quite a percentage increase there. How are you looking at the prices currently? What's your sense for 2025?
So today, we've had very fantastic arrivals in MP especially, and this market is going to, just fall down after Holi because there'll be so much of wheat coming into the market, and the government will start procuring in MP probably 15th of April. But private players will wait and watch because there is a stock limit which is still in force currently up to 31st of March. And then by that time, we will have UP and Punjab and Haryana come in. So somehow we get a sense that there's going to be a more marketable surplus left behind in the marketplace if the government is not able to procure much. And one thing is certain that everybody is going to step up their procurement over last year, especially private players and users who have suffered over in the past 1 or 2 years. They are going to, bump up their purchases and hold a higher stock. So if the large players who are the users are not there in the marketplace, I don't think there will be a rally like last year in this year, at least until September, October.
Okay.
All right, Mr. Goel, thank you so much for sparing time and joining us this afternoon today. Manisha, thank you for joining in as well. With that, we call time on this edition of Halftime Report. We leave you with the Nifty still off the highs of the day, nearing that mark of 22,600. Business lunch for the next 30 minutes on the other side.
Was just, when I started playing badminton, I used to ask my mom this question, why badminton? I don't know. It's such a difficult sport and you have the Chinese in quarters, semis and finals, they're everywhere. So she used to be like, no, for me, you are the champion, you're going to do it and just believe in yourself. And imagine she's a housewife. She's just a housewife. She's not even a international level coach, or she's not someone who's seen what international badminton is. But she was like, you are my champion. You're going to do it. And with her belief, I was in the Indian team when I was only 13, senior Indian team. Wow. And I won my first international when I was only 15, 16. So these things happened in my career really, really fast because of only one person's belief. And of course, the coaches come in, the trainers come in. But I think the first Olympic was, in fact, so early in my career that, I was like, my mom wished that I have to become an Olympic champion, and I'm here. I'm here so early, and I'm actually getting closer to winning the medal. In 2008, I lost in the quarterfinals, and I still, that one match gives me a lot of sleepless nights because it does, because even after having the medal, I was 11-3 up in the third set. And then I was actually getting all these things in my mind, saying that my coach was like, ek din tu world champion banegi. My mom was like, ek din Olympic champion. Not pressure, but I was happy that I actually was going near winning a medal. I was happy, I was excited that I'm actually doing it with my training, with my coach's belief and everything, I'm doing it. Suddenly the game just turns, and then she's just picking up everything. The rallies are going really longer and she's everywhere. She's all over the court, not leaving anything. And after 11-3, you won't believe, I just got 2 points and she went on winning the match, 21-30. After that, I'm sitting there and I'm talking to my coach, what happened? Because every rally was a big rally. I didn't even do silly mistakes to lose the match. What just happened? So I was like, when I thought about it even more, I was like, next day I better start training to get the medal in the next Olympics. So yes, that match tortured me a lot, but I think it gave me that lesson as well, that you should not get too excited also sometimes. You have to control yourself. When you are actually going to achieve your goals, you have to control yourself, try to relax yourself. In fact, in that time, when I started doing well, I didn't have a mental trainer or a trainer. Only Sir, Gopi Sir was everything to us. And he being a coach, how much he could have helped in other things as well. So I feel, agar wo time pe I had a better mental trainer or someone who could give me advice about it, that you should just think about the next match, just think about the next point. तो उतना मतलब मैं उस मैच में एक्साइटेड नहीं होती. But I was so happy that tournament gave me so much of belief. And in India, everyone started to go to know what badminton is. And they were like, Saina is really doing well in badminton. And in 1 year, I was there beating all these Chinese. I won the Indonesia Open. I became world number 2. So in 2010, I won 3 Super Series back to back. And in 2012, I got an Olympic medal. But I think that particular match taught me to be really, really thinking about that even after match point, you have 10 more points to go. Don't just think that the match is finishing, just be there, and presence of mind is required. And I think that first Olympics really gave me that confidence that yes, I'm there and I can beat all these Chinese and Koreans, and I can be in top 10, top 5 for a long period of time. And when I look back, in fact, someone told me that I was in top 10 for almost 11 years. And when I became world number 1, that is when I was like, yes, it's possible. It's possible.
Frontline stocks gain, keeping mainline indices in the green even as the broader market sees more stocks declining than advancing. Utilities and IT are the prominent gainers, even as industrials and auto drag. RBI approves only a 1-year term extension for IndusInd Bank CEO Sumant Katpalia against the 3-year extension sought. The shorter duration of extension raises uncertainties, the stock slips. Sun Pharma is set to acquire Checkpoint Therapeutics that owns an FDA-approved oncoderma therapy drug for an upfront payment of $355 million, while Lupin launches a cardio drug in the US with an addressable market of $446 million. India is looking to cut average applied tariff for US imports as part of bilateral discussions. CNBC-TV18 has learned that this as talks with EU on the FTA resume today and efforts to seal the trade deal with UK continue. Government initiative applications for the post of IRDAI chairman as the term of the current chair, Debashish Panda, ends on March 13. 2 senior bureaucrats could be frontrunners for the post. Hello, welcome to Business Lunch on CNBC-TV18. Coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala, and thank you so much for tuning in to the show. A quick look at what the market is doing today, right? We are seeing that the benchmark indices surely are managing to hold on to some bit of a green. So whether you look at the Nifty or the Sensex, they're off the day's low, but they're managing to hold on to 0.2% of gain. At least the Nifty as of now, 22,590 levels is what the Nifty is at. 74,500 is what the Sensex is holding on to. Yes, the day's highest point was much above this, but yes, 0.2 to 0.3% of gain, no complaining on that front. Broader markets, like I was saying, look at the mid-cap. Opened up in the green, then we saw that fall coming in, and now mid-cap is trading at the day's lowest point, down 0.5%. And the worst fall we're seeing coming in is for the small cap. While last week had seen that bit of an outperformance coming in from Nifty small cap, today it's a different story coming in at the beginning of the week, and Nifty small cap too, as of now, is surely trading at the day's lowest point. Pull up the Nifty Bank. What is that doing in trade? Nifty Bank seems to be holding on to some bit of a gain today, right? We've seen it flip-flopping between the red and the green. Right now, again, it's gone to that positive side, so that is interesting to watch out for. Because let's pull up the Nifty contributors, and you know why that Nifty Bank is seeing a bit of a flip-flop is that, you know, when you look at the contributors and the
overall performance coming in from some of these banking names. So ICICI Bank, HDFC Bank is something that is supporting the move of the market right now. We have Infosys also, as well as HUL among these names which are supporting the market. On the flip side, we have IndusInd Bank, which is seeing a fall, and like I was mentioning in the headlines as well, because of that uncertainty around, who's going to be the next CEO going forward, because Sumant Katpale has got only a 1 year's extension right now. So that is important to watch out for, and that is why that flip-floppy trade that we're seeing coming in terms of the market move for Nifty Bank. Let's talk about some of these small names and mid and small cap specifically, where we are seeing this fall coming in. Today, pull up something like a JM Financials, 361 WAM. All these are seeing sharp pressures, falls of more than 6% for JM Financials, more than 6% fall for 361 WAM as well. So that is something that's seeing some bit of a pressure in today's trading session. Top gainers on the flip side, we have something like an Aavas Financier, DOMS, Dr. Lal Pathlab, Sanofi India, managing to hold on to very good gains in today's trading session. Today, there are no stocks that have actually managed to reach that all-time high level or all-time low level. So it's interesting to watch out for that. An advance decline ratio today is clearly in the favor of declines versus an advances that we're seeing coming in. So, that pressure is coming in on the market front at least. Broader end specifically seeing more of that pressure coming in. Declines are at around 1,883, while advances are at around 800. So interesting to watch out for where the market will be headed, especially autos. That's a big drag coming in, as well as PSU banks. That's seeing some bit of a pressure, while metals and media continue to be top sectoral gainers. But yes, that's how the market setup is looking like. Let's move on and start with the first story for today. We have US President Donald Trump, who has continuously criticized India for high tariffs. And once again, on Friday, he told reporters that US can't sell anything in India due to the high tariffs. Listen to what he had to say.
India charges us massive tariffs, massive. You can't even sell anything into India. It's almost restrictive. It is restrictive. We do very little business inside. They've agreed, by the way, they want to cut their tariffs way down now because somebody's finally exposing them for what they've done.
Also speaking to CNBC, Treasury Secretary Scott Bessent commented on the effect of tariffs and the push for a stronger dollar. Listen in.
The Biden administration created this bad equilibrium where the top 10%, people in this room, probably most of the people watching this show, top 10% of Americans are 40 or 50% of consumption. And that is an unstable equilibrium. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down. And, could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period. We'll see how the overall inflation numbers they work out. That obviously energy's a big component, so we'll see that go down. Committee to Unleash Prosperity, Steve Moore's group, has some very good data on how regulation affected the average household. So if we're cutting that, that's why I keep urging people to look across the entire spectrum. If you get a one-time price adjustment, and the other thing too is, are we going to, for the bottom 50% of wage earners, can we see real income gains for working Americans? Because I think that was the problem last time, that the top 10% did great and the bottom 50% got crushed. So if they start seeing real wage gains because the private sector, as opposed to the government's producing the jobs, then I think that would be a big offset. We are committed, this administration, President Trump, are committed to the policies that will lead to a strong dollar. If we bring back more manufacturing, if we have cheap energy, good tax policy, deregulate, we will end up with a strong dollar. But what is unacceptable is, in a bilateral relationship, other countries trying to weaken their currency. And so we are against the currency manipulation on a bilateral basis, but globally, the strong dollar is very important. We will continue as a reserve asset.
And Trump tariffs war continues across the globe. It is hitting global trade as uncertainties prevail on that front. Earlier, we spoke to G. Shivakumar, Executive Director and CFO at G Shipping, as well as Vinity Sarapmuthreja of Vinity Organics, to understand exactly how these Trump tariffs could affect their businesses and affect their businesses. Let's go across and listen in.
What happens is that it makes the trade just a little bit less efficient. And therefore, if anything, it's got a positive impact on the market, as you said. The concern is if there are widespread tariffs, then it actually affects economic growth and underlying demand for the commodity, in which case that becomes a negative. On a ton-mile trading pattern basis, it's good for shipping. But if it affects demand for commodities, then that's bad for shipping because of general economic impact.
Tariffs are concerned, I don't think as of now it affects us too much. It only affects us in products where there is local manufacturing. But if you look at our top two products, for example, IBB or ATBS, there are no manufacturers in the United States for those products. It's manufactured in China, and China has a tariff already. So anyways, for the last 4 or 5 years, we've had an advantage supplying to the US, and I do believe going forward, that advantage will sustain for these products at least. Custom duties that they impose on products, maybe 7%, 7.5%. That's what it is as of now. It is actually just a coincidence. We always needed to have a subsidiary in the US, simply given because it's such a large market for us, and we do export a fair bit to the US. A lot of our customers want us to have a warehouse in the country itself, so it's easier to distribute products. I don't think the subsidiary becomes tariff agnostic because there is going to be transfer pricing involved. So the subsidiary is not a way to avoid tariffs. I don't think that is possible, and that is not the intention also. The subsidiary is simply there to better service our customers in terms of distribution and having a local warehouse. And maybe if we want to do some sort of product customization or small synthesis, if at all in the future needed. It does not circumvent the tariffs in any way.
And Trump's tariff uncertainties have not spared the US itself. Now, the country's central bank, which is the Federal Reserve, also awaits for more clarity on the tariffs ahead of making its decision in the upcoming meeting. CNBC's Steve Leisman has more details on this front.
The Fed Chair Jay Powell offering a modestly dovish outlook on monetary policy amid elevated uncertainty from the Trump administration. Powell telling the U.S. Monetary Policy Forum in New York City that the Fed is watching significant changes in trade, immigration, fiscal policy, and deregulation, but would react to the changes as a whole.
As we parse the incoming information, we are focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry, and we are well positioned to wait for greater clarity.
Notably, the Fed chair said the Fed could keep rates where they are if inflation doesn't come down to the 2% target, or ease if the labor market weakens unexpectedly. He didn't mention rate hikes and made specific mention of potential weakening in consumer spending, a sign he could be more worried about growth than he is inflation. Powell's comments left futures markets expectations largely unchanged for rate cuts in June, September, and December. Underpinning that outlook was Powell's comments that he believes tariffs would create one-time increases in prices, not broader inflation. Powell spoke after a jobs report showed U.S. payroll growth of 150,000, just a bit below expectations, suggesting no immediate impact from the administration's policy changes and that the job market remained relatively healthy. But federal government employment did fall by 10,000, a potential sign of things to come as the Trump administration moves to drastically downsize spending and the federal workforce. Steve Leisman, CNBC Business News.
Thank you so much for that. On that note, we're going to slip into a very short break, and after the break, we'll bring you the key agenda of the second half of the budget session.
I was world #1. Everyone was like, wow, from India we can do, in badminton, we can do such wonders. And we can also beat Chinese who are the powerhouses. Korea, Japan, they are the powerhouses. But now you see, badminton in India is grown so much. And we are giving good challenge to all these countries. And we are one of the top in the world now. So, yeah.
Well, we're not looking to hurt anybody, and we're certainly not looking to hurt them. And I'm looking at that, and there were some people that think that's appropriate and some people don't, and I'll be making a decision pretty soon.
President Trump.
But we're not looking to hurt them,
President Trump,
especially Ukrainians. They've gone through a lot. Yeah, Peter?
India and the United States have initiated trade talks this week after threatening all nations, including India, with reciprocal tariffs starting the 2nd of April. The US government, as per our sources, has sought zero tariffs from India. Sources tell CNBC-TV18 that the US government officials want 0 for 0 tariffs for all product lines except for agriculture. This comes at a time when Commerce Minister Piyush Goyal is in US for talks with USTR Jamieson Greer and US Secretary of Commerce Howard Lutnick. This is the first time that the two sides are formally initiating talks on the bilateral trade agreement that Prime Minister Modi and Donald Trump have agreed to sign by September or October this year. India has sought more market access for goods manufactured in India, especially labor-intensive sectors. Can India offer zero tariffs on all goods coming into India, including Tesla? That remains to be seen. However, experts have been saying that India can offer 0 for 0 tariffs or eliminate tariffs on 90% of industrial goods coming in from the United States, and this is doable. While India would like the reciprocal tariffs to be set aside, sources say so far there is little likelihood of any carve-out for India. When it comes to automobiles, it is clear that Donald Trump wants American car makers like Tesla and motorcycle makers like Harley-Davidson to be sold in India tariff-free without having to set up manufacturing. As far as Tesla's India entry goes, things seem to be moving fast, with Tesla taking a 4,000 square feet space in Maker's Maxcity Mall in BKC, Mumbai. They're going to pay over 25 crores in rent over 5 years, and the lease deed came into effect in February this year. Tesla has also taken some parking spots on rent to charge cars. The company has also taken a space on rent in Worldmark Mall in Aerocity, Delhi, as per sources. The company has kick-started hiring for Pune and Mumbai, mainly for showroom-related roles like delivery operations specialist.
Welcome back. Thanks for staying tuned into Business Lunch on CNBC TV18. Now let's move on the budget session of the Parliament has resumed today. Shivani is here to tell us more on what's on the agenda this time. Shivani?
Well, absolutely. All eyes are on the second leg of the budget session, which has begun today and will run until April 4th with total of 20 sittings lined up. One of the key highlights of the day is that Finance Minister Nirmala Sitharaman will be tabling the budget for Manipur. Now, remember, Manipur has been under the President's rule since last month after former Chief Minister N. Biren Singh stepped down amid escalating ethnic violence in the state. With no elected government in place, the union government will now present and seek Parliament's approval for Manipur's state budget. But that's not the only thing on the agenda today. During this part of the session, Parliament will take up discussions on voting on the demands for grants for the financial year 2025-26, along with the appropriation bill, which the FM has already tabled today. This is essential to ensure government departments get funding for the upcoming fiscal year. And of course, some key legislations are also in focus in this part of the budget session, like the Banking Law Amendment Bill, the Coastal Shipping Bill, the Railway Amendment Bill, and the Immigration and Foreigners Bill 2025, all of which the government hopes to push through in this session. But what's also expected today is some heated political exchanges. The opposition is likely to corner the government on the host of issues, from the alleged manipulation of electoral rolls to the recent surge in violence in the state of Manipur, and also India's foreign policy approach under the Trump administration. The government, however, has its eyes set on wrapping up the budget process smoothly and pushing through the pending bill. So a packed, high-stake day in Parliament today, with crucial debates, key legislations, and of course, the Manipur budget taking the centre stage. Back to you.
Thank you so much for that, Shivani. But staying with the Assembly proceedings, now the Maharashtra State Budget will be tabled in the State Assembly today. Santya is here to give us more details on this one. Santya, good afternoon.
Good afternoon, Vinny. So the state budget will be tabled at 2 p.m. and this is the first full budget of the Mahayuti government 2.0 for their second term. And this is for the 13th time that Ajit Pawar, as the finance minister of the state, will present the state budget. Now, this budget is particularly important as it comes at a time when the state is facing financial distress. Now, the Mahayuti government has been drawing criticism since last year for announcing one welfare scheme after the other ahead of the elections, and most of these schemes are based on cash payments and cost 96,000 crore rupees to the state exchequer. The finance department of the state has raised concerns over the financial distress the state is facing, estimating the overall fiscal deficit to cross 2 lakh crore rupees. So the biggest challenge the state government is facing is to keep the fiscal deficit within the 3% limit of the overall GSDP as per the norm. Another important thing is that the state government had promised to increase the cash payment under its flagship scheme responsible for bringing it back to the power, Mukhyamantri Ladki Bahin Yojana, from 1,500 rupees per month to 2,100 rupees per month. But this promise, it looks like it will be very difficult for the state government to fulfill in this budget. It seems quite unlikely. Vinny.
Okay, Santya, thank you so much for that and giving us the latest update. We'll surely get you all more updates from this one as well from Santya going forward. But on that note, let's just slip into the break. And here's a note for you all, for our viewers. The conversations around gender parity as well as closing the gender gap is evolving, and so are the solutions. HSBC presents a CNBC-TV18 Future Female Forward Mega Summit, co-presented by Cognizant, where industry pioneers share their take on what's next. Tune in for the discussion that drive real change today, 5:30 p.m.
Manager, service advisor and others. Industry sources say Tesla may not be keen on manufacturing in India right now due to decline in sales globally, especially a 76% drop in sales in Germany in February. Therefore, the company may prefer to import cars into India from Berlin and sell them at the lowest duty possible. At the moment, the US administration is seeking lower tariffs on all US products except for agriculture, and India too would want to defend its core interests in agriculture, dairy, pharma and other manufacturing sectors. Let's see what happens before the 2nd of April when US reciprocal tariffs kick in.
president is giving them an exemption for 1 month so they are not at an economic disadvantage. So the 3 companies that he spoke to are Stellantis, Ford, and General Motors. They requested the call, they made the ask, and the president is happy to do it. It's a 1-month exemption.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC.
Welcome back. Thanks for staying tuned to Business Lunch at CNBC-TV18. While the benchmark indices is managing to hold on to that some bit of a gain, not much of a sharper fall that we're seeing. 0.2% of gain for the Nifty as well as the Sensex. Broader markets have seen a slight bit further more of a dip coming in. Mid cap is down 0.7%. Small cap also seeing a bit more of a further decline coming in today's trading session, both trading at the day's lowest point. But yes, that's how the market setup is looking like as of now. The broader markets clearly seeing some bit of a pressure. But we're going to wind down this edition of Business Lunch. But here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on the screen.
Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. from chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
Good afternoon. Counting down to the final 120 minutes of the start of this truncated week. You're watching Midcap Radar from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me today is Reema Tendulkar. Reema, good afternoon. We started off well, but we seem to have cooled off from the highs, but it's not looking good for the broader markets.
Oh, indeed. The mid-cap index is down 300 points. Small-cap index down over 1%. And the gap between the advances and the declining stocks has only been widening as the days progress. But these are the top stories at 1:30 p.m. Frontline stocks gain, keeping mainline indices in the green, even as the broader markets see more stocks declining than advancing. FMCG metals are the prominent gainers, while consumer durables along with oil and gas drag.
The RBI has approved only a one-year term extension for IndusInd Bank CEO Sumant Katpalia against a 3-year extension sought. The shorter duration of extension raises uncertainties. The stock is now at a 52-week low.
And here's the pharma news for the day. Sun Pharma is all set to acquire Checkpoint Therapeutics that owns an FDA-approved oncoderma therapy drug for an upfront payment of $355 million, while Lupin launches a cardio drug in the US with an addressable market of nearly $450 million.
Astra Microwave is in focus after its management tells CNBC TV18 that they are maintaining their order book guidance and that their consolidated order book is currently over 2,300 crore rupees. The company is also projecting a top-line growth of 25%.
And Vinity Organics is under pressure even as the management tells CNBC TV18 US tariffs do not impact them. They're not setting up a subsidiary in the US to avoid tariffs. They also reveal blended tariffs on their exports to the US stands at 7.5%.
Well, 100 points lower from the day's high now is the Nifty, but it is still holding on to gains. The broader markets, though, that are a bit of a pain point, as Reema was just mentioning, a 300-point cut on the mid-cap index. The small-cap index, too, is down to the lowest point of the day, trading with losses of over 1%. Remember, the last week was a good one for the markets, but this time around, the truncated week has not got off to a good start, particularly for the broader markets. But what are some of the stocks that are making headlines this afternoon? Vamakshi is here to tell us just that. Vamakshi, good afternoon.
Well, good afternoon, Hormas, but not such a good afternoon for the mid-cap space, right? Let's look at some of the stocks that are contributing to these kind of declines that we are seeing in the broader markets. GM Financial is one such counter. We also have 361 WAM, Mahindra Lifespace, as well as KEI Industries. All of these counters are trading under immense pressure as of now. Keep in mind that all of these counters have corrected somewhere around 25 to 30% on a year-to-date basis. And when we look at Mahindra Lifespace as well as KEI Industries, they're trading close to their 52-week low. The mid-cap IT stocks are also appearing to be under a fair bit of pressure. Look at Birlasoft, that stock is down nearly 5%. Sonata Software is another counter that is reeling under pressure, down nearly 3.5%. Tanla Platforms too trading 3% lower, and KPIT Tech also down nearly 2%. The industrial pack as a whole is also trading lower today. Triveni Turbines is seeing a sharp fall of 5.5%. Apar Industries also trading close to the day's lowest point, down nearly 6.2%. Hitachi Energy as well as CG Power are some other counters that are seeing pressure today. On the flip side, let's look at the stocks that are gaining in an otherwise weak market, especially for the mid-cap space. Aavas Financiers is one such name. That stock is trading close to the day's highest point, up nearly 6.6%. DOMS is another counter, up nearly 4%. Dr. Lal Path Labs as well as Solar Industries all up anywhere between 3 to 4%.
Very much for that. Let's get Ajit Mishra from Religare Broking for a technical check on the markets in the afternoon. Ajit, thank you very much for joining in. What have you made of the fact that markets have been unable to build on last week's gains? It's sort of lost momentum. The mid-cap, small caps have come in for profit booking. Does that tell you that the uptrend that we had last week has stalled now and markets could make a down move?
Yeah, good afternoon, Rima. So, see, last week was the week where markets were trying to find a bottom. So successfully, we could defend that area 22,000 mark, and then we saw that as the week progressed, we could manage to gain nearly 2% on the benchmark front and noticeable gains on the broader indices as well. But Rima, now we have reached to the point, the first area of resistance that short-term moving averages, when it comes to the short, benchmark indices and the broader indices as well. So for Nifty, 22,700 is the area basically where the Nifty is currently facing resistance. Today we have tested that mark, and now we are seeing that the broader indices are also reeling under pressure. Last week, metal counters did exceptionally well. They are extending the gains, but banking is not participating yet. So I believe that once we have some participation from the banking, let's say the banking index surpasses 49,000 mark, then probably we can set for the next leg of the up move, which could help the index to inch toward 23,000 level, 23,200 zone in the coming days.
About specific stocks, then Ajit, you mentioned metals did very well. What are some of these metal names on your list now, particularly after the run-up that you've seen?
So, Omas, now I believe that there could be a bit of a profit taking in metal counters because they were the exceptional performers, and now we have multiple resistances on the weekly charts as well. Now, focus should be more on banking and other names wherein we are seeing comparatively, relatively higher strength. So within the banking space, Kotak Bank, wherein post the multi-year breakout, we are seeing a base formation. So here I'm anticipating that there could be a fresh leg of up move towards 2020 levels. So with stop at 1900, one can go long in Kotak. And another stock from the energy basket, JSWS Energy, it has formed a reversal pattern of late. And we are set for the next leg of the up move here also. With 540 as a target, one can accumulate at current levels with 495 as a stop.
All right, Ajit, thank you so much for sparing time and joining us this afternoon with your views on the index and on specific stocks as well. But from breaking barriers to rewriting the rules, our exclusive Future Female Forward Mega Summit brings together the voices that matter. Don't miss this power-packed conversation on enabling success, driving parity and shaping a more inclusive future. Tune in live only on CNBC-TV18 this evening at 5:30 p.m. Take a short break, back on the other side.
Now, every day you have some added uncertainty around U.S. tariffs, trade, etc. So I think it makes sense to wait for a bit. In the last term of President Trump, where there were some China tariffs put there, and China put some tariffs on U.S. products, which they've already done, where they put some tariffs on U.S. grain. And U.S. is a significant exporter of soybean to China. So when those tariffs came in, basically the trades rerouted. China
Welcome back. There is a defensive tilt to the markets. On the way up, you've got names like HUL, Nestle, Britannia. You've got an Infosys, throw that in with a 1.5% up move on the back of a CLSA upgrade where they've upgraded the stock to an outperform rating. So that's holding the stock up. And power names are higher today. So the top Nifty gainer today is Power Grid. But there's another stock, ICICI Security, which has recovered from the day's low as NCLAT has upheld the delisting of the stock. Mamakshi joins in with the details on this story.
Well, absolutely, Reema. You know, ICICI Securities is in focus. It's seeing good recovery from the day's lowest point. What has happened is that NCLAT has upheld the delisting of ICICI Securities from stock exchanges. Now, to just give our viewers some background, in June 2023, ICICI Securities had announced its plan to delist and merge itself with the parent company, which is ICICI Bank. Now, the approved scheme was that shareholders were to receive 67 shares of ICICI Bank for every 100 shares of ICICI Securities that they held. Now, in March 2024, shareholders gave nod to this scheme with a majority of nearly 72%. But there were two shareholders, Quantum MF and Manu Rishi Gupta, who opposed the move in separate petitions in the NCLT. They argued that the swap ratio would hurt the interests of minority shareholders. Now, come August 2024, the NCLT upheld the ICICI Securities delisting, and therefore this further promoted both of these shareholders, Quantum MF and Manu Gupta, to go ahead and challenge this decision of the NCLT in the NCLAT. Now what has happened is that all 6 appeals filed by Quantum MF and Manu Rishi Gupta have now been dismissed, and this in turn paves way, removes an obstacle from ICICI Securities delisting to take place. So therefore this bodes well for the stock, and resultantly the stock has recovered from the day's lowest point.
All right, Vamakshi, thanks a lot for that. Recovering from the lows of the day is ICICI Securities. But the one stock in the broader market that has been in the news for all the wrong reasons last week has been Gensol. And today is no different. We spoke to the management last week, Rima, and they had mentioned that they are going to, or they have plans to increase their stake in the company from the open market, although they did not share a timeline as to when they would do so. But contrary to that, they ended up selling some stake in the open market on Friday based on what the announcement they made, around about 9 lakh shares, or almost 2.5%. And they plan on reinvesting those proceeds into the business again, and they would also be investing into the warrant subscription round, which was done at a much higher price in June of last year. They'd be investing into that as well. But even after the stake sale, the promoters still hold around about a 60% stake in the company, most of which is pledged. So that is another concern surrounding Gensol. But before this announcement came up, just after market closing on Friday, the company also made another announcement. The fact that they are going to be holding a board meeting on the 13th of this month, which is around Thursday, and that will be for a fundraising proposal, either via QIP or a preferential issue or other methods. But interestingly, they are also going to consider a stock split. They're going to consider a stock split when the stock is already down 75% from its peak, around about 1100 rupees. The stock is now languishing at 300. Now they are going to consider a stock split. They've never done one before, but they've issued bonuses. A couple of instances. In October of 23, they did a 2:1 bonus. In October of 21, they did a 1:3 bonus. And even after this, the management continues to maintain that there is no wrongdoing on their part. They've constituted an independent committee to probe all the allegations that rating agencies like CARE and ICRA have made, and the fact that they remain committed to the business. But there is still a lot of twists and turns happening in this Gensol story right now. There are more questions than answers, but the answers are still pretty distant as of now.
So they have raised close to about 30 crore by selling 9 lakh shares, because the price is a little more than 300 rupees. So what, 27, 30 odd crore they must have raised. They're infusing how much via the...
That they have not specified as to how much they plan on doing, because even the promoters had mentioned that they have a 60 crore liability that they have to pay off over the next 3 months, which is around about 20 crores a month. So they plan on paying that off, but they haven't specified how much and when and how they will infuse the sum back into the business. And the street does not like this. The stock was getting battered last week. They saw some bit of choppy moves on Friday, and now it's back into a lower circuit of 5%. So last week the circuit was 20%. After that one instance, it was revised down to 10, and after those 2 instances of a 10% lower circuit, now the Gensol is in a 5% lower circuit. So a lot of wealth destruction.
Oh, indeed. I think it's down more than 50%, 58% now in the last 1 month itself. That's the extent of the destruction. But moving on now to Astra Microwave. We had a chat with the management earlier, and this is what they had to say. They are projecting a top-line growth of 25%, and they maintain their order book guidance. So listen in to key excerpts from the management conversation this morning.
We are maintaining our guidance. Our order book forecasts have more or less been translated into actuals at this point in time. We are looking at deliveries on schedule, and we will cross, in all likelihood, 1,000 odd crores, which we had spoken about, indicated to you. The next year guidance has been and our consolidated order book right now is around 2,332 odd crores, and a standalone is about 1,960. And our forecast for the next year is the new order inflow is in excess of 1,250, 1,300 crores, 25 odd percent is the top line growth which we are projecting. We have multiple projects, multiple discussions which are on an ongoing basis. And in fact, I would like to mention that the new opportunities for the whole industry, we started by speaking about the industry. There is a mega trend in the offing at this point in time. If you look at the next 6-7 years, which is rearmament of Europe. They have decades have happened in weeks. And I think there is a substantial business flow which can accrue to Indian companies. It's too early to say what exactly is the quantum, but we are hearing about all sorts of numbers. Depends on what is the incremental GDP allocation which European companies are forced to make.
This rearmament of Europe is one reason why a lot of these defense stocks were big outperformers last week, but they're not seeing some bit of profit taking in today's trading session. Before we take this short break, here is some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app, which gets you all the instant access to breaking news, financial world updates, all of it at your fingertips. You can download the app from the App Store or the Google Play Store, or scan the QR code that is on your screens. Take a short break. Back on the other side.
Brazil, Argentina instead of the US, and US instead of exporting to China, exported elsewhere. What happens is that it makes a trade just a little bit less efficient. And therefore, if anything, it's got a positive impact on the market, as you said. The concern is if there are widespread tariffs, then it actually affects economic growth and underlying demand for the commodity, in which case that becomes a negative. On a ton-mile trading pattern basis, it's good for shipping. But if it affects demand for commodities, then that's bad for shipping because of general economic impact.
Unveiled its latest masterpiece, and it's not your average art show. Light into Space isn't just about breaking boundaries, it's shattering our very perception of reality. Curated by the renowned Via Art Foundation from New York, the first of its kind international exhibition brings together thought-provoking works of light and space artists from the 1960s and 70s. Can you tell us and share your experience out here?
So this is the first time that I've actually come here, and I've flew down from Bangalore for this. And as we're looking at it, for me it was quite different because it's basically, according to me, I felt it's like the way you see it through your eyes, the way you perceive it. So it was quite different. So I really liked it.
What has been your favorite art piece so far?
So my favorite was one of the glass pieces that was displayed on the second floor. Why? Is because it's really interesting how just a simple piece of glass molded into such shapes give subjective illusions to everyone, and that's just really pretty and really refreshing to see.
Spanning 4 floors of NMACC's dedicated visual arts space, the exhibition transforms industrial materials, fluorescent lights, polished metals, mirrors and reflective paint into interactive masterpieces. It's not just an exhibition, it's a sensory and spatial experience designed to engage and challenge the way we see the world around us. The exhibition is open to the public until 11th of May, with tickets starting at Rs 199. Also, the entry is free for senior citizens, children under 7 and students of fine arts, design and architecture.
public until 11th May 2025. So what are you waiting for? Check out the space and let us know in the comments below. In Mumbai, Zinia Barya. Let's talk about your 2000.
Welcome back. Now the Nifty is dipped into the red. All the morning gains have been erased, and that is a bit disappointing. The Nifty is now below 22,550. The day's high today was 22,678. So from the highs, we're down close to about 130 odd points. So it's still flat on the benchmark indices. It's just the way that, today we've been making lower highs as the days progress. And in the last 10-15 minutes, there has been a wave of selling pressure that's kicked in. TVS Motors, Bajaj Finserv, ONGC, look at the way ONGC has extended its losses. That's down close to about 3% ONGC is negatively impacted by the decline in crude prices, and crude prices have slumped. But ONGC therefore has taken a bit of a hit. NTPC, BEL, many of these PSUs are the principal losers today.
Another one stock that was leading the index higher last week is dragging the index down today, and that is Reliance. It's down off the highs of the day, around 0.7% lower today. Of course, it's coming on the back of a 3-day winning streak where they gained almost 7.5-8%. So that is what is leading the index down at the moment. And L&T is the top dragger on the index right now. 1.5% down is what is L&T. Now 15 points is what is contributing to the index downside. But what is keeping the losses in check, though, as Reema just mentioned earlier, is the defensive tilt, right? Infosys, of course, after that brokerage upgrade, is contributing around 20 points to the gains. HUL is up 2.5%. HDFC Bank is up 0.5%, as is ICICI Bank. So these are some of the heavyweights that are keeping the index downside in check. But it is Reliance Industries, L&T and ONGC, of course, as Reema highlighted, 3.5% down now on ONGC. And of course, IndusInd Bank, the stock that has been in focus since the morning, that too continues to remain lower by around 3.5%. But with that, we call time on this edition of Midcap Radar. From Reema, me and the team that put this show together, thank you so much for watching. Your stocks on the other side.
Olympics match. Tell us about your whole experience. That was your first Olympic match. What was the feeling? What was going on in your mind? Tell us all about it. I think it was in 2008 and I was 18 years. And when I won my first international title, I was only 16, and I was there in the international circuit, and a lot of these Chinese and a lot of these Koreans were actually, they were worried like some Indian is coming, and they're actually giving us tough competition, because before me, we didn't have a female badminton player who was actually playing at that level, who was actually winning those international matches. Of course, we had Prakash sir and Gopi sir who did well, but I was just, when I started playing badminton, I used to ask my mom this question, why badminton? I don't know. It's such a difficult sport, and you have the Chinese in quarters, semis and finals. They're everywhere. So she used to be like, no, for me, you are the champion. You're going to do it, and just believe in yourself. And imagine, she's a housewife. She's just a housewife. She's not even a international level coach, or she's not someone who's seen what international badminton is. But she was like, you are my champion. You're going to do it. And with her belief, I was in the Indian team when I was only 13, senior Indian team. Wow. And I won my first international when I was only 15, 16. So these things happened in my career really, really fast because of only one person's belief. And of course, the coaches come in, the trainers come in. But I think the first Olympic was, in fact, so early in my career that, I was like, my mom wished that I have to become an Olympic champion, and I'm here. I'm here so early, and I'm actually getting closer to winning the medal. In 2008, I lost in the quarterfinals, and I still, that one match gives me a lot of sleepless nights, because it does, because even after having the medal, I was 11-3 up in the third set. And then I was actually getting all these things in my mind, saying that my coach was like, ek din tu world champion banegi. My mom was like, ek din Olympic champion.
not pressure, but I was happy that I actually was going near winning a medal. You know? I was happy, I was excited that I'm actually doing it with my training, with my coach's belief and everything, I'm doing it. Suddenly the game just turns and then she's just picking up everything. The rallies are going really longer and she's everywhere. She's all over the court, not leaving anything. And after 11-3, you won't believe I just got 2 points and she went on winning the match 21-30. After that, you know, I'm sitting there and I'm talking to my coach, what happened? Because every rally was a big rally. I didn't even do silly mistakes to lose the match. What just happened? So I was like, you know, when I thought about it even more, you know, I was like, next day I better start training to get the medal in the next Olympics. So yes, that match tortured me a lot, but I think it gave me that lesson as well that you should not get too excited also sometimes. You know, you have to control yourself. When you are actually going to achieve your goals, you have to control yourself, try to relax yourself. In fact, in that time, you know, when I started doing well, I didn't have a mental trainer or a trainer. Only Sir, Gopi Sir was everything to us. And he being a coach, how much he could have helped in other things as well. So I feel agar wo time pe I had a better mental trainer or someone who could give me advice about it, that you should just think about the next match, just think about the next point. तो उतना मतलब मैं उस मैच में excited नहीं होती. But I was so happy that that tournament gave me so much of belief.
Hello, good afternoon and welcome to Your Stocks, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala and thank you so much for tuning in. Markets a bit of a red is what we're seeing coming in on the screens. The Nifty is, you know, actually very flat. Now a bit of a negative bias that we're seeing coming in for the Nifty 50. The Sensex is just managing to hold on to some bit of a gain, but yes, off the day's highest point and 127 points down there. 331 points of the day's highest point is what we're seeing for the Sensex as well. So clearly the Sensex and the Nifty also have seen that fall coming in from the day's high and trading almost in the day's lowest point. What we're watching out for in terms of the broader markets as well, that is not performing well. Look at the mid-cap. That's seeing clear pressure coming in. Day's low for the Nifty mid-cap, but that is down almost 1% right now, and from the day's high it's down almost 1.6%. Even the small cap is seeing a sharper fall as well, much sharper fall, 2.2% down from the day's highest point. 1% overall decline as of now is what is coming in for the Nifty small cap. So clearly we're seeing some bit of a pressure that's coming on the screens for the markets today. Not much of an excitement there, but this is a show this is a show to solve all your stock related queries, and that's what we'll be doing in the next 30 minutes. We have our experts for today, Ashish Kayal, market technician as well as author at Wave Strategy Advisors, as well as Gaurang Shah, Senior Vice President, Geojit Financial Services, joining in with us on the show to talk to us about the important queries that you all have sent us today. So Ashish as well as Gaurang, thank you so much as always for joining in with us on the show, and good afternoon to both of you all. Let's get started with the queries as well, because markets, there's nothing that to say much about, because we've spoken about levels as well last week, and you know that's what we're keeping an eye out on. But in terms of queries, we have a whole host of them. This first one is coming in today is from Jyoti Kalra, who's writing to us from Punjab. She's holding 50 shares of ONGC and this is at a price of 200 rupees per share. She wants to know whether to hold or sell at the current levels. Gaurang, what's your view coming in on ONGC overall?
Thank you, Vinny, for having me on the show, and good afternoon to all of you all. So, prudent to give a disclosure. We have a fundamental coverage on ONGC. What has happened today on ONGC is thanks to the crude oil prices. And there was some reports that I was reading in the morning that crude oil prices should possibly head down south. Somewhere close to about $70, $75 is the view that crude oil prices should come down to. In that kind of a scenario, you know, oil exploration companies do have a short to medium term overhang, but from a long term point of view, we are positive on ONGC.
Okay, positive on ONGC. That's a word coming in from Gaurang. Ashish, on the charts and technicals, what's your word coming in for ONGC today? Clearly, it's one of those companies which are putting some bit of a pressure overall also on the markets, down 3%. Last 6 months also, when you're looking at it in terms of charts, it's not been anything exciting, right? So what should the viewer now do with it? Should they continue to hold at these 200 levels or maybe look to sell?
Yes, I would recommend a hold, given that the stock has already corrected from 325 levels, made a low around 215. There was some attempt of a pullback, but right now we are seeing some selling pressure. So I think 215, 218 is a very important level. Also, the low which was formed on 4th of June on the election day was also near around this area. So I think 210, as long as it is intact, continue to hold on to the stock here over short term. Yes, there can be some pressure, but eventually the stock should move up towards the level of 250 and try to increase your time horizon to at least a year and a half, so that you can possibly see some kind of a positive reversal after the base formation happens here.
Okay, let's move on and talk about the next stock that we have coming in is JSW Steel. This is the query coming in from Kunal, who's writing to us from New Delhi. He's holding 60 shares of JSW Steel. This is at a price of 970 rupees per share. So they're making some bit of a profit on this one. Wants to know whether he should continue to hold or look to sell at the current levels. Also, we had, I believe, some brokerage notes also had come in for the steel sector as well, where Jefferies, I think, is maintaining a buy rating on this overall metal space. Today, metals is also managing to hold on to decent gains. So what are we watching out for, Gaurang, from JSW Steel?
So Vinay, there are two things for the metal pack. One is positive and other one is an overhang. The positive news flow was last week we heard stimulus in China. And before that, US tariffs on aluminium, on certain aluminium and steel products. That is a short to medium term overhang. On the domestic side, we are extremely positive on the metal pack. Consumption is likely to go up with spending both at the center and state level. Our view is also that there would be a slight upward revision of flat and long products. On JSW Steel, as a disclosure, we have a coverage, and I would say that, hold on to it. The only thing, Vinny, the investor needs to do is extend the time horizon.
Okay, so extend some bit of your timeline. That's the word coming in from Gaurang. Ashish, on the charts and technicals for JSW Steel, what is your view? Last 6 months, the stock has seen just a muted move of around 8%. Though in the last 1 month, a couple of months, at least since Jan, we've seen that uptick coming in for the stock, right? So do you think this up move is going to continue? And do you agree with Jefferies also? Because they are also saying, and they believe that this metal pack is something that could outperform.
Yes, indeed, Vinny. If you look at the metal pack, it is already outperforming, where you can clearly see since Jan onwards where the broader markets have corrected so much. If you look at JSW Steel or Tata Steel or other metal stocks, most of them has not shown very deep correction. JSW Steel, rather its 52-week high is around the levels of 1,060, 63, and it is already at 1,020. So that shows relative outperformance. So I would continue to suggest a hold for sure here. On the downside, important support for the stock is around 950 levels, and we can expect the stock to reach toward the level of 1,200 or even higher once the broader market stabilizes.
Okay, let's move on to the next query for today. We have Rupesh, who's writing to us from Pune, holding 275 shares of Zomato. Average price is 240 rupees per share, making some bit of a loss. The stock is currently trading at 213 rupees per share. Wants to know the outlook for Zomato in the medium to long term as well, and whether they should continue to hold or look to sell this one now. Gaurang, your view first.
Well, so quick commerce is going to heat up, Vinny, with the new entrants coming in. But Zomato has been in this business for a pretty long time. During the IPO, we had covered it with a subscription note. And post that, we have a standalone recommendation from a long-term point of view on Zomato. Maybe short-term, medium-term, because of the competition coming into quick commerce, you may see a little bit of pressure, but long-term, definitely hold on.
Okay, hold on for the long term. That's your view coming in. Ashish, your view on Zomato as well, because the viewer, my only concern is because the viewer has bought it on the higher end side, right? 240 is what they've bought it at. So what would your view be on the technical front for this one?
See, Zomato is consolidating over short term in a very broad range of around 205 and 240, where possibly the user has bought, and it is forming a triangle kind of a pattern. And in this kind of a stock, getting towards 240 is not a big deal because it moves very sharp, very fast once the trend changes. My suggestion is continue to hold on. If it's a short-term trading that he's looking at, then maintain a stop loss of 204 on the downside. And once the stock manages to cross 230, there can be a very sharp up move towards 270 levels also. So hold with a stop loss of 204. from the short-term perspective. And eventually, if he is looking to hold it from a year or 2 years perspective, then I think this stock is just correcting over a short-term for 38.2% retracement. And then it might start showing a good up move. So hold is a recommendation, both short-term and medium-term perspective.
Okay, surely keeping an eye out on that. Just a quick check that I want to just make on the market front. We're seeing the flashes at the bottom of the screen where our ticker team just flashed about how the futures in the US also are seeing a bit of a fall, and a red start is indicated whether the Dow futures down more than 250 points is what it's indicating. So some bit of a pressure is what we're expecting over there as well. We've seen that Nifty and Sensex also are trading almost near the day's lowest point. On that front, let's keep it going with the next query then. And we have this one coming in from Ravi Sastry, who's writing to us from Chennai. 500 shares of ACC is what they're holding at a price of 2,300 rupees per share. Wants to know whether to stay invested in this one, look to exit, or look to average. Gaurang, your view?
Well, this is also one of the sectors which is likely to perform well, that is cement, Vinny. And there's a lot of consolidation that has happened over the last couple of years. Smaller players getting acquired by large players. ACC, again, a disclosure, we have a fundamental coverage. Acquisition price is a little bit higher. In case if the investor has investable amount, then I would recommend an averaging also at times.
Okay. And Ashish, your view for ACC, what should the viewer do?
Continue to hold on ACC. It has a very important support, which is at the levels of around 117.85. So 117.85 is an important support. As long as that is intact, I would suggest continue to hold, but do not be in a rush to get out of the stock just because it keeps falling, because the broader market, there is a systematic sell-off. And once it starts recovering, we can expect it to move towards the level of 2250 on the upside over medium term. So overall trend for ACC over short term is downside, but we can expect it to remain buoyant above 1785. So hold is the recommendation.
Okay, hold is the recommendation coming in from Ashish on ACC. But on that note, we're going to slip into a very short break. But here's a quick note for our viewers. Parity isn't just a goal. It is the key to unlocking new possibilities. HSBC presents CNBC-TV18 Future Female Forward Mega Summit, co-presented by Cognizant, where we discuss what it takes to close the gender gap and create lasting impact. Tune in for this game-changing dialogue live today on CNBC-TV18, 5:30 p.m. onwards.
India, everyone started to go to know what badminton is, and they were like, Saina is really doing well in badminton. And in 1 year, I was there beating all these Chinese. I won the Indonesia Open. I became world number 2. So in 2010, I won 3 Super Series back to back, and in 2012, I got an Olympic medal. But I think that particular match taught me to be really, really thinking about that. Even after match point, you have 10 more points to go. Don't just think that the match is finishing, just be there, and presence of mind is required. And I think that first Olympics really gave me that confidence that yes, I'm there and I can beat all these Chinese and Koreans, and I can be in top 10, top 5 for a long period of time. And when I look back, in fact, someone told me that I was in top 10 for almost 11 years. And when I became world number 1, that is when I was like, yes, it's possible. It's possible. In 2015, when I was world number 1, everyone was like, wow, from India, we can do, in badminton, we can do such wonders. And we can also beat Chinese, who are the powerhouses. Korea, Japan, they are the powerhouses. But now you see, badminton in India is grown so much. And we are giving good challenge to all these countries. And we are one of the top in the world now. So, yeah.
Well, we're not looking to hurt anybody, and we're certainly not looking to hurt them. And I'm looking at that, and there were some people that think that's appropriate and some people don't, and I'll be making a decision pretty soon.
President Trump.
But we're not looking to hurt them.
President Trump.
Especially Ukrainians. They've gone through a lot. Yeah, Peter?
India and the United States have initiated trade talks this week after threatening all nations, including India, with reciprocal tariffs starting the 2nd of April. The US government, as per our sources, has sought zero tariffs from India. Sources tell CNBC-TV18 that the US government officials want zero for zero tariffs.
Welcome back. Thanks for staying tuned into your stocks on CNBC TV18. We still have with us Ashish Kyal as well as Gaurang Shah, who are solving all your stock-related doubts. Let's keep it going with the queries then. And the next one is on Inox Wind. We have Umesh Thadani, who is writing to us from New Delhi. He's holding 30 shares of Inox Wind, which is at a price of 175 rupees. Currently, the stock is trading at 167, so not much of a loss there, but some bit of a loss there. Overall, long-term outlook on the stock is what they want to know. Gaurang, your view on the fundamentals for this one?
I'll give it a pass. We don't have coverage on it.
Okay, sure. And Ashish, on the technical front, what should the viewer keep an eye out on if they have a long-term outlook for the stock?
See, if you look at Inox Wind, the stock actually formed a double bottom around the range of 137. We have seen some smart recovery from those levels. It has a major hurdle around 175 from where there is a rejection even today. So I would advise continue to hold on to the stock here. 175, if it's broken, then we can have a pattern target of 200 or possibly higher. On the downside, maintain a stop loss for the stock, which is around 157. So trade this stock from a short-term perspective. Above 175, 200 is the target, and maintain a stop loss of 157.
Okay, keep an eye out on those levels over there for Inox Wind. Let's move on. Kaynes Technologies, the next query which we have coming in on, and this is from K. Narayan Reddy, who's writing to us from Warangal, holding 40 shares of Kaynes Tech. Price is 5,000 rupees, making some bit of a loss here because the stock is at 4,300 approximately. Wants to know what should he do if he should continue to stay invested in this one. Gaurang, your view coming in on these EMS players, and specifically Kaynes also had done well, performed well, and we've seen the stock also run up. So, Kaynes Technology, what should the viewer do now?
Well, I won't give a buy, sell and hold, Vinny, because we don't have coverage. But the sector was, as you rightly mentioned, companies like Kaynes Technology, Dixon Technologies, they were buzzing because of the obvious reasons in the news flow. Along with that, government policies, again supportive. A very strong player in its field. Unfortunately, since we don't have a coverage, I won't give a buy, sell and hold.
Okay, sure. And Ashish, your view coming in on Kaynes Technology, last 6 months, and specifically actually since Jan, we have seen that fall coming in for the stock, and there's no stopping because every day we're seeing a new decline and a new fall coming in for the stock. So Kaynes Technology, what should the viewer do? Because they bought it at 5,000. And since Jan, from those 7,500 levels, today it's at 4,300. Is there still some more downside that we are watching out for?
See, if you look at Kaynes, I think the stock started correcting from the levels of 7,800 rather in the Jan, and it has already fallen towards 4,000. It has shown some kind of a recovery from 4,000. It's attempting to go up, but it's not able to do that in a very smart way. So overall, I would suggest that continue to hold on, maintain a strict stop loss of 4,000. In case that is breached, then further downside can resume. And then expect it to go towards the level of 5,000. So its cost price is not very far away, but as of now, hold it with 4,000 as a stop loss and 5,000 as the target.
Okay. The next query for today then, and this is coming in from S. Chandra, writing to us from Kolkata, holding 1,200 shares of ESAF Small Finance Bank, 52 rupees. What is the prospect of her investments in this stock? Gaurang, any view on this one, right? Some of these small finance banks particularly are a bit wary and everyone is just keeping an eye out on them closely. But fundamentally, what are you looking out for here?
The problem with small finance banks has been with respect to the MFI segment and the asset quality issues. ESAF Small Finance, we don't have coverage, but we have coverage on two other small finance companies, and that is Equitas Small Finance and Ujjivan Small Finance. The asset quality issue will take time to improve from here on, but our sense is that the worst is, with respect to the asset quality, the worst is behind us. Again, since we don't have coverage on ESAF, so I won't give a buy, sell and hold, but we like the sector. We have coverage on Equitas and Ujjivan Small Finance.
Okay. So you have coverage on the other two names, Ujjivan as well as Equitas is what you're saying. What is your view on this one, Ashish? ESA Small Finance Bank, viewers obviously bought it at 52. Currently, the stock is just at around 29. Time to exit and maybe switch to some of these other banks. What is your view?
Yes, I would do that. I recommend that for sure because the stock has been correcting from 80. It is now at 30, and there is absolutely no buying interest that we can clearly see here. So the overall trend for ESAF is on the downside. It's best to be out from this, not to keep such kind of stocks. The volumes are erratic, and I would rather recommend to be in the other space, maybe NBFC if someone is looking to invest into maybe Bajaj Finance or something like that. So that there is an outperformance, the cushion is there on the downside. So it's better to be switching out from this stock and invest into Bajaj.
Okay, that's a view coming in from Ashish as well. Maybe switch out of this one is the view from both our experts today. Let's move on to this one, and this is from Dhruv Kapoor. The next query from Haryana, holding 30 shares of ITC at a price of 200 rupees per share, making good profit, right? His investment surely has doubled in terms of returns that he's getting. So he wants to know if he can buy more of these shares or what should they do? Actually, the view query is only to buy more shares for ITC. Gaurang, your view on this one? Value unlocking for hotels is surely done, but view for ITC?
Yeah, I mean, the entire sector is likely to do well, especially post the comments made by the Honorable Finance Minister in the budget. Vinny, our sense at Geojit is that the FMCG uptick consumption basically related uptick, will start being visible post third quarter, this new financial year starting 1st April 2025. Targets, if you ask me, I think if I'm not mistaken, 520, 530 is the target from a long-term point of view. His question whether he should add more, I would definitely recommend that.
Okay. Recommend to add more is also there. So yes, Dhruv, you can add more. At least that's the word coming in from Gaurang. Ashish, would you concur with Gaurang's view as well? And what level should the viewer, look to add more as well on the technical front? Are we expecting some bit of a correction where the viewer can get this at a lesser price?
No, I would agree with Gaurang completely because the stock has already corrected from the levels of 470, now at 400. And addition can be done at the current levels. And also one more thing, he has been riding all the way from 200 to 400. It's not very often to see the clients riding all this way, and it's best to continue to hold on to this stock. There is also a short-term time cycle which reverses on the upside by the end of this March. So I'm optimistic ITC should start outperforming from April onwards. So continue to nibble around this stock. If you want to have it more in your portfolio, then you can do that. On the downside, the important support for the stock over short term comes to around 389, which I think should remain protected. And on the upside, 420 is an immediate hurdle. And if that is crossed, the up move can start resuming here.
That's a word coming in for ITC. Surely, Dhruv, you can add more of ITC as well. And this time also, the levels are also fine. You can add them at these levels as well. Let's move on to the next query. This is actually an investment query that we have coming in from Ritu Srivastava, who's writing to us from New Delhi. I think she wants to know whether it's a good time to invest in mid and small cap stocks. Very general query. So, Gaurang, mid and small cap stocks, what's your view coming in on this one? And it's so generic, so I would ask you that if anything specific that you're looking at in a mid cap name, what would that stock be also right now?
Well, Vinny, so, our sense is that there should be some more pressure on the downside as far as the small cap universe is concerned. In the mid cap, after the correction, we feel that sector specific ideas should definitely be kept in mind. If I have to name one or two mid cap ideas, then in the hospitality sector, we are positive on Indian hotels. That's the name we like. And of course, the hospitality sector is likely to witness one more uptick in terms of tariff revision of 15%. That's what the industry is talking about. The other one would be, again, a mid-cap idea from IT sector. KPIT Tech or Science Limited, both of them, small to mid-cap category, should definitely be looked at. But my humble request is that please do your homework before investing in either small or mid-cap.
Okay. And Ashish, you have any names that on the mid-cap space that the viewer could watch out for? A quick one?
Yes, if you look at, see, one thing I would like to recommend is that if you want to invest into mid cap and small cap, be ready for the volatility in this year, because we have clearly seen a lot of movement on the downside where the stocks have corrected very sharply also to the extent of 40 and 60%. But having said that, I think one of the stocks that can outperform in the mid cap is Blue Star. You can clearly see a very strong performance over the past few months. So Blue Star is something that I would recommend user can look forward to invest into.
Okay, you have names coming in there as well, the viewer. Thank you so much for sending us your queries. Thank you so much, Gaurang, as well as Ashish, for joining in with us on the show. And with that, it's a wrap on this edition of Your Stocks on CNBC-TV18. Thank you so much for tuning in. Up next, Closing Bell.
Product lines except for agriculture. This comes at a time when Commerce Minister Piyush Goyal is in US for talks with USTR Jamieson Greer and US Secretary of Commerce Howard Lutnick. This is the first time that the two sides are formally initiating talks on the bilateral trade agreement that Prime Minister Modi and Donald Trump have agreed to sign by September or October this year. India has sought more market access for goods manufactured in India, especially labor-intensive sectors. Can India offer zero tariffs on all goods coming into India, including Tesla? That remains to be seen. However, experts have been saying that India can offer zero for zero tariffs or eliminate tariffs on 90% of industrial goods coming in from the United States, and this is doable. While India would like the reciprocal tariffs to be set aside, sources say so far there is little likelihood of any carve-out for India. When it comes to automobiles, it is clear that Donald Trump wants American car makers like Tesla and motorcycle makers like Harley-Davidson to be sold in India tariff-free without having to set up manufacturing. As far as Tesla's India entry goes, things seem to be moving fast, with Tesla taking a 4,000 square feet space in Maker's Max City Mall in BKC, Mumbai. They're going to pay over 25 crores in rent over 5 years, and the lease deed came into effect in February this year. Tesla has also taken some parking spots on rent to charge cars. The company has also taken a space on rent in Worldmark Mall in AeroCity, Delhi, as per sources. The company has kick-started hirings for Pune and Mumbai, mainly for showroom-related roles like delivery operations specialist, store manager, service advisor, and others. Industry sources say Tesla may not be keen on manufacturing in India right now due to decline in sales globally, especially a 76% drop in sales in Germany in February. Therefore, the company may prefer to import cars into India from Berlin and sell them at the lowest duty possible. At the moment, the US administration is seeking lower tariffs on all US products except for agriculture, and India too would want to defend its core interests in agriculture, dairy, pharma, and other manufacturing sectors. Let's see what happens before the 2nd of April when US reciprocal tariffs kick in.
The president is giving them an exemption for 1 month so they are not at an economic disadvantage. So the three companies that he spoke to are Stellantis, Ford, and General Motors. They requested the call, they made the ask, and the president is happy to do it. It's a 1-month exemption.
To understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index is down 0.5%. We're seeing Hang Seng that's down 0.4%.
They want to cut their tariffs way down now.
Possibly have an agreement which would be in the benefit of both countries.
We've already underperformed, so it gives us a better case to outperform from here on. This has led to negative reaction on stock prices.
It's just about 16 points down, 19, 20, 30 points down now.
Tariffs on, let's say, China. So then India becomes the dumping ground.
Company needs to outreach to shareholders, outreach to proxy advisory firms and try.
Caps and small caps, after last week's one-way up move, have paused a bit.
PK Arora, as per our sources, will take over the chair of IRDA chairperson.
The government, however, has its eyes set on wrapping up the budget process smoothly.
Broader markets, though, that are a bit of a pain point, as Reema was just mentioning, a 300-point cut.
Good afternoon, hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay, with me as always Nigel D'Souza, and we have Mangalam in the house here. And unfortunately, we don't have very positive news to report, because what was looking like an okay kind of a day up until 12 o'clock, then flattening out, now is sort of falling into a different pattern altogether. Nifty is down 0.5%, but look at the sharp slide in the mid-cap index. We'll talk about it as we go forward. Guys, good afternoon.
Well, good afternoon. I think the problem in the last half hour or so is that the Dow futures have moved lower.
Yep.
So that's sitting with a sharp cut. And the other problem is, if you pull up the dollar index, that's showing some strength, and the Indian rupee is at the low point of the day. So I think those are a couple of factors that are playing out, and explains why the Nifty has now seen a sharp downtake. I don't think it's yet a cause of worry, because maybe the street is bracing for a weak US trading session. In the past, we've seen that the next day it comes and realigns itself. But the problem is the dollar index, that's seen a sharp drop. So I think pull up the Indian rupee, actually, the intraday chart. You'll see now the rupee is at the low point of the day. So we'll have to wait by to see what the flows picture looks like.
Well, there were signs of, some sort of decline towards the end of trade today from the start of trade itself. Even as the Nifty was trying to move higher, we had the broader markets which are not doing particularly well. The Nifty Bank wasn't supportive enough. The Nifty was led only by a couple of, FMCG names, and you had, some of these IT names which had been battered down already. And add to all of that, even as the Nifty was holding on mildly in the green, we had the India VIX which was higher as well, which indicated that there could be some sort of put buying that would be taking place in the market itself, and as a result of which now we are seeing a bit of a decline. The broader markets were weak all through today's trading session. What's interesting right now, as we look at the market breadth, the red and green lines are at the biggest distance that they are with regard to each other right now. Nearly 2,161 stocks which are in the red, as against 550 stocks which are in the green itself. Some of the notable losers in just the last few minutes, we have the IT pack. We were speaking about how the IT pack was supporting the index in the first half of trade, given the up move that we saw in Infosys. Look at the IT index. That's moved to the low point of trade as well. And this, with the rupee moving to the low point of today, usually you see some support coming in from IT, but that's not the case to be.
Yeah, because it's a much wider sell-off once again. That it's a global sort of situation. It's not just us, not this time at least. I know in the last many weeks and months, it's been our market falling singularly while others have marched on. Today is not that kind of a day. European markets have turned around as well. There's a bit of a cut on the DAX, the FTSE and the CAC. The bigger issue is the US sell-off, which started just about half an hour, 40 minutes ago, and bang in step with that, our markets also turned. Now, if you look at futures, they're down about 1% on the headline indices now, the Dow, the Nasdaq, and the S&P 500. Is there a new development? Not really. It just seems to be nerves. Now, yesterday, this is Sunday morning US time, the US president gave an interview to Fox News, and he was asked that question by Maria Bartiromo, whether the US indeed will look at a recession because of these aggressive tariff policies. He didn't outright deny it as a possibility. He said, I shouldn't be predicting these things. But he didn't issue a clear denial. Well, perhaps that's feeding into the level of uncertainty. Market looking at this as an excuse to sell off. Remember, the US hasn't had a real meaningful correction in the longest time ever. So it seems that there's some money going off the table. And it's a risk off not just in equities, it's also a risk off in bonds. There's a lot of money shifting to bonds. Look at the US 10-year yield. Very quickly, it was around 4.3% towards the end of last week. Now we're talking about 4.24, 4.25. So those are the kind of levels that we're tracking. One last point on China. These tariff issues are becoming real. They're far more closer to home. They're real for a lot of different countries. Look at what's happened in China. First is disinflation. The number that came in was minus 0.7%. That's an economic concern. Second, over the weekend, China has levied reciprocal tariffs on Canada. Some Canadian imports, agricultural imports. The short point is that all this tariff business is real. Those tariff numbers are becoming real. And eventually that might find its way into, of course, inflation, corporate earnings, so on and so forth. And that reality perhaps is getting priced in. So I started the day thinking whether we'll take aim at the 20 DMA. That's a long call now. I mean, we're way off that trajectory, at least for now.
You know, and we're at a very, very crucial mark, particularly on the Nifty Bank, because we're at around this 48,200, 48,150 to around 48,200. And last week itself, we did see some buying coming in at these levels. The next level of support obviously comes in at around that 47,500 to 47,800, which is the recent low. But this is a crucial mark, and Reliance Industries needs to come up with the 20 DMA, because that's still holding above the 20 DMA. And remember, once it got past that, we did see a good move in Friday's trading session as well. It's seen some profit taken from the top. And as Mangla mentioned earlier as well, the tech index. So no real place to hide on the Nifty itself, because you have Reliance that's down, the banks as well are down with a cut of more than 200 points, and the tech index has moved for the low point of the day. So no real place to hide out there.
You know, you spoke about Reliance, the other heavyweight. The sharp fall that we've seen on Nifty Bank, that's courtesy HDFC Bank. Just pull up the intraday chart of HDFC Bank. This afternoon, again, it was making attempts to move higher. Reliance is at the low point of trade, but HDFC Bank was higher. Just about 20 minutes ago, it was at the high point of trade. And from there itself, it has seen one big decline. I'll be very interested to see whether this, 22,500 mark holds out for the Nifty or not. Because from lower levels, today itself, from the start of the show, we've seen about 30-40 points in terms of recovery. That's largely because a lot of put writers were active at 22,600 for a premium of 100 rupees. So if they are, positioning themselves for some support on the market, the level that they're looking at is around 22,500. If we stay below 22,500 for a fair amount of time, then maybe we would see a bigger decline. And that's what the premiums out there are suggesting as well. But be that as it may, let's go across to Mitesh, who joins in with how one should position themselves at the last hour of trade. Mitesh, good afternoon.
Good afternoon, Mangla. So I think, the Nifty, which is trying to bounce back, has slipped below 22,450. Just trading around those levels. In case we see a break, then I think you might see some kind of a halt coming into the pullback rally, and we might go back to this range of 22,300, 320 to about 22,600. Below 22,300, I think I'm afraid that we'll even look at the declining move restarting again. But as of now, I'm not very sure of that. So just holding my horses over there. These are the level to watch on the Nifty. On the downside, 22,300, 320, I think is very critical. In the short term, these are spot levels, but the first pivot is 22,450. So let's hope that the first pivot itself holds. But that is something which we'll know possibly by today, tomorrow. So with that kind of view, I think, we would advise people to wait to jump onto the index positions. Stock specific, yes, you can trade, but I think on the index side, I would still want to wait it out and see how the market reacts. On the stock side, Power Grid is a buy for me with a stop at 266 for targets of around 280. And the other stock which I would want to buy is Reliance on a mildly lower level. See, it's given a very strong rally in the last 3 days and few hours. We've seen some kind of pullback playing out. So I think Reliance might drop down to about levels of 1230, 1225. That's the buying zone. Keep a stop at 1205 and look for target of 1270.
Mitesh, just a follow up. I think we have some inputs coming in as well.
On IDBI Bank, I think we have
privatization to be finalized this month. Share purchase agreement for IDBI Bank seems to be rolling ahead. I mean, we'll get the stock up on the screen as well. This is something that's been in the works for the longest time. And it seems that now there is some forward movement on this. And by the end of the month, that's March, end of the fiscal end of the month, we perhaps will have a more formal agreement in place for additional privatization. So that's what we're looking at, IDBI Bank. But Mitesh, I just wanted to, quickly ask you about some of the mid caps which are falling very, very sharply. Because, I mean, I don't know if people had initiated long trades here in any of these counters, but if you look at something like a 361 Wealth Management today, it's down about 6%, JM Financial, a couple of the market-related stocks are falling a lot today. What would your advice be? I mean, is there any trade at all? Or if you had opened a long trade, if you were being very brave over last week, is it time to close those long trades, particularly on the capital market stocks?
Yeah, again, that's a separate segment altogether. And, 361 is something which I'm not tracking regularly. But JM Financial is something, which I've tracked. And I think the stock, recently made a low of around 89 on a 90 half on a closing basis and around 87 on an intraday basis. So I think we are back to those levels. I would hope that these levels, kind of hold and we get a reversal from here. Still not sure of that, but assuming that 87 and 90 zone is holding out, then this is the time to buy with a stop below 86 half. The first target is around 98, 99, but good chance that because it's so oversold, if it reverses, we might even get 106, 107. So the risk reward is good. But given the fact that I'm not very keen on the index, I think I would suggest if traders want to venture, take it with a smaller quantity than normal.
Okay. All right. Got it, Mitesh. Thanks very much. We'll come back to you in a bit for some more advice. Right now, let's put the spotlight on HPCL. Actually, some of these stocks relating to the crude play, where the fall in crude prices is still beneficial. Nigel in the morning was talking about HPBP, IOC. There was some mild green on the refiners earlier as well, but it's all turned very, very quickly. HPCL is right now down 2%. But on HP, we're also looking out for another development. Apart from the oil bit, there's a corporate development. The company has appointed a chairman and managing director. Sudarshan is here with more details. That would be a new CMD. Obviously, HPCL always had a CMD. But what is the latest, Sudarshan?
So apart from the crude fall that we have mentioned, HPCL has got new chairman and managing director in the form of Vikash Kaushal, and he's appointed CMD for next 5 years. Remember, it's the first time that a private sector executive has been appointed to head an oil and gas stock. Basically, it will be the first time that any private sector executive would be heading an oil and gas PSU. And he comes with a very healthy global experience. He had previously served as the global leader for energy and process industries at Kearney. And he also has more than 3 decades of experience in energy, oil and gas and power sector. He's a chemical engineering graduate from Punjab University and MBA from IIM Ahmedabad. He was twice elected to Kearney's global board of directors and also served as managing director and country head for Kearney India for 5 years. Now, talking about his contribution to the oil and gas sector especially, first, he has been an advisor and consultant to global Indian companies including IOC, HPCL, BPCL and GAIL. For IOC, he had spearheaded setting up its petchem and gas divisions. He also led a refinery maintenance transformation program and spearheaded its Dhruva retail transformation and cost transformation of lubes business. For HPCL, he established centralized procurement office and driven energy and savings, and also spearheaded petchem diversification strategy and implementation support. For BPCL, he had led net zero planning and petchem strategy. Apart from oil and gas, if you look at his contribution to thermal power and renewable energy, he had led corporate plan implementation for NTPC. Second, he implemented reliability-centered maintenance for Tata Power, and he designed and executed commercial and industrial power sales business for a global company. So he comes with a very healthy global experience. We'll have to see what all changes he brings for HPCL.
Take that point, Sudarshan. Thank you so much for joining in and giving us the street cred of the new MD and CEO at HPCL itself, Vikash Kaushal. Let's welcome Dipan Mehta, who joins in on the show as well from Elixir Equities. Dipan, your views on the oil marketing companies itself and HPCL. You've heard about the new leadership, but this pack on the whole, oil seems to be contained now, and at the same time, we don't have elections in the very near future. So maybe there could be some case for price increases, if at all there are any, or reduction in losses for these oil marketing companies as well. Do you like these as a pack right now?
Yeah, good afternoon, Mangalam, and thank you for having me on your show. First, a disclosure, in our PMS scheme, we have invested in HPCL. And I think that there's a super trading rally in oil marketing companies, and the losses, of course, will be curtailed. And that in itself should result in a very good alpha when it comes to their earnings per share, and valuations look are really, really attractive. And I think in the, with the way things are going in the global markets with Trump and his entire drill baby drill, kind of a slogan or mantra, we can expect tepid oil prices for an extended period of time. And that certainly will improve the profit profile of all oil marketing companies. So very positive on the entire pack. And I think normally I've been very, very negative on commodity companies, oil marketing companies, because of various reasons, government interference being one of them, inability to raise prices being second. But I think the next 3 to 6 quarters looks very good for these oil marketing companies. And you could see earnings growth, and maybe even the market may give it a higher valuation.
All right. Hi, Dipan. Good afternoon and good to see you in. Dipan, I wanted to ask you about IDBI Bank. You know, Sapna is bringing in news that there could possibly be a deal in the works and there could be some agreement that will be announced as soon as in the month itself. And because of that, you know, the stock that was trading in the red, it's suddenly seen a big U-turn. Your view on IDBI Bank, if I'm not mistaken, I think I seen the stock at 90, 100 rupees as well, at around the 71, 72 rupees. Are you interested?
See, I think that first of all, IDBI Bank has shaped up pretty well after all the issues it got into. It has cleaned up its balance sheet, capital adequacy ratio also has come up, and now its NPA ratios are more or less in line or better than industry averages. We have seen decent growth in the balance sheet size as well. So as a functioning bank, it has done very well. I don't think that change of ownership may do that much for the bank, but you know, if there's an open offer, that may cause a trigger in the stock price. But nonetheless, I think I'm at least not, if I'm an existing investor of IDBI Bank, I'm not looking at exiting in this correction. And maybe around these levels, if you are underweight the banking sector, which I think, you know, will do very well over the next 3 to 6 months or so, then certainly IDBI Bank is a stock to consider if underweight banks per se.
Okay, all right. Dipan, I wanted to understand your view on Jubilant Food as well. Mangalam is with us. Mangalam, tell us more. Jefferies has written a note as well out there. There are some concerns with regard to the stock, but I think Jefferies is still bullish. Tell us.
Jefferies is still bullish. You know, we've been talking about the quick service restaurant space as well. So, Jubilant Foodworks recently held an analyst meet. It's maiden analyst meet where it gave out targets for growth, etc. The analysts are concerned about, consumption slowdown. They're concerned about lower margin expansion, and they are concerned about group level debt at the company after, the Jubilant Bhartiya Group has gone ahead and acquired Coca-Cola's India bottling partner, Hindustan Coca-Cola Beverages itself. But remember, this has nothing to do with the listed Jubilant Foodworks company. It is at the group level itself. So they've, found out from their own channel checks, etc., and their own analysis, they said that concerns around consumption slowdown may not be as strong, largely because of the steps that Jubilant Foodworks itself has taken, and the third quarter momentum where they had about double-digit like-for-like growth is likely to continue in coming quarters, and that's not an aberration. On margins, the management has guided for 200 basis points margin improvement, but that perhaps is on the consolidated basis. On a standalone basis, it could be a lot higher. Jefferies believes that their guidance is a little conservative, and the management has guided for 200 basis points over FY24 margins. If you look at FY25, then the actual expansion would be 250 basis points. So that's a positive as well. And if they're going for growth already, Jefferies says that profitability will follow growth anyway. And finally, on the group level debt due to HCCB acquisition, they understand that the debt because of this acquisition could be close to around 5,500 crores. And the group market cap, not just Jubilant Foodworks, you have the other Jubilant companies as well, which are listed, is close to around 36,000 crores. So that provides an 8x cover versus the debt which is there as well. So all factors considered, it's actually not as bad as what everyone else is concerned about. And the growth path that the company is on may have it in good stead, and as a result of which their buyers on the stock, they have a target of 1,000 rupees.
Okay, all right. Deepan, what do you think? You're interested? You're up for a pizza?
No, let's stick to health food this time.
Okay. What about the stock then?
I would avoid even Jubilant Foodworks also. Look, it's crazy valuation, 100 plus, as always said at these levels. But 10-year sales growth has been 8 to 10% or thereabout, 8-9% or so. And now they've gone and acquired DP Eurasia also, which is that Turkey and I think Central Asia franchise for Domino's. And I think that's what's driven the profitability in recent times. But we can't pay a very high P multiple for that acquisition. So on the whole, when I'm looking at the entire consumption space and I really like that investment theme, I'm not that optimistic on QSR. I think there are better plays within the consumption theme for investors to track and trade and invest in, and not necessarily Jubilant Foodworks or the other listed QSR companies. Just valuation is just too daunting.
What would those other consumption pockets be then?
See, I think that, we've spoken about hotels. I think I saw on your channel itself. Hotel means hospitality, including aviation, looks very good. I think specialized retailers also, I think after 2-3 years of very disappointing performance, they may come in the limelight, like, Go Fashions or even Vedant Fashion. And there are other metro brands, Ethos Watch. I think these are companies which are in a specific category. They have a decent retail network, strong brand, clean balance sheets. Just last 2-3 years, because of slowdown in urban consumption, their performance has been affected. But now going forward, I think certainly things may improve for them, and valuation now are at reasonable levels. So that is in the consumption space. That looks quite interesting. And then there's, of course, the hospitals and the diagnostic companies, which are kind of evergreen consumption-oriented stocks.
You know, you're talking consumption and you mentioned specialized retailers. So, Deepan, I have to ask you about Trent, right? Because it's been an amazing story. The rise was absolutely stunning and shocking, and so has the fall been. Equally stunning and shocking, right? 40% off the peak. Now, I don't know. I mean, there are some who are writing almost, writing it off, preparing the text for the tombstone, etc. There was a note from Kotak today saying expect sales to flat out, etc. Their target price, I think, is about 5,100 stocks, anywhere below that. So, is this some sort of a buying opportunity? Because you say you buy great businesses when the going is tough, class is permanent and form is temporary, all of that. The other theory is that every bull market is a new leader. I mean, stocks come and go, and some outlive their shine, or some lose their shine. So, which category is Trent in?
So, good afternoon. First of all, I wouldn't rate Trent as a specialized or a specialty retail company, because they cater to many brands, rather many categories. They're not like any of the other companies I listed just now. And to answer your question, which is a very difficult one, by the way, is a bit of a quandary, because it's such a huge wealth creator, but it's still expensive, and the growth is slowing down. So what do? It's a big question mark. I mean, we are investors in Trent for last several years, and even after this correction, we want to remain invested. But I think there is growing concern around the valuations. I wouldn't make a fresh bet on Trent at these levels. See, existing investors who are sitting on profits, for them it is an easy decision to remain invested or not. But for a new investment perspective, there are so many choices. And you don't want to get into a company which, you realize in a few quarters down the line, the stock prices remain flat despite growth in earnings, just because the P multiple has compressed. So new investment, avoid. Existing investors, wait and watch, but be a bit cautious and maybe ready to exit if there's any bad news, if at all, from the company.
Just a word on Trent. The stock has now fallen 40% from its highs. At peak, it was trading at around 120 times. Now it's trading at around 70, 75 times. That is, assuming that all the growth path that all the analysts are, factoring in stay intact. The only larger theme in Trent, as per me, is that, everyone was talking about the massive rise in Zudio. At that point in time, it was a concept which worked extremely well.
And it was growing at what? Around 40%?
It was growing at around 45-58%. EPS
quarter,
growing at around 80% as well. And the one thing that I'm sure even Nigel would agree with, that nothing disappoints the street more than growth than EPS. Massive deratings happen not when the company disappoints on earnings, but when it disappoints on growth. So ever since it disappointed on growth a couple of quarters ago, since then the derating, the multiple derating started. And then at the same time, you had a couple of other things that happened as well. Zudio was suddenly not the only game in town when it came to value fashion retailing. Because you had Reliance, which launched U-Star. I was looking at, Shopper Stop, which launched Intune. Aditya Birla Group itself launched Style Up. And Siaram Silk, of everyone, launched something known as Z-Code. So you had all of that, with Reliance having a tie-up with Shein as well. Add to this, you already have the competition coming in from V-Mart, Vishal, V2 and all these other retail companies. And the street was hoping that, okay, Zudio's growth is now petering out. How about, the other formats that the company has? They have Star Bazaar, they have Utsa, they have Samo, which is the ethnic brand. All of them aren't growing as fast as Zudio was. So now you had one engine, which was the speed driver. You have that is slowing down, and the others aren't firing up enough. So maybe as a result of which we're seeing the stock, underperform.
It's absolutely stunning, because I don't remember a Nifty stock. I mean, we see that with mid caps, right? Mid caps, the valuation doubles 2x, 3x, 4x, and then they fall equally sharp. But for a Nifty stock, it's been the rise was dramatic, and the fall has also been, well, dramatic to say the least.
Well, that's right. Sometimes that
Nifty,
the Nifty curse, right? You do so well, get into the Nifty,
and then after that happened with Britannia. Now Britannia is on its way out of the Nifty. In any case, be that as it may, we'll talk about the markets and a lot more after this short break. But as we do that, here's a quick note for our viewers. What does it take to move the needle on gender parity? That's the big question, right? The biggest names in the business, policy and leadership come together for the mega summit for HSBC presents CNBC-TV18 Future Female Forward, co-presented by Cognizant, to answer that very question. Tune in live on CNBC-TV18 today at 5:30 p.m. We bring you insights from those shaping the future.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on
Well, market continues to do market things, down about 90 points for the frontline index. The pain is a lot more in the broader markets, down 1.5% in today's trading session. The Adani Group stocks, which were doing very well in the first half of trade, have now come in for a bit of selling. So we have Adani Enterprises, which is at the low point of trade. You know, in the broader market, some of these Adani names currently seeing a wee bit of selling. So just keep an eye out on all of this as we focus on oil marketing companies. They're in focus as the second supplementary demand for grants show no provision for LPG compensation. What does this imply for their financial future? We have Sudarshan joining us with telling us more. Sudarshan, you told us about the new MD at HPCL, but tell us about this one.
So today, Finance Minister has submitted demand for second supplementary, and in which there is no provision for LPG compensation. Remember, Oil Ministry had sought for LPG compensation of rupees 35,000 crore for financial year 2024-25, and till 9 months of FY25, if you add LPG under recoveries of all three OMC, IOC, HPCL and BPCL, total LPG under recoveries were worth rupees 29,223 crore, with IOCs 14,300 crore, HPCLs almost rupees 7,600 crore, and BPCLs almost rupees 7,300 crore. And these under recoveries had surged almost 67% in Q3 from H1 of FY25. So there was an expectation that if it was not announced in the budget, it might come in the second supplementary demand when FM presents. But as of now, there is no provision for LPG compensation even in the second supplementary demand.
So Darshan, weren't they going to set up a fund? I mean, I'm sorry to throw this at you, but I think that was more for the new fiscal. I mean, that was something
that is for
was discussed. FY26, which they'll do it through a reserve fund. But the question is, for the year that's closing out, who's going to foot the bill given these losses? Got it. Thanks. That's an important development. And we'll discuss this space with our next guest in just a bit. Thank you for that. Let's now talk about the privatization of IDBI Bank. As you just saw on the ticker a while back, the process seems to be moving forward, and maybe it will be completed perhaps in the next couple of months itself. Sapna is joining in with the latest. Sapna, what are you picking up?
Well, just exactly as we have indicated, as we have learned that most likely the share purchase agreement for the IDBI stake sale, rather privatization, is going to be signed this month. So that's an important milestone. Post that, the government would be in a position shortly to invite financial bids. And once that's done, the indication is that latest by H1 of FY26, that is basically between April and September, which is quite a longish timeline that we're talking about, the actual transaction will be done. It could also be possible that if things move fast, then maybe the first quarter of the new financial year, that itself will see a lot of traction. I think around a month and a half, 2 months all will be given for the financial bids to come in, and post that, the transaction is likely to close quickly. This is a very clear indication from the government, and they should be taken on board.
All right. Okay, Sapna, thank you very much for that. Appreciate you joining in with the latest inputs on IDBI Bank. Thank you very much for that. Let's move on and welcome in our next guest. Vikas Khemani, founder of Carnelian Asset Management, is with us now to give us a sense on the market, the approach, and what you should be doing given the volatility that we've seen. Vikas, pleasure having you on. Thank you so much for joining in. You know, just when everybody was heaving a sigh of relief, saying, okay, there's some green, 1 week acha gaya hai, 3% recovery from the lows. Today is another volatile day, right? It's that kind of a market. But I want to start with a question on some of the exposures that you have. If you look at the shift strategy, then there's a large exposure to pharma, chemicals, API. You know, this is almost 30% of your portfolio, if not more. Now, you know, what are these companies telling you, the companies that you sort of engage with respect to all this tariff confusion and whether, you know, it's going to be more expensive to ship things over to the US and what's happening with China, whether China will then, since they have tariffs from the US, they will dump in India. It's too many changes going on for a lot of these companies that have that are part of global supply chains. What's the sense?
Currently, right now, they're in an uncertain environment. And, you know, like everybody else, I'm sure these companies also don't know anything. So everybody is in a right now guessing mode. And that's where the sense of uncertainty starts. But I think the fact of the matter is that today, no matter what, you know, America wants, other than leaving tariff, they can't start manufacturing themselves everything back home, right? So just leaving tariff is not an answer. So I'm sure right now, whatever is going on, you know, there's a lot of rhetoric and there's a little bit of reality. And at the end of it, after making so much noise, somewhere I think in the next couple of months it will settle down. If it was so easy, then I think Trump should have announced on that day one or first week, you know, tariff on all the partners, because he should have been clear about his policy. The fact is that, you know, they also know that it's not an easy process. And if you are going to around tariff across all the countries in the world, including India, then how does it serve the purpose? So point is that it also will become inflationary in US. So I think I'm sure, you know, and this kind of statements and uncertain environment has created a bit of a point of worry for everybody, including, you know, Indian companies and investors, rightfully so. So I think I'm sure, in my opinion, the long-term structural drivers of the growth for all these spaces are still intact. There could be this kind of uncertain period which will be there. We will navigate as it comes. I'm quite, you know, sort of, I think I'm, you know, more sure that it's not going to derail the entire India story, China plus one story, India manufacturing story. All of them are in place. A little bit of adjustment might happen based on the detail which comes out, which none of us know right now. So we'll see. We'll take it as and when it comes.
All right. Hi, Vikas. Good afternoon and good to see you. When markets aside, how are you feeling about the big win last night? You know, you were in Dubai for one of the games and thrilling, right? Markets,
absolutely,
you know, a little bit jittery, but I'm sure you're feeling quite good about the win last night. Were you there?
Absolutely. No, I think every Indian is cheering, and it was after whatever happened in the World Cup. I think this was some sort of consolation. But it was
some respite.
Really well, yeah. Team really played well, so enjoyed every bit of it.
All right, Vikas. Then you know, let's get back to the markets from for someone who's been you know, invested in the markets for so long. The big money is made actually when the markets are brittle, when the markets are a little bit jittery. When it's a one-way direction, then you don't make the big money because you can't get in time. But now, you know, you may get a phase where there'll be a good amount of time to buy stocks at a sharp correction. How are you feeling about the markets right now? The consensus is the headline index maybe, you know, could make a near-term bottom, maybe 4-5% lower even from here. But what about the broader markets? How are you feeling out there? What is the allocation strategy in the broader markets in particular? Because that's where fear has gripped a lot of investors.
I think, as you rightly said, there's a lot of fear. And this current environment reminds me of pretty much similar environment in some sense in Jan-Feb of 22. If you remembered, Mark, we had a great 2021. Second half of 2020 was great. But, you know, the Ukraine war started and Nifty, which was there at 18,500, corrected during that phase of 3-4 months to 15,500. Geopolitical concern, inflation, all of them were everybody's mind. And, you know, some people were even calling out World War III and stuff like that. And I think a lot of fear was there. And as we saw that, 15,500 became a base after 20% correction, and we had great second half of 22 and 23 and first half of 24. So what I'm saying is that these kind of corrections are par for course in every 2-3 years. Current market also, if you see, we had a great 24, 23 and 24. Markets have corrected from 18,500 to 26,500 to almost 22,000, and a lot of froth has got sort of corrected. So I see that it's right now lots of those concerns are kind of played out. You might see some more specific froth in some segments, but that is only cleansing of process in the market over the next couple of months. I think this is a good base for market from long-term perspective. I think this vintage will quite sort of be fruitful, just like how the first half of 22 was. I think last year RBI had sort of squeezed out liquidity in order to defend rupee, and that had created impact on the corporate earnings and economic slowdown in with 2 quarters lag. We have seen RBI has pivoted significantly towards growth with the liquidity and interest rates cut and the entire commentary with government's focus. I do believe that we'll start seeing impact on the economic recovery and corporate earnings with 2 quarters lag. So my sense is that we will kind of form a nice consolidation in next couple of months, and from there you might start seeing good recovery coming through.
All right, you might see good recovery coming through. Nigel, you spoke about him being present at one of the games. I happened to, meet him out there as well. And the man was very bullish, not on the Indian cricket team, but India as a country. And he was just waving his flag extremely hard. Vikas, so good on you. We got the championship. We got, some recovery last week from the fall as well. But my question is with regards to what happened in, not just the markets, but the infra space itself. Yeah, you have the visuals of the Champions Trophy playing out, 11 wonderful, champions who've gotten their hands on the trophy. But let's get back to the markets. Vikas, L&T is, one of those stocks you were backing. At the same time, you were backing a lot of these, infra names as well. You did speak about how construction and all that's happening in Mumbai right now is very temporary. The pace at which it's being executed will complete, and we'll actually go back to fast-paced growth in the city itself. So are there any other, themes that you're backing right now in the city infra sort of space?
The infrastructure is a good theme. There's no question on that. In India is building infrastructure, railroad, railways, port. Everything I think is being built at a very rapid pace. Last year, like I said, because of the government, election mode, incremental orders kind of slowed down, and supply, sort of payment release, I think slowed down, which in my opinion will start reversing. And companies like L&T and many more of them are, kind of beneficiary of that. So I continue to remain optimistic and positive about the entire, sort of construction players, especially, leading companies like L&T, which has been a great wealth creator over the last 4 or 5 years. So, yeah, I mean, other than that, I think, in this year, I believe that banking could be an interesting space to look at because of the pivot of the policy by RBI and the government, where I think, you could see interesting sort of growth coming through in the segment, and stocks have corrected. Last year was underperformer. This year has been so far all right. So I sense that this year, banking as a sector could outperform and could do well. Companies have kind of come into very reasonably good risk reward of valuation as well.
Vikas, I wanted to ask you about the cables and wires space. I recall, if I remember correctly, that you all bought KEI, I think it's 100 crores, if I'm not mistaken, a few 100 crores, if I remember correctly. And you held it all the way, it was a multi-bagger. Now there's a new player that's getting into this space. What is your analysis of it? Some of these stocks have fallen more than 30% from the top. KEI as well. It's down close to 25-30% approximately. Your view on a new player coming in there? There appears there is ample opportunity because there's an unorganized player, section of around 25%, and there's an export opportunity as well. But how would you approach this theme, particularly since a couple of these companies have been multi-baggers for you?
It was, in my opinion, it was overreaction. So when the Asian paint, when the Grasim announced the paint segment, I think market didn't give much impression, didn't sort of pay much attention, and kept on ignoring. And with a 3-4 years, 5 years lag, when they actually came to the market, they made some impact because it was a kind of 2-player market, right? And it's a domestic market. But I think cable, if you ask me, still their capacity is at least 2-3 years away. It's growing very, very fast. And I think within there is a segment of cable and wire. Cable is again a very, very different business. I think they're getting into only wire. Cable requires very long periods of certification and all those things. So in my opinion, it's quite some time away, and markets are anyway growing at a rapid pace of 12 to 14%. So in my opinion, nothing major to worry to have this kind of reaction. Of course, every time there's a new player comes, one has to watch out, one has to see what could be the implications. But I think it is still, they've just announced they will do capex, they will, come to the market. By then, I think lots of dynamics can sort of change. So we'll see how it goes. But I at a prima facie, I think it's an overreaction.
Okay, so then a two-part question, Vikas. One, will you buy? And the second part is, what else are you liking in this space? What new themes are emerging after this big correction?
So like I said, I think in this, we've been, one is that, banking is something what we've been liking in this space, in this current fall. Looks pretty interesting. Within manufacturing, I think a lot of, pharma companies, CDMO companies have come down. Chemical companies have come down. They look very, very interesting. In my opinion, you have very, very interesting ideas where stocks have corrected 30, 40, 50%. Of course, I'm not talking about some of the froth where still some amount of correction can happen, likes of, railways and some bit of pockets of defense and some bit of, but the rest of the pack, I think, you are looking at interesting ideas. In fact, within auto component space, there are some reasonably good ideas. So I think nothing new per se to say that, because ultimately India's story is in about 4 or 5 buckets, and you have to keep looking ideas in those 4 or 5 buckets. So no structural change per se, but yeah, good value, relative value shift one can kind of play out.
Right, Vikas, always good to hear your thoughts. Bullish on Indian cricket team, bullish on the markets as well, and believes there are plenty of ideas out there. Big money is made when the markets are weak. This could be similar to the start of 2022 when the markets pull back, and from there on we continued our big run. Thanks a lot, Vikas, for joining in. But it's that part of the day when Nimesh joins us to tell us what he's picking up on D-Street Chatter. Well, Nimesh, it looked all good till the last 90 minutes or so, and suddenly that profit taking came back in. How are you reading it, and what are the flow picture?
Well, Nigel, when markets start paralleling to that India has won the cricket match, so market should do well. I guess that's where that there is an overconfidence. So I guess today, I think everybody went with a bit of overconfidence, and again, the fact is that the mid-cap index is corrected 1%, but to put into context, the index rallied 5% last week. So a decent pullback was seen, and now we're seeing a bit of profit booking there. But in terms of flows, it's quite mixed. So I wouldn't say there is a large selling from any leg, either it's an FI or a DI, which is a very large seller. So kind of a mixed day in terms of flows, but you might see that bit of pain in the broader markets in run up to this next 10-12 days because of the yearly closure and also maybe that might have an impact, but otherwise there is not much to read into in today's fall. It's pretty much mixed is what I understand from a flow perspective. Within sectors there is a bit of churn happening as well. So selective banks are under pressure today, so is technology names. On the other side, there is a bit of buying back into the consumption stock. So there is a bit of shift there. Even within the PSUs, while all the stocks are down today, my sense is there is a bit of buying happening in the PSU basket as well from larger institutions. So it's not a very bad day as far as flows are concerned. Watch out for 21,800 on the downside. That's a very strong support now. But I guess you might see a bit of a range-bound trade between 21,800 and 24, 22, 200, 400 type. So that's a broad level to watch out for. But nevertheless, there's no big panic selling is what I understand from larger institutions today.
All right. So what about individual stocks? And I'm sure you have a lot of tidbits there.
Yes, Maglam. So a couple of stocks, while the stocks are under down today. First is CG Power and Bharat Forge. Both are under pressure today. But I guess the street is anticipating some large order wins for both the companies very soon. So something to track in both CG Power as well as in Bharat Forge. The second is JSW Energy. Within a weak market, that's buzzing in trade. Good volumes as well. I understand the volumes have picked up across the power sector stocks, and JSW Energy stands out. So expect high delivery volumes, but on the buy side in JSW Energy today. So that's the second name. The third stock, again, a couple of stocks where this delivery-based selling. IRB Infra and Senco Gold. While IRB Infra reported good monthly data, still the stock is under pressure, large number of sell flows. And similar is the trend with Senco Gold as well. So again, selling has resumed in some of those mid-cap stocks. And the last is Supreme Industries. Under pressure today. In fact, for the last couple of weeks, the stock has been under pressure of late. But small buying has emerged is what I understand. And also for Supreme Industries, there is a very strong indication that watch out for a corporate development in Supreme Industries very soon.
Okay, all right. Thanks a lot, Nimesh, for joining in and giving us that quick update. Well, let's slip in a short break. As we do that, a small programming note for our viewers. CNBC-TV18 and HSBC India are back with session 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. Scan the QR code now and submit your entry for SME Champion Awards Season 2.
Entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back. The broader market still reading under some pressure. We have First Source, which has moved to the low point of trade. CG Power continues to reel under pressure. We have IIFL Finance, which has come in for some selling. Interglobe Aviation as well is at the low point of trade right now. You're watching us here live from the CNBC TV18 Motilal Oswal newsroom. Let's get Mitesh Thakkar to tell you what to buy today or sell today for a reverse trade tomorrow. Mitesh.
I have STBT on Zomato with a stop at about 213.5 for a target of around 206. And an STBT on Aditya Birla Fashions with a stop at about 239.5 for targets around 233.
Okay, all right. Got it, Mitesh. Thank you very much for all the trades today, all the advice, and we will see you with the markets again tomorrow. We do have to take another very, very quick break, but where do we stand when it comes to women's leadership and progress in India? The the Gender Gap Index uncovers key insights while the Future Female Forward Charter sets the roadmap for real action. Be part of the movement. Tune in today, 5:30 p.m. onwards on CNBC TV18.
Now, every day you have some added uncertainty around US tariffs, trade, etc. So I think it makes sense to wait for a bit. In the last term of President Trump, where there were some China tariffs put there, and China put some tariffs on US products, which they've already done, where they put some tariffs on US grain. And US is a significant exporter of soybean to China. So when those tariffs came in, basically the trades rerouted. China imported from Brazil, Argentina instead of the US, and US, instead of exporting to China, exported elsewhere. What happens is that it makes a trade just a little bit less efficient. And therefore, if anything, it's got a positive impact on the market, as you said. The concern is if there are widespread tariffs, then it actually affects economic growth and underlying demand for the commodity, in which case that becomes a negative. On a ton-mile trading pattern basis, it's good for shipping. But if it affects demand for commodities, then that's bad for shipping because of general economic impact.
latest masterpiece, and it's not your average art show.
Welcome back. Seeing that sell-off continue on the screen, 1.7% down on the mid-cap index and about 0.5% down on the Nifty. We've got Anand Tandon joining us on the show this afternoon. Anand, thanks for joining in. I want to start with a specific question on IndusInd Bank. Today, the stock has been slammed, even more because of the bank-specific issue, which is the extension of the CEO. Mr. Katpalia gets only a one-year extension. What's your call on large banks overall in a market like this? And within that, where would you place IndusInd?
Generally, banks are relatively cheaper than the rest of the market and have perhaps the least threat in terms of the potential earnings growth. So that's a sector that one remains overweight in largely. IndusInd Bank is actually fairly cheap. It's barely, I think, trading at around 1.1 or 1 book value, depending on whether you use 1 year or 2 year forward. So from the point of view of valuation, it is quite cheap. There is no doubt that, as you mentioned, management changes will create a certain amount of strategy changes and therefore may affect the growth trajectory. But given where the valuations are, I think by and large, most of it is factored in.
So you'll be a buy on IndusInd at these levels?
Well, I don't make recommendations, but as I said, from a portfolio perspective, A, I am bullish on banks, and 2, IndusInd is cheap.
Okay, all right. What about Zee Entertainment, Anand? That's the other big underperformer. After a while, you've seen the promoter entity come in there and buy some shares from the open market. They bought close to around 27 lakh shares last week. And from there, the stock from around, I think, 9,800 rupees, it's at around 108 rupees. Valuation-wise, that's trading at around 10 times. That compares with the average of around mid-teens. And they have promised that margins will improve. Will you be bullish on this, or will you say that, no, it's eroded too much of wealth, you rather give it a skip?
Which company did you mention?
Zee Entertainment.
Well, yeah, I mean, it is cheap, definitely. The challenge in Zee has been the fact that there are governance issues that sustain. There are issues in the balance sheet which sustain. So there needs to be still a cleanup on the balance sheet. But given the fact that the industry has more or less become a single horse race now, there is a chance for another player also of some size to be able to garner some of the viewership. Zee has probably seen some of the worst period in the recent past. There is potentially, assuming everything else was normalized, it would have been a great place to buy. But as I said, you can't deal with corporate governance issues and balance sheet issues with any degree of certainty. So therefore, with that caveat, overall, in terms of just the numbers, it is relatively cheap.
All right, Anand, hang in there. Thank you so much for your insight. What we'll do is start wrapping up the market, and thereafter we will continue to have a conversation with you in our post-market show, Markets Forward itself. So all in all, a weakish day for the frontline indices, but a lot more for the broader markets. The Nifty ends about 100 points lower, with the broader markets a lot more down, almost 1.8% for the mid-cap index, giving up almost entirely the gains that it had made all of last week itself. The top Nifty losers, ONGC, Trent, IndusInd Bank, Bajaj Auto, Eicher Motors, some of the ones which managed to hold on into the green. We had a couple of these FMCG names. HUL was up 2%, Infosys up 1%, Power Grid up around 3%. But the real pain was in the broader markets.
Absolutely. It's almost a 2% slide now as we're closing down. 900 points gone from the mid-cap index and a really poor advance decline ratio by the end of it. 361 Wealth Management 8% lower, Triveni Turbine 9%, JM Financial, you just go on and on naming. Neogen is down about 10%. Some of the smaller names like Dollar Industries, Smash 10% lower. So yeah, it's been an extremely painful session all over again after 5 relatively decent trading sessions. Tough day. Well, the bell has gone 110 points lower on the Nifty is where the final tally stands. That's where we'll take your leave on closing bell, but stay tuned. All the market action continues. Up next is Markets Forward.
Isn't just about breaking boundaries, it's shattering our very perception of reality. Curated by the renowned Dia Art Foundation from New York, the first of its kind international exhibition brings together thought-provoking works of light and space artists from the 1960s and 70s. Can you tell us and share your experience out here?
So this is the first time that I've actually come here, and I've flew down from Bangalore for this. And as we are looking at it, for me it was quite different, because the kind, it's basically, according to me, I felt it's like the way you see it through your eyes, the way you perceive it. So it was quite different. So I really liked it.
What has been your favorite art piece so far?
So my favorite was one of the glass pieces that was displayed on the second floor. Why? Is because it's really interesting how just a simple piece of glass molded into such shapes give subjective illusions to everyone, and that's just really pretty and really refreshing to see.
Spanning 4 floors of NMACC's dedicated visual arts space, the exhibition transforms industrial materials, fluorescent lights, polished metals, mirrors and reflective paint into interactive masterpieces. It's not just an exhibition, it's a sensory and spatial experience designed to engage and challenge the way we see the world around us. The exhibition is open to the public until 11th of May, with tickets starting at Rs 199. Also, the entry is free for senior citizens, children under 7 and students of fine arts, design and architecture. The exhibition is open to the public until 11th May 2025. So what are you waiting for? Check out the space and let us know in the comments below. In Mumbai, Zinia Barya. Let's talk about your 2008 Olympics match. Tell us about your whole experience. That was your first Olympic match. What was the feeling? What was going on in your mind? Tell us all about it.
I think it was in 2008 and I was 18 years. And when I won my first international title, I was only 16, and I was there in the international circuit, and a lot of these Chinese and a lot of these Koreans were actually, they were worried like some Indian is coming, and they're actually giving us tough competition, because before me, we didn't have a female badminton player who was actually playing at that level, who was actually winning those international matches. Of course, we had Prakash sir and Gopi sir who did well, but I was just, when I started playing badminton, I used to ask my mom this question, why badminton? I don't know. It's such a difficult sport, and you have the Chinese in quarters, semis and finals, they're everywhere. So she used to be like, no, for me, you are the champion, you're going to do it, and just believe in yourself and imagine.
Market gives up early gains. The broader market underperforms, with the oil and gas, consumer durables dragging the market. The Nifty ends near the 24,400 level, while the Sensex slides to around 74,100 odd.
Shares of IndusInd Bank tumble in trade. This after RBI gives only 1 year extension to Managing Director and CEO Sumant Katpalia as against the bank's ask of 3 years. Infosys stock gains after positive brokerage commentary.
BSE slumped in trade after Novama trims the target price. Similar fate for Trent as Kotak cuts the target price for the stock. ICICI Securities gains after the NCLAT upholds delisting from stock exchange. Welcome to Markets Forward, your go-to show where we get you up to speed with regard to today's trading session, and we'll set you up for tomorrow as well. I'm Nigel, and with me is Vinny. Hey Vinny, it was that sort of a trading session, right? When we started off pretty much okay. We had the momentum, and yesterday India's win as well had elevated
I thought there would be
spirits.
cheer, at least for that front, that there would be some green, but seems like the market really didn't want to hold on to that green.
Well, indeed, to be fair, actually, for the initial part of trade, we did pretty well. But the final couple of hours of trade, there was some weakness that crept in, both on the headline index as well as on the broader markets as well.
Absolutely. And Nigel, you know what I was just seeing right now, only FMCG was the only sector that managed to close in the green. Apart from that, we saw the fall coming in. Real estate, top sectoral loser, PSU banks, that didn't manage to hold on. And obviously the underperformance that we saw from the mid and small cap, like you were saying.
Well, that's right. Well, first up, let's tell you what we have lined up on the show for you. Today, we start off with all the top movers and shakers. Hormuz will be joining to tell us that. Well, the stock of the day was IndusInd Bank, so we'll focus on that. OMCs like IOC and HPCL, as well as ICICI Securities, we'll be focusing on them as well. Stay tuned as well. We'll tell you why all these stocks were buzzing in trade. Last but not the least, we'll delve into the key market events to watch out for tomorrow's session. Well, let's get straight to our first segment then. Hormuz joins us to tell us all the big movers and shakers of trade. Hormuz, take it away.
Well, it was a forgettable last couple of hours for the bulls and particularly for the broader markets. Actually, the broader markets were underperforming all through the day, and it just exaggerated towards the close of the trading session, led by these capital market linked names, and these have been the ones in focus almost for the better part of this year. And you can see it in the price action as well. Most of them ending at the lowest point of the day. 361 WAM and JM Financial were the two worst performers on the Nifty 500 today. BSE, yet another price target cut coming in after Goldman Sachs did it twice last week. And Angel One, of course, is now down 50% from its all-time high. A lot of these MFI linked names also did not have a very good day at the office. Most of them with Suryodaya, Jana, Mass Financial, Spandana, Spurti, again most of them ending at the day's low. Jana seeing some recovery from the lows towards the close, but still ending with losses of anywhere between 2 to 7% in today's trading session. Real estate was the top sectoral loser today, and most of the constituents ended with losses from anywhere between 4% to 7%, led by Mahindra Lifespaces, which also ended at the day's low. Some of the newsmakers in today's trading session, led by IndusInd Bank after the slew of downgrades and price target cuts which came in today, ending 4% lower, making a new 52-week low. Indian Oil and of course the OMC peers, we'll talk more about that on the show. IDBI Bank, of course, the perennial disinvestment candidate. HUDCO, the street disappointed after its dividend announcement, and Bodal Chemicals 15% higher after some positive commentary that came in. And lastly, volume buzzers in today's trading session on either side. Kalyan Jewellers now almost down to 400 rupees on the stock. Avanti Feeds, Solar Industries and Awas Financiers were some names that bucked the trend today. Back to you.
Thank you so much for that, Hormuz. Surely important movers in trade that we watched out for. But, let's bring on board our experts for today. We have Anand Tandon as well as Jay Thakkar who are joining in with us to, analyze the markets, what's happened today in today's day as well. Jay, let me come to you because 22,500, Nifty didn't manage to sustain those levels. What are we watching out for? Again, are we watching out for the week that we saw a couple of weeks back, that fall that we saw in the market? Similar trends is what we're expecting again.
Good afternoon to you, Vinny and Nigel. Well, see, last week was a very good week as far as the recovery in the Nifty and the broader market is concerned. And we did see Nifty bounce back quite sharply from the levels of 22,000. In fact, it's managed to bounce back until the levels of 22,700 as well today, until today morning. But then, Bank Nifty and Nifty IT, these are the two sectors which are, finding resistance at the higher levels. So as far as Bank Nifty is concerned, 49,000 is acting as a very crucial resistance. It's not able to pick up those levels. And as far as Nifty IT is concerned, then we're not seeing that kind of short coding coming in these stocks. So, I would say that going forward in Nifty, 22,000 will act as a very crucial support. I think the probability of those days holding out in the near term is quite high, and there are a couple of reasons for that. One is that the dollar index has pulled off quite a lot from the high levels from 110 now to at least at 104 to 104. Crude oil has pulled off quite a lot. The volatility in India VIX has pulled off as well quite a lot from 19 levels to now below 14 levels as well. The CBOE VIX in the US markets have also pulled down from 26.5 or 27 levels now to 24.5 levels. So there's a more than 10% difference CBOE VIX as well. So looking at all of these, I think the probability of Nifty trading within this range of say 22,800 to 22,300 for this particular week is quite high. As far as March series is concerned, I think the Nifty is likely to inch towards 23,000 going in gradually till 22,000 levels are held. And the largest stocks like Reliance, which have finally seen a good food base and short covering as well here in past couple of trading sessions, clearly indicate that Nifty is likely to inch higher. Apart from banking and IT, I think most of the other sectors are clearly indicating that at the lower levels we'll be seeing a good buying interest and a bounce back in the market.
Okay, all right. Thanks for that, Jay. I want to come back to you and ask you your view on Indices Bank. How's it looking at the charts? Because in today's trading session, the stock tumbled after they got just a 1-year extension for their top boss instead of the 3-year extension that was requested by the bank. Abhishek joins us to fill us in with more on that. Abhishek?
Well, not the decline, but take a look at the RBI's, uncertainty with respect to the MD and CEO's tenure. Now, they have reduced the tenure extension only up to 1 year versus 2 years that they gave in the previous time around. And this is also on the back of the fact that the board recommended only one name for the, MD and CEO extension, and they did not give opportunities. So last time RBI had given 2 years tenure versus 3 years that was sought by the board. Even this time they sought 3 years, but they got only 1 year. Now, analysts do say that, this means that the board will have to find a replacement, now, which will create uncertainty with respect to leadership in the interim period. Now, previous similar instances wherein, what the board sought versus what RBI gave was on the lower side. That happened with RBL Bank 1 year, Bandhan Bank 3 year versus 5 year that they sought. Federal Bank not even approving a 1 year extension what the board had sought. So that had led to negative with respect to stock price reaction post the RBI outcome. So IFS says that weak profitability even in FY26 with ROE of around 10.5% coupled with leadership uncertainty should keep the stock price under pressure in the near term. So brokerages, some of them have cut the target price like Jefferies, MK as well as IFL Securities. All of them have buy call except for BofA Securities, who has downgraded the stock recommendation to underperform while cut the target price to about 850 per share. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Jay, how is it looking on the charts? The fundamental news flow isn't great, but the stock is cheap. There's a big amount of short built up in there. And in the lead up to this event itself, the stock was down 12%. How is it looking at the charts?
Well, I would say that there was a good amount of short that was built up in IndusInd Bank, and we saw it getting covered by almost, I would say, 20%. But the prices did move up, but now it's not able to hold on to its previous lows, and has now formed a fresh 52-week lows as well along with this news. And we have seen further short getting added. So I think that on the upside, 950, 960 zone, in those levels are taken off the risk of this stock, further things and profit booking, or I would say further selling pressure, at least until the levels of 840 is quite high. My view would change from down to only about the levels of 960.
Okay, Jay, thanks so much for the view coming in on IndusInd. But let's move on and bring on board Sudarshan, who is here to tell us why OMCs were in focus today. It seems like there was some announcement that came in on no LPG compensation that has been announced this time. And this is the second round of the supplementary demand. Sudarshan, what does this mean for these companies and what is this announcement?
So first, shares of all three oil marketing companies, IOC, BPCL and HPCL today saw a close with a cut in the range of 2 to 3%. Major part of the fall has come in the second half of today's trading session, and the reason is Finance Minister Nirmala Sitharaman today has presented second supplementary demand, and in this LPG compensation provision is not there, and that is the reason that all three shares of all three oil marketing companies have seen a fall from days high. And Oil Ministry had sought for LPG compensation of rupees 35,000 crore. Remember, as of 9-month FY25, if you add the under recoveries of all three oil marketing companies, total under recoveries were of rupees 29,223 crore, with IOC forming almost 50% of that. For IOC, it was more than rupees 14,300 crore. For HPCL, it was almost rupees 7,600 crore. And for BPCL, it's almost rupees 7,300 crore. But yes, in the last 2 to 3 sessions, all these shares of all three oil marketing companies had moved higher because of the sharp fall that we had seen in crude. But there was an expectation that LPG compensation may be announced in the second supplementary demand after it was not announced in the budget. But second supplementary demand 2 did not have the provision, and that's the reason today we saw a fall in these three companies.
Okay, all right, Sudarshan, thanks a lot for that. Anand, it's becoming very, very difficult to invest in any of these companies. You're tracking crude, you're tracking the offtake, suddenly you don't get some LPG compensation. So then it makes, valuations, the PEs, the dividend yields immaterial when this sort of uncertainty. What do you think about these stocks? They've underperformed, and in the last week or so, they started outperforming. But again, negative news flow coming in.
Well, that's been the problem with most government-run companies. At the end of the day, the government policy keeps changing. It was only in the last few years that there was a certain amount of certainty in the fact that they could change prices for their retail products at least. Even that was taken away during the just pre-election. And, the rest of it has always been a bit of an issue. I would imagine that this will get sorted out. But that said, I don't think that there is any great valuation comfort in any of these companies anyway. It's not as if, you're going to see dramatic growth coming through, or that there is a sustainability that is required, that is expected in terms of where these companies are headed. They are dividend plays generally, so whenever you get a good dividend, that's something one can look at. At best, they can be viewed as tactical investments.
Okay, surely keeping an eye out on all these OMCs. But let's bring on board Vamakshi, who's here to tell us a couple of newsmakers in today's trading session. BSE, Trent, ICICI Securities. Vama, take it away.
Well, absolutely, Vinny. Let's first focus in on BSE. The stock is in focus not only today but over the last couple of sessions. Last week when we saw BSE, Goldman Sachs had actually reduced the target price on this counter not once but twice. And today we have a note coming in from Nuvama. They have a buy rating, and they too have cut their target price from 7,250 to 5,160 rupees per share. They say that because of the change in expiry by NSE, the volumes for the overall industry are expected to come in lower. The trading avenues for retail investors who typically trade more actively closer to the expiry is expected to reduce, and this in turn would impact its market share. They're expecting BSE's market share to moderate to 18% as compared to 22% as seen in the month of Feb. In addition to that, SEBI's consultation paper on derivative exposure limits, which was released back in Feb, may also clip growth in their opinion. So given that factor, they've lowered their EPS CAGR from FY25 to 27 to 17.1%. They've also cut the target PE multiple to 40 times as compared to 50 times earlier, resulting in the cut in the target price. Trent is another counter we're watching out for. There was a note that came in from Kotak. They have a reduced call on this counter, target price of 5,150. They say that Trent stock was volatile last week over the news of aggressive store additions by Westside, but this news was subsequently disproved. Westside's updated store count now stands at 240, implying a net addition of only 8 stores on a year-to-date basis. They continue to see pressure on Trent's revenue throughput on account of its own densely located newer stores of Westside as well as Zudio. They're assuming flat revenue throughput for Zudio and they've gone ahead and trimmed the revenue throughput for Westside, which is resulting in a 1 to 5% EPS cut for FY26 to 27. So resultantly, the stock was under pressure today. And on the flip side, we have ICICI Securities in focus. The stock actually recovered from the day's lowest point. NCLAT actually upheld the delisting of ICICI Securities from the stock exchanges. All 6 appeals which were filed by Quantum MF and Manu Rishi Gupta have now been dismissed. So it can be said that an obstacle has been removed, and this in turn paves the way for ICICI Securities delisting. Bodes well for the counter.
Okay, thank you so much for that, Vamakshi. A couple of names that you mentioned over there. Anand, I'm going to come to you. BSE and specifically Trent. Your thoughts coming in on both these stocks. Trent also, what is your thought in terms of the word that's coming from Kotak, in terms of the news coming in around that aggressive store addition for Westside? They've cut the target price as well. So a bit of a concern. So what are your thoughts on this one?
Well, Trent at least has a great execution, and by and large has managed to increase their product and margins. The major challenge at a macro level, I think, remains the fact that there is going to be a greater move towards online, as we have seen. And with that, the question is how much do physical stores add value? For now, they have done an excellent job in terms of being able to extract money out of it. The issue now comes that many other players have begun to operate in the range at which Trent makes the maximum money, which is the mid-range or the lower end of the range. And on the Zudio side, and that is where we are beginning to see some amount of pressure. Valuations aside, it remains an excellent stock. So whatever valuation you are comfortable with or parameter you are willing to use, that is the only question that you have to look at. BSE, I think, is a different ballgame altogether. You are looking at, to my mind, a cyclical topping out of capital market activity in the market. And from here, I would expect to see a much more subdued level of retail participation going forward. Most exchange stock market related entities, therefore, will have to normalize because they have all been treated as if they are going to continue to grow in one line, which is never the case. So in that kind of scenario, I think there are strong possibilities of earning downside coming through in many of these capital market related entities.
Right, surely, Anand, also in terms of ICICI Securities, you have any thoughts on this one? Because obviously that obstacle, which is Vamakshi was also mentioning, has come out now. That's gone. So now the delisting is on its way. What are you watching out for there?
Frankly, I don't track that, so I shouldn't be commenting on it.
Okay, and any thoughts that you have on pharma? Because a lot of action that was happening in pharma, though the stocks didn't see much of a move. Whether you talk about Sun Pharma, Lupin, all these names, and Biocon also was in focus on a phase 3 study trial. Any thoughts on any of these pharma names?
Well, that's one of the few sectors which is likely to weather the storm that we see in the market much better than the rest of the sectors. The numbers are still coming through, the earnings are still there, the volume growth is happening. And I would imagine that irrespective of what happens in the US market, it will be the least affected because it's the most difficult kind of product that Mr. Trump can affect adversely. So by and large, it's today for me a hideaway sector. You might want to remain overweight on that.
Got it, Anand. Thanks a lot for that. Appreciate you giving your views on all the stocks that we just discussed. And thanks, Jay, as well, for joining in. For the time being, we'll slip into a short break. You come back, we'll get you all the top corporate voices along with all the top key events you need to track for tomorrow's trading session. Stay with us.
She's just a housewife. She's not even a international level coach, or she's not someone who's seen what international badminton is. But she was like, you are my champion. You are going to do it. And with her belief, I was in the Indian team when I was only 13, senior Indian team. Wow. And I won my first international when I was only 15, 16. So these things happened in my career really, really fast because of only one person's belief. And of course, the coaches come in, the trainers come in. But I think the first Olympic was, in fact, so early in my career that, I was like, my mom wished that I have to become an Olympic champion, and I'm here. I'm here so early, and I'm actually getting closer to winning the medal. In 2008, I lost in the quarterfinals, and I still, that one match gives me a lot of sleepless nights because it does, because even after having the medal, I was 11-3 up in the third set. And then I was actually getting all these things in my mind, saying that my coach was like, ek din tu world champion banegi. My mom was like, ek din Olympic champion. Not pressure, but I was happy that I actually was going.
Welcome back. You're tuned into Markets Forward. As promised, let's get you all the top corporate voices that we had during the course of the day. First up, we have Vinity Organics commenting on Trump's ongoing tariff threat. The management said that 7 to 7.5% of the US tariff generally is applicable on their products. However, it's not concerned about the tariff hurting demand and supply scenario. Further, the company is not mulling over manufacturing in the United States. That's not all. They guided for EBITDA growth for the next 2 years to be in the vicinity of around 15 to around 20%, which is similar to the top line growth that they've guided.
And moving on, second up, we also had Keystone Realtors, and they don't see any impact on housing demand despite market correction. There has been 6% price rise in Mumbai over the last 1 year, and the management added very small micro markets will see a bigger price hike. Also called for a change in price definition of 45 lakh rupees for affordable housing.
Well, moving on to a CNBC-TV18 exclusive then. IDBI Bank is close to privatization process. The government official told CNBC-TV18 that the share purchase agreement for privatization could be finalized this month and that the invite for financial bids will be very, very soon.
And before we wrap up this edition of Market Forwards on CNBC-TV18, we bring you the key events to watch out for in tomorrow's trading session. Vamakshi is here to tell us about that. Vamakshi.
Well, Vinny, lots to watch out for in trade tomorrow. Let's first start off with the economic cues to watch out for. Now, Japan's GDP data numbers will be out tomorrow, so we'll be closely monitoring that. But apart from that, from the US markets, we'll also be watching out for the JOLTS job openings data. Now, coming back to the stocks, IOL Chemicals will be in focus. The stock will go, the stock will be split from a fair price of nearly 10 rupees per share to 2 rupees per share. BL also goes ex-dividend tomorrow, so watch out for that. As far as board meetings are concerned, keep an eye out on India Shelter because they will be considering fundraising via NCDs. And lastly, as far as some other events are concerned, keep an eye out on the India-EU FTA negotiations. This is the 10th round of these negotiations which will continue in Brussels. They're already ongoing. They will end on March 14th.
Okay, all right. Thanks a lot for that, Vamakshi. On that note, though, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side. Stay with us.
Winning a medal, I was happy, I was excited that I'm actually doing it with my training, with my coach's belief and everything, I'm doing it. Suddenly the game just turns and then she's just picking up everything. The rallies are going really longer and she's everywhere. She's all over the court, not leaving anything. And after 11-3, you won't believe I just got 2 points and she went on winning the match 21-30. After that, I'm sitting there and I'm talking to my coach, what happened? Because every rally was a big rally. I didn't even do silly mistakes to lose the match. What just happened? So I was like, when I thought about it even more, I was like, next day I better start training to get the medal in the next Olympics. So yes, that match tortured me a lot, but I think it gave me that lesson as well that you should not get too excited also sometimes. You have to control yourself. When you are actually going to achieve your goals, you have to control yourself, try to relax yourself. In fact, in that time, when I started doing well, I didn't have a mental trainer or a trainer. Only Sir, Gopi Sir was everything to us. And he being a coach, how much he could have helped in other things as well. So I feel agar wo time pe I had a better mental trainer or someone who could give me advice about it, that you should just think about the next match, just think about the next point. तो उतना मतलब मैं उस मैच में excited नहीं होती. But I was so happy that tournament gave me so much of belief. And in India, everyone started to go to know what badminton is. And they were like, Saina is really doing well in badminton. And in 1 year, I was there winning, beating all these Chinese. I won the Indonesia Open. I became world number 2. So in 2010, I won 3 Super Series back to back. And in 2012, I got an Olympic medal. But I think that particular match taught me to be really, really thinking about that even after match point, you have 10 more points to go. Don't just think that the match is finishing, just be there, and presence of mind is required. And I think that first Olympics really gave me that confidence that yes, I'm there and I can beat all these Chinese and Koreans and I can be in top 10, top 5 for a long period of time. And when I look back, in fact, someone told me that I was in top 10 for almost 11 years. And when I became world number 1, that is when I was like, yes, it's possible. It's possible. In 2015, when I was world number 1, everyone was like, wow, from India, we can do, in badminton, we can do such wonders. And we can also beat Chinese, who are the powerhouses. Korea, Japan, they are the powerhouses. But now you see, badminton in India is grown so much. And we are giving good challenge to all these countries. And we are one of the top in the world now. So, yeah.
Well, we're not looking to hurt anybody, and we're certainly not looking to hurt them. And I'm looking at that, and there were some people that think that's appropriate and some people don't, and I'll be making a decision pretty soon.
President Trump.
But we're not looking to hurt them.
President Trump.
Especially Ukrainians. They've gone through a lot. Yeah, Peter?
Hello and welcome to Business 360. I'm Ashmit Kumar and here are the headlines that we're tracking this evening. A sell-off in the last hour wipes out early gains for Sensex and the Nifty. Mid-caps and small caps underperform with sharper cuts. Rupee weakens sharply against the US dollar. India and US are discussing ways to reduce tariffs, say Indian government sources. This after President Trump claims that India has agreed to cut tariffs way down Commerce Minister Piyush Goyal was in Washington last week. Sources hint at potential tariff cuts similar to bilateral trade agreements with Australia, UAE and others. India and European Union begin a 10th round of negotiations in Brussels to seal a free trade agreement and another agreement to protect investments. Both parties look to hedge their risks with a trade deal amidst tariff threats coming in from the US. The Indian government invites applications for the post of chairman at insurance regulator IRDAI. Current chairman Debashish Panda's 3-year term ends on the 13th of March. Sources say Economic Affairs Secretary Ajay Seth and former Defence Secretary Giridhar Aramaname could be among the possible contenders. Stormy start to the second leg of the budget session. Congress and the TMC seek a discussion on alleged manipulation of electoral rolls. DMK MPs protest after Education Minister Dharmendra Pradhan calls the Tamil Nadu government dishonest, uncivilized and undemocratic for doing a U-turn on the agreement on PM Shri schools. Maharashtra Deputy Chief Minister Ajit Pawar tables the state's budget, allocates 36,000 crores towards Ladki Bahi scheme for FY26. This is 10,000 crore rupees lesser than the allocation last time. Pawar says that the government will announce an industrial policy with an aim to attract investments worth 40 lakh crore rupees and create 50 lakh new jobs in 5 years. Former Central Bank Governor of Canada, Mark Carney, wins the leadership race of the Liberal Party to replace Justin Trudeau as Prime Minister. Carney is likely to call for a general elections as soon as Trump's tariff threats put the Liberals in pole position to win the polls. Well, let's start with a quick check on the stock markets. The Sensex and the Nifty failed to hold on to early gains. A sell-off in the last hour of trade took the Nifty below the 22,500 mark. The Sensex, meanwhile, lost over 200 points. The mid-caps and the small-caps saw sharper cuts. The mid-cap index was down 750 points and the small-cap index was down nearly 2%. The rupee also weakened sharply against the US dollar. The Indian currency was down by more than 45 paise against the greenback. Bond prices, meanwhile, managed to hold largely steady. Well, the big story that we are tracking this evening, India and the United States are discussing ways to reduce tariffs, according to the Indian government sources. This comes a day after President Trump claimed that India has agreed to cut tariffs way down. Trump's top economic officials reiterated that reciprocal tariffs on nations like India will kick in from the 2nd of April. Here is President Trump and his top economic lieutenant on India and the tariff threat.
India charges us massive tariffs, massive. You can't even sell anything into India. It's almost restrictive. It is restrictive. You know, we do very little business inside. They've agreed, by the way, they want to cut their tariffs way down now because somebody's finally exposing them for what they've done.
Now, April 2nd is when we begin our reciprocal tariffs. So if you think about it, what he said was, okay, between now and April 2nd, I'm just going to give USMCA, I'm going to set that aside from these tariffs, but just for this month. And then on April 2nd, it's not that this reprieve starts, it's that on April 2nd, the reciprocal tariffs start. How you treat us is how we expect to treat you.
At the end of the day, President Trump's been saying tariff is his favorite word. I think reciprocal may be his second favorite word. And we're going to put this at the feet of our trading partners on April 2nd. We're going to come out, talk about who's a good actor, who's a bad actor, to what degree they have put up barriers against us, and it'll be a choice. Either they can drop all the market manipulation and things like that they've done that have hurt American workers. And if they do that, then we could have more frictionless trade, or we'll put up the tariff wall, we'll collect a lot of money, and we will make the system fairer.
Well, Parikshit Luthra is standing by with more details on this ongoing negotiations between the India and the US. Parikshit, tell us, what are your sources telling you?
Well, trade negotiations are complex, and this one with the United States is no different. Well, Commerce Minister Piyush Goyal was in talks with USTR Jamieson Greer and US Commerce Secretary Howard Lutnick last week. He was there for about 3 days, and he had a round of conversation with each of them. Clearly, the Indian government has put forth to the US sensitivities on different subjects, including agriculture and dairy for that matter, and also what India can do. Sources tell us that India and the US were also close to finalizing a mini trade deal towards the end of the Trump administration, and for some reason, it did not happen. Currently, yes, India is considering reducing the average applied tariff across product lines for the United States, just the way India has done it for countries like UAE, Australia and Norway in the past. Sources tell us that current negotiations with the US should be seen in the context of what India has done with other FTA nations in the past. And currently, this is a bilateral trade agreement that is being negotiated. US is, of course, asking for preferential treatment, saying that we don't care what you're offering to the rest of the world. You treat us like a special partner. This has to be a special relationship, and we can't go product by product. It has to be a broad-based, macro-level deal that brings down tariffs altogether. So it could be 0 to 0 tariffs that the US is asking, or for bringing down the average applied tariffs to a rate that US charges on Indian products. Let's see which way those negotiations go. But there are domestic pressures for India as well from the industry and also from the Swadeshi Jagran Manch, which is an RSS affiliate, which has gone on to say that we must follow the nation-first approach in these negotiations. It's good to have bilateral trade agreements, and they're preferable over multilateral agreements. But at the same time, interests of small farmers and entrepreneurs must be respected, and they must not lose out in this trade agreement with the United States.
Right, Parisha, thanks a lot for that. Interesting that this commentary coming in from the US at a time that Commerce Minister Piyush Goyal was in the US. A special relationship is what the US is pitching this transaction, this deal between the two countries as. But staying with the US President Donald Trump hosted cryptocurrency leaders at the White House over the weekend. The first of its kind White House Crypto Summit saw President Trump signing an executive order establishing a strategic Bitcoin reserve and a US digital asset stockpile. Trump reiterated that he's working to make America the crypto capital of the world. However, Bitcoin and Ethereum prices fell over 5% owing to the lack of policy-specific announcements.
And last year, I promised to make America the Bitcoin superpower of the world and the crypto capital of the planet, and we're taking historic action to deliver on that promise, as you know, around the table. I also want to express my strong support for the efforts of lawmakers in Congress as they work on bills to provide regulatory certainty for dollar-backed stablecoins and the digital assets market. They're working very hard on that.
Well, India and the European Union commenced their 10th round of negotiations for a free trade agreement in Brussels today. These talks come weeks after EU President Ursula von der Leyen and a full college of commissioners visited India for detailed conversations. Remember, Prime Minister Narendra Modi had said that the trade deal is expected to be completed by the end of this year. Abhimanyu Sharma, my colleague, joins us now with more details. Abhimanyu, tell us, what are you picking up?
India and the European Union have begun the 10th round of discussions for a potential free trade agreement between both the sides. In the 9th round, several issues pertaining to goods, services, rules of origin, technical barriers to trade and government procurement were discussed. Now, both the sides are looking to hedge their risks in a world replete with discourse and action on tariffs. And both the countries are big importers of energy. So clearly, there would be concerns on both the sides as far as securing their trade interest is concerned. Also, in a visit to Delhi last month, European Commission's president had indicated that both the sides are looking to conclude the FTA within 2025 itself. Now, this round of talks is slated to go on till the 14th of March, in which both the sides are expected to give their suggestions and are going to negotiate on several counts. India is seeking better competitiveness for its exports of electrical machinery, steel and ready-made garments, whereas the European Union is seeking better market access and lower duties on spirits, wines, automobiles, and also a stronger IPR regime. It remains to be seen how early the negotiations are going to be concluded and what are the concessions which both the sides are going to give to each other.
Right, Abhimanyu, thanks a lot for that. Now, the Finance Ministry has said that the Reserve Bank has been monitoring activities and the performance of the microfinance sector. In a response to the Parliament, Minister of State for Finance Pankaj Chaudhary said that the sector was showing signs of stress in the current fiscal year and that the RBI has asked the lenders to strengthen their underwriting standards and step up efforts. The minister also said that the government is not considering relief for the MFI sector at this moment, despite the rise in bad loans. Now, the government plans to finalize the share purchase agreement for the privatization of IDBI Bank this month. Speaking to CNBC Awaaz, DPAM Secretary Arunish Chawla said that the divestment process is on track and an update on the stake sale will be available in the next 3 to 4 months.
मैं बहुत स्पेसिफिक तारीख आपको नहीं दे सकता हूं, लेकिन इतना आश्वासन दे सकता हूं कि आईडीबीआई बैंक का डिसइन्वेस्टमेंट ट्रैक पर है, ड्यू डिलिजेंस कर ली गई है, जो भी डेटा इश्यूज थे उनको रिजॉल्व कर लिया गया है और उसके आगे की कार्रवाई जारी है. आप अगले 3-4 महीने में कुछ ना कुछ खबर अवश्य देखें.
Meanwhile, Vodafone Idea shares fell after it failed to receive relief from the government regarding a 6,000 crore rupee bank guarantee that is due today. Sources have told CNBC Awaaz that the telecom company will now have to deposit the amount of 6,000 crore rupees by the end of today. The telecom department had sought this bank guarantee from Vodafone Idea for spectrum that the company had acquired post-2015. And ratings agency Fitch has cut its outlook on Adani Energy but affirmed the rating at BBB-, which is one level above a junk rating. Fitch has removed Adani from a rating watch negative and has assigned a negative outlook. Fitch believes proceedings and outcome of the US investigations could reveal that the group's corporate governance practices are weaker than we expected. Adani Group is facing allegations of bribery and investigations from the US Justice Department as well as the SEC. And the National Company Law Tribunal has directed Jayaprakash Associates to continue its insolvency proceedings under a single window plan. The court has rejected the previous option that allowed bids for individual business clusters. This was in response to a plea challenging the dual option approach adopted by the resolution professional. The deadline for submitting expression of interests ends tomorrow. Remember, JP Associates is facing claims worth nearly 60,000 crore rupees from a consortium of lenders led by SBI. Now, the Indian government has invited applications for the role of the IRDAI chairperson. Current chairperson Debashish Panda's 3-year term ends on the 13th of March. Yash Jain is joining us now with more details. Yash.
Well, finally, the government has invited applications for the position of the next IRDAI chairperson. It is, of course, appeared in some of the newspapers today. And as far as the last date for filing applications is concerned, that would be April 6, 2025. Now, what makes this date very interesting is that, it's much ahead of the date that the current chairman would have as his last day in the office. The last date for the current IRDAI chairperson, Debashish Panda, is March 13, 2025. But the last date for submitting applications for the next IRDAI chairman, as I said, is April 6th. Very conservatively, the process would at least take about a month when it comes to appointment of the next IRDAI chairman. And in all possibility, as per our sources, the senior most member at the insurance regulatory body, that is PK Arora, who's the member actually would handle the position of IRDAI chairman in the meantime till the permanent chairman really takes over that particular position. Apart from PK Arora, what we've been given to understand is that there are certain contenders who are in the race for the next IRDAI chairman. This includes the first name being Giridhar Aramane, who is the former defense secretary. He's likely to be in the race for the next IRDAI chairman. Ajay Seth, the current economic affairs secretary, he is also likely to be in the race when it comes to the next IRDAI chairman. But just a quick look at the 3 years of the current IRDAI chairman. It's been quite eventful. Started with the regulations on and the transition to use and file from file and use, allowing insurance companies to straight away launch a new product in the market and then apply and wait for the approval for that product from the regulator subsequently. Other one was, of course, putting limits on expenses of management for insurance companies and giving these insurers the freedom on commission payouts. Also, easing of private equity investments in the insurance sector, removing the condition of forming an SPV or a special purpose vehicle to do that. Higher surrender value for policyholders, very recent one from the regulator, but indeed a very, very large one. 100% FDI in the insurance sector. The chairperson, the current chairperson, batted that very strongly with the government, and it indeed came through.
Right, Yash, thanks so much for that. Now, shares of Gensol Engineering fell for the 10th straight session on the back of a stake sale by promoters. The company's promoters sold nearly 2.37% of their total equity, days after saying that they will buy shares from the open market to gain consumer confidence. After the latest stake sale, the promoters continue to hold 59.7% stake. The company is also planning to raise funds through a QIP and consider a stock split during a board meeting on March 13th. Gensol's shares have fallen by 47% in 10 sessions amidst allegations of falsification of loan repayment documents. Now, a New York-bound Air India flight has returned to Mumbai after a bomb threat. Airline officials said that the flight returned to the airport after a bomb threat note was found inside its toilet mid-air. The flight was carrying more than 320 passengers and is currently going under mandatory security checks. And with that, it's time now for slipping into a very short break. But coming up, a stormy start to the second leg of the budget session. Congress and the TMC seek a discussion on the alleged manipulation of electoral rolls. More on that when we come back.
India and the United States have initiated trade talks this week after threatening all nations, including India, with reciprocal tariffs starting the 2nd of April. The US government, as per our sources, has sought zero tariffs from India. Sources tell CNBC-TV18 that the US government officials want 0 for 0 tariffs for all product lines except for agriculture. This comes at a time when Commerce Minister Piyush Goyal is in US for talks with USTR Jamieson Greer and US Secretary of Commerce Howard Lutnick. This is the first time that the two sides are formally initiating talks on the bilateral trade agreement that Prime Minister Modi and Donald Trump have agreed to sign by September or October this year. India has sought more market access for goods manufactured in India, especially labor-intensive sectors. Can India offer zero tariffs on all goods coming into India, including Tesla? That remains to be seen. However, experts have been saying that India can offer 0 for 0 tariffs or eliminate tariffs on 90% of industrial goods coming in from the United States, and this is doable. While India would like the reciprocal tariffs to be set aside, sources say so far there is little likelihood of any carve-out for India. When it comes to automobiles, it is clear that Donald Trump wants American car makers like Tesla and motorcycle makers like Harley-Davidson to be sold in India tariff-free without having to set up manufacturing. As far as Tesla's India entry goes, things seem to be moving fast, with Tesla taking a 4,000 square feet space in Maker's Max City Mall in BKC, Mumbai. They're going to pay over 25 crores in rent over 5 years, and the lease deed came into effect in February this year. Tesla has also taken some parking spots on rent to charge cars. The company has also taken a space on rent in Worldmark Mall in Aerocity, Delhi, as per sources. The company has kick-started hiring for Pune and Mumbai, mainly for showroom-related roles like delivery operations specialist, store manager, service advisor, and others. Industry sources say Tesla may not be keen on manufacturing in India right now due to decline in sales globally, especially a 76% drop in sales in Germany in February. Therefore, the company may prefer to import cars into India from Berlin and sell them at the lowest duty possible. At the moment, the US administration is seeking lower tariffs on all US products except for agriculture, and India too would want to defend its core interests in agriculture, dairy, pharma, and other manufacturing sectors. Let's see what happens before the 2nd of April when US reciprocal tariffs kick in.
president is giving them an exemption for 1 month so they are not at an economic disadvantage. So the 3 companies that he spoke to are Stellantis, Ford, and General Motors. They requested the call, they made the ask, and the president is happy to do it. It's a 1-month exemption.
Now, the second leg of Parliament's budget session kicked off on a chaotic note. Opposition parties staged a walkout from Rajya Sabha over the delimitation issue and the new education policy. DMK members protested in the Lok Sabha over Education Minister Dharmendra Pradhan's remarks against Tamil Nadu. Shivani Bazaz is joining us now with a quick wrap of the parliamentary action. Shivani.
Well, yes, a stormy start to the second phase of the budget session today as political tensions ran high inside both houses of the parliament. The biggest flashpoint, leader of opposition Rahul Gandhi demanded a discussion on the accuracy of voter list after multiple parties, including the Trinamool Congress, raised concerns about alleged discrepancies in electoral rolls. TMC MP Saugata Roy claimed that identical voter ID numbers were found in different constituencies, triggering calls for clarification from the Election Commission. Now, the day also saw a major showdown between DMK and BJP. Lok Sabha proceedings had to be adjourned for nearly 30 minutes after DMK MPs stormed the well of the House, protesting against Union Education Minister Dharmendra Pradhan's remarks. Pradhan accused the Tamil Nadu government of being dishonest and ruining students' future by refusing to implement the PM Shri scheme aimed at upgrading schools. He also said that several non-BJP ruled states like Karnataka and Himachal Pradesh have already signed up, but Tamil Nadu has made a U-turn. Amidst this chaos, Railway Minister Ashwini Vaishnav also moved the Railway Amendment Bill 2024 for the consideration of Rajya Sabha. The bill aims to streamline railway operations, enhance passenger services and push for faster infrastructure development. It will now be taken up for detailed discussion in the coming days.
Because sir, आपने सही बात बोली कि वोटर लिस्ट क्या सरकार बनाती है.
मैंने नहीं बोला.
नहीं, आपने बोला क्या, और आपने सही बोला कि सरकार वोटर लिस्ट नहीं बनाती है. मगर पूरे देश में वोटर लिस्ट पर सवाल उठ रहे हैं. हर स्टेट में, हर ऑपोजिशन के स्टेट में और महाराष्ट्र में ब्लैक एंड व्हाइट वोटर लिस्ट पे सवाल उठे हैं. तो पूरा ऑपोजिशन मिलकर सिर्फ ये बोलने दीजिए, पूरा ऑपोजिशन सिर्फ मिलकर ये कह रहा है कि वोटर लिस्ट पे यहाँ पे एक डिस्कशन हो जाए. ओके. आप बनाते नहीं हो, इसको हम एक्सेप्ट कर रहे हैं, आप डिस्कशन तो कीजिए.
Tamil Nadu government has ready to sign an MOU with Government of India for accepting PM3. Few of my members, few of my MP colleagues came to see me. They came to the honorable member who raised the question. She also came to see me with honorable Education Minister of Tamil Nadu. They agreed. They went back. They have a U-turn. Many more. Speaker sir, many more non-BJP states, especially Congress, Karnataka. Let me give the example. Karnataka is accepting the NEP and they have some reservation verbally on NEP, but they are implementing PM3 in Himachal. They are dishonest, my dear friends, they are dishonest. They are not committed to Tamil Nadu students. They are ruining the future of Tamil Nadu students.
We had clearly said that we have issues with the NEP. We cannot accept it in full because 3-language policy is not acceptable to Tamil Nadu.
Okay.
And sir, the truth is, the CM of Tamil Nadu has written to the minister and the Prime Minister saying that we have issues with the NEP, it cannot be accepted in total and the funds have to be released, and he's requested the funds to be released. So Tamil Nadu or the Tamil MPs from Tamil Nadu have never accepted 3
Well, Maharashtra Deputy Chief Minister Ajit Pawar tabled the state's budget today. This is the first budget after the Mahayuti's landslide election victory. Santya Gora joining us now with the details. Santya, take us through the key highlights of this first budget since the electoral win.
Right, Ashmit. So let's start with the most important highlight from the budget. So this time, Maharashtra government was under the scanner for all the spending it has made on various welfare schemes. It was expected that the fiscal deficit will cross the 3% limit of the overall GSDP, but the state government claims that that did not happen. The budget for the year 2025-2026 is 7 lakh crore rupees, and the fiscal deficit is 1.36 lakh crore. That's what the state government says. That's what the finance minister said while tabling the budget. This was his 11th budget. Now, other than this, an important announcement is that the state government will impose tax on EVs worth over 30 lakh rupees. Now, why exactly this step has been taken, and won't it discourage the usage of EVs? Those answers, those questions are yet to be answered by the finance minister and the CM of the state. But other than this, one important aspect which everybody was looking out for was the Ladki Bahin scheme payout. Now, after this was the flagship scheme of the Mahayuti government, which was responsible in a very large, very significant manner to bring the government back to the power, to bring this alliance back to the power. So they promised after the elections, after the victory, that the payout for the scheme will increase from 1,500 rupees to 2,100 rupees every month. So it was expected that this time, this budget will see an announcement on these lines, but that did not happen. In fact, the outlay, the budget estimate for the scheme, which was 46,000 crore rupees last year, from July onwards till the end of this financial year, that has now been reduced to 36,000 crore rupees, which will also, because if we compare it to the 46,000 crore rupees, that was only for 9 months. So that is another important change which was made in terms of outlays. Other than that, the CM and the deputy CMs, while addressing the press conference, they claimed that as of now, the monthly stipend for under the scheme won't be increased to 2,100 rupees per month, because they have to balance the financial aspects of the state exchequer as well. But the state government and the CM and both the DCMs claimed that the fiscal deficit remains under 3% of the overall GSDP as per the norms. Ashmit.
Right, Sandhya. Thanks so much for that comprehensive wrap of what to take away from the Maharashtra budget. But that's unfortunately all the time that we have. It's a wrap on this edition of Business 360. More news and updates will continue right here on CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV.
Welcome to Genomics. The world is changing geopolitically and economically at a rapid clip. President Donald Trump's swift yet shifting imposition of tariffs on many regions, including allies like Canada and Europe, and his near withdrawal from the NATO has turned the world order upside down, as it were. It now almost seems like US and Russia are in one camp and Europe and China are in the opposing camp. Separately, on the economy side, with Europe going in for a 1% higher fiscal deficit, bond yields, inflation, growth forecasts have all got to be raised. In the East, China seems to be rising after almost a decade of slowdown, while Japanese yields are now at 16-year highs. To understand the seminal changes in the world and in the world's largest economy, that is the US, I have with me Professor Kenneth Rogoff, Professor of Economics at Harvard University. He has been Chief Economist at IMF and author of several well-known books, so an undoubted expert on international economy as well. Professor Rogoff, thank you very much indeed for your time. I'm going to start Thank you, sir. I'm going to start the conversation closer to your home, the United States. One of the pressing problems of investors all over the world has been this US exceptionalism over the past 12 months, particularly since the election of President Trump. Now, with fresh doubts over US growth, is this exceptionalism coming to an end?
Well, I don't think the exceptionalism is coming to an end. I think the next 10 years for the United States are going to be very strong. But near term, President Trump has just sort of intimated that, oh, by the way, a recession might be in my master plan for making the economy better. So as confused as investors were already, they're even more so.
Okay, but would you still wonder if in the near term, for the year 2025, US growth forecasts may have to be lowered because of tariffs?
Not just because of tariffs, but the sort of aggressive and somewhat random cutting of government spending, the unpredictability of policy. I think it looks like US growth is downshifting to maybe 1% towards the end of the year. I don't think that's normal, but yes, absolutely. The risks are going up and up. I mean, whatever Trump's master plan is, it's very hard to know where he's going. And that unpredictability is very difficult for investors to work around.
Okay. This unpredictability is now not just US specific. It is a global issue because most countries don't know where their own policies are headed and therefore where their economies are headed. So can there be a danger to global growth because the investment climate is uncertain?
Well, I don't want to overstate it. I mean, Europe's having a wake-up call. Europe's been in a coma the last decade at least, and now they're suddenly realizing that they need to make a shift from just aging and expanding the welfare state to trying to be more dynamic, to have their own AI industries, and by the way, to defend themselves. And I think, all of that could in the long run be good for Europe's economy. China is another matter if we're going around the world. I still don't think they're doing nearly enough to right the ship. The over-centralization of power and decision-making has been disastrous for China, and I don't yet think they've figured that out.
Okay. Well, it's good to hear that there are countervailing forces in Europe and China, which may actually keep the global growth going. I was coming to Europe in just a minute. That was the other big theme I wanted to discuss with you. But let me just finish with the US issue. How do you see US inflation? If products were to get expensive simply because of higher tariffs, are we looking at no rate cuts from the Fed and the general inflation picture? Some people have increased their forecast of US inflation to 3% by the end of 2025.
I think the risk to U.S. inflation have gone up, and the U.S. Risk to U.S. recession have also gone up. So it makes it a little bit difficult to call. If you asked me 2 months ago, say at Davos, what was happening to U.S. rates, I would say there's likely to go up as to go down. I think they're a little more likely to go down than up at this point. I think the recession risks are real. In many ways, Donald Trump has accelerated trends that I think were happening anyway. I have a book forthcoming in a month or two, Our Dollar, Your Problem, where it's a historical book, but it sort of says we may come back to the 70s in some ways. There may be another burst of inflation. I was saying 5 to 7 years, and now, Donald Trump's an accelerant of all these factors. So the risks are high. I think Donald Trump's people say, we are going to go to 4% growth at the other side of this. You can't believe how good it's going to be. I think it's more likely we're going to go to 4% inflation at the other end of this than 4% growth.
Oh, yes, I have heard of your book and the famous words of your Senator John Connolly, wasn't it? Who said, our currency, your problem.
Very good.
Fair point. I'll just come to that, this overturning of global, what is right in terms of the dollar's position. But before that, Europe, you touched on that. Europe has agreed to an expansion of its deficit after, 30 years? It's after Maastricht that we are first hearing of a higher than 3% deficit. What does this mean? Do you actually see that generating sufficient growth for Europe? Will you up your growth forecast, if you have any, for Europe?
Well, Europe's been in a torpor for sure. We're talking about Germany running a bigger deficit, and the whole point of having a strong balance sheet is to be able to use it when you need it. You're suddenly being told that the U.S. might not defend you. By the way, I don't think the U.S. is really going to pull out of NATO. We may have to rename it. Trump may insist on renaming it. I don't think we're going to pull out of it. But I think they've realized they have to spend more. That does not translate into necessarily Italy being able to spend more, Spain being able to spend more. Let's understand, interest rates have gone up. It's a different world than 10 years ago, so it's not going to be so easy. But on balance, Europe needed shaking up, and this is, as many have described as a Hamiltonian moment. You can pick your analogy as you like, but Europe has really been sinking the last 20, 25 years. It was equal to the United States 20 or 25 years ago. People forget. And so, yes, Europe can come back.
Okay. But for the world as a whole, if European, or as you say, German deficit goes up and the US deficit, it's difficult to see now how much it will come down from the 7%, considering
it's still going up. Yeah.
It's still going up, especially because the announcement is, the intent is of tax cuts.
Exactly.
Then we are going to look at a year of inflation, or maybe years of higher inflation than we are used to?
Well, it depends on what central banks do. So if central banks keep interest rates high enough, raise interest rates enough, we will not get inflation. But there are going to be a lot of challenges to central bank independence, not just because of Trump. I think that's been coming from the left and the right. So I do think eventually this will translate into higher inflation. I'm not sure about this year. That's really a coin toss. I suspect U.S. inflation, is as likely to come down as up because we may even have a recession.
Oh, yes. You said that earlier, that, there is a very good possibility. Recession risks have been raised higher by, I think Goldman Sachs did that, from 15% to a 20% chance of a recession in the United States. But Professor Rogoff, let me persist with the U.S. actions. You say that the Trump will not pull out of NATO, but he has pulled out of the World Health Organization. Do you think there is a chance that the World Bank and the IMF will also be attacked? Will there be any chance of the U.S. either not contributing or contributing far less to these organizations as well?
I think it's a very serious risk. I mean, I think it would be, particularly in the case of the International Monetary Fund, and of course I used to be there, so the listener should know that, but I think it'd be a very serious mistake. The International Monetary Fund's been very good for the U.S. economy for a long time. Countries mostly pay back their loans. But yes, I think there's a rethinking of everything. I don't know what the thinking is. I mean, it's been very aggressive, muscular. But if you're going to pull out of the USAID, that's our aid organization, I think a lot of right-wing Republicans regard the World Bank, at least, as an aid organization. And I fear that a lot of them don't know the difference between the IMF, which is fighting financial fires and such, and the World Bank. So yes, I think it's highly unpredictable. We could see a Musk-type figure appointed to the World Bank. That's not hard to imagine. I think the World Bank and the IMF are both doing very great things for the world. I'm not supporting this, but they are absolutely right to be worried about it.
Okay. I'll come back to the global economy and the redrawing of boundaries and rules of the game, as it were. But just a digression, since you have written a book on the curse of cash as well, there is this other announcement from Donald Trump, in fact, signing of an executive order of creating a strategic reserve of cryptocurrencies. At the moment, it appears to be only with, the clandestinely earned currencies and, appropriated by the law, the police. But do you think that even good money, tax money, can be used to buy cryptos? Do you fear that this is another area of instability?
Well, this is just an awful idea. I mean, of course, it's supported by the crypto community. And I have to say, so many elements of this are just, incredible. For one, if you're going to have a reserve, you want to have some sort of arm's length committee pick what would go into it instead of having the president announce what coins are going to go into it, which of course bids up their price before we buy them. But of course, the crypto community helped fund both campaigns, by the way, and in some sense, this is a payoff. I don't know where this is going, but I think right now it appears that we're headed towards another kind of financial crisis in this space if we really go whole hog on deregulating it. I hate to say how it's going to play out. That would require forecasting Donald Trump's policies, which is very difficult to do.
Yes, I will come to that as well, time permitting. But mine is, of course, an emerging market audience. So your thoughts on how this argument for reciprocal tariffs may play out? That's the biggest worry that's bedeviling Indian policymakers. Do you think this administration, the Donald Trump administration, will go through with reciprocal tariffs the way they are speaking about it now?
Well, it's a terrible idea. I'm an economist, and all the people. The Trump administration has some very good economists in it. Let's understand that, but they would get kicked out if they complain about the tariffs. So every single one's, Treasury Secretary Scott Bessent, as an example, said very sensible things. I've been impressed, but he has to say that tariffs are a good idea. They're not. And I think a thing your audience should understand is that the country that suffers the most from imposing tariffs is the one that does it. India certainly suffered from its tariff policies. They've come down, but it's not benefited, and your listeners, I think, know that. And the United States is not going to benefit from these. It's going to hurt growth. It's going to hurt inflation. On the other hand, the effects are not massive. I don't think we could overstate it. The big risk is that everyone else feels free to do it. The United States is raising tariffs. Why shouldn't we raise tariffs? And one thing I think that's not so well known is that this is actually due to work by Geeta Gopinath at the International Monetary Fund and a co-author done before perhaps she went, that when the U.S. imposes tariffs, the price gets almost entirely borne by U.S. consumers. But interestingly, if foreign countries retaliate, maybe only half of it gets borne by foreign consumers, and American exporters bear the rest. In other words, the U.S. does not win in a tariff war.
Okay, this is a very significant study, and perhaps needs to be publicized a little more, both in your country and others. Professor Rogoff, I need to take a very quick commercial break. It will be a short one. We are back with a few more questions for you on the way the world and the US economy will shape up in 2025 itself.
CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
Welcome back to this very special Indianomics with Professor Kenneth Rogoff, from the Professor of Economics from Harvard University. Professor Rogoff, thank you very much for your patience and for staying on through the break. You quoted the Geeta Gopinath article, and you said that, when tariffs are raised in the United States, it's the US consumer who bears it, unlike the experience in other countries. Now, if there is a problem of inflation because of tariffs being raised, and there is a problem of job layoffs because the federal government has to be shrunk, is it not likely that the president, the US president, will pull back some of these? I mean, why would he want to shoot himself in the leg? Probably these are announcements and will not happen.
Who knows? I mean, I honestly have no idea what's going on in his head. I had assumed we were going to put tariffs in place. They were going to be lower than he claimed. He would negotiate it country by country, and we were going to sit with them. But I still think tariffs are going to happen. What's very disturbing is how random and unpredictable they are. Obviously, the president likes leveraging his power over other countries. The trouble is that he's creating chaos in the minds of American investors, people in the U.S. economy. I think an important point that people don't necessarily realize is that Donald Trump needed 51% of voters to get elected. But the other 49% are consumers, and they account for at least half of consumption. And I'll tell you, speaking to them, many of them are terrified. And so we're seeing a pullback on consumption. And I'm not sure the Trump voters are making up for the non-voter, the ones who voted against him, pulling back. So there's a real danger that this chaos triggers a collapse in consumption that obviously would be recessionary. I don't want to overstate the recession. You quoted Goldman Sachs at 20%. Oh, I would put it higher at this point of 30 or 35% at least. But it's not more likely than not. I mean, I think 1% growth by the end of the year is where I would peg things.
Okay. Yeah, that is definitely looking worried, because in the previous Trump presidency, the president seemed to respond to stock market signals fairly actively, and I would assume it'll be a matter of time he does it this time as well. But I take your point. But, my worry is more of the international order. Post-1945, we had some kind of a rules-based order with WTO and with similar tariffs for all countries by all countries. But now with the United States going and imposing different tariffs for China already, tariffs on China alone have increased. There is a bit of a chaos in terms of tariff imposition. Do you think it gets even worse as each country imposes a different tariff for United States, a different tariff for others? You think it'll come to that?
It's hard to know how this is going to play out. And I'd say that about everything when we talk about the international order. Trump is shaking things up. We can look at the Middle East. We can look at Ukraine. We can look at South Asia. He's shaking things up. I hesitate to just say the worst case scenario is going to happen and we know how it's going to land. And I'd say the same thing with tariffs. But yes, I think it looks likely we're going to end up in a less globalized world. It's not a good thing. There are some legitimate national security issues. Let's not deny that. But I don't know what they have to do with Canada. Yeah, Canada should spend more on defense, but that doesn't seem to be what he's arguing about.
Fair point. No, I'll tell you the argument on the Indian side, especially with the automobile guys. The argument of zero tariff is seen as in favor of Tesla, so that Tesla cars can sell in India if India drops its tariffs down. But as Indian car makers point out, Tesla car would still not be competitive with Indian makers. But if the tariffs come down to zero, it's quite possible that Chinese cars will become very cheap in India. So the problem really that Indians are grappling with is, will the US go ahead when it will not even benefit Tesla? So that's why my question, will they still go for zero tariffs when it doesn't even benefit you, American business?
Well, you answered what I was going to say as the question was unfolding, that Tesla is not going to win out in the long run. It's going to be the Chinese car makers. And the question is how much the world's going to shut them out. China's surplus as a share of its own GDP is much smaller than it was, say, in 2010, when it was practically double digits. But China's grown so much that its share of world GDP, its trade surplus, is just as big. And so the rest of the world's not going to be welcoming of this. I don't know, it's going to play out blocking in Europe. We've already seen tariffs on electric vehicles. So, but I want to repeat the point that the country that imposes tariffs loses the most from tariffs. And I think that's been true of Brazil, that's been true of India, and it's soon going to be true of the United States. It's sad that the U.S. is doing this and setting such a bad example.
Yes, at the moment I'm more worried about the economic problem, but I'm glad you brought up the non-economic aspects as well. Do you think that although President Trump came with the view that he's going to end wars, the fact that he's threatening to withdraw from the NATO, threatening to, and the whole global geopolitical divisions are rapidly changing. It at the moment looks like US and Russia are on the same side. So do you think actually the potential for war or conflict increases?
I don't. I mean, I think, first of all, every U.S. president now, going back into the 90s, has been arguing for Europe to pull its weight in defense. It's really a joke, the differential between the U.S. and Europe, and finding a way for Europe to contribute. I'm not sure this is the best way. And I think as the world has become less stable, let's face it, under the Biden presidency, it did become less stable. The U.S. is stretched and stretched in order to be able to cover 3 regions of the world. Yeah. And the U.S. would like Europe to be able to take care of its region. I don't know how fast that's going to unfold. I mean, I don't want to give you some Pollyannish view that we're going to have global peace over the next 4 years. It's very concerning, but I'm not sure the U.S. is the cause of this. Okay. Again, going back to the point I was making and, referring to my book, I think Donald Trump is an accelerant, perhaps, of these trends, but they were happening anyway and would have happened even if Harris had won the presidency.
Yeah, I take your point that the trends were already changing, but it just looks like the post-Second World War order that we saw the US as a global policeman and somehow being responsible for security everywhere is coming to an end, and we don't know what exactly will replace it. Professor Rogoff, just a final question on the dollar contradiction that seems to emanate from what President Trump is saying. On the one hand, he wants the dollar to be the international reserve currency. On the other, as we all know, the Triffin's paradox, unless the US runs a deficit, we cannot have dollar as the international currency. How do you think this contradiction will play out?
Well, I think there's, particularly with the U.S. putting financial sanctions on everybody, there's quite an appetite for some diversification. I don't know for sure how that will play out. I do think the dollar has been falling. It's still pretty high. And Trump has said he wanted a weaker dollar. That was probably coming anyway. We probably will get that.
Okay. Just a final word, sir. Have you pondered on India at all? You have done several studies on India, but how do you see it emerging from this new world order?
Well, I think there's no question there's a lot of positive energy around India at the moment. For one thing, countries are diversifying away from China, and India has benefited a lot from this. The tariffs will hurt a bit, but, India still has, very strong capital spending, better growth than most emerging markets in the U.S. I don't see any reason for that not to continue. It's not helpful if the world slows down. But India has certainly been a bright spot in the global picture for the last couple of years.
Okay. It has been, we've been only listening to difficult things about the global economy. I'm glad we are at least ending on an optimistic note for India. Thank you very much, Professor Rogoff, for joining us and parsing the world order for us. Thank you very much for joining us in this conversation.
Thank you for having me.
Well, with that, we wrap up on this edition of Indianomics. Thanks much for watching.
Hello and welcome to News Center. I'm Parikshit Luthra. Foreign institutional investors have sold Indian equities worth $15 billion this year on a net basis. This pushed Dalal Street towards a prolonged sell-off period and a historic losing streak, which took a breather only last Tuesday. The sell-off wiped out over $1.3 trillion of investor wealth. There is a growing clamour among market participants for a cut in long-term capital gains in order to make India attractive for global funds once again. Currently, foreign investors pay 10% tax on long-term gains. However, they would have to pay 12.5% tax from the 1st of April 2026 at par with local investors. Speaking at the ET Awards for Corporate Excellence over the weekend, Finance Minister Nirmala Sitharaman too weighed in on the issue.
As I said, there are some taxation matters on which, particularly the Parliament session being on course, budget session that is, there's only an intermission. The session is not sine die shut. And we are assuming on Monday the most inappropriate time for a finance minister to talk on tax.
To take this forward, I'm now joined by Sunil Badla, Head of Tax at KPMG India, and also Akhilesh Ranjan, Advisor Tax Policy, PwC in India. He also is a former member of the CBDT. Gentlemen, thank you very much for joining us. Mr. Ranjan, let me begin by asking you, is there now a fit case to review the capital gains structure for foreign investors?
I don't really think so. I think a major overhaul was done in last year's budget in July. We have now a much simplified capital gains regime. You see, whether to tax long-term capital gains or not is a policy choice which countries make on the basis of their own economic circumstances. There are arguments which are against the tax, would say that you're taxing inflation, so how can you do that, or that you're preventing the switching of assets, so the markets are not building up momentum. But equally, there are very good reasons for taxing long-term capital gains. Because all gains are not inflationary. There is a substantial quantum of a proportion of the gains which are real gains, which come from valuations, from perceptions, particularly in the stock market. And it's also a point that if there's a zero tax regime for long-term capital gains or anything, it does shift capital away from productive sectors. So there are arguments for and against. I think the country looks at its own economic circumstances. I think India has examined this aspect very, very, very deeply, very well, and has a concessional rate of tax. Now, whether the increase from 10 to 12.5, as you say, is something which is driving away people, I don't think that's really the case. There are several factors, I think, which are playing in the stock market apart from the tax point.
All right. Sunil, to get you in at this stage, we have seen a major FII sell-off in 2025 alone. Many say this is only a temporary blip, but at the same time, several investors are saying that India will not be an attractive destination for foreign investors if we continue having the long-term capital gains tax. What is your thought? There is also a school of thought which believes that India needs long-term growth capital, and therefore we need to make the tax structure more friendly for foreign investors.
So, Parikshit, I think, as Mr. Ranjan said, I think there are arguments both ways. I personally believe that there are a number of reasons why FPIs have pulled out the money. So yes, there may be a need for us to look at whether we want to make it more attractive for them by, removing or reducing the long-term capital gains tax rate. Now, I can argue that, look, until 2018, the long-term capital gains were exempt completely. Okay, and when the government introduced the STT way back in 2004, the whole idea was that they would exempt long-term capital gains, and obviously the short-term capital gains tax will be, taxed at a concessional rate, which of course has now changed. So since 2018, long-term capital gains, have been subject to tax at 10%, and now it has become 12.5%. So there are arguments both in favor as well as against. The argument in favor is that, look, long-term capital gains tax were exempt earlier until 2018, whereas the arguments to retain long-term capital gains is to say that, look, since 2018, it is subject to tax at 10%. So therefore, definitely, this is not the reason why FPIs have pulled out their money from the country. That said, I personally feel if not complete exemption, I think there is a case for some reduction in the rate of tax, because what has happened in the last budget, we increased the rate of tax from 10% to 12.5% for long-term capital gains, and for short-term, we increased the rate from 15 to 20%, which is really steep, especially when you add up the education cess and the surcharge in.
Right. So what could be the reduction in both long-term and short-term capital gains, according to you? Because it's not just you, Sunil, but there are a number of investors and experts who have said very openly, including Samir Arora, who have said that scrap capital gains completely for foreign investors. And should it be only for foreign investors or for domestic investors also?
So look, doing it only for foreign investors may not be appropriate, because there is going to be that, there's going to be a discrimination against the domestic investors to that extent. So I'm not sure whether it is advisable to do it only for the foreign investors. But having said that, let's say if you have to do it, then we should do it for all. And what should be the reduction? I think on an immediate basis, if you ask me, we can go back to the rates which were applicable before last year's budget, which is 10% for long-term and 15% for short-term. There can be I think there is a scope for further reduction. So maybe we can look at, let's say, 50% of what it is today. But again, this is a matter of policy, and I don't know what call government will take. But certainly, in my view, there is a case for reduction of the rate on both long-term as well as short-term.
All right. Mr. Ranjan, do you believe that somewhere the government can review or reduce the capital gain structure for both foreign and domestic investors while we keep it, but reduce it to make India a more attractive destination for investments as well?
Well, I think the rate that we have, I mean, despite the increase, let's say from 10 to 12.5, or 12.5 is still a concessional rate, a massively concessional rate, with a timeline of just 12 months for the asset to become a long-term asset. So I don't think it's a case of overtaxation anywhere. The 12.5 increase to 12.5 was done essentially as a measure of rationalizing, bringing in uniformity in the capital gain structure, and not with a view really to tax more. And as I said, I can think of several reasons of several things that one should be looked at to see why the FPIs are moving out or they're selling, and not just be obsessed with the idea of tax.
All right. Whenever the government takes such decisions, there is always a very widespread consultation process, Mr. Ranjan. What are some of the challenges before the government, and why do you believe it is difficult and unlikely for the government to revisit the capital gain structure?
So as I said earlier, Parikshit, now the policy choice is whether to tax long-term capital gains or not. I mean, that's the basic question. And countries have their own views on that. Now, this really depends on the nature of the economy, whether gains are largely inflationary in nature, or are they based on real appreciations in values. What we see as we look at the stock market out here, there are studies which say that there is not much of a significant correlation between the tax rates and the movement of the stock indices. So it's not something that even from inflation and the movement in the stock indices. The markets in India are driven more by the valuations of businesses and by the perception of prospects of growth in the market. So in looking at India's circumstance, I don't think there's a very strong case for reviewing the capital gain structure. I mean, there's no way of bringing it down to zero. And then I think it doesn't really matter whether it's 12.5 or 10. It's not a significant difference.
Right. Sunil, returning to you at this stage, yes, we've seen the stock markets go through a correction right now. But how do we see this from a long-term lens? From a lens of India's long-term growth stories, our aim is to have a developed nation, a high-income nation by 2047. And for that, we need sustained growth of 7.8% on a year-on-year basis, as the World Bank has said, and investment to also significantly increase as part of the GDP. So if we have those long-term growth goals in mind, how does a correction or a reduction in capital gains actually help us in the long term, and not to go by the current sentiment and the stock market situation that we see right now?
So again, I think going back to the point I think Mr. Ranjan was also making, is that, see, depends on what we believe, right? And if the government's belief is that the current sentiment is because of various other things, like, weak performance of the rupee, this whole US bond yield being increased, and, sell India, buy China kind of, approach which foreign investors are taking, and so on and so forth. So if that is the reason, then I think we don't have to tweak anything. But, I personally believe, that if there is a reduction, you are actually making it more attractive for the foreign investors. And by the way, there are countries, including some developed countries, which do not tax capital gains in the hands of the foreign investors, especially FPIs. So yes, there is a rationale for us to kind of relook at how we are, taxing them. And if not complete exemptions, as I said again, maybe some kind of a reduction is something that we may consider.
Right. So, for example, countries like UAE do not have any capital gains. US offers a friendly regime. Countries such as Sweden have a very high rate of capital gains. But the argument there is the countries have a very strong social security net. If you lose your job, there is a very strong social net that protects you. But if you were to take the example of any emerging economy or developing economy, is there a precedent that India can follow?
So for example, and again, I'm just limiting my comments only to the long-term, capital gains, or just to the capital gains. So China does not tax, capital gains on listed securities. Malaysia does not tax. I think even US and UK, I believe, do not tax, foreign investors on the capital gains. So yes, there are precedents where the long-term capital gains on listed securities are not subject to tax in the hands of the foreign investors.
All right, Sunil Badla, Mr. Ranjan, thank you so much for joining us on the program. There is a big debate, of course, going on. The finance minister was also asked this question at the ET Awards, but she said that Parliament is in progress right now, and it would be wrong to comment on any tax-related matter while the Parliament is in progress. So she did not confirm anything. She did not deny anything either. Let's see what happens in the days to come. Time for a short break, but coming up, India and US are discussing ways to reduce tariffs, say Indian government sources. A special discussion with former Foreign Secretary Kanwal Sibal when we return.
Now, every day you have some added uncertainty around US tariffs, trade, etc. So I think it makes sense to wait for a bit. in the last term of President Trump, where there were some China tariffs put there, and China put some tariffs on US products, which they've already done, where they put some tariffs on US grain. And US is a significant exporter of soybean to China. So when those tariffs came in, basically the trades rerouted. China imported from Brazil, Argentina instead of the US, and US, instead of exporting to China, exported elsewhere. What happens is that it makes the trade just a little bit less efficient. And therefore, if anything, it's got a positive impact on the market, as you said. The concern is if there are widespread tariffs, then it actually affects economic growth and
Welcome back. You're watching News Center. The big international story we are tracking this evening. India and the United States are engaged in discussions to reduce average applied tariffs. Sources have told CNBC-TV18 that the discussions are at a nascent stage. We have also been given to understand that this development is seen as part of India's broader effort to lower tariffs through a series of bilateral trade agreements. This will follow similar steps with countries like Australia, the UAE, Switzerland and Norway. This comes a day after President Trump claimed that India has agreed to cut tariffs way down. Speaking to media, Trump went after India's tariffs once again, stating that US can't sell anything in India because it's too restrictive. Commerce Minister Piyush Goyal was also leading an Indian delegation to Washington, D.C. He held talks with US Commerce Secretary Howard Lutnick and US Trade Representative Jamieson Greer. Joining us right now is former Foreign Secretary and India's ambassador to the United States, Kanwal Sibal. Ambassador Sibal, how do you see the kind of frontal attack that Donald Trump has been making against India, saying that it's impossible to sell anything here? And India, by the way, and I'm quoting him, India, by the way, has agreed to significantly bring down tariffs. How do you read these statements? And also, to put in context what Howard Lutnick actually had to say, he went on to say that we're not looking at a product-by-product deal with India. We want something broad-based. We want something at a macro level. We don't care what you offer to the rest of the world. You need to have a special relationship with the US.
Well, you know, Trump is bullying the rest of the world, including India, on this tariff question. After all, US is a huge market, and it imports, I don't know the exact figure, but a few $1 trillion worth of imports from various countries. Now, if this, if these exports to the United States market is disrupted, which means that the countries that are exporting to the United States will be in a great fix. They'll have to find alternative markets, and it will not be easy. So Trump knows what he's doing. He's openly bullying, but he knows exactly what he's doing. He's totally changing the basis on which international trade has been taken so far. He's also totally rejecting the WTO disciplines. He wants bilateral agreements with countries on trade, where he thinks he has the upper hand. So it's not any, of course, on India, he's very vague on facts and figures, which is a pity, because as you may recall, he said in one of his speeches that the trade deficit with India is $100 billion, whereas in fact it is almost $46 billion. So when he says that the United States can't export anything to India, this again is a back of the hand statement, which sort of means nothing, because after all, their exports to India are about $46 billion. So you can't say that the United States can't export anything to India. With regard to Lutnick's thing, they are making a big mistake, and we have to persuade them why they are making this mistake, because we can have a bilateral agreement with them. And this is allowed under the WTO, and this will then exclude MFN treatment. Because if we go ahead and give not a product-based in bilateral negotiations with the United States, but across the board, then basically it's not the United States that's going to benefit most from it. It'll be China. And surely the United States doesn't want that. Therefore, the whole approach is wrong. And it is actually to get his way one way or the other. The other thing is his tendency to make a running commentary when negotiations are taking place behind the scenes. Now, it is a fact that India and our Commerce Minister has gone there with a very positive mind. Instead of being negative about tariff reductions as we've been in the past, the entire attitude today is different. There's a lot of intensive study has been done by India before this meeting has taken place as to where we can actually go in for tariff reduction, which will satisfy the Americans, and what we can therefore extract in exchange from the Americans. Yes.
Right. Ambassador Sibal, we've seen from the time of the union budget that India had been making concession. We reduced tariffs on fully built cars, above 40,000 US dollars, from about 100% to 70%, even on Harley Davidson or high capacity motorcycles over 1600cc and even less than 1600cc. We reduced tariffs in the budget, and also for certain electronic items. So we've been making those gestures for the US. The US knows this, but they definitely want more. I'd like to draw your attention to what some highly placed sources told us on Saturday, that it is very difficult to reveal what's happening in negotiations. We are putting our sensitivities forward, but the current negotiations must be seen in the light of how India reduced the average applied tariffs for countries like Norway, UAE and Australia. Does this give you an indication that yes, India will reduce the average applied tariffs across the board with the US and probably bring it somewhere to the same level?
You see, we have had these FTAs with Australia and with EFTA and with the UAE. So what this high-level source is simply saying is that we have gone down that road with the countries with which we have signed an FTA. And so if we sign a multi-sector trade agreement with the United States, we'll go down that road with the United States too. We have already demonstrated our willingness to do that. And with regard to the concessions made in the budget, that was a kind of a softening posture that even before the Prime Minister visited the United States, it was a message to Trump that we are willing to make concessions to the United States on tariffs. And this was not reciprocal. We didn't ask for anything in return. It was simply a show of goodwill and our intentions. Hoping that would be registered. And it was, because in the joint statement, you'll find a reference to the steps that we took in the budget to open up more trade opportunities for select American goods. But Lutnick is quite wrong when he wants India to make these concessions across the board, unless this is negotiated very, very seriously and deeply between the two sides, where there is some reciprocity, where we have shown our willingness that we can open our economy to more imports from the United States, as against which we will expect that we can export more to the United States. If a target of $500 billion has to be reached, it can't be on the basis that America gains from this and India doesn't. It has to be a two-way process.
It has to be a win.
But
Ambassador Sibal, I'd also like to ask you about what the RSS affiliate Swadeshi Jagran Manch had to say earlier today. In their National Council meeting at Raipur, they passed a resolution saying that any bilateral trade agreement with the US must also protect small farmers in the country and India's small entrepreneurs. They say that the US and Donald Trump know exactly what they're doing, something that you've also said. They don't think that the WTO is working. They want a bilateral trade agreement. And RSS affiliate also feels that, yes, bilateral trade agreements today are more relevant than multilateral agreements. But at the same time, India must also have a nation-first approach, protect ourselves in our own sectors of strength, and protect our farmers and entrepreneurs. What kind of domestic pressures arise in trade agreements or trade negotiations like this? You're no stranger to diplomatic negotiations. What are some of the sticking points or resistance points that we are going to see from our own domestic industry?
The US knows, and the rest of the world knows, that when agriculture has been discussed in the WTO, we have resisted. And we have a consistent position. In the Doha development round, we had very hard postures on agricultural trade. In fact, we asked the West to reduce their trade subsidies on agriculture, on the subsidies to agriculture, etc., etc. So the United States knows that India will not, beyond a certain point, open up its agriculture in a way that will harm our small farmers or our farming community in general. But in specific areas, if you're going to import walnuts or from other
Washington
kind of,
apples.
Washington apples or something like that, we can do that. We can do that. After all, it cannot be a rigid posture that we will not at all yield on anything. Cranberries, well, how many cranberries people eat in India? So there are areas in which we can really allow their agricultural products to come in, but there will not be, I'm convinced, it's nothing to do with RSS and the munch that is pressing for India not making any concessions which may harm our farmers. Irrespective of that, India will not do this because this is a very politically sensitive issue. But some would be done in exchange for what we'll be able to sell also some of our agricultural products to the United States. It'll have to be a give and take. But the important thing to register is that India is now in a different mood. It is not in a defensive mood or a negative mood. It knows that it has to have a bilateral multi-sector agreement with the United States that will involve concessions, but these concessions should be balanced so that we can also politically so that we have also gained from this. And this will be the driving...
It has to be a win-win partnership, and it cannot be a clean slate for the United States, as you pointed out, Ambassador Sibal. We've run out of time, unfortunately, sir. It's always a pleasure to have you here on News Center and CNBC-TV18. Thank you once again. That's all we have time for on the program. Goodbye.
Commodity, in which case that becomes a negative. On a ton-mile trading pattern basis, it's good for shipping. But if it affects demand for commodities, then that's bad for shipping because of general economic impact.
Masterpiece, and it's not your average art show. Light into Space isn't just about breaking boundaries, it's shattering our very perception of reality. Curated by the renowned Via Art Foundation from New York, the first of its kind international exhibition brings together thought-provoking works of light and space artists from the 1960s and 70s. Can you tell us and share your experience out here?
So this is the first time that I've actually come here, and I've flew down from Bangalore for this. And as we're looking at it, for me it was quite different because the kind, it's basically, according to me, I felt it's like the way you see it through your eyes, the way you perceive it. So it was quite different. So I really liked it.
What has been your favorite art piece so far?
So my favorite was one of the glass pieces that was displayed on the second floor. Why? Is because it's really interesting how just a simple piece of glass molded into such shapes give subjective illusions to everyone, and that's just really pretty and really refreshing to see.
Spanning 4 floors of NMACC's dedicated visual arts space, the exhibition transforms industrial materials, fluorescent lights, polished metals, mirrors and reflective paint into interactive masterpieces. It's not
Now to our headline guest of the morning, Treasury Secretary Scott Bessent. It's great to have you here. Great to have you on the set. So I think in general, people would call this what we're doing kind of a radical departure. I think from decades of what we've seen as far as our global trade policy. We're, as the leader of the free market world, we have always been eschewed these tariffs, et cetera, I think. Can you just make the case that when we come out on the other side of this, we're going to say, wow, it was really, really worth it. I think you started to do that yesterday. You started to talk about what that looks like. Can you fill in some of the blanks on how you see this playing out?
Sure, Joe. And I don't think it's a radical change. It's just a much-needed course adjustment. And when we go back and look at what's happened, there's a new paper out called the China Shock. And it talks about what happened post-2004, that some of the communities recovered, but the workers never recovered. And that it was much more devastating on a human level. And what we are trying to do is make free trade fair trade, because the trading systems have become incredibly imbalanced. You see it with these gigantic trade deficits that we run. You see it with the big surpluses that other countries are accumulating. So we're looking at tariff barriers, non-tariff barriers, currency manipulation, government subsidies, and in the EU, some of these gigantic fines that they're putting on our tech companies just because they see a big pool of capital. And we're going to push back on those. And at the end of the day, President Trump's been saying tariff is his favorite word. I think reciprocal may be his second favorite word. And we're going to put this at the feet of our trading partners on April 2nd. We're going to come out, talk about who's a good actor, who's a bad actor, to what degree they have put up barriers against us, and it'll be a choice. Either they can drop all the market manipulation and things like that they've done that have hurt American workers. And if they do that, then we could have more frictionless trade, or we'll put up the tariff wall, we'll collect a lot of money, and we will make the system fairer.
A couple of things. I think you've made the point that unlike the printing of too much fiat currency, which might be an underlying cause of inflation, the tariffs don't cause long-term inflation. They could cause some price increases, but not long-term. But then at the same time, you said that Americans don't necessarily just want everything to be really cheap. They want our workers to be employed here. And that the prosperity here doesn't mean being able to buy cheap goods. It means being able to live the American dream through having a job and having a future, et cetera. So we're going to have higher input costs forever.
So what, higher input costs forever? No, it's the tariffs are a one-time price adjustment, and everything else the administration's doing, we're not getting much credit. As of yesterday, energy prices were down 15%. Crude was down 15% since Inauguration Day. 10-year rates are down, mortgages are down. The spreads between the 10-year rate and mortgages have come in. So we saw we saw mortgage applications pop up last week. I think if we can keep on that trajectory, and Joe, the American dream is to be able to buy a house. We can't import houses.
But this could all be a reflection of the economy slowing down.
As an investor who used to spend their day investing in all this stuff, do you look at the 10-year, do you look at all of the signs that you just talked about, WTI and everything else, and say that is the work of the government and a newfound confidence in what's happening to the economy, or that's actually a concern about what's going to happen to the economy?
Well, I think it's both, because we could have the worst of all worlds, because, look, and I'm not new to this. When I was on your show last time, I've been saying it for 6 or 9 months. I believe that the Biden administration, and it's back to Joe's question, on working Americans, what is the American dream? But the Biden administration created this bad equilibrium where the top 10%, people in this room, probably most of the people watching this show, top 10% of Americans are 40 or 50% of consumption. And that is an unstable equilibrium. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down. And could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period. there's going to be a detox
You know, I
period.
think that temporary pain that you've acknowledged, that the president has acknowledged, I think the question becomes, is temporary pain the new transitory inflation? How do you know that we get to the other side of this, and how long do you think it actually takes?
Well, look, there's an adjustment. We'll see whether there's pain. What we are trying to do, I talked about it at the Economic Club of New York yesterday, we are trying to transition from public to private. I talked about we are going to have safe and sound regulation to get our banking system going again. So the banks should be generating loans to private companies. Employment should be from private companies, not from government. And I'm confident if we have the right policies, it'll be a very smooth transition.
Let me ask you this. I was with a whole bunch of CEOs last night, and they were talking about investing in the United States, question about bringing manufacturing back here, what the tariffs would do. And there's sort of a very interesting, almost behavioral science question, which is how long do the tariffs either have to be in place, or do people have to believe that they are there and permanent forever before the companies decide, okay, actually we are going to invest, knowing or thinking that maybe they're actually going to come off later? How do you think about that?
Well, look, I think that most CEOs, and tariff is kind of the word of the moment, but I actually think what is going to determine the corporate behavior is going to be, do we have good tax policy? Can we make the Tax Cuts and Job Act permanent? Are we creating energy security so that they have the access to cheap energy? Are we going to deregulate, which is another big story of what happened the past 4 years?
Right.
The rationale for tariffs, it's jumped around a little bit, and I can give you, I wrote a few down. Fentanyl is why we're doing this, I guess, currently with Mexico and Canada, and there's been...
And China. They supply the precursor ingredients for fentanyl.
Yeah. Reciprocal trades, you even have some of the skeptics kind of go, well, that makes some sense. Want to bring in domestic manufacturing, obviously, what you've talked about. Trade deficits, do you view those as inherently bad? I know the president always points to that, but we do consume, and we're always going to consume more than the rest of the world. And if you do indeed want a strong dollar, it seems like it's something we're going to have to live with. A couple of other ones, punishing bad behavior, security concerns with China. That's a whole slew of reasons to put on tariffs. And it just, at this point, I guess critics would say it looks a little haphazard, the way they go on, they come off. We talk to Mexico and Canada. Okay, we talk to the automakers. They don't want us to do it, so we're not going to do it. It just seems like it's being levied in a somewhat haphazard way. Is that not fair?
Of course it's not fair, Joe, but that's what you all do. So,
not all.
Look, it's not linear. It's an organic process, but if we were to look back to a similar process over, well, President Trump's talked about it in his first administration, he talked about it in the campaign trail, he's talked about it since November, is the need for Europeans to fund their own defense. And you just had a very long conversation with Pascas, and that all of a sudden, voila, this week, after 25 years of baiting and cajoling, President Trump achieved what 5 other presidents couldn't achieve. The Europeans are going to up their defense spending. The German debt brake is coming off. That was not a linear process. That was not always an attractive process. But now the Europeans say that they are going to pay their fair share.
I mean, this could all make sense in terms of the art of the deal. I mean, I could see it working, but I could also see it not lasting months or even years, the tariffs. I could see, because it does seem near term, it could be disruptive to the stock market, it could be disruptive to the bond market, it could be disruptive to the economy and to jobs and everything else. But if there's a method to it where, maybe they don't go on April 2nd, if the president gets what he wants, are we necessarily going to be in a tariff world for the next 4 years?
Well, look, I think some level of tariffs are going to be necessary, just given
long term.
Well, we'll see long term, but just given the level of imbalances, and the other thing too is, like, if we take China, China is the most unbalanced economy in modern times. They have a very different economic system than we have, and we have let them export their economic system to us, which has resulted in lower wages, loss of the manufacturing base. One very good example would be, as you could see, President Trump is scouring the earth to make sure that we have our strategic and critical minerals. Right. That's great. But 85% of the refining of those and processing happens in China. Every time a Western company sets up a processing firm, Chinese competitors drop their prices and put them out of business. So,
how connected in your mind are the tariffs to the later conversation you're going to be having this year around taxes? Meaning that you need the tariffs to deal with certain budgetary issues. And then, of course, the question is going to be what the tax piece looks like. And then, of course, the next question is going to be whether the tariffs then stay on to capture whatever savings you're trying to get so that you can make the budget work.
Right. So, Andrew, I was in the investment business for 35 years. I thought I understood how crazy CBO scoring is. And now that I'm on the other side of the wall, I can tell you it's really crazy. And very unlikely that we are going to get any credit in the CBO scoring for tariffs. But if you look back, the China tariffs, which the Biden administration has kept on, has brought in hundreds of billions of dollars. And so we will be able to, those are going to continue, likely go up. And then we'll see what the other levels are. But in terms of the actual budget negotiation, tariffs won't be part of the pay-fors. It will be something that's in the background.
It's a sensory and spatial experience designed to engage and challenge the way we see the world around us. The exhibition is open to the public until 11th of May, with tickets starting at Rs 199. Also, the entry is free for senior citizens, children under 7, and students of fine arts, design, and architecture. The exhibition is open to the public until 11th May 2025. So what are you waiting for? Check out the space and let us know in the comments below. In Mumbai, Zinia Barya. Let's talk about your 2008 Olympics match. Tell us about your whole experience. That was your first Olympic match. What was the feeling? What was going on in your mind? Tell us all about it.
I think it was in 2008 and I was 18 years. And when I won my first international title, I was only 16 and I was there in the international circuit, and a lot of these Chinese and a lot of these Koreans were actually, they were worried like some Indian is coming and they're actually giving us tough competition, because before me, we didn't have a female badminton player who was actually playing at that level, who was actually winning those international matches. Of course, we had Prakash sir and Gopi sir who did well, but I was just, when I started playing badminton, I used to ask my mom this question, why badminton? I don't know. It's such a difficult sport, and you have the Chinese in quarters, semis and finals, they're everywhere. So she used to be like, no, for me, you are the champion, you're going to do it, and just believe in yourself. And
Commerce Secretary Howard Lutnick joins us now. Secretary Lutnick, welcome. Good to see you.
Great to see you.
It's been a bit of a roller coaster, so we'll start with the latest news, which is the breathing room that President Trump is giving to the automakers, a month now, for those tariffs on Mexico and Canada. Why 1 month, and why just the automakers?
So it's not likely to be just the automakers. I mean, the president is going to decide this today, but he's talking about it. But I think it's likely that it will cover all USMCA compliant goods and services. So that which is part of President Trump's deal with Canada and Mexico are likely to get an exemption from these tariffs now. This comes from that Canada has done an enormous amount. They've offered us an enormous amount of work on fentanyl, and so is Mexico. Matter of fact, the president and I are speaking to our Mexican counterparties later today, this morning. So we think this is likely. The likely outcome will be sort of in the middle. So USMCA compliant goods and services will be excluded.
Now, you will get a reprieve for 1 month, or you will get a reprieve altogether from these new tariffs?
Well, the reprieve is for 1 month. Remember, the month now is about fentanyl and about the border. So they've been working hard to close the border, but we're not seeing the reduced number of deaths, of autopsy deaths from fentanyl. And the president is just right on that topic. He is going to protect American lives, and he's being very, very tough on it. But let's face it, if you're not tough on protecting American lives, what's the point of being the president of the United States? He is so strong and focused on protecting American lives, and he's going to crack down and make sure this fentanyl is not coming in. That's why he's raised the tariff on China. Remember, in 2019, President Xi offered Donald Trump, when he was president, that he would put the death penalty on anybody who made the fentanyl ingredients. And the president is looking to get that in place, stop these ingredients and stop fentanyl coming in. Now, April 2nd is when we begin our reciprocal tariffs. So if you think about it, what he said was, okay, between now and April 2nd, I'm just going to give USMCA, I'm going to set that aside from these tariffs, but just for this month. And then on April 2nd, it's not that this reprieve starts, it's that on April 2nd, the reciprocal tariffs start. How you treat us is how we expect to treat you. And you have no idea what Canada does. I mean, the dairy products and all this other stuff, it's got to end.
So, and I have a lot of questions about April 2nd, but first on the fentanyl, you said that he wants to see fewer deaths. Is that the metric here for when these tariffs end? I mean, because according to U.S. Customs and Border Protection agents, only seized 43 pounds of fentanyl at the Canadian border last year. So is that a metric? Do we want to see that go down to zero? How are you judging when they've done enough?
Well, how funny is that, right? Like, if I seize less, does that mean, like, the stuff they haven't seized hasn't gone through? I think autopsy death, as horrible as that is to say, should be the statistic.
But a lot of it is Americans smuggling it over, right? It's not just Canadians.
Well, look, crooks are crooks, but I got to stop the flow across our border. We've got to stop the flow that has these ingredients being made in Canada and in Mexico coming into our country. We've got to close the border, which we're doing a better job of, obviously record low numbers, but we need to see fentanyl deaths decline. So that is the statistic.
So are we
looking
at daily autopsy deaths? Like, how do we do that? How, as a business, do you figure out what that's going to look like and when it ends?
Well, I think what you see is that this month, my expectation is the president will come to the agreement today, and hopefully we will announce this today, that USMCA compliant goods will not have a tariff for the next month until April 2nd. That includes the autos, and the autos were the lead in getting this deal done. But also Canada and Mexico have done a good job offering us ever more work to prove to us they're going to cut the fentanyl deaths. And then April 2nd, we're going to move into the reciprocal tariffs, and hopefully Mexico and Canada will have done a good enough job on fentanyl that this part of the conversation will be off the table, and we'll move just to the reciprocal tariff conversation. But if they haven't, this will stay on. Black and white, this will stay on. We need to protect American lives.
Is there any discussions with China about what they're doing on fentanyl ingredients and deaths, which I know has been a problem?
Well, President Xi offered President Trump in 2019 that he would put the death penalty on if you made the ingredients for fentanyl and opioids. He offered it in 2019, and he didn't do it. And the president has heard that and said, I'm looking for that. End fentanyl ingredient production in China. Just end it, or you're going to pay 20%, and they're paying 20%. So it's a win-win. If they stop, great, we save Americans. And if they refuse to stop, right, then the cost of their refusing to stop gets higher and higher and higher.
100%, but there's also a cost for American business and American jobs and American farmers. I mean, last time around, 2018, 2019, the Trump administration had to subsidize the farmers. Well, guess what? China just slapped 15% tariffs on U.S. agriculture. So is there going to be payments to them?
No, I think what's going to happen is when you get to reciprocal tariffs, you're going to see the most positive, explosive benefit to American farmers in the history of America. I mean, that is what's coming. We are going to use our tariffs to knock down the protectionist walls of the world. We have let everybody into our market, and they have blocked us, all of these markets. I mean, we had Modi in from India, and he was bragging he has 1.4 billion people, and those 1.4 billion people won't buy a bushel of American corn. This is going to end, and Donald Trump is on it. And on April 2nd, he is going to start smashing down those walls and letting our American farmers thrive in the world. They have Stockholm Syndrome. They've never been able to actually export the way they should. Our farmers, our ranchers, right, our fishermen, this has got to end. We need to be able to export, and we're going to break the walls of all these countries that protect themselves and let us in. We let you in, you let us in.
100%, but the problem is then they go into retaliation mode. So we sell a lot of agricultural products to China. It's an important market for our farmers, and now there's higher tariffs, so it makes our farmers less competitive on the world stage. And if we go into more tariffs, then they will just do more back. And I guess where does that end up?
Okay, look, this month is about fentanyl, and the president is very, very focused on saving American lives. First and foremost, this month, the month of March, is about saving Americans' lives from fentanyl. But come April 2nd, we're going to focus on breaking down these barriers. So it's a couple of weeks away, but we are going to smash down the barriers of trade. America has left itself wide open. We have a 2.5% tariff, and even the VAT is 20%. It's amazing. India has almost 50% on average. China over 50% on average. I mean, you've got huge tariffs, non-tariff trade barriers. And here's what I learned yesterday. You know what the Chinese do? When the government buys products, they pay 20% premium to the key companies so they can subsidize them, so they can attack us. This stuff is going to end, and Donald Trump is on it, and he is going to end it. And America has never seen the growth that it's going to feel as Donald Trump rips down the barriers that these other countries have put out, rip down these walls, and let our farmers and our ranchers and our fishermen thrive.
So, Secretary Lutnick, then, what are your expectations on April 2nd, given the data you're taking in right now? How significant are the tariffs going to be in your mind at this point? Do you have a sense as to what it's going to look like, more broadly speaking, here with all of our trading partners?
Well, if our trading partners did nothing, then obviously, let's say a trading partner has a 20% tariff rate on us, then I guess we would have a 20% tariff rate on them. And they won't go up because if they go up, we'll go up. And my expectation is it starts high and then it starts coming down. But most importantly, those trade barriers come down, our ability to export completely explodes, and then what you're going to see is massive importing of factories, production. I mean, the scale of people going to come and build in the greatest economy in the world is the likes of which no one's ever seen. When the president says the golden age is coming, I mean, I'm meeting with these companies. They're all coming. The big car companies, they're all bringing it back. Everybody's going to do manufacturing here. The growth rate in American production. Remember, every trillion of investment in America is 1 point of GDP. And he's already brought in, he announced the other day, 1.3 trillion, and the factories are coming, and it's going to be massive.
She's a housewife. She's just a housewife. She's not even a international level coach, or she's not someone who's seen what international badminton is. But she was like, you are my champion. You're going to do it. And with her belief, I was in the Indian team when I was only 13, senior Indian team.
Wow.
And I won my first international when I was only 15, 16. So these things happened in my career really, really fast because of only one person's belief. And of course, the coaches come in, the trainers come in. But I think the first Olympic was, in fact, so early in my career that, I was like, my mom wished that I have to become an Olympic champion, and I'm here. I'm here so early, and I'm actually getting closer to winning the medal. In 2008, I lost in the quarterfinals, and I still, that one match gives me a lot of sleepless nights because it does, because that even after having the medal, I was 11-3 up in the third set. And then I was actually getting all these things in my mind, saying that my coach was like, ek din tu world champion banegi. My mom was like, ek din Olympic champion. Not pressure, but I was happy that I actually was going near winning a medal. I was happy, I was excited that I'm actually doing it with my training, with my coach's belief and everything, I'm doing it. Suddenly the game just turns, and then she's just picking up everything. The rallies are going really longer, and she's everywhere. She's all over the court, not leaving anything. And after 11-3, you won't believe, I just got 2 points and she went on winning the match, 21-30. After that, I'm sitting there and I'm talking to my coach, what happened? Because every rally was a big rally. I didn't even do silly mistakes to lose the match. What just happened? So I was like, when I thought about it even more, I was like, next day I better start training to get the medal in the next Olympics. So yes, that match tortured me a lot, but I think it gave me that lesson as well, that you should not get too excited also sometimes. You have to control yourself. When you are actually going to achieve your goals, you have to control yourself, try to relax yourself. In fact, in that time, when I started doing well, I didn't have a mental trainer or a trainer. Only Sir, Gopi Sir was everything to us. And he being a coach, how much he could have helped in other things as well. So I feel, agar wo time pe I had a better mental trainer or someone who could give me advice about it, that you should just think about the next match, just think about the next point. तो उतना मतलब मैं उस मैच पे excited नहीं होती. But I was so happy that tournament gave me so much of belief. And in India, everyone started to go to know what badminton is. And they were like, Saina is really doing well in badminton. And in 1 year, I was there beating all these Chinese. I won the Indonesia Open. I became world number 2. So in 2010, I won 3 Super Series.
Hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. A sell-off in the last hour wipes out early gains for Sensex and the Nifty. Mid-caps and small caps underperform with sharper cuts. Rupee weakens sharply against the US dollar. India and US are discussing ways to reduce tariffs, say Indian government sources. This after President Trump claims that India has agreed to cut tariffs way down. Commerce Minister Piyush Goyal was in Washington last week. Sources hint at potential tariff cuts similar to bilateral trade agreements with Australia, UAE and others. India and European Union begin a 10th round of negotiations in Brussels to seal a free trade agreement and another agreement to protect investments. Both parties look to hedge their risks with a trade deal amidst tariff threats coming in from the US. The Indian government invites applications for the post of chairman at insurance regulator IRDAI. Current chairman Debashish Panda's 3-year term ends on the 13th of March. Sources say Economic Affairs Secretary Ajay Seth and former Defence Secretary Giridhar Aramaname could be among the possible contenders. Stormy start to the second leg of the budget session. Congress and the TMC seek a discussion on alleged manipulation of electoral rolls. DMK MPs protest after Education Minister Dharmendra Pradhan calls the Tamil Nadu government dishonest, uncivilized and undemocratic for doing a U-turn on the agreement on PM Shri schools. Maharashtra Deputy Chief Minister Ajit Pawar tables the state's budget, allocates 36,000 crores towards Ladki Bahi scheme for FY26. This is 10,000 crore rupees lesser than the allocation last time. Pawar says that the government will announce an industrial policy with an aim to attract investments worth 40 lakh crore rupees and create 50 lakh new jobs in 5 years. Former Central Bank Governor of Canada, Mark Carney, wins the leadership race of the Liberal Party to replace Justin Trudeau as Prime Minister. Carney is likely to call for a general elections as soon as Trump's tariff threats put the Liberals in pole position to win the polls. Well, let's start with a quick check on the stock markets. The Sensex and the Nifty failed to hold on to early gains. A sell-off in the last hour of trade took the Nifty below the 22,500 mark. The Sensex, meanwhile, lost over 200 points. The mid-caps and the small-caps saw sharper cuts. The mid-cap index was down 750 points and the small-cap index was down nearly 2%. The rupee also weakened sharply against the US dollar. The Indian currency was down by more than 45 paise against the greenback. Bond prices, meanwhile, managed to hold largely steady. Well, the big story that we are tracking this evening, India and the United States are discussing ways to reduce tariffs, according to the Indian government sources. This comes a day after President Trump claimed that India has agreed to cut tariffs way down. Trump's top economic officials reiterated that reciprocal tariffs on nations like India will kick in from the 2nd of April. Here is President Trump and his top economic lieutenant on India and the tariff threat.
India charges us massive tariffs, massive. You can't even sell anything into India. It's almost restrictive. It is restrictive. You know, we do very little business inside. They've agreed, by the way, they want to cut their tariffs way down now because somebody's finally exposing them for what they've done.
Now, April 2nd is when we begin our reciprocal tariffs. So if you think about it, what he said was, okay, between now and April 2nd, I'm just going to give USMCA, I'm going to set that aside from these tariffs, but just for this month. And then on April 2nd, it's not that this reprieve starts, it's that on April 2nd, the reciprocal tariffs start. How you treat us is how we expect to treat you.
At the end of the day, President Trump's been saying tariff is his favorite word. I think reciprocal may be his second favorite word. And we're going to put this at the feet of our trading partners on April 2nd. We're going to come out, talk about who's a good actor, who's a bad actor, to what degree they have put up barriers against us, and it'll be a choice. Either they can drop all the market manipulation and things like that they've done that have hurt American workers. And if they do that, then we could have more frictionless trade, or we'll put up the tariff wall, we'll collect a lot of money, and we will make the system fairer.
Well, Parikshit Luthra is standing by with more details on this ongoing negotiations between the India and the US. Parikshit, tell us, what are your sources telling you?
Well, trade negotiations are complex, and this one with the United States is no different. Well, Commerce Minister Piyush Goyal was in talks with USTR Jamieson Greer and US Commerce Secretary Howard Lutnick last week. He was there for about 3 days, and he had a round of conversation with each of them. Clearly, the Indian government has put forth to the US sensitivities on different subjects, including agriculture and dairy for that matter, and also what India can do. Sources tell us that India and the US were also close to finalizing a mini trade deal towards the end of the Trump administration, and for some reason, it did not happen. Currently, yes, India is considering reducing the average applied tariff across product lines for the United States, just the way India has done it for countries like UAE, Australia and Norway in the past. Sources tell us that current negotiations with the US should be seen in the context of what India has done with other FTA nations in the past. And currently, this is a bilateral trade agreement that is being negotiated. US is, of course, asking for preferential treatment, saying that we don't care what you're offering to the rest of the world. You treat us like a special partner. This has to be a special relationship, and we can't go product by product. It has to be a broad-based, macro-level deal that brings down tariffs altogether. So it could be 0 to 0 tariffs that the US is asking, or for bringing down the average applied tariffs to a rate that US charges on Indian products. Let's see which way those negotiations go. But there are domestic pressures for India as well from the industry and also from the Swadeshi Jagran Manch, which is an RSS affiliate, which has gone on to say that we must follow the nation-first approach in these negotiations. It's good to have bilateral trade agreements, and they're preferable over multilateral agreements. But at the same time, interests of small farmers and entrepreneurs must be respected, and they must not lose out in this trade agreement with the United States.
Presented by HSBC. Co-presented by Cognizant. Knowledge Partner, the Udayti Foundation. Associate Partner, Reliance Industries. Industry Partner, FICCI.
She towers to the sky, but the earth keeps her grounded, unswayed by the ravages of time. She is woman, she's woman. Deep is her fire, she is forever woman, woman. And dauntless she rises to towers, she moves up to the sky. Hey. Oh, oh, oh. And unfettered as the forest is she. She's like the rain falling down softly and beautifully. She'll always be viewers forward, moving through time like she's meant to for ages. Woman, she's a woman. She rises through seasons, she towers to the sky. A woman, she's a woman. Hit it now. Woman, she's a woman. She has the power, and she is forever a woman. And your woman, dauntless she rises to seasons, she powers to the sky. And she's a woman, yeah, she's a woman. And she flies, and she rises, and she flies. She's a woman, she's alive. Unfettered as the forest is she. You clap with me. We're celebrating women tonight. Lovely to see the men here. Will the men clap for the women as well? We're celebrating each other. We're doing it so right, and we're doing it for each other, and we're celebrating each other. That's just the way it goes on in our peace. She's woman. Thank you. Good to be here. Love that. Love us all. Know a lot of people that are sitting here tonight. Hit it, Avinash. Don't wait for me. This next one's a song called Savan Raga. It was on my last album. I write all my music. The lyrics for this one were written with me by Amitabh Bhattacharya. And it's just one of those beautiful songs. Lovely to see you all here. I know a lot of friends. This is a song called Bundon Ki Kashish. Savan, 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 Tehra, Tehra, Aminder Sandhu, Behka, Behka Dil, Javan, Sehma, Sehma, Behka, Behka, yeah, I love the clapping. Crowd, ladies. Thank you. Hi. I love it. पहचाने दे. Hit it, Karan. Thank you so much. Thank you. Have a great evening ahead.
For the evening, CNBC-TV18's Shruti Mishra.
What a phenomenal start to the evening. A huge round of applause once again, ladies and gentlemen, for the incredibly talented Manasi Scott. Good evening, ladies and gentlemen. It's my absolute pleasure to welcome you to HSBC Presents CNBC-TV18 Future Female Forward, the Women's Collective, Season 3, co-presented by Cognizant. For 2 seasons, Future Female Forward has been building momentum, leading the change. Through initiatives like College Connect and Leadership Circles, we've built a powerful network of change makers, tackled systemic challenges, and celebrated the remarkable success stories of women pushing boundaries. We've driven meaningful conversations on amplifying women's representation in leadership, entrepreneurship and decision-making roles, constantly seeking to open new doors to progress. Now, this year, our theme is Path to Peak. It's not just about ambition. It is about the strategic, structured, and unstoppable ascent of women in leadership and beyond. The mission is clear. Close the gap, break the barriers, redefine leadership. As Ruth Bader Ginsburg said, women belong in all places where decisions are being made. Today, we take one step closer to making that a reality. We don't just discuss the change, we make it happen. Before we begin, a heartfelt thank you to our incredible partners, our presenting partner, HSBC India, co-presenting partner, Cognizant, knowledge partner, the Udayti Foundation, industry partner, FICCI, and associate partner, Reliance Industries Limited, for their unwavering support in making this initiative stronger with each passing year. Now, before we start the Season 3, let's have a look at our journey so far. And now, ladies and gentlemen, to officially set the stage for this evening, please join me in welcoming a woman who serves as an inspiration herself, Shireen Bhan, Managing Editor of CNBC-TV18.
Wow. It always gives me goosebumps every time I see a room full of women, which is not a room that I very often walk into. So it's wonderful to see you all here, men included, because we don't want to just be talking to the women, we want to be talking to the men as well. Ladies and gentlemen, creating an equal opportunity world is not a challenge of this decade. It's not even of this century. It's a battle that women and men have waged over the ages in the hope of creating a more equal, a more fair and just society. In fact, today marks the death anniversary of India's first female educator and a champion of women's rights, Savitribai Phule. She would have been 195 this year. So can we take a moment to applaud what women like her have accomplished to make it possible for you and me to stand here today? We stand on the shoulders of these giants, and it would really be a travesty if we dropped the ball at a very crucial point in our history to push for real change and lasting impact. Ladies and gentlemen, once again, good evening and welcome to the third edition of the Future Female Forward, the Women's Collective. I cannot even believe it's been 3 years since we started this campaign. In fact, we've just marked International Women's Day, and while we acknowledge the celebrations, we must also confront the stark reality behind this year's urgent theme: invest in women, accelerate progress. It's not a smart slogan alone. It is a call to action, and it's based on evidence and data. The World Bank's Gender Strategy Report for 2024 to 2030 calls out the negative consequences of disempowering women and why countries need a holistic approach of including public, private and the civil society to drive change. The IMF estimates that emerging and developing economies could boost GDP by about 8% over the next few years by raising the rate of female labor force participation by 5.9 percentage points. That's the average amount by which the top 5% of countries reduced the participation gap in the 2014 to 2019 period. And it is precisely this need for urgent action, for investment, for unlocking true possibility that brings us together here tonight to explore how India can truly inhabit the expansive realm of potential, especially for its women and therefore for its economic future. I ask you, ladies and gentlemen, can a bird truly fly soaring to its full height with just one wing? Can India achieve its $30 trillion ambition by 2047 if it unleashes only half of its talent? The answer unequivocally is no. With a shared vision of an India where every woman is given an opportunity to thrive, that is why Future Female Forward Season 3 shifts the gears decisively. We've spent 2 seasons dissecting the why, and why we know intimately now. And now Season 3 marks a deliberate gear change. The urgent question is how? How do we accelerate change? How do we move from diagnosis to scalable, impactful solutions? And this season is really about drilling down to the practical, to the actionable, and the measurable. Tonight, we gather here not to ask for permission. We're here to chart out an action plan to dismantle barriers. Because, as Simone de Beauvoir profoundly observed, one is not born, but rather becomes a woman. Society constructs barriers, imposes biases, and limits potential. And Future Female Forward Season 3 is about breaking the silos, engaging with stakeholders to drive tangible next steps in policies and practice to make change possible. It's about ensuring that every woman has the opportunity to become who she is meant to be, unhindered by societal constraints. We will showcase the very best in industry. We will dissect policy interventions and hold up a mirror to leadership asking, in fact demanding, how we're closing the gap. What are the benchmarks? Where's the accountability? And let's be clear, echoing the intent behind the EU's Transparency Directive, sunlight is in fact the best disinfectant. Transparency in pay, in opportunity, in leadership pathways. This isn't the tyranny of diversity and inclusion, but the bedrock of equity. This rigorous examination, this demand for transparency and accountability is not for the faint of heart. It takes courage to make it happen in reality. As Schiller so powerfully declared, daring and again daring and always daring. Season 3 is about daring to challenge the status quo, daring to act, and daring to hold ourselves accountable for delivering real, measurable change. Finally and importantly, this isn't a solitary endeavor, ladies and gentlemen. We need all hands on deck to collectively push ahead. Once again, I'd like to thank all of our partners, HSBC, Hitendra Dave. We couldn't have been here without you. It's been an unwavering, steadfast partnership that we've enjoyed over the last 3 years. Vicky, Cognizant, and of course the Udayati Foundation coming on board as our knowledge partner, because it goes back to what I just said. We are here to tell you how if you choose to make the how happen. Let me end with the immortal words of B.R. Ambedkar. I measure the progress of a community by the degree of progress which women have achieved. So let us uphold the spirit of our Constitution. Let us not fall short on the promises that we make to India's daughters. Let us, ladies and gentlemen, be truly future female forward. Thank you very, very much, and I hope you have a fabulous evening today. Thank you.
Thank you, Shireen, for that powerful and inspiring address. I request you to kindly stay back on stage. Ladies and gentlemen, tonight is more than just a gathering, it's a declaration. For years, we've spoken about bridging the gender gap, we've debated, we've discussed, but now it's time for action. Tonight, we take a decisive step forward as we unveil the Future Female Forward, Close the Gender Gap Charter, a blueprint for real measurable change. The Charter sets clear, actionable goals for increasing female representation at all levels of leadership. And to lead this momentous unveiling, it is only fitting that we invite someone who represents a global institution that has actively championed inclusivity and leadership diversity. Please join me in welcoming Hitendra Dave, CEO of HSBC India, to the stage, and let's unveil the Charter. Ladies and gentlemen, keep the applause going as we unveil the Charter.
I am fearless, I'm driven, I'm a change maker. They think they can stop me.
Ladies and gentlemen, the Future Female Forward Close the Gender Gap Charter. are honored to have some of the most influential voices driving change across industries. It's my privilege to invite Rajesh Warrior, EVP Global Head of Operations and Chairman and Managing Director, Cognizant India, Prabha Narasimhan, MD and CEO, Colgate Palmolive India. We also have Radha Dheer, CEO and Country Head, India, JLL, Pooja Sharma Goel, Founder and CEO, the Udayti Foundation, Ashish Dhawan, Founder and CEO, the Convergence Foundation, Zia Modi, Founder and Managing Partner at AZB & Partners, Ajayita Shah, Founder and CEO, Frontier Markets Consulting. We also have Pratima Reddy, Country Speaker, Merck India and MD Merck Specialities, Chandrika Bahadur, CEO, Antara Foundation, Shraddha Shashidhar, Miss Diva Universe 2017, Neha Kirpal, co-founder Amaha Health, Rekha Koita, co-founder Koita Foundation. We've got Malvika Mudgal, social entrepreneur, grassroots worker, Jagan Foundation. Ladies and gentlemen, a huge round of applause. Requesting all of you to kindly sign the charter and mark this memorable day with your presence.
I'm a change maker. They think they can stop me, but can you stop the river? Every time you shut a door, I will find me a window. I'm the fire you can't douse. I'm the girl in the mirror. Every time you shut a door, I will find me a window. I'm the fire you can't douse. I'm the girl in the mirror.
Ladies and gentlemen, a huge round of applause as they all sign the charter. And we request all of you to sign it as well. Once you leave, you can all sign it out. It's just right outside this ballroom. Request you all to kindly put the chart up front for a quick photo op. A heartfelt thank you to each of our distinguished leaders for your presence and unwavering support. Thank you so much. Ladies and gentlemen, do not forget to share your favorite moments with us using the hashtag FutureFemaleForward and tag us on your social handles like X, Instagram, Facebook and LinkedIn as well. It's now time to unveil the report which serves as a benchmark for progress. It remains the backbone of our Close the Gender Gap Charter, making it possible to measure the impact. The Gender Parity Report is more than just numbers. It's a reflection of where we stand, the barriers that still exist, and the areas where we need to push harder. Let's take a look at the key findings.
Future Female Forward started with a vision to amplify women's voices and transform leadership norms. Over the years, it has evolved from sparking conversations to creating measurable impact. We've mainstreamed the dialogue on gender parity, shared bold ideas, and delivered actionable strategies that drive real change. Now, entering the third year, we move from vision to action. Partnering with Udayti Foundation as our research backbone, we continue to lead with purpose, aligning with the ambitious vision of a high-income India by 2047.
If India were to increase its female labor force participation to where it is now, to the average for a middle-income country, that will add 1 percentage growth, 1 percentage point to growth rate, that alone. Even at 50%, combined with other things that may happen in the economy, India can achieve the objective of becoming a high-income country by 2047.
This year, we measure gender equity across India, Inc. with the Close Gender Gap Index. Powered by Udayti Foundation's research, it provides data-driven insights to inspire leadership inclusion. The data is clear. 50% of graduates are women, yet only 18% hold leadership roles. This is not just a gap, it's a leadership crisis. The CGG index reveals where the barriers are and how to break them. The Udayti Foundation team analyzed data from 2,000 plus NSE listed companies using BRSR framework for comprehensive reporting. The findings expose critical gaps in leadership pipelines, mid-career retention, and workplace culture. Gaps persist across key sectors, with some industries leading and others falling behind. High exit rates point to growth stagnation and biased appraisals. Gender diverse leadership drives growth. Companies with inclusive leadership report 21% higher profitability and better innovation. Udayati Foundation is committed to 30% women in leadership by 2030 with the Close the Gap 30 by 30 vision. The data is clear. The roadmap is ready. It's time to act.
Well, it's truly time to act, and requesting Pooja Sharma Goel to please join us on stage to decode the findings of the report and dig deeper into the insights which will help us in moving ahead with our mission. Ladies and gentlemen, a huge round of applause for Pooja Sharma Goel.
Good evening, everyone. It is a real honor to be here and to be launching India's first gender parity index among the who's who of corporate India. A big thank you to Shireen, the CNBC Network 18 team, and the team behind Future Female Forward for bringing us all together here and shining the light on this very important issue. Before we talk about the index, I want to bring your attention to one number, 196 million. That is the number of employable women that are currently out of India's workforce. If you consider the gross enrollment ratio in education, more women are graduating than men. Today, over 51% of undergraduate enrollment in science courses are women. But when it comes to participation of women in formal jobs, that number comes down to 18% and unfortunately has stayed stagnant at 18% over the last 5 years. This is a big opportunity we are sitting on. The government of India and state governments absolutely realize it. And therefore, India has one of the biggest gender budgets in the world. It was 6.8% last year and 8.9% this year. There are significant allocations for working women's hostels, childcare centers, women entrepreneurship schemes, you name it. At this juncture, it is critical that the private sector, government bodies, and civil society organizations like us come together to take advantage of this talent pool and this momentum and this unique position that our country holds on the international stage with all the geopolitical shifts that are currently on today. Close the Gender Gap, Gender Parity Index is a big step in that direction. Udayati started work on Close the Gender Gap program 30 by 30 about a year and a half ago. And the idea was to start with data, capture data from over 2,000 NSE-listed companies through their annual reports and BRSR reports. We looked at workforce participation, pay parity, etc. And then in collaboration with Wipro, we created dashboards to make all of this information available to decision makers in corporate India. The platform is called Close the Gender Gap Data Hub, which is available on the Udayati website. Many of the organizations that we are closely working with are in the room. Metropolis Health in Health, Quest Corp and Team Lease in Flexi Staffing, Dr. Reddy's and Biocon Biologics in Pharma and Life Sciences, Mahindra and Mahindra in auto manufacturing, Wipro and HCL Technologies in IT. They're committed to making this happen, and that partnership is extremely important for us to move forward. Now, through the Gender Parity Index, Firstly, we want to systemically highlight organizations that are leading in the gender diversity and inclusion and share their story of what they have done so far and how they have accomplished it. And really, it is not about the exact number, because when we start looking at numbers, healthcare is at 44%, whereas power and energy is at 2% and 3% respectively when it comes to women's workforce participation. So it is about the trajectory. It is about the systemic processes that organizations are building for sustained progress. The Gender Parity Index includes key data from BRSR report, which is gender disaggregated workforce data, pay parity, provision of benefits, for example, parental leave, daycare facilities, turnover and retention rates, and POSH data. Secondly, we would like to use this platform to encourage other companies to follow suit and enhance gender parity practices and improve, like Shireen said, transparency in gender data reporting. Sunlight is the best disinfectant. The CGG index assigns weightage across 3 thematic areas: women's representation, retention, and leadership. And all of those details are available on the Udayti website. The big idea is to have more corporate leaders and organizations commit to improving gender representation in their organizations and sectors, and then we work together to dismantle some of the barriers on the demand side, like hiring, retention, advancement, and return to work. Frankly, some of those are low-hanging fruits. When we are working with companies in logistics, there are companies that are committed to having more women, but when they are putting up posters for finding delivery folks, they'll say delivery boys want it. So women will not even apply. Those are low-hanging fruits. We can fix those. Some of them will be complex challenges and require sustained, dedicated effort to dismantle. Safety, security, safe and affordable housing for women when they move to other cities. I want to promise Udayti's unequivocal support in working with different stakeholders to make that happen. And of course, pro bono, because we are a not-for-profit organization. And I request your support by joining the Close the Gender Gap CEO Consortium in actively shaping not only this gender parity index, but also our efforts towards getting to 30% women's workforce representation in corporate India from the paltry 18% where it has been stuck at over the last 5 years. Thank you so much.
A big thank you to Pooja Sharma Goel and the Udayti Foundation for making data-driven impact a reality at Future Female Forward. Now we turn to the core of our mission, creating equal opportunity workplaces. Research from McKinsey and World Economic Forum proves that diverse leadership teams drive higher profitability and innovation. Yet challenges remain in the form of persistent gender pay gaps and underrepresentation of women in leadership. So what does this mean for India's business landscape? How are top leaders addressing these challenges while unlocking the true potential of diverse workplaces? To lead this important conversation, I request Shireen to kindly join us back on stage and to bring us exclusive insights from the front lines of corporate leadership. It is my absolute privilege to welcome our distinguished speakers, Hitendra Dave, CEO HSBC India, Rajesh Warrier, EVP Global Head of Operations and Chairman and Managing Director, Cognizant India, Vartika Shukla, Chairman Engineers India. We've also got Prabha Narasimhan, MD and CEO Colgate-Palmolive India, Rajesh Jejurikar, Executive Director and CEO at Mahindra Group. We've also got Ameera Shah, Promoter and Executive Chairperson, Metropolis Healthcare, and Ashish Dhawan, Founder and CEO, the Convergence Foundation. Ladies and gentlemen, a huge round of applause for our panelists. Shireen, with that, it's over to you.
This makes me so happy, ladies and gentlemen. I've been doing this for 25 years now, and invariably, when I'm at one of these events, I'm usually the only woman on stage with a long line of men in suits. And this is what we're hoping to do, achieve gender parity, and we've done that starting here on our panel this evening. So many, many thanks to my panelists for joining us here this evening. Hitendra Dave, this started as a conversation that both of us had on a flight, and today, 3 years on, it has become a movement. As you look at where we are today, and Pooja was just giving us the data, while we have mainstreamed the conversation and progress has been made in some areas, there's a long road to cover. It's a long distance to go, Hitendra. From the experience that you've had so far with the movement as well as with HSBC, what's next?
Well, again, I guess what's next is data, right? I mean, Pooja just showed us the data. You can argue with everything except facts. Right? So once the facts start to show that this conversation is beginning to have impact, now, we should be proportional in our expectations. I don't expect 10,000 companies in India to look at this program and say, hey, we need to change our diversity or hiring or inclusion policies. But it is very difficult today to be running a reasonable sized business and not be having this conversation. I think I can't believe any board or executive committee or top management teams don't talk about this, right? I think how to go about it, there is a debate. Should we have hard numbers? Like our board, right? I mean, I don't know if everybody is aware here, but we are a fairly large organization globally, right? I mean, 50% of our board is women. And that wasn't done as a conscious DEI thing. It just so happened that 50% of the directors that the bank was looking for were very, very brilliant women, right? So similarly, at some of our senior most executives, I think you are aware, our CFO is possibly not just a woman, possibly the senior most Indian woman in the banking industry, right? She's from India. It's like she's not grown up abroad. She studied here and went there, etc. So we have many stories to tell. But to answer your question, I think we need, and I know you're going to do this over the course of this session in this year, we need the real leaders, women leaders in particular. I think their insights, their stories, what it took them, was it such a significant sacrifice? How did they manage it? You need young girls and women in schools and colleges to get inspired, right? I mean, political leaders, business leaders, executive leaders. So that would be next, where it's, where it moves from being an agenda number 6 to just being a natural. It's like product innovation, or it's like customer centricity, right? When boards and executive managements get to the point where they talk about diversity and inclusion in the same vein as customer or things like that, I think that would be a good start.
Well, speaking of inspiration, I promise you we have not just on this panel an inspiration set of speakers, but we've got plenty more coming up right through the course of this evening. So there's going to be lots of food for thought and lots of great role models that we will showcase here this evening. But Vartika Shukla, let me come to you. We're talking about the private sector's involvement. Let's talk about the public sector's involvement as well. I don't know how many of you know this. Vartika Shukla is a graduate from IIT Kanpur and is today one of the few women leading a public sector organization. She leads Engineers India Limited. So Vartika, I want to understand from you, through your own journey and the arc that you've been able to make, what do you believe has changed, but what do you believe needs to change from here on?
Thank you, Shireen. It's a delight to be part of this very prestigious gathering, wherein we have thoughts from all sectors of the industry and both the genders together, working towards a common goal. One thing that differentiates public sectors, to put in point, is, and we talked about pay parity to begin the conversation about how to bring equality in the workspaces for both men and women. In the public sector space, one thing is very clear. Everybody gets the same pay and gets the same raise. So that settles one part of the issue, which is...
And it's an important issue.
It's a very important issue. Yes. And I have seen that. In fact, I was reading Sheryl Sandberg, and it was... it's a big issue in terms of even negotiations which women have to do in spaces to actually achieve and get what they truly deserve. Going back to the point as to where we are, what needs to be done. I think the one thing is, and if I specifically look at the engineering space, or I look at, there are many disciplines where the parity is already achieved. You look at medical sciences, you look at the legal space, you look at the financial space, IT space. There are good spaces where we have equal representation at all levels, as Mr. Dave also mentioned. But looking at, particularly in the engineering space, I think it needs to attract a lot more talent. We need to plug leaky pipelines as we go along the career journey of women. Public sectors are putting in a lot of enablers in terms of policy. We heard the allocation of the percentage of our budget into women development through a lot of programs from various ministries. But to enable that, to put it into force, to actually needs commitment at leadership level, which is there. I'll give you some examples. There are companies in the public sector space who have all manned process plants, who have, like we have now, women in construction, which is not easy as a space to be in. So looking at all these aspects, looking at conscious policy creation, looking at continuous monitoring, making sure that step by step we go up in the percentage, and make sure that we give spaces in leadership position to women. I think that would, in a holistic way, kind of move the needle towards steering their careers to higher decision-making processes.
So this is the good news, that at least as far as pay parity is concerned, the public sector has been able to achieve that. So we're hoping that the private sector takes notes from that. But Ashish, to the point that was being made both by Pooja as well as Vartika, India perhaps has some of the most progressive policies when we talk about women in the workforce, whether it's maternity leave, maternity benefits, or it is gender budgeting, as was just discussed. So capital is relatively less of a constraint today. Why do you believe then that we're still at that 18% number as opposed to the aspirational 30% number that we're hoping to get to by 2030?
No, thanks, Shireen. I think a lot of it has to do with the mindset of our leadership. I mean, the data is very clear that 18% of the 12 million employees in the top 2,000 companies are women. So it's only 2 million women. I think we have to make a pledge that I think the top 2,000 will probably have 18 million employees by 2030. And if we can get to 30%, that's 5.5 million women. That'll be a dramatic change. It's almost 3x in terms of number of women. And these are some of the best jobs. These are the largest companies in India. I think that even though companies pay lip service to this, I don't think they work hard enough on this issue. Because in every sector, we see outliers, and we don't see companies making the effort to achieve what's already been achieved by outliers in India. So if you take, say, the banking sector, 26% of the banking sector, the workforce are women. But there are 2 banks in India already that have crossed 40%. And there are others that are stuck at 10%. Our neighboring Sri Lanka is at 45%. Vietnam's at 68%. I think we can easily get to 40%. As a sector, if the leadership is committed to it and really wants to make it happen. There are often excuses about women working in branches or feet on street. Yeah. That's the challenge. But there are banks that have actually shown that it's possible to make it happen. Similarly, if you look at the pharmaceutical sector, it's only 11% women. But there are pharma companies at 25% and there are others at 2%. So I think what Pooja and team have done is really looked at those outliers to dissect what they've been doing, to make those role models, and companies can actually speak to their peers. These champions, in a sense, are more than happy to share what they've done. And I think if what we need is leadership to sign on for concrete targets in 2030. So I, company X, am at 25%. I commit to get to 35 or 40%, share it with the board, and have an action plan you disclose publicly. I think that's what will get us there eventually. And you, Shireen, have to help us to get those CEOs to sign on the dotted line.
So here's the backstory. This is something that we discussed and debated. Should we, as part of the charter, put down a number where we get people to commit to that particular number? And finally, we pulled back because we said that, look, these are things that will perhaps require board approval. These are things that people will have to take to different stakeholders within the organization. So we didn't want a situation where we ambush people, because this is really not about that. This is about getting people to voluntarily sign up and come on board. But this was a discussion that we had between the CNBC and the Udeti team on whether we should put a number down as part of the charter. And we're hoping to get there. We're hoping that this conversation will lead us there. But Prabha Narasimhan, let me come to you now. And you know, my fear today, what globally, and I did address that in the remarks that I made early on, there's this talk about the tyranny of diversity and inclusion. Do you worry that we're likely to see a pullback, a retreat from some of these issues that require urgent intervention and action?
So thanks, Shireen. I think firstly, Shireen, the minute you combine diversity and inclusion together, I think the likelihood of pullback is very, very low. Because what that says is that we're going to get in people who are different, gender being one of the ways you can get in people who are different, and make sure that they feel included in an organization enough to be able to stay and progress. So I'm really glad that you combined the two words together, because the concern really is, and if I may, to your point, the concern on putting targets is that it signals, whether you mean it to signal or not, that you are willing to compromise on meritocracy. And I don't think there is any woman in this room or anywhere else who wants a suggestion that there is a willingness to compromise on meritocracy. I think the answer may be a little bit to the question is, as you get them in for interviews, for discussions, that the slate is balanced, and then let the best person win to get the job. And if I may, sorry, to Mr. Dave's point on, if I may say to the women in this room and beyond, there are many jobs that we've traditionally thought are not a great idea for women. And coming from an FMCG background, sales is one of them. Attracting women into sales actually is very, very difficult, because all said and done, it is a difficult job. But honestly, it is fantastic learning. And if you put yourself out there, the rewards that it gives you are tremendous. So if I could just urge the women in this room to take these challenges and take some of these leaps, it would really help as well.
No, I couldn't agree with you more, and I think that does deserve a big round of applause, because, you know, very, very often, because of the biases and because of the societal construct and patriarchy, let's call it what it is, women often abdicate spaces for fear or because it's not in their comfort zone. And I think it is time that we challenge some of those norms. It's time that we challenge some of those roles. And today we will be honoring many women who have done exactly that, who've braved the odds and decided to do what they felt was the right thing for them to do. So you will see them in just a moment from now. But Rajesh Jejurikar, you know, this is something that Mahindra & Mahindra has decided to prioritize. I know this right at the leadership level, from Anish to you. You are championing the idea of making the workforce much more diverse and inclusive. Explain to me what you've done that's working, and what are you setting targets for yourself, for instance? What are you going about addressing by way of culture to ensure that this changes?
Yeah. Thanks, Shireen, and great to be on this panel. And let me just build from where Prabha left off, and which was the last part of your question. And that's around targets. And, you know, that's something we've debated at every level, including at our board, and taken a very conscious call that we will not have targets. And we actually consulted with many women leaders in the organization, and every one of them felt that that's the worst thing we can do. Because no woman, like you said, wants to feel that they made it because there was a target or a quota. So, you know, every woman wants to get there on merit. It's the role of the organization to create enablers and facilitate the process. And that, I think, is the key leadership role. So, you know, while we have targets on so many other parameters, I think this is one area we've got to realize that there is a sensitivity and a softness and an emotion which needs to be addressed, and a commitment which has to come truly from within. And also a mindset, especially in the industry some of us operate in, that it's not something that can happen instantly and overnight. And so I'll just take a couple of minutes talking about things which are important, things which need focus. So, and I'm going to talk starting from the workforce, because, when we talk about overall numbers as a nation by way of contribution of women to the workforce, getting women in manufacturing, which is really the core of our business, really is a very high priority, and that's where we are putting most of our focus on. So firstly, manufacturing lines which we are creating, concepts like paint shop will have only women. Some of the assembly lines, we've identified some cells which will have 40–50% women. The critical thing here, firstly, is reaching out to villages around the plant and creating a perception of it being a safe workplace, because that is very important in the society in which they live. So the ability to transport them in and back. When women go back late at night, we have a system by which the HR gets message that they've got dropped home safely. So, there are multiple things, cameras around the plant. So really, creating a very positive word of mouth that it's safe for women to be here. So that we think is a key enabler. The other one is working closely with the training institutes like ITI and many others to create. We have a program called Kabil, and we were associated with 2,000 institutions, which is skill building. So firstly, how do you create the desire, then the education, and then, of course, the retention. So that's at the entry level. As we go up the rest of the leadership hierarchy, and, I think the key challenge has been women dropping out of workplace. Yeah. And which is where you spoke about the maternity policy. So we've introduced a maternity policy a year back, which gives a lot of flexibility to women, supports them with allowances during that period of time. But really what they need is the time flexibility. And we give almost a window of 3 years with complete flexibility on timing. And the other program we've launched is something we call SOAR, which is, we just started, and that's not S-O-R-E, it's S-O-A-R, which is to attract women back who've taken a gap in their work careers. And then run a mentorship and training program to help them get back. So we're starting with 25 women we've just started who have had 5 years experience and taken a break of 18 months to 3 years and then want to come back. So I think we've got to address this at multiple levels, starting from the entry level. We often try to solve for this in industries at the leadership level, and I think that's not the right place to start. The leadership is to focus on how to make it happen.
Absolutely, and we do need to have a bottoms-up approach. I completely agree with you there, and then work your way to the top. But, you're talking about safety, and I remember one of our panelists here on Future Female Forward had spoken about when they were setting up their manufacturing facility, and it was in the hinterlands in I think, Rajasthan somewhere, and they decided to do something which was innovative. They decided to call the mothers-in-law into the workspace to come and have a look at where their daughters-in-law were going to go to work. And once you got the buy-in from mothers-in-law, you actually saw the rate of women joining the workforce go up significantly. So, you've really got to customize solutions. You've got to think out of the box, and you've got to think on your feet. Speaking about maternity and return to work, Amira Shah, let me come to you, because Amira has got 3 children, twins, and her 5-year-old just celebrated a birthday yesterday. So I want to understand from you, Amira, because this is a big challenge, especially when we talk about women opting out of the workforce. As someone who's gone through this yourself, as a leader, how do you shape policy? How do you shape decisions that will provide a facilitating, enabling environment to ensure that women don't find it easier to opt out?
Frankly, Shireen, it's very easy to opt out, because I think once you have children, there's a nice cocoon at home in which you feel very comfortable and happy and safe, and you don't feel the need to go out at all. And honestly, salute to the women who actually choose to say, you know what, I'm going to give it my all at work, I'm going to give it all my home, and I can actually do it all. And it's amazing, because it's such a hard thing to do and to balance. It's really incredible. But I think if we truly want to see transformational change in India, I think we don't need to look that far. We need to also borrow from other countries. And just to bring up the elephant in the room, right? First, the question is, why should we close the gap? That's the first question. Honestly, when I've been on the board of so many companies, when I bring this point up, sometimes people just say, but why? It's neither helping my business, there's no business case, it's not helping my P&L, it's not doing this, so why should I do it?
And in the US, you talked about the tyranny of diversity. I mean, in the US, you see with the new president coming in, a lot of that is going backwards, right? So it just tells you that corporates react to either carrot or stick. The idea of doing the right thing is not necessarily so common and so prevalent. So there was a sort of a stick at that point in the US. People were pushing for D&I. Now it's not there, so everyone's sort of going backwards. So in India, we got to decide, hey, are we going to use carrot or stick? Because something is needed. Because people alone just to do the right thing, here we may be preaching to the choir of the converted, but that may not be true for the rest of the country, even the top 2,000 businesses in the country. So in my mind, we really need to talk about transformational policy. If you look at Vietnam, for example, they've created some amazing incentive programs for corporates who are hiring more women. Right? They've created different tax structures. Besides creating, like you talked about, workplace safety, they've created, manufacturing companies have created all-night work women shifts. So only women work at night in that shift. So whether the mother-in-law is comfortable or not, she knows that, hey, there's no other man there, my daughter or my daughter-in-law is safe. So I think there are some very fundamental things other countries have done. We don't have to reinvent the wheel. We can borrow those ideas and make it true for India. But I think the most important thing is you have men in power today. Getting those men in power to identify with a problem which they don't feel today because they have not gone through it is difficult. It's difficult for them, it's difficult for the women. I think we need a carrot or stick. We need a push from government, or we need a pull, an incentive scheme to drive it till it becomes a habit. Nobody questions, that's at some point men's arms used to be cut off when they made a mistake, Taj Mahal and guillotine and all of that. And in today's corporate world, that would be just ridiculous. But that was normal at the time. I mean, today the fact that we're talking about women getting paid differently just seems like a ridiculous idea. Yeah. I mean, 20 years later, I'm assuming this is not going to be common practice.
Well, we certainly hope it won't be common practice. That's really the idea. But you're right in pointing out that there needs to perhaps be a carrot and a stick approach. And look, the stick has worked to some degree when we decided to mandate company boards to actually bring women independent directors on board. You actually saw the data tell you that there was a change. So sometimes, as Amira was pointing out, you do need the stick to be wielded to make change happen. But Rajesh Warrior, I want to understand from you, we're also talking about living in an age of AI and hyper technology, and is that, to your mind, going to leave the women more behind, or is that in fact going to provide a way out and a way forward?
Shireen, first of all, congratulations on your season 3. We in Cognizant are proud sponsors of what you're doing here. I think being a flag bearer on Future Female Forward is just fantastic. Thank you for having me on the show. Your question about AI, let's take it in 2 buckets, right? AI is definitely going to disrupt every industry that we know in different degrees. We have done a study along with Oxford Economics a while back, which looked at about 1,000 jobs comprising of 18,000 tasks, and it tells us that 90% of the jobs will get disrupted, of course, in varying degrees. Now, you look at that lens and you look at the problem statement that you're talking about. There are 2 buckets I would like to put this problem into. One is existing workforce. For the existing workforce, there's a great opportunity for every organization to make sure that the existing workforce is completely trained on AI, irrespective of gender. I have very little worries there because everybody in the workforce will get trained based on the job that they're doing. You have upcoming workforce, which is coming in from universities and colleges, which is the other bucket which I have. And I think it's imperative that industry actually does a partnership with academia to make sure that the colleges and universities have the access to the latest and the greatest in terms of curriculum, in terms of ability to impart education, so that all the men and women coming out of colleges have an equal opportunity to learn the latest and the greatest technologies. Today it is AI. 6 years back, if we were having this conversation, Shireen, we would have been talking about digital technologies. Tomorrow it will be something else. But I think there is an opportunity for us to bridge any divide that exists with the current way of technologies. But there is a lot of onus on the industry to make sure that we turn around and partner with universities. And Cognizant is, as an example, we are doing that. We are partnering with some 19 different colleges to be able to achieve that. So there's a great opportunity for us to bring parity.
there is an opportunity there, and we need those linkages and those partnerships to work. But Ashish, I want to come back to Amira's point about the why. And I think we still continue to deal with the why in many, many ways across different sectors. And it doesn't matter what the World Bank says, it doesn't matter what the IMF says in terms of the benefits that the economy will accrue on account of unlocking women as consumers, women as workers. As you speak with CEOs today, as you talk to people in the boardroom today, is the why still an issue that is that's begging an answer?
I think it is, Shireen, and that's why just a mandate may not be sufficient. I think we do need to, there is plenty of research out there that clearly shows that having a higher percentage of women in the workforce, in leadership positions, lead to better outcomes. But I think companies have to experience it themselves. And in India's case, they have to break a lot of barriers. I'll tell you, there are, if you look at the factory, and out in the field, those are the two areas where across industries, why is FMCG stuck at 11%? Why is pharma at 11%? Why is banking at 26%? It's because we have in India this myth that it's not safe for women to be out there. We've decided, in a paternalistic manner, that's the case. There are companies that have broken the barriers, where in a logistics warehouse, you'll see women doing jobs that you could never imagine earlier that they would do on the shop floor. But that story is not told enough. And I think that's what's holding us back, is the fact that it's going to lead to a better, more productive work environment, and it's definitely possible. Our labor laws, by the way, are still archaic. There are, if you look at the list of...
But that's for men as well. Overall...
No. If you look, there are in most states, that women are prevented from working in quote-unquote hazardous industries. And if I showed you that list, you'd be appalled.
Yes.
And in some states, they're prevented from working at night.
Yeah.
Now, that's changing, but changing too slowly.
Changing too slowly, you're absolutely right. Bhartika Shukla, let me ask you, we're talking about next steps. In your experience, leading engineers in India today, how do you draw more women into manufacturing, into engineering, into construction? How do you retain them? How do you ensure that there is, in fact, a pipeline of leaders who also happen to be women?
So before I get on to that, I'll just add to what Ashish mentioned. I think we need to believe as leaders, we need to believe as boards that we have the power and ability to change things, change laws if we are convinced. And I'll supplement this by an example. One of our sister PSUs who runs a refinery in Panipat actually went out there and changed the law for night shift working in the state. And today, one of their plants is completely manned by women. And they could do that because they were convinced that we need to show that as an example of not just breaking the barrier, but also having other women believe that it is possible for them to work in a safe environment, to actually be as competent, as able as men. And that's important. I believe that this reinforces the fact that women in general are, see that as an example to aspire, to have ambition, to have examples which are right in front of them, which actually provides them that work environment. So it's very important for us who sit in positions to make that change, to actually use these opportunities to create platform. And I'm telling you, with my experience, it is very much possible. Let me now come to the construction sites. We are a project management company. We run about 55 sites all over the world where we implement projects in the oil and gas sector, in infrastructure sector and NFM. There are several sectors that we work in. In our technical domain, we have 15% women, which is not easy for any organization, any engineering company to actually nurture and have. We have leadership positions which are actually steered by women. And they look at projects not only in India, but also overseas. Now, that comes from a very a fact that the environment is an enabler. Culturally, we've been having equal opportunities for everybody, equal space. Of course, there are struggles. Nothing comes without struggles. To say that everything is hunky-dory is not true. But where there's a will, there is a way. That is also true. So we run programs wherein we inspire women to go to construction site. We call it Tejaswini, where we nurture talent who actually want to come out and take up these steps. So we put them together. We put them separately also. And a lot of our technical staff, the 15% that I mentioned, actually go to sites, difficult conditions, harsh conditions. So I have been through that crucible as well. And I tell you, it's a joy for us to see them shine, and it also brings value to our organization.
Absolutely, and I think that is important to highlight. We've talked about SOAR, and we're now talking about Tejaswini, and we need many more examples, ladies and gentlemen. So a round of applause for the work that's being done to encourage women to make their way into spaces that previously didn't exist. But Prabha, I want to understand from you your own journey of having worked across different organizations to now leading an organization in the FMCG sector. You talked about the challenges of drawing women into sales, but not just drawing women into the workforce in different functions, but keeping them there. Give me the 2 or 3 practical things that have worked and the things that you believe we need to focus on.
So I think the couple of things that have worked hard, really the obvious things. One, which is to guarantee that you will have a job, and a job of equal stature or better than the one that you left when you go on maternity leave or you go on break to have a child. The second is to aid with childcare, whether it's a creche or it's a support for a creche. Those are the really obvious ones. But I think the one thing that perhaps we need to think about as we do this is to make parenting an equal opportunity thing. Whenever we talk about parenting, we tend to talk about what the woman will do and how much leave she can take and what she can do. And I know there are many men out there who would really dearly love an opportunity as much to be fathers to their children, and yet maybe either the sanction is not there or the policies are not there. And so we've tried to make a move. We've started 3 months of paternity leave up from the 2 weeks, encouraging men actually to take time off when they have children, because after a while you can certainly do pretty much everything that the mom could do, and maybe that will help as well. But I do think that's an area where we could make even more progress than we've made so far.
Oh, absolutely. I think sharing the load is crucial. It's critical, and we do need to take that message forward. Rajesh, the 2 or 3 things that have worked with what you've been able to do on the ground level, especially to draw women into manufacturing on the assembly line and keep them there.
I spoke about some of these, Shireen. I think one is getting the union leaders to believe that it's important, because then they take ownership, and we've seen that in in all our manufacturing facilities where we're building that. Having that as a leadership conversation is a huge facilitator, because then they believe that is an important priority. The second, and the challenge I think we still have to grapple with, is keeping women in workplace, especially in manufacturing, because the typical tendency is, they would feel they are, let's say, societally permitted to work till they get married, but that paradigm could change once they're married, especially in the blue collar. So I think that needs work on attitude training, and we've actually, in our Nagpur plant where we make tractors, the women, the girls who work there actually, do skits and share stories, because that's a great way to build confidence. So, going back, and I spoke to my parents who spoke to someone else's father to say, this is a place you can work in. We find that really working. The storytelling around this, and using skits on shop floors to tell stories of how they went back and created word of mouth. So that's, I think, something that's really working. Just on what's not working, I think making this happen in sales is something we've struggled a lot with. We have to keep in mind it's not just the feeling of security, there's just complete lack of infrastructure.
Yeah.
And that is a challenge today. I see that changing a lot with highways and roadways coming up, where you have restrooms coming up along the way. So there's a very, very rapid change that's happening. But there is a real issue of infrastructure. There is a real issue of quality of hotels in many towns. The safety that those places offer. So I think there are real issues around deep field work. Organizations like Ashish said have found ways around it, and one of the solutions we have found wherever we're doing this is to hire locally and not transfer across states, because then there is a comfort of having grown up in that area, and there's they know how to navigate their way around that geography.
Yes, the infrastructure challenge is well known and continues to be a big constraint. I think all of us women in this room will speak for the fact that our bladders have many, many stories to tell. But that's a conversation for another day. But Ameera, I want to ask you next steps, the things that you believe we need to focus on, and really from your own experience, share with us what you would like to tell women here in this room, women who are watching, especially young girls who are looking at starting their careers, building their careers. From your own experience, what is it that you would share with them?
So I think, look, at Metropolis, being in healthcare, we're quite lucky because we already have a pretty good gender balance, right? Like we said, healthcare is pretty high up there. But at Metropolis, we are at about almost 47-48% women, which is amazing, right? So you literally, and we've managed to create an organization where women across don't feel a gender bias at all. And the way we've done that is not only obviously by having leaders who are representing that, but by making equal opportunity a value system. Often I find in organizations, if there's a guy who's a great performer on financials, all his other behaviors will get ignored. Right? Whether it's sexual harassment or whether it's not equal opportunities, bias, gender bias, or anything else. We've been very clear, your performance is great, but your value system is equally important in the organization, and your value system includes the fact that you will deal with people equally, whether it's of gender, religion, caste, creed, whatever it is, right? And I think that's been a fundamental way to be able to create that no bias in the organization. So, but we still do struggle with enough women at the senior leadership level. So if I look at just the CXO group, unfortunately out of 12, I have only 2 women along with me, which is one of the agenda points which I'm going to give my own organization going forward to say this needs to move closer to a 40 to 50% ratio in the years to come. Just out there for all the women, the only point I want to make is, we've all been so conditioned by society to stay away from risk. Whether it's our fathers, whether it's our brothers, whether it's our husbands, constantly telling us, be safe, come home at this time, don't do this, don't do that. Our whole lives we've heard, avoid this risk. And then suddenly when the woman becomes older, we say, oh, now go out of the house and do field work and, become an entrepreneur and do this. And I mean, you're asking a person who you've conditioned to, have no risk to now suddenly become risk prone. And if you look at women entrepreneurship, it's all about living with uncertainty, or any entrepreneurship. So I think a lot of it has to go back to how we bring up our daughters and stop protecting them in these golden cages and keeping them away from every iota of risk, because that is not life. We have to teach them how to navigate it versus teaching them a way to stay away from it. And to me, I think once we can all learn to embrace risk, we can do anything.
Most certainly can do anything. Rajesh, talk to me about Project Shakti. That is something that you're taking forward also to ensure that you create that pipeline of leaders as well as get women to take the risk that Ameera was talking about.
Yeah, Shireen, I've worked in the industry for 30 years now. Every organization has well-intentioned DEI programs. In Cognizant, Shakti program has actually blown me away. It is such a well-thought-through program. What we are doing with Shakti is we are looking at the entire career path of a woman, even before they start a job, all the way through to leadership. What are the support structures that we need to provide her for her success? At the lowest level, when you're looking at the workforce coming out of colleges, so we have a program called Nurture Her. It is about focusing on women who are in colleges, looking to having aspirations to build a career. What is the guidance you can provide them in various ways? It's about how to deal with objections in the family when you get a job and you have to move away from your home, and everybody says, "So, are you sure you want to move?" What do you do in that situation? to actually helping them understand how to manage personal finance, to a bunch of other things. So Nurture Her is a very important program. Then when they step into the workforce, the first thing that happens is anybody who steps into a workforce for the first time really don't know how to navigate the organization. So we have a bunch of programs which actually focus on that. Then when they move to the managerial cadre, the beginning levels, how to manage a team, how to negotiate, how to make presentation skills, how to build your own brand. So we have a very good construct around Shakti, and it's a program that we started a year back. We had, of course, a lot of D&I programs, but we have curated this into a group called Shakti, and we have a D&I team which does a phenomenal job of making sure that we're working through it and ensuring that it's actually being effective. So,
well, more Shakti to you,
Thank you.
and to the team. Hitendra Dave, next steps. We've done a lot of work here at Future Female Forward. What do you see as the ambition from here?
No, I think just I wanted to comment on one or two other things that was spoken about. One is on pay, right? For example, we do disclose by gender. Okay, and India is one of the few countries that has been chosen for that project. So it is possible to, now obviously you have to decide how much to disclose, because you can't disclose individual names, but and there is a checking done when we are deciding our compensation. Is there a trend somewhere? Is there a bias somewhere on this? Either side, by the way. Right. Either side, okay, right? So I think that's one. But I think to answer your question, I think this is a multi-decadal journey, right? I mean, let's be proportional in our, if 3 sessions could do it, then we would all be happily going home. So this is a multi-decadal journey. But I think at least for financial services, which I'm the only representative of here, I really like to think that at most banks, whoever gets selected because he or she is highly talented. Yeah. And if they get promoted because they're highly talented. And if they don't, then it's also, I think that phase, at least in financial services, I think of having serious unconscious biases, I think is increasingly more the rear view than the front view mirror or so. But I think, as more and more people like us take the conversations back, as this becomes, why gets addressed through, you take a list of companies headed by women, or where there's a lot of women directors, or there's a senior amount of, and you see their stock price performance, and that data is out there, right?
Yes, it is.
Right. So that's why the why should be there, I'm sure. But I would like to say that I think, given what's happening in US and things like that, I think this is a subject which will require much more nuanced conversations going forward. You just can't be as black or white as we were, say, 2 years back or so.
Yeah, a nuanced conversation, but also a conversation that cannot retreat into the back rooms, a conversation that must continue to be mainstreamed. Vartika and Prabha, I'm going to give you the closing comments here. Vartika, from your own experience, what's been the biggest learning, and what is it that you would like to share with us and with women and with men who are watching, with fathers, husbands, brothers who are watching?
This is quite complicated, you made it, Shri. But the one thing that I would say is to women at all times, stay focused. Put your targets in, keep the targets in sight always. Believe in yourself, the sky is the limit. There's no, there's nothing second to hard work, discipline, all that. But to continue on that journey in a focused manner, and also looking ahead is very important. 5 years down the line, where you want to be, how you want to shape yourself, what kind of enablers, what kind of cross-functional talents you need to accrue to yourself, what kind of networking you need to do. There's so many lists of items, but you have to stay focused. And let me tell you, no one can do it alone. No gender can do it alone. And everybody wants talent on the table. Today, every corporate, private, public, anywhere, all over the world is in transition. Everybody wants to stay relevant all the time, to be up ahead on the curve. So every talent is required on the table, and in that, none of us have done it alone. The men have been part of the growth. I have had mentors who have been men. Without batting an eyelid, they would send me away single to remote locations all over the world, and never even look and ask whether you will be able to make it or not. So I've had that opportunity, and I give that opportunity to others. So it's a journey which is together. We can reach it together, and with the focus of managements all over to put this agenda as an important one. I think we are there, but we need to continue on this path of discussion, debate, getting little things in place as we go along to have that 50% women on boards of all companies.
Well, 50% women on boards of all companies, that is an ambition, that is certainly an aspiration that we hope to take forward. Prabha, I'll give you the closing comment here on the biggest lessons from your own journey that you'd like to leave us with.
So I think, no pressure at all, but I think the two things I'd like to leave with is one, for women in this room and outside to have self-belief, because when you have self-belief, there really isn't a lot that can stop you. And the second would be to ask for help from the men in your life. I wouldn't be sitting here. My daughter is writing ICSE. My husband is at home, and that's why I'm here. So definitely ask for help from the men in your life.
Ask for help, keep the conversation going, lots of confidence, lots of self-belief. Prabha, Rajesh, Hitendra Dave, Vartika Shukla, Rajesh Jujurikar, Amira Shah, and Ashish Dhawan, thank you so much for being here with us today to take this conversation forward. We look forward to hearing more from you with each of your experiences. And ladies and gentlemen, a big round of applause for all of them.
What an insightful discussion on making equal opportunity workplaces a reality. A heartfelt thank you to all our esteemed guests and Shireen for reminding us that gender equality is not just an initiative, it is shared responsibility. Request you to kindly remain on stage with us. Moving on, it is my absolute honor to introduce a visionary who has transformed Indian craftsmanship into a global symbol of luxury. Celebrating 25 remarkable years of his brand, he has built a legacy of uniqueness by turning an imaginative vision into a globally recognized name. From redefining Indian artistry on the world stage to choosing heritage and authenticity over traditional perfection, his journey reflects not only creative excellence but also an unwavering commitment to cultural preservation and empowerment. His artistic vision is deeply inspired by strong, elegant and self-reliant women, with every creation celebrating the beauty in imperfections and making bold statements. His work goes beyond fashion. It is a narrative of tradition meeting modernity, where each piece challenges conventions and honors individuality. As a pioneer who bridges the gap between art and impact, he continues to lead with purpose, passion, and an enduring influence on the world of luxury. Please join me, ladies and gentlemen, in welcoming the incredible Sabyasachi Mukherjee. Also, a quick note, like I mentioned, it's 25 years of Sabyasachi Mukherjee. It's also 25 years of Shireen Ban. So we truly have a remarkable duo on stage. Shireen, over to you.
This is of course a wonderful coincidence. It's 25 years of Sabyasachi Mukherjee and it's 25 years of CNBC-TV18. So we couldn't have planned this better, Sabya. Thank you so much for joining us, and what an honor and a pleasure to have you join us here this evening.
Thank you. Likewise. This crowd makes me very nervous, but
this crowd makes you nervous, guys. Really? Should we give them a big cheer before we start? But yes, Sabya, this is where I want to start by talking to you. 25 years ago, when you decided that you were going to veer into the world of fashion, as a young man from Calcutta, I know that you were inspired by your grandmothers, both paternal as well as maternal, and you had a very strong backing of some strong women who've shaped your narrative, who've shaped your storytelling. But when you look back at your journey so far, is there a sense of disbelief sometimes? You know, do you have to pinch yourself to say, how did I get here?
not really. You know, I was always sure of what I would do, but I wouldn't have done it without the women in my life. You know, as a man, I might have birthed Sabyasachi, but it's the women who raised Sabya. And I think whether my grandmothers, whether the women in Calcutta, and they're very strong, and I think the women in that city lead, I think they've always urged me to follow my dreams. And I think at a time when you have a dream and you have a conviction, when your conviction is shared by people around you, then you realize that it just makes the journey a little more easier.
Speaking off the journey, and you said you always knew or you always believed that you were going to make this what it is today. What was the ambition 25 years ago? I mean, what did you imagine Sabyasachi Mukherjee to be?
You know, when you grow up in Calcutta, I mean, culture becomes a default setting because, you know, whether you like it or not, it becomes a part of your life through osmosis. You know, a lot of people in my family are educationists. From my mother's side, people are doctors. You know, my mother's a painter. And, you know, I've grown up seeing world cinema, listening to music, reading great literature. You know, my father's elder brother used to take me to all the film festivals to watch movies. And, you know, I've always felt at a time, you know, when I was seeing Ray and Ghatak and Govind Nihalani, and I used to read books and, you know, read Tagore. I never felt India was a third world country. You know, I always felt India was a first world civilization. And I was like, why are we not doing our best to represent ourselves right? Because there is so much of misrepresentation of India. And I think within that, I saw an opportunity. And I said that, you know, I know that at some point of time we'll get to the top. It's just a matter of time. And I wanted to start the journey 25 years ago.
Well, and kudos for you for making that journey. But, you know, you talked about India being on top of the world, and often the storytelling around India has been stereotypical. And as you look at taking the India story global with your brand, with Sabyasachi, and taking the world by storm, so to speak, you know, what is the ambition that you have now to create a premium luxury brand out of India for the world?
You know, I always believe that the world is round and history is cyclical. And if you just look at India's cultural heritage, you know, we were the golden country, and everything was plundered, taken away from us. And a lot of it was appropriated. You know, a lot of what I see as global luxury, if you look at the genesis of it or the roots of it, it comes from this country. And I think it's time that some of us took it back home. And, you know, I don't know how far I'm going to, you know, when I sold my company to Kumar Mangalam, I told him only one thing, that Mr. Birla, the company does not belong to me, does not belong to you. It belongs to the country at large. And we have to do it right, because what happens is there is a lot of younger generation of artists and students who look up to the brand. And as a middle-class boy, if I could have broken the glass ceiling, I don't know how far I will be able to take this journey forward, but a lot of people will come up and say, if he could do it, so can I. I think for me, the legacy would be to leave behind a possibility that if we decide to do it collectively, India is going to go straight on the top.
Well, you know, more power to you, and more power to the people that you're working with to ensure that that vision, in fact, is a reality. But, you know, speaking about selling your business to Kumar Mangalam Birla, and your journey as an entrepreneur, the decision to actually, in a way, move back, give up, whatever you'd like to, or however you'd like to see it, was that a tough emotional decision? Or did you believe that it was the right thing to do for the brand?
No, I'd already planned it, always. You see, I'm not a selfish entrepreneur, because when you create something that becomes bigger than who you are, with possibilities that can change and shape the trajectory of a country, you have to step back and realize that it doesn't belong to you anymore. It belongs to the people. And I still remember I was, you know, I had already made up my mind that I would do it, but I remember, and if that girl is listening to this telecast, you know, I was at the New Delhi airport, and a girl meets me at the airport post-COVID, and she says, Mr. Mukherjee, I just wanted to come and tell you that you cannot die. And I was like, and that was a strange conversation to have. And I was like, why would you say this to me? And she said, no, you know, we look up to you. You have so much of idealism in your business. What will happen to us? You know, because you your brand continues to inspire us. And, you know, I called up Kumar the next day. I said, okay, fine, you know,
I'm ready.
Let's do the deal. No, we have been talking for a very long time. And you see, often what happens is when personal hubris of an entrepreneur takes over, then you decide to keep the baby or the child just for yourself. And then you grow old, and then you can't transition, and the brand dies with you. And I was very clear that, you know, it doesn't matter what happens to me, Sabya has to live on. And I don't have any children. And even if I had children, I don't believe in nepotism. I would not give it to them if they were not qualified enough or the right people to transition it to. And I said that, okay, let's collectively create a corporate Sabya, and let me spend the next 20 years transitioning it, so that even, you know, when I leave, this brand is going to stay on.
This brand is going to stay on. But, you know, speaking of nepotism, Sabya, I don't know if it's true, but have you really decided that you're not going to design for Bollywood anymore?
No, I didn't say that. I said there was I never said
That's
that.
what I said. I'm not sure if it's true, so I'm asking you.
No, I never said that. I think me and Bollywood has had a great partnership. But, you know, I think the way people look at communication keeps changing. And I think there was a time when people were underconfident and they needed to have influencers and leaders to look up to feel good about themselves. The good thing about the internet is it connected a lot of people. And, you know, when you feel like you're a minority and you start connecting with people, and then you realize that you have a community, you know, your confidence rises. And today, I think what's happening, you know, if I look at the influencers, the biggest Sabyasachi influencers are the customers. They don't feel they are any less than Bollywood. And I think the narrative has shifted from influencers. Anyways, I've never really used Bollywood on my runway. Deepika was the only exception. And I told her that when I was doing my 25-year show, this is probably the first and the last time that I'll use a Bollywood star, because this was a special moment. We've had a great relationship, personal relationship together, and I truly think in so many ways she represents brand India. But I think we've always focused on our consumers, because for us, our consumers are the real stars.
Well, the consumers are the stars, so let's talk about the consumer, not just the Indian consumer, but also the global consumer that you're hoping to tap into now, Sabya. What's changed? You talked about social media, you talked about the world of influencers and content creators and how that's also shaping the choices that consumers make. In your experience, as someone who understands the fashion industry, as someone who's been part of the fashion industry, what's the big change that you're seeing in terms of consumption and consumer behavior today?
I think self-confidence and self-expression. You know, truth be told, and I've said this in many forums, that fashion has made a lot of money by feeding on people's insecurities. So the more insecure you kept your consumer, the more they wanted to buy your product because they wanted to feel good about themselves. But what fashion didn't realize for the longest time, that the consumer was getting smarter and sharper. And anyways, I think the Indian consumer is probably the smartest consumer in the world. And, you know, I think that when you have and also at a time, you know, a lot of luxury goods were consumed by the idle rich. Today, if you look at the people who are really buying luxury in India, everybody's working, nobody has time, everybody's self-reliant, everybody has self-confidence, everybody has self-expression. And, you know, then the consumer shifts from being brand supreme to product supreme. A consumer just wants to buy the right product, not the right brand. And at Sabyasachi, we want to get the product right. You know, whether the brand becomes a super brand or not, it's an outcome of the product, not the brand. And I think globally, when the consumer is going to now realize that that luxury is based on rarity, craftsmanship, authenticity, and provenance, where else can you find a luxury product more unique than what you would find in India? So I think whether people, you know, no matter what happens, no matter how much artfully the spin doctors and the global markets try to dominate India, they can't put India in a corner because it's just not going to be possible because the consumers won't let them.
Can't put India in a corner. So, you know, let's talk about the strategy now to ensure that you actually tap into this big opportunity. You're in the heart of New York City, Sabya, today, and I know that there's been a lot of chatter around just what you've been able to create and how you've been able to showcase India there. What's the initial learning and the experience been of taking brand India global?
You know, even before I took it to America, I think so much of how America views India is so stereotypical. Firstly, I wanted to change that and break that. And I always feel that luxury is built from a point of confidence and never from a point of subjugation. And the problem has always been that we have never believed in ourselves for the longest time. And I think that when you start believing in who you are, and, you know, that's when the dynamics change.
You know, speaking of the dynamics changing, and you were talking about the consumer and the consumer being your biggest influencers, so to speak. You know, the Sabya bride, you kind of turned that on its head, right? I mean, the Indian brides were always coy, demure, shy. There was almost this invisibilization, and you kind of turned that around completely. How did that happen? I mean, was this because of the influence of the strong women in your life? You know, what was it that you were trying to tell by way of attempting to sort of turn this on its head?
See, I don't really understand gender inequality because in my head it doesn't exist. I've been raised by, thank you. And, sometimes I tell that, the problem with gender inequality actually starts with bad parenting. Because I think if you raise your boys to believe that they're not better than women, but they're equal to women, I think men will be far more sensitive to gender parity than they are today. And, I have grown up with women who I've looked up to. My friends growing up, my girlfriends growing up, they were very strong women. And, I was in awe of them. And let's talk about the bridal market, for instance. So I'll tell you a small story. So I meet a lot of women in India, mothers in India, who believe that I can matchmake for their daughters. And
can you?
No, I don't even have a social life. So, and then they come and tell me that, I have a real problem. I'm not being able to sleep at night. I said, why? I said, my daughter's not getting married. She refuses to get married. And I'm like, all right. And she's 36. Her biological clock is ticking. Maybe she'll not be able to produce children. And like, all right. I said, okay, I want to ask you a question. Where did you send your daughter for education? She said, I sent my daughter to Stanford. I said, So you will send your daughter to Stanford. You will give her the best of education. You will give her wisdom. You will give her experience. You will give her confidence. And then you'll tell her to come back, be subjugated to a man and make babies. I said, that doesn't work anymore. So, the way we look at weddings in this country is also going to shift because, today, women have realized, either through communication or through social media or just being there, watching forums like this, that they don't need a man always to fulfill their destinies. They can do it themselves. And so the entire construct of marriages in India, which was about patriarchy trying to, so I'll tell you, there were so many reasons why people got married. Sometimes it was never love. Sometimes it was an escape. Sometimes it was just an arrangement, like a business arrangement. And sometimes it was just a hopelessness that my life would change. But today in India, when I see younger kids, they don't even come with their parents to buy a bridal outfit. They'll come, they're wearing jeans and they'll come with an American Express card. They'll swipe the card and say, I can't even come for a fitting because I have a boardroom meeting. Just send the outfit home. And I see how the country has changed. When I look at my stores and I look at my consumers, I could not believe that these consumers would have existed 20 years ago. So India has completely changed.
Isn't that a very small minority that we're still talking about, Sabir?
There is something called trickle down. But even if it exists on top, slowly and slowly it's going to trickle down. What excites me is the fact that there is visible change. I'm not going to quantify the change, but what gives me hope, if change exists, it's going to percolate. It's just a matter of time.
Well, we certainly hope so, and we hope that it speeds up, and that's the pace of change that we're hoping to accelerate here through these conversations. But what excites you today? Besides the work that you're already doing, is there a passion project that you're working on? Is film something that you would want to consider as part of the future creative endeavors?
No, my plate is full. There's so much to do. What excites me today is actually the young India. I think what's happened earlier, in India, status was defined by money or the distance of money between people to people. But right now, for young India, status is defined by purpose. And I think that when you look at the younger children, and there are many women who are in this room will say that, my child does not understand me. We have a huge generation gap because of the fact that the way I think of what is important and what my child thinks is important is very drastic and very dramatic. I think for a lot of people in the country, because probably because of the British rule or the traumas of the partition, I think one of the biggest thing was about making money. It was never even about making wealth, which is one of the reasons I think the country never lived up to its greatest potential. But the younger children today are being able to realize how to create business with both the hard power and the soft power of the country. And they want to create business that generates wealth and not generate just money. And I think there's a lot of hope that with that, with that new wave of Indian entrepreneurs who are coming in, with idealism. They don't want to gather black money like their parents. They want to have global businesses. They want to make sure that the businesses get valued globally, recognized globally, and they want to create businesses where they can harness both the soft power and the hard power of the country.
Well, wealth and value creation and a sense of purpose driving that, that's certainly, hopefully, going to be the way forward for India's first-generation entrepreneurs. And you're right, we're seeing a plethora of them at this point in time. But, there's something very interesting about you, Sabya, and I think that in the context of the conversations that we're having here about women and around women, is important to hear what you have to say. You don't believe in perfection. You, in fact, believe in the magic of imperfection, right?
Perfection is so much of a societal construct that, I think, we are constantly telling people that you're not good enough to be able to make them buy more. And, somewhere down the line, this constant, how do I say, this constant marketing to tell people that you need to buy more because you're not good enough doesn't really work, because A, it's not sustainable. Secondly, you lose the confidence of the consumer, because then the consumer is saying, okay, you know what, this is enough, I'm walking out. I think you grow businesses beautifully by giving your consumers confidence that you're just good the way you are. And, at Sabya, we have always said that to our consumers, because I don't think we try to create imagery that is so far away that you can't reach. I think
price tags.
No, there's a reason for the price tag. You see, one of the greater agendas of Sabya is also to keep craft harnessed at its highest stages. And let me tell you, a lot of my craftspeople are women. And I think, if you don't rise the price of craft up, if you don't rise the acknowledgement of craft up, craft is going to disappear. I say that, there is a lot that a lot of global economies can do that India cannot do yet. But there's a lot that India can do that other countries can never do, and that comes from India's soft power. And I think if corporate India was not to understand how valuable India's soft power is, and if we didn't do it to protect it, craft needs to be made into a business. Craft should not be about pledges and charity and craftsmen need to get their children back into the business. And I've always said, I've seen this movie called Help, where a lady tells another woman that, courage often skips a generation. And I took a little from there, and I said, courage can skip a generation, but craft cannot, because if craft skips a generation, craft dies. And if India's craft was to die, India's soft power would crash. I think this country still probably does not realize, and corporate India still probably does not realize how powerful India's soft power is, and how, you can have medical services, you can have IT, but a lot of other countries can do that too. But what you can do with your soft power, because it is so unique to this country, nobody else can do.
No, and that's a very, very important point that you make. But do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep this soft power alive?
We don't need to do much, because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived, because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so. We certainly hope so. But, what keeps you grounded? What keeps you sane? What keeps you centered in the world that you live in? How do you ensure that Sabya stays true to who Sabya is?
Calcutta, my friend circle from school, for them, if I'm talking about the fact that, I could not make a shipment in time, they will say, what are you talking about? I have real problems. My child failed in geography. And also my family, aunts, when I go to a wedding and go to a family wedding, they'll ask me 2 questions. And, and I have the answer for the first one, the second I can't answer ever. Because they say, who wears your clothes and where do they go? So I think there's always reality check when you're in Calcutta.
There always is a reality check. But who's your current muse? Where are you drawing inspiration from today?
Tagore had a very beautiful poem which loosely translated said that, I've traveled all over the world looking for beauty. I've spent a lot of money, traveled over forests and hills, only to realize when I came back home that beauty lay on a dewdrop on a blade of grass right next to my doorstep. And, I'm 51. I've traveled all over the world. And when I come back home to my muse, which is Calcutta.
That is wonderful. That is wonderful. But, as you look back at your entrepreneurial journey, and for many women and men who are watching this, what are some of the lessons, some of the non-negotiables that you would leave us with in wanting to set something up that has an enduring legacy that lives beyond you?
Oh, I could go on and on, but I'll make it. I think idealism matters. I think what also matters is excellence, because I think the problem that I face with a lot of people is we constantly keep shortchanging excellence for profit. That's not sustainable. If you look at Hermes, for instance, they were never shortchanged excellence, and they're probably one of the most profitable company with a very strong EBITDA. And they continued to grow when every other brand was in crisis. And to entrepreneurs, I would only say something that, don't complain about your journey. Because if you're an entrepreneur, you're supposed to be alone. Because if you're a visionary, you're always going to be ahead of everybody else. Don't complain if people don't understand, because you have to believe in yourself. Again, quoting Tagore, he had said that, the fight or the tempest is not outside, it's within you. You have to overcome your own fears. It's always going to be a hard journey. It's always going to be a tiring journey, and it's always going to be a lonesome journey. But if you stay on the path, there will always be light at the end of the tunnel. Don't give up.
Don't give up. And to the women who wear sabya and those who aspire to wear sabya as well, what would you tell them?
I remember when Sushmita Sen got married, she became Miss Universe, and she said something about women. And I just say, I think it's such a privilege to be born a woman. Because you see, I think there is so much of sensitivity that you have that a man will never have. And today, when the world goes to an age of wisdom, I think women will lead because, I've always said that, between IQ and EQ, EQ is way higher and it's very rare. And I find a lot of EQ in women because women truly understand the meaning of empathy.
There was a reason we called him the feminist, and it's very, very clear why. But Sabyasachi Mukherjee, are there spaces, untapped spaces, virgin territory that you haven't forayed into yet that you would like to foray into?
Well, I would like to make a movie someday, and I want to get into the food and beverage and hospitality business. My friends have been telling me for the longest time. But there's a lot more to do. There's beauty coming in, there's sunglasses coming in, shoes coming in.
Sunglasses company, shoes company, beauty company, all of that.
Yeah, we've just got into fine arts. So it's a beautiful life. There are more and more people coming from all over the world wanting to work with us, because what we've done is we've managed to create an exceptional brand, because I've never shortchanged idealism for profit. It had been a very long journey. It has been a very painful journey. But, we've reached the tipping point where we are realizing that it's beginning to pay off.
So if there was to be a movie on Sabyasachi Mukherjee, what would it be called?
My Life in Calcutta.
Sabya, thank you so much for joining us here this evening. Ladies and gentlemen, Sabyasachi Mukherjee, we wish you the very best of luck with all your future endeavors. The next 25 years, may they bring you more success, more happiness, and may you truly take India global. Thank you so much for your time here this evening.
Thank you, everyone.
Thank you very, very much.
What an inspiring conversation. Once again, a huge thank you to the phenomenal Sabyasachi Mukherjee for sharing such powerful insights on the influence of strong women, the beauty of imperfections, and his journey of building a unique and timeless brand. Your stories and vision have truly enriched our
In 2012, I got an Olympic medal. But I think that particular match taught me to be really thinking about that even after match point, you have 10 more points to go. Don't just think that the match is finishing, just be there, and presence of mind is required. And I think that first Olympics really gave me that confidence that yes, I'm there and I can beat all these Chinese and Koreans, and I can be in top 10, top 5 for a long period of time. And when I look back, in fact, someone told me that I was in top 10 for almost 11 years. And when I became world number 1, that is when I was like, yes, it's possible. It's possible. In 2015, when I was world number 1, everyone was like, wow, from India, we can do, in badminton, we can do such wonders. And we can also beat Chinese, who are the powerhouses. Korea, Japan, they are the powerhouses. But now you see, badminton in India is grown so much. And we are giving good challenge to all these countries. And we are one of the top